Start of another trading week here on European equity markets. And does Friday in the United States tell us anything useful that we take into today's session? Well, the European equity markets closed around this yellow line, and since then we did see a push higher in US stocks, or after that we saw a push higher in US stocks during the US session, but perhaps we've forgotten all about that over the weekend. The beginning of this chart does show you the power of those news headlines around the Middle East, the power that they still have to move markets, and we saw that on Friday, both in the European session and again over the weekend. And so if we show you the futures picture, that does seem to be reflecting Middle East news flow. So we are expecting some European stocks to be substantially weaker as a result of the higher oil price. Certainly that will stick to anything very energy intensive, but the FTSE 100 could outperform, even though that might just mean a flat performance, Tom, as a result of having some heavily weighted oil stocks, of course. So we put in that dynamic around the Middle East, but the other dynamic, the negativity around technology, and specifically SK Hynix and the Kospi, are all something we will watch out for as well, Tom.
And all part of our stocks to watch then this Monday. Let's start with the oil stock story then on higher Brent and higher WTI. This could be a part of the equity market in Europe that outperforms given the higher oil prices. So we watch the oil majors, of course, listed here in the UK and in France, predominantly in terms of the big names, as to whether or not there'll be upside on the back of prices up around 3% on Brent. Tech stocks, of course, in focus. To Anna's point, SK Hynix. Record drop in the session today over in Korea. The Kospi ending lower by close to 9%. The SK Hynix falling double digits to a record drop. So the read across to the likes of Infineon, ASML, ASM, all of those in focus for us today. AkzoNobel on a potential upping of the offer, at least a new offer coming in through Nippon Paint. So we see if that stock moves on the back of that, Anna.
Yep, M&A in the mix as well this Monday morning. More broadly, we're heading into a busy week from a macro perspective with CPI out of the US, and we're going to hear from Kevin Walsh. So European equity markets getting into their stride then this morning, or at least getting out of the gates this morning. And the FTSE 100 is the first to wake up, if tentatively. Pretty flat, though, on the FTSE 100 right now. As I mentioned, we're heading into a big week with CPI, Kevin Walsh on Capitol Hill a couple of times. We will also, of course, get into the earnings season, and over the next 3 weeks, we start to build gradually the amount of market cap that we'll be hearing from when it comes to the earnings stories. And this week is quite busy from the banking sector. Some 5 banks reporting in just Tuesday's session. So that said, we have taken a moment to let the European market settle, and the AEX is down 0.25%. The IBEX, the CAC around both down around 0.4%. So a bit of negativity then, Tom, coming through on anything tech-related. Maybe the FTSE 100 being supported by the energy trade this morning. That seems to be pretty flat. What are you seeing?
The energy story is there in terms of the gains coming through on a sector basis. That is top of your list. Energy up 1.6%. So energy is getting currently the top performing sector in a session otherwise of modest downside so far across the European stock 600, down 0.3%. Tech is the worst performing sector, currently down 1.1%. Basic resources also soft. You've seen a knock to prices for gold and silver. Basic resources down 0.9%. Travel and leisure also weaker. That tends to be a sector that is punished on the back of an uptick in geopolitical risk premium, particularly coming out of the Strait of Hormuz. So travel and leisure also feeling a bit of a squeeze, down 0.8%. Energy with the gains there. Currently 1.6% is the upside. That is the picture. AkzoNobel then on that M&A story, with Nippon coming in with an offer for part of that business, and Akzo is gaining right now. 3% is the move higher for Akzo, having been up a little bit strongly, more strongly in the first few seconds, currently up 3%, Anna.
Yes, I mean, the picture then for European stocks it is weaker, but not by a huge amount, down by 0.3%. Perhaps that's the London market effect, and we're still waiting for the DAX to open, so we haven't got that component. But things are maybe a little more positive than anticipated. So more than 2/3, I think, of the sectors. Sorry, more than 1/3 of the sectors in positive territory. So it's not just energy, and some days like this, we only see energy going higher, so that perhaps is interesting. Remy Olupitan joins us, Head of Multi-Asset Growth and Income at Schroders, and the perfect conversation to kick off this 8 o'clock hour of the programme. Remy, thank you for coming to see us. So you are overweight stocks, I think, and very much focused on the earnings story. So how are you thinking about heading into this week then, when earnings are increasingly in focus?
Oh, absolutely. This week is all about earnings. We continue to expect earnings to continue that positive momentum. Admittedly, a lot of good news is already in the price, so that's why we are seeing some pullbacks, particularly in Asia, where a lot of leverage players are involved. But if you can sit through it, we think that for the next 12 months, this earnings momentum is ripe.
And is that very tech and AI focused, or is it a different earnings story we're watching for?
Well, the good news is that we are seeing positive earnings, particularly in the US market, across sectors, energy, banks, but the big divergence is coming from the banks, so coming from the tech stocks. So the magnitude of the positive earnings growth is quite dramatic there. But if we're thinking about positive trend, it's quite broad-based.
Where does that leave your view on European stocks?
I mean, we like European stocks. The challenge is we are in the middle of a prolonged managed conflict. That's our view. And as a consequence, Europe in general tends to be the peace trade, and we're not getting a clear peace deal. And so it leaves Europe vulnerable if we just look at Europe naively. But within Europe, we do like the banks.
Okay, you like the banks. Can you expand on the banks? Because I get it in an environment where rates are on hold, maybe they're moving up, maybe the ECB goes with another rate increase, and yet there's the weakness in the domestic economies of the Eurozone. So what are the factors that you're seeing that can propel the banking story going forward for Europe?
Absolutely. So we think that financials, particularly in Europe, are benefiting from the earnings story. So that's where we're seeing a clear positive earnings momentum. And why is that? Because we finally have a rate cycle in Europe, something we've struggled with for many, many years. So you are seeing that profitability come through. You are seeing a steep curve. And when it comes to the European growth story, actually, I think a lot of economists are surprised by how resilient Europe has been, given everything that's been thrown at it.
So would you see this as a rate cycle then? It wasn't just a sort of insurance hike. I know many in the ECB have pushed back against that narrative, but some have suggested that it was an insurance hike in case of a prolonged conflict. I was interested in your prolonged managed conflict terminology. I think maybe that does help us understand what we're seeing. And in that context, do we see a proper hiking cycle then from the ECB?
We have to get used to it, absolutely. It won't be a fast hiking cycle because you are right, we're not seeing phenomenal growth to support that. But what we're likely to see is interest rates are higher for longer here to stay. And so a likely steady hiking cycle, absolutely.
And to be absolutely clear, that high interest rate environment for Europe, corporates can push through that, and therefore banks can continue to drive revenue gains. So they get the NIM, the net interest margins, from higher rates, but they're not going to suffer from a depressed corporate or macroeconomic picture. They can that is going to be favourable as well, even in a higher rate environment.
To a point.
To a point.
To a point, absolutely. So as long as it's a steady rate environment, as long as the growth remains resilient as it has been, I think the key is that we are seeing a managed conflict. I mean, if we do see a major escalation, which takes the oil price back above 100 and gas prices spike, then we will have to revisit that view.
Yes, and on that, how are you thinking about getting exposure to energy right now? I think we've heard from you in the past, Remy, about liking the UK and Canadian stocks on the back of this. Do you play at a whole index level, or do you try to just pull out sectors that you want to be exposed to? How do you think about energy exposure?
In a variety of ways, but right now we really do prefer global energy stocks. So in a lot of our portfolios, we have been adding to energy, not specifically just the UK, the US, Canada. We tried via the markets because, again, earlier this year, we took the view that the UK equity market and the Canadian equity market were underappreciated. I want to use that term because of the exposure to energy. We think that that has played out quite well, and right now, let's really target the stocks globally.
Yeah, well, that takes us onto your call around the UK, which is flipped to negative, I think, despite the weighting of financials and energy within the FTSE 100. So energy and banks do not come to the rescue of the FTSE 100. Why are you underweight UK equities?
It will come to the rescue on negative days, like today. But more broadly, we think that actually it's time to step away. UK equity markets have done fantastically well this year, and we're quite positive on the market for the rest of the second half of this year. And so we think that there are more interesting themes elsewhere, so particularly European banks. Even in the US, we think that there are more opportunities there. So the UK has done very well, has been quite resilient, and now it's time to look elsewhere.
And Remy, talking about looking elsewhere, can I talk to you about investment-grade credit? And you say you're negative, I think, on US investment-grade credit in the States. You don't think it offers sufficient compensation for the risks. What are those risks, then, for that level of credit?
The spreads are far too tight to justify the risk, particularly around the private credit market. We do think that it's highly correlated, public and private, and sentiment, some concerns around private credit will filter into public credit. And at the moment, spreads are too tight to justify that. Now, while we're very positive on the outlook for growth in the US and also equities, you're getting paid for that earnings growth. You're not getting that in credit. And now, with spreads so tight, you're really playing inflation. It feels like you're taking exposure to nominal rates rather than credit.
Right. I mean, one credit analyst said to us last week, in credit, you don't need to pick winners. You just have to not pick the losers. I mean, so how much does that apply to that core? Are you actually expecting failures within the maybe software-related credit markets then? Is that where you're expecting the weakness to come through?
Going back to that terminology of the cycle, we think that we're towards the end of the credit cycle, so a little bit too early in terms of meaningful defaults or failures. That's something we're likely to revisit perhaps in 2026, 2028, but this is the time to prepare for it. So all we're saying is you're not really getting paid, it's not really interesting, there are better ways to use your capital.
Do you have a preferred FX trade right now, or currency cross? Are you concerned about the yen? There's further weakness of the Japanese currency.
So we were very concerned about the yen, and in our portfolios we did express a negative view, which we have taken profit on right now. So we're flat the yen. Doesn't mean we're excited about the yen. To be honest, we think that you're not really going to see much movement there because it is really an interest rate issue. So the market needs to price major rate hikes in Japan, and I don't think that's forthcoming anytime soon. In terms of currencies we are excited about, I'll be brutally honest that it's a little bit murky in the currency market because the dollar is still hanging in there, but we need a really attractive carry, so that's why we're sticking to emerging market currencies where you are getting paid.
If we get this prolonged conflict, managed prolonged conflict, but it carries on, does that mean dollar strength continues over that time frame? What we've seen the dollar underpinned by this conflict.
Yes.
And there was an expectation that when it was resolved, maybe some of that dollar weakness would return. But if we have this continuing over the long term, which is what you've suggested, what does that mean for the greenback?
It means that the dollar will stay bid, but against what? Definitely against the low yielders. It means that we really have to focus on the interest rates we're earning. And at the moment, the dollar is actually a high currency, a high carry currency within G10. So let's be careful about the low yielders like the euro, like the Canadian dollar, and some of the Asian currencies.
Okay, Remy, thank you very much indeed, walking through all these different asset classes for us this Monday morning. Remy Olapitan, Head of Multi-Asset Growth and Income at Schroders. Let's get a check on your core 6 right now, 10, 11 minutes into the trading session. And you are seeing ASML as part of the pain trade when it comes to technology. The earnings, of course, for that company coming through on Wednesday. Currently it's down 1.7%, tying, of course, to the weakness we're seeing more broadly in tech equities today. Nestle's up 0.6%. You're seeing weakness for Schneider Electric, also, of course, with the exposure to the data center story. So that's under pressure as well for the similar reasons that ASML is. It seems down 0.8% on Schneider. Rheinmetall largely unchanged. LVMH a bit weaker as well. Luxury stocks under pressure, down 0.5%. Novo getting a bit of a lift in the healthcare space, up 0.6%. That is your core 6. Let's check in on some of the other individual stocks on the move with Chloe Malley.
Good morning, Tom. AkzoNobel, the paint maker, is up this morning, up about 1.4% after rejecting an offer from Nippon Paint of 7.5 billion euros to acquire its decorative paints business. And so AkzoNobel will instead keep pressing ahead with its merger with the US company Axalta. And so we're up a little bit on the back of this M&A interest for AkzoNobel. Moving on to technology, and we are seeing all of those AI-related stocks, those chip-making stocks, in the red this morning, as expected on the back of that read across from this huge plunge in the Kospi index in South Korea. We're seeing some of those renewed tensions in the Middle East feed into that, and then also there's really big tumble in SK Hynix shares. So there's a lot of volatility in that South Korean market, and that is spilling over into those AI-related stocks over here in Europe, with Infineon down particularly this morning. Another sector that is actually benefiting from those renewed tensions in the Middle East is the oil sector. Of course, we're seeing BP up particularly strongly this morning, but really green across the board as the US and Iran exchanged those fresh strikes. And we have also those conflicting statements from both sides about whether or not the Strait of Hormuz is open to shipping. And so we are seeing those potential continued disruption to oil flows really benefiting that oil sector this morning. Moving on to defense, where Kongsberg, the defense company, came out with some earnings this morning, which were actually quite strong on the face of it, but perhaps just not quite enough, not quite impressive enough against maybe high elevated expectations. And so we're taking quite the hit this morning for Kongsberg, down more than 7%. And finally, the recruitment company Page Group is up this morning in London. We're up actually more than 7%, so quite strongly there as well, after confirming guidance and saying there were really strong results in Asia and the Americas in particular. This actually echoes what we heard from its peer Hayes last week, with this quite cautiously optimistic outlook from that recruitment sector after really what had been years of weakness. So we're seeing quite a big movement there for Page Group.
Chloe, thank you. Chloe Melly with those stocks on the move, and that is really interesting for anybody who's tracking, who thinks it's important that we all still have jobs. An important story to keep an eye on. Another important story we are watching comes to us from Japan. What will the government pension scheme in Japan be incentivized to invest in the future? Seems to be an ongoing question for markets. Earlier on, we'd seen some real yen weakness as a result of reports in other media that suggested that there would be no plans to incentivize money coming back into Japan. Well, now we hear from the Chief Cabinet Secretary Minoru Kihari, who is saying that amendments will be made to the GPIF portfolio, the GPIF portfolio, if required. So it seems a little bit of a still work in progress as to what exactly will be amended there and whether that will have an impact on the currency.
Okay, we keep across the yen currently at 162, just above 162 right now, US dollar JPY. Of course, we will continue to monitor that for you. Meanwhile, coming up, oil rebounding as the conflict in the Strait of Hormuz escalates. We're going to bring you the latest on the energy markets. This is Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
What happened was you were out.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. We are 18 minutes into the Monday session. You're seeing the European benchmark stock 600 down 0.2%. The FTSE, though, here in the UK, gaining 0.2 as a result of the strength coming through for the energy sector. That sector is currently up 1.4% on higher oil prices. It is oil, it is energy, and it is tech as well, to the downside. So tech is one of the biggest losers across your sectors. And again, you are seeing broad losses across the benchmark. Tech down as a sector around 1%. Energy at the top of the list, gaining 1.5%, and that is lifting the FTSE 100, at least for now, Anna.
Yeah, let's talk about oil, because the impact of oil is clear on what we're seeing across the European equity space. Oil jumping this morning as conflict in the Middle East continues to escalate with fresh strikes by the US against Iran. The two sides continue to dispute whether the crucial Strait of Hormuz is open, which remains yet again at a standstill over the flare-up. Let's get the latest details then from our Bloomberg Asia energy reporter, Stephen Stachinski. So more tit-for-tat exchange of fire between the two sides then, and indeed deepening, widening would seem to be the way to describe this. An escalation, this escalation of risk for resupply efforts, is that what we're looking at for the global energy markets then, Stephen?
You know, I think the escalation is a key word here, and I think there is certainly a risk, at least according to the analysts and traders that we've been speaking with. I think there are two things that they're watching. Of course, one, where do we stand in terms of the conflict? Because if it were just between the U.S. and Iran and bases and things like that, yeah, perhaps it will stay contained to just those two countries. But at the moment, there have been a few worrying signs. One, there have been strikes of drones and missiles from Iran on Jordan and Qatar for the first time in months. The UAE also had some alarms over the weekend. If this spirals into a wider conflict where maybe oil or refining or any energy assets are then starting to get targeted outside of Iran, that could start to be an issue because, you know, if any of that gets hit, if any of that's offline for weeks, months, if it's damaged, it could take years, then that does really tighten the market. Now, in the near term, people are looking at the Strait of Hormuz and how many ships are going in and out. And as of right now, at least in terms of ships with their transponders on, the ones that we can track on MapGo on the Bloomberg terminal, there's very little happening. It's at the lowest level in weeks, according that I've seen. There is some dark transit, though. So there's some ships. I spotted one LNG tanker that went through over the weekend. They turned off their transponder to get through, likely for safety reasons. That does indicate it's very difficult to tell how much oil is getting out of the region, but if you're restocking your supplies, there are two big issues. One, not as much oil is getting out, and then two, the oil that is getting out, there are some Iranian barrels. Those Iranian shipments are now, again, at risk of sanctions because the U.S. removed their waivers on it. So that effort to restock after the big drawdown over the last few months could be more challenging.
So that's one flare-up in terms of the geopolitics, and arguably that's drawn most of our attention for obvious reasons in recent weeks, Stephen. But in the background is a changed dynamic when it comes to the conflicts between Ukraine and Russia, and that is starting to have an impact, particularly on refined products. What are we seeing there?
Absolutely. Bloomberg columnist Javier Blas had a really good column on this today. And what you've seen is, especially last week, every day a Ukraine drone has hit a Russian oil refinery. There has been a real increase in the amount of attacks. And actually, when you look at across the board how much refining capacity has been targeted, hit, or brought offline, it makes up a majority of their refineries are offline. Now, that's a big deal for a few reasons. One, of course, that hurts the domestic market in Russia. But at the same time, Russia is actually an exporter of some of these products, including diesel. And they've had to restrict their diesel exports because of this. At the same time, they've been flooding the market with crude because they're unable to refine it. So there's this chart that's up on the screen right now shows that there's this growing divide between the products, those downstream products that you make out of refineries, and crude. Crude prices have dropped, and they've come up a little bit over the last week. But it's when you look at the gas oil, gasoline, diesel, it has been stronger. Now, it's not all just down to Russia. You've also seen China reduce their exports of refined products as well to help their domestic market and the consumers there. At the same time, all of these countries from the U.S., Japan, they've been releasing their strategic reserves of crude oil. So the amount of crude oil has flooded the market. The amount of refining capacity has been able to meet the demand, especially with the different outages in different places. You've actually seen the refining profits increase quite significantly to the highest year on records on the Bloomberg terminal for the 3-2-1 refining spread, which is what makes gasoline as well as diesel. So it's a very interesting time in the market because while we are talking about the drop in oil and crude oil, WTI and Brent, it's not exactly the same for gasoline, diesel, and some other products that actually are what consumers buy. It's what they buy at the pump, and it affects inflation.
And it's that context and that detail that is so important. Breaking it down for us really nicely is Bloomberg's Stephen Straczynski. Stephen, thank you for the context and the details. Of course, the energy story ties into what's happening in the airline space, but this is more now a news story about potential M&A with EasyJet shares up pretty sharply in the last week or so, of course, as investors await an update from US investment fund Castlelake after Apollo's surprise £5.7 billion counteroffer last week. Any acquisition of the budget carrier will expose the buyer, whoever it is, to a challenging sector, of course, that is regularly unsettled by geopolitics and fickle consumers. Let's bring in Bloomberg Global Aviation reporter Benedict Carmel. Benny, where do things stand then at this point for EasyJet?
Well, it was a mercifully quiet weekend. We had actually expected maybe Castlelake to come back. They haven't yet, so they're still weighing their options. There was that brief statement from them on Friday saying we've taken note of the rival Apollo bid, which really, I have to say, landed out of nowhere. That was Friday morning that Apollo came in and trumped the existing Castlelake offer. The numbers that exist now are 715 pence from Apollo versus 690, and you saw that chart just now there with that sharp increase on Friday. But yet, investors are still the stock is still trading considerably below either offer. So investors are probably still thinking there is some room to run here, and maybe either Castlelake comes back with a better offer still, or Apollo will need to sweeten. So that's sort of where we're at. A bit of a holding pattern, who blinks first kind of situation. But for the time being, it looks like Apollo has the upper hand.
As Tom was saying in the intro, aviation stocks then, Benny, can be notoriously volatile and vulnerable to shock. Do Castlelake or Apollo have much experience with running airlines, even if they're not going to be worrying about the share price, that there is still the volatility to deal with?
I mean, they both do have some exposure to this industry. Castle Lake deals in leasing aircraft. Apollo has bought some aviation assets. What might be a little bit surprising is if you think sort of classically private equity comes in and looks for, should we say, fat to cut. And EasyJet is a company that really has perfected the low-cost model. This is a very lean operation like Ryanair or like low-cost companies in the US. So if you come in, there wouldn't be anything immediate where you could say, okay, let's get rid of this or let's get rid of that. And that's usually where the big turnaround happens. So it'll be interesting to see how Apollo plans to make this work. But, you know, we don't know for the time being, so we'll have to see.
Okay. Benny, thanks so much. Bloomberg's Benedict Camel on the aviation stories. Coming up this morning, we'll be talking to Francesco Schiattino, co-founder and CEO at Proxima Fusion, as the German startup secures funding to develop commercial fusion energy. That is next. This is Bloomberg.
Is the Vivian Tom clientele?
Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that just empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful woman's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Welcome back. 30 minutes into your Monday session. European stocks across the benchmark are down 0.2%. The FTSE 100 have been up, but is currently flatlining at around 10,500. Energy is the top of the list across your sectors. On the downside, travel and leisure, construction and tech from the read across of and from Kospi and the SK Hynix. Currently across the member breakdown on the Stock 600 then, in a day when volumes are lower, down 50% versus that 20-day average. You're seeing 257, 258 in positive territory, but the majority of stocks are seeing some downside pressure, at least so far in the session on the Stoxx 600, currently 335. Individual stocks down and in negative territory, but again, on a day of weaker volumes.
Yeah, the focus to the downside then, and US futures also pointing lower. Tom, let's get an update on some of the other stories that we're covering this morning. SK Hynix shares in Seoul plunging more than 16% today, the most on record after its highly anticipated trading debut in the United States. Traders are citing profit-taking and a shift to the memory chip maker's American depository receipts as the main drivers. The weakness dragged on the Kospi, sending it down by 9% at the close. Andy Burnham is considering unveiling a bolstered budget later this year here in the UK as allies and experts seek to persuade him to pursue a land tax, public control of utilities and a more ambitious devolution strategy. Burnham is on course to take over from Keir Starmer as the UK Prime Minister on July 20th. And the US launched fresh missile attacks against Iran as both Washington and Tehran issued conflicting declarations over whether the Strait of Hormuz is open to shipping or not. US Central Command says it struck dozens of targets to degrade Iran's ability to attack international shipping. Iran launched counterstrikes against US allies and also attacked some ships over the weekend. Tom.
Okay, let's get a different angle on the energy story and a future energy story as well, potentially, because German startup Proxima Fusion has raised 411 million euros, including from backers RWE and Google, to develop a nuclear fusion plant. The deal giving the 3-year-old energy firm, just 3 years old, a valuation of 2.4 billion euros. Francesco Ciaritino is the co-founder and CEO of Proxima Fusion and joins us now. Francesco, thank you for your time. It's a significant raise. What does this capital raise tell us about the appetite from investors to back fusion, and how are you and the team planning to deploy this capital?
Well, first of all, it says that there is an appetite for clean energy, new sources of energy, and that Europe is able to fight back and to be in the race of fusion worldwide. So it's not just a game between China and the US. Europe has done a lot more than most people realize on magnetic confinement fusion, so-called tokamaks and stellarators. And with this round, we are right at the front of the stellarator race.
Yeah, and I remember meeting you, Francesco, a few years ago, and you were making that impassioned case. Look, Europe has skin in the game here. We have real expertise, real depth of expertise, but we need to lean into it. And so this is a signal that the pieces are coming into place for that story. Why is this so important for Europe to not just play a role in fusion, but arguably to potentially lead when it comes to that competition with the US and with China?
Well, Tom, as you said, just a piece before, thinking about the Strait of Hormuz, this is a crazy level of exposure of the European energy markets. Europe does not have its own natural resources to reliably have a dispatchable source of energy, not to even speak about clean energy. So in Europe right now, and Germany is most acute in this respect, you have a need for energy, any source of energy. Then there is a desire for that energy to be clean. There is a desire for that to be the baseline, what helps us to avoid the industrialization, to not only get, the increase of energy with data centers and so on, but also support our existing industry. In Germany, this is front and center of all national politics. So the story with Proxima is not a story of just a startup coming out of a national lab and with a great technical idea. It's really a story of public-private partnerships. It's our partnership with the Max Planck Society, the national laboratory organization that we spun out from, but also the Bavarian government, with which we announced a partnership. It was late February between Bavaria, RWE, the Max Planck Society, and Proxima Fusion. And now we've been developing more and more of a partnership with the German federal government. So all the parties involved get the situation. There is great sense of urgency. There is an opportunity in the technical leadership that Germany and Europe have in this domain. And so now it's time for a European fusion champion to emerge.
Francesco, yes, talking about the technical domain, good morning. Thanks so much for joining us. Can I ask you about net energy gain? Because it did seem to be quite exciting when we saw some research suggesting that we got to a point where we can prove in a quite limited sense that more energy can result from this process than is required to feed into it, but with some caveats. So what's the next technical challenge for a wide audience to understand? How close are we to more progress on the fusion front?
Yeah, we have a clear scientific basis for this QI stellarator concept. We built one of these devices in the north of Germany, inside the Max Planck Society. That device is called W7X, and it shows that it can operate in continuous operation, so as long as you want it, in a fully stable manner. Now, the next step is to demonstrate that we can make more energy out than in, which of course is a requirement if you want to build a power plant. And the step to get there is a magnet of a new technology. We labeled this high-temperature superconductors, which is now in production. So Proxima Fusion and its partners at the Paul Scherrer Institute in Switzerland, but all across Europe, have been developing a technology stack that allows us to make magnets that are much more powerful than the ones that we previously had. The stellarator model coil, as we call it, will be up and running in 2027, by the end of the year. So we're about a year and a bit away from this very important hardware demonstration. Once you have that hardware piece, the next step is straight to an energy device. We call that Alpha. We have a site for that. It's in Munich. And then following that, a first-of-a-kind device that we will place in the west of Bavaria on the X-Fission side of RWE.
Okay, so those are really interesting staging points when it comes to the physics and the engineering behind this. In terms of the commercial reality, Francesco, how are your timescales shifting around the commercial reality of fusion as an energy source?
We are sticking to the general picture we started with 3 years ago, which is we aim for the stellarator model coil late 2027, a net energy gain device early 2030s, and a full-scale power plant in the late 2030s. It means it's a 1-decade-long journey, and of course that's just the beginning of a new fusion industry, of all the creation of the supply chains. So the partnership with the German government and the European community here is very important. This is not a San Francisco garage kind of startup that makes it or breaks it in just a couple of years. It's a journey that, if we're successful, will absolutely change the European industry.
And Francesco, you touched on the demand coming through from AI in one of your previous answers. You are backed as well by Google. There is that partnership. What does that tell us? What does that support from Google tell us about the demands for AI and energy that supports AI developments into the future, and what their expectations are?
Yeah, both Google and XTX Markets is one of the true co-leads of this round. They both develop data centers at quite some scale, and they are realizing, of course, what many have heard, which is that energy is the bottleneck in expanding compute. So humanity now has intelligence and energy as the true key foci of attention. One needs the other. Intelligence, as in artificial intelligence, is helping us to get to energy with stellarators via better modeling, better systems for design, but the energy needs to feed back into the AI centers. And now these developers of data centers are those that are willing to also go out and make sure that the new energy sources are available. Of course, these data center builders, they're looking at every source of energy. The fact that the advanced energy solutions that Google has been looking at are now coming closer to fusion, and Google has been backing multiple fusion companies at this point, it really tells you how important it is that fusion is brought to market. And the timescales here are understood. None of the investors of Proxima think that we are going to deliver power plants in the next couple of years. It does take the time it takes, but when it comes, this will be transformational.
Are you getting closer to getting additional support from either the Bavarian government or the national government in Germany? Are you in conversation? Is there potentially further funding coming through at the national level?
At the Bavarian level, we've already announced in late February 400 million of non-dilutive capital. That's a very important signal for us, and it really helped us in raising this new 400 million private round. On a German federal level, the budget has been stated. Germany is allocating more than almost 2.5 billion euros for fusion over the next 3 years, more or less. And then there is an ambition of scaling up an industry. So we know that Germany is being very serious about scaling fusion. there are a few options on the table. We have been in heavy conversations with the German federal government, as one might expect. It's still a work in progress. We can share that there is the creation of a milestone program that is running, and we're very excited about partnering with the German government in such a way. So setting milestones, and when they're met, the federal government supports financially, and also in terms of licensing, in terms of regulation, in terms of a number of domains for which we need their support.
Yeah. And before we let you go, if there are one or two things that Brussels could do to accelerate this sector, Francesco, what would it be?
We're waiting for a fusion strategy from the EU, and that has been in waiting for some time. We need the EU to realize that the creation of a private industry is not in opposition to the strengths of the public sector. Europe has done more in public research for magnetic confinement fusion than any other geopolitical bloc. And we should be proud of that, and we should celebrate it. And that's how we created the supply chains that Proxima now relies on. Now, the clear success for Brussels in seeing how the money, the funding that has been used for fusion in the past decades can bring us to a new success. They need to see a private company scaling and developing further those supply chains and creating a real European success.
Francesco, thank you very much indeed. Congratulations on that raise. Francesco Ciottino, co-founder and CEO of Proxima Fusion, with also a line there and a view there on what Europe needs to do to support this emerging sector. So from a potential future energy source, and to a current challenge, which is what's happening with oil and the Strait of Hormuz.
Absolutely, and we heard Francesco referencing it as well in support of other technologies. So we are getting some lines coming through from the Iranian Foreign Ministry spokesman holding a press conference saying that the US has consistently violated the agreement. I assume he's talking about the MOU there. We know that the US has said the Iranians have violated it as well. We're also hearing from him that he's saying that the US-Iran Memorandum of Understanding is in a crisis phase, and saying that that ships are at risk via the US parallel route in the Strait. We know that the Iranians have tried to increase their influence. They have, of course, been trying to do that by disrupting that more southerly route, that route that is closer to Oman. And so we continue to watch all of these developments in the Strait. And this is not pushing oil prices any further to the upside. In fact, they've been dropping in the last half hour, but still up by 3.4% versus yesterday's, the last close.
And we're going to get the geopolitical lens shifting to Russia and Ukraine after the break, because EU leaders are set to gather to discuss Ukraine as President Zelensky seeks to spare his war-weary nation a repeat of last winter's hardships. The details, those conversations next. This is Bloomberg.
Is there anything that humans today can do? Yes. That will change the lives of the humans currently on the Earth?
Well, first of all, people who switch over are getting the benefit right away. But coming back to the point about the fossil fuel industry and our debt to them, there's an old saying that came from the King of Saudi Arabia years ago. The Stone Age didn't end because of a shortage of stones. It ended because something better came along. Something better has come along now to replace fossil fuels, which are dirty and polluting and threatening humanity's future. The cheapest electricity in the history of the world is solar energy. Second cheapest is wind energy. And now batteries, the only thing that's come down in price faster than solar is utility scale batteries, doubling every single.
Why are we ending the wind farms that are now being built off the coast of the United States? We're ending them.
Because Trump is insane.
On another subject,
you don't want to explore that, but let me add one point on the solar. If you look at all of the new electricity generation installed worldwide last year, I often ask people what percentage of it was renewable, and people say, you know, they're looking for a high number, say maybe 30%, 35%. Correct answer is 93%, because it is taking over the electricity generation industry.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Welcome back to the opening trade. Now, Ukraine is expected to be at the top of the agenda at a couple of meetings that are taking place this week, both the EU Foreign Affairs Ministers meeting and a meeting of leaders of the coalition of the willing countries. They're both due to take place today. Now, the gatherings come as Ukrainian President Volodymyr Zelensky removed the nation's prime minister as part of a shift in political strategy ahead of another winter under attack, under threat of Russian attacks. For more, let's bring in our chief Europe correspondent, Oliver Krug. And Ollie, let's start with the gatherings that are taking place today. Two separate forums, and both of them set to put the spotlight back onto Ukraine.
Absolutely. The first of which is here in Brussels, where foreign affairs ministers from the European nations, EU nations, are arriving here at the European Council to have a discussion, yes, about Ukraine, also going to talk about Israel, and of course the latest developments within Iran. But I think for the Ukrainian conversation, I think overarching in both of the meetings, the second taking place in Paris, hosted by Emmanuel Macron in the coalition of the willing, I think also a lot of it is just going to be a strategy discussion. There is a really different dynamic for the Ukrainians coming into this year. They've gained a momentum on the battlefield. They've got that EU loan that we've been talking about, but then they've also won this sort of unexpected, almost not quite full-throated, but endorsement from the President of the United States last week at the NATO meeting, where he had some really very warm words to say about President Zelensky, about the sort of Ukrainian war effort, and I think also the sort of within his own mind, the President of the United States, this idea that the Ukrainians now are holding cards. It's not like it was 18 months ago when he was sort of, yelling at Zelensky in the Oval Office saying you have no cards. You basically need to submit to the will of the Russians. So this is going to be, I think, part of how the Europeans then try to take that momentum that they've got from the American side and try to put it in their own sort of efforts to try to end the war. For the coalition of the willing, the conversation still surrounds some of the same themes we've discussed before, Anna. It's also about the security guarantees for the day after, potentially getting more air defense to the Ukrainians, which we've heard a lot about from Zelensky. He obviously very critically last week won the permits and the rights from the United States to build those Patriot batteries within Ukraine. But those are going to be the two sort of themes coming out of those meetings that we're watching very closely today.
Ollie, you've spent time on the ground in Ukraine. You've interviewed Zelensky. What assumptions should we make about how concerned the Ukrainians are right now about the passing of U.S. Senator Lindsey Graham, who was such a pivotal supporter of Ukraine within the Trump administration, not serving in an official role, but with the ear of the president?
Absolutely. The ear of the president and really a constant lobbying effort on behalf of the Ukrainians. We know Lindsey Graham is sort of one of the senators most interested in foreign policy, one of the most hawkish senators, certainly on the Republican side, particularly now in an era of sort of MAGA Republicanism, which is much more about sort of anti-intervention. That was not at all the sort of person that Lindsey Graham was on the question of Iran, but certainly on the question of Ukraine. And obviously a complete shock, I think, to the entire world, but certainly to the Ukrainians, because Lindsey Lindsey Graham was in Ankara last week at that meeting of NATO leaders. He was also in Ukraine just a couple days after that, and he just died very suddenly over the weekend. So I think for the Ukrainians, he has been a constant conduit in the sort of vibe side of the administration that is getting sort of the president on side, but he's also been the author of these sort of sanctions, this next level of sanctions that have still been stuck with the U.S. Senate, that have not moved forward, but that apparently made progress over the last couple of days. And a reminder of what those include, and these would be absolutely massive if they went forward for the Ukrainians. This is the sanction package that Lindsey Graham put forward. These are all about the secondary sanctions on those who support Russia. That would basically see the United States imposing tariffs and those kinds of measures on them. So that is something that the Ukrainians will be very concerned about, A, not having the sort of support in the ear of the President of the United States, but also potentially stalling the efforts of that Lindsey Graham sanction package, which has not yet been put into effect.
And Ollie, tell us a little bit domestically within Ukraine what it means, the fact that there's this broader cabinet reshuffle taking place, a removal of the Prime Minister and somebody new in post. What's the broader interpretation of these moves?
Yeah, exactly. This is a prime minister. I mean, there's a shuffle just about a year ago, which is when the current prime minister came into office. She's now basically being sent off. She may become ambassador to the United States, we understand from some of our reporting. And there are a couple other people that are in the pipeline. One is the CEO of the state-owned Naftogaz, that is the Ukrainian gas company. And of course, there is Denis Shmyhal, who is the former prime minister. We've interviewed him a few times and spoken to him, but he's also taken over the domain of energy minister. So both of these men that might replace the former prime ministers are people that are very sort of well-versed on the question of energy and stabilizing energy. For example, within the sort of all the issues that we've had with the bombing of infrastructure, the destruction of Ukrainian energy infrastructure, Naftogaz, which is responsible for all of the natural gas, they have managed to keep their supplies stable. So these are two individuals who are very well-versed within the energy complex within Ukraine, and something that they're going to be thinking about very, very concertedly going into the winter. Of course, this has been a sort of the renewed bombing campaign on all the infrastructure. So energy security is going to really be front and center as we sort of end towards the height of summer and, of course, into yet another winter.
Chief Europe correspondent for Bloomberg, Oliver Crook. Ollie, with the update there out of Brussels. Ollie, thank you. Let's look ahead at what else we are watching throughout the week. Later today, EU foreign affairs ministers will be meeting in Brussels, as Ollie was saying. Macron will be hosting the coalition of the willing in Paris. Tomorrow is US bank earnings kicking off. Bank of America, JP Morgan Chase, Wells Fargo, Goldman, Citigroup. So really getting underway with some crucial earnings all starting tomorrow in earnest. We also get on the macro front, US inflation data. That will be consequential. And Fed Chair Walsh, as we've been discussing on this show, testifying before the House Financial Services Committee on monetary policy. On Wednesday, on the earnings front, the big one for Europe is ASML, Europe's most valuable company, earnings coming through there. Also US bank earnings, done numbers coming from Morgan Stanley. On Thursday, we get TSMC earnings and Netflix. And on Friday, it's the World AI Conference in Shanghai. Now, Bloomberg MLive editor Morwenna Coniam joins us for the here and now, the market action. Morwenna, it seems to be, this is a question for the markets today of oil, higher oil prices, risk off across equities, and tech also not playing a role as well, given the volatility we've seen again in Korea. What is standing out to you today in the session?
Absolutely. I mean, we've really seen a return to that sort of two-pronged trade. We've got oil prices rising on renewed conflict and uncertainty about where we go from here. I think in June we saw a lot of that coming back, and now we are back to a period of volatility and uncertainty. So we've got energy stocks rising, and then at the other end of the scale, we have got technology stocks trailing as the AI trade does appear to be losing momentum. It's ebbing and flowing a lot more than we saw earlier in the year. And actually that does seem to keep coinciding with these days where the broader mood is risk off as well. And so that's weighing on equity indices, particularly in Asia, but also in Europe. And of course, the UK is benefiting from the higher oil prices whilst not suffering from the loss of its AI stock momentum.
Yes, absolutely. We see the London market stand out for those reasons. And the same dynamics around a higher oil price also pushing yields higher. We're seeing that in Europe today.
Yes, we are. Bond yields are higher across the curve, across the continent. Actually, particularly so in the UK, we do tend to be more sensitive to energy price shocks. And I think there's also probably a little bit of political uncertainty going on there as well. And we're also seeing yields move slightly higher in the US. Of course, we have got that key inflation data coming up tomorrow, which I think may show things were a little bit better in June, but at the same time, as we've just seen and been discussing, the story has changed again in July. So what that means for the Federal Reserve in terms of the interest rate policy going forward, I think it will be very, very interesting what that data shows, but also putting it in the context of a changing picture since it was the period it covers.
So that's one potential risk event this week, which is inflation data out of the US tomorrow. What are you and the team, when you came in this morning, what is exciting you about other risk events? What is kind of grabbing your attention? What are you all talking about in terms of what is going to be taking up most of your attention this week on the risk events?
Yes, well, there's plenty going on. Of course, globally, we've got US inflation. We've also got all those bank earnings, which will really start to drive narrative as earnings season ramps up in the UK as well. I think sort of politically and economically in the UK, we've got Mansion House tomorrow, and Rachel Reeves will be talking about small businesses and AI. But looming on the horizon,
if she's not the Chancellor,
I think there's probably a bit less. I mean, it's still important because it's still the government. But obviously, on Friday, if Andy Burnham is set to become the Labour Party leader and Prime Minister from July the 20th, then we will be really looking at who he appoints as Chancellor. Could be Reeves, but it does appear that other candidates probably are more favoured at the moment, and that will probably determine policy going forward. But, with no mandate, I think it'll be interesting to see how much shift we really see there.
Okay, Moena, thank you very much. Bloomberg Markets Today editor Moena Coniam with some of the events we're looking forward to this week, and indeed things moving markets right now. We'll add to the list of things we're looking ahead to then. US CPI, Walsh testifying. There's going to be a lot of football watched here in Europe.
So Spain, France.
Tuesday, that's tomorrow night.
Talking of risk events of a different type. Spain, France tomorrow night.
Yes.
An epic head-to-head. And then, of course, the big one for us, at least. England, Argentina.
England, Argentina. Yes, exactly. And John Authers has a nice piece with all of the backstory around England, Argentina, if anybody is at all interested
refresh our memories
in reading all of that. That is it for the opening trade. We have European equity markets then on the back foot this morning. US stocks pointing lower as well. So that tech negative theme looks as if it could spread into the United States. Oil prices are substantially higher as well. 78 is the handle on Brent, so not as high as they were, but still higher as we watch the Middle East developments. The Pulse is up next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Newsmakers and market movers. This is The Pulse.
Good morning. Welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. SK Hynix shares tumbled by the most on record in Seoul after making its US debut, but positive news for TSMC, with sales there jumping by 36%. Oil spikes and government bonds fall as the US and Iran exchange new strikes, with both sides claiming control over the Strait of Hormuz. And Moscow faced a second day of large-scale drone attacks from Kyiv. Ukraine's President Volodymyr Zelensky overhauls his government, including changing the Prime Minister. So it is risk-off across these markets. The negative impulse coming through from the tech trade with that record drop for SK Hynix. US futures negative on the back of that. NASDAQ 100 futures lower. But you're seeing some negativity in Europe as well. Oil prices higher, yields up, bonds selling off. It is risk-off, as I said. US futures pointing lower by 0.4 on the S&P E-minis. NASDAQ 100 futures, as I mentioned, down 362 points right now. Brent spiking 3.4% after a 5% gain for oil prices last week. Gold under pressure on expectations that maybe the Fed will have to hike rates faster than expected, above 4,000, but down 1.3% in the session today. Let's take a look at the European markets map as well, briefly to check in. You did actually start the session with the FTSE 100 in positive territory, with energy as a sector playing that role. The FTSE 100, though, right now here in the UK is just down 0.1%. You're down a similar amount for the CAC 40 over in France. The DAX is actually flat. Similar picture for FTSE MIB as well. Let's get you a print right now on pre-market pricing for SK Hynix ADRs. After that 11-12% gain by the close on Friday, after that successful IPO. Right now the ADRs have pointed lower by 8.5% again after a torrid session for the SK Hynix in the Seoul session with a record drop of 16%. So that had not, of course, augured well for the opening of the ADRs on Monday, and you're seeing that picture then, currently down 8.5%. Not looking to wipe out all of the gains from Friday, but closing in on that. We'll continue to monitor that for you. On a positive part of the story when it comes to the AI story, though, TSMC reporting a rise in quarterly sales of 36%, meeting high expectations and signaling that global demand for AI hardware remains intact. It comes as the Kospi slumped 9% today, driven by that record plunge for SK Hynix after the memory chip maker's highly anticipated US trading debut. Let's bring in Bloomberg senior strategist Neil Camping right now for the details. Neil, before we get to SK, let's start on TSMC. Just for the month of June, am I right thinking sales were up more than 60% just in a single month? Is TSMC validating the AI trade at this point?
Morning, Todd. Clearly, with regards to being NVIDIA's key chip provider, then it's no surprise to see TSMC sales continuing to be very robust. The June data was strong. It was in line with expectations because analysts have been taking up estimates in recent weeks. The biggest thing now for TSMC itself and for the AI narrative will actually come on Thursday, when we get the actual full list of results in terms of profitability, margins, and crucially, the guidance. Then we'll get a sense of where we're guiding to for the back end of the year, and also in terms of what their CapEx requirements and expectations are.
Neil, it's interesting on TSMC, so we'll get more details through this week. But yes, they are the key producer, as you say, for not just NVIDIA chips, but Apple as well, with those absolutely key foundations, in terms of the factories, I should say, in terms of the build-out, and what they have in not just in Taiwan, but they're building out aggressively as well, the foundries in the US. We've lost the line with Neil. We get him back, of course, because we want to understand what is happening with SK Hynix. There was some debate as to whether or not the pressure that was on the stock in Seoul today was down to profit-taking, maybe funds moving into the ADRs in the US. It doesn't seem to be that there is a structural reason for the pressure that we've seen on SK and the maker of those memory chips, of course, today. It may be a question of profit-taking, but we'll get Neil back, hopefully re-establish that line and get some context and some details as to why that stock in particular has been under so much pressure. And again, pre-market cooled lower as well in the US. Let's get to the oil story. Oil prices jumping this morning as the US and Iran trade fresh attacks, and the rhetoric is coming through from both sides as well. US Central Command says forces hit dozens of targets in the fourth strike by the country in around a week. The latest escalation came after Iran reportedly fired again at commercial ships in the Strait of Hormuz, as both sides issue conflicting statements over whether the passage is open to shipping. Let's bring in Abi Abu Omar, who's Bloomberg Horizon's Middle East and Africa anchor. Abi has been following all of this, of course, throughout the weekend and today. What do we know about the latest spate of attacks, Abi?
Good morning, Tom. So perhaps I could start with a new development that has happened since we last spoke, and that is through the Ministry of Foreign Affairs in Iran, through the ministry spokesperson Ismail Baqai, saying that the MOU between the United States and Iran in its current state is now essentially in crisis. This is what he said. And he also said that the ships that are crossing the Strait of Hormuz through the parallel U.S. lines are prone to getting attacked. And so this has happened just moments ago. Iran also saying that it's not going to allow the IAEA to enter its nuclear facilities. So we're seeing an escalation in the rhetoric by the second, and this follows a weekend of events as well. Tit-for-tat attacks that have happened between the United States and Iran. Iran starting this off at the beginning of last week, Tom, by hitting an LNG-laden ship in the Strait of Hormuz, flagged to Qatar. The U.S. in turn attacking Iran for 2 straight days. And then over the weekend, Iran hit yet another ship flagged to Cyprus this time. The U.S. continuing the attacks on southern provinces, including Bushehr in Iran, and some military sites. Iran doing what it did over the past few months when these attacks happened, retaliating on countries in the region, hitting the likes of Jordan, Qatar, and Kuwait. We reported earlier some infrastructure damage in one of Kuwait's oil facilities. And Qatar also saying yesterday that 3 people were injured. And let's just remember that up until a week or so ago, Tom, Qatar was one of the mediating sides in all of this. So it looks like the retaliation is happening, bearing no mind to those that were involved in resoluting the conflict between Iran and the United States. And of course, at the heart of all of this is the movement in the Strait of Hormuz that up until the early hours of this morning seems to be at a standstill.
Give us more details a bit in terms of what is actually happening, what traffic we are seeing, if any, through the strait. There's the transponders on, there's when they switch them off, so I know there's that complexity. But what is our current best understanding of the flow through the strait?
Yeah, so we're monitoring the situation. Our energy teams are tanker tracking those movements through the Strait of Hormuz yesterday. So over on Sunday, we reported that about 6 ships have made their way through the Strait of Hormuz with their transporters off, as you have mentioned. So essentially what we call turning their lights off to be able to cross the waterway. This morning, however, it seems that the traffic has gone down to a standstill, something that we've reported has been happening over the past few weeks or so. But Tom, even before all of this started happening, since the MOU was signed and, those positive remarks about the traffic coming back to the Strait of Hormuz, as you can see on the chart there, it still nowhere was at the levels that we had pre-war. And so ship owners were treading with a little bit more caution because of Iran's assertion of dominance over the Strait of Hormuz, because of Iran saying that even though the MOU was signed and the Strait of Hormuz was supposed to be open, ships that are passing through had to stick to routes that Iran had laid out. And those that did not stick to those routes, those that were crossing the part of the strait that was closer to the Omani side or the southern part of the strait, were prone to getting attacked. This is what we saw happening over the past week or so. And so we already had been seeing ships treading with a lot of caution. But as of this morning, it seems that ship owners are holding still, deciding not to go through because the risk is just really severe. We still await whether those technical negotiations between Iran and the United States will actually happen. But for now, a lot of unclarity regarding the situation.
Okay, Bloomberg's Abir Abu Omar with that important update out of the region. Abir, thank you. Let's bring in at this point Seema Shah, Chief Global Strategist at Principal Asset Management. Seema, how concerned should we be right now about this flare-up? There's been an expectation, almost consensus from investors and guests that we've been speaking to, that we're kind of past the worst when it comes to Iran. We can look at other factors now. Do we rethink those assumptions? We've seen this surprising resilience for the global economy. Does it get challenged in an environment where maybe oil is around 80, 85 for a longer period of time?
Well, so I don't know if we can necessarily challenge the idea that we're past the worst point. I think this is still looking a little bit better than we were, 6 weeks ago. But it certainly does challenge that perspective that we'll be looking at $70 a barrel through to the end of the year. And you're almost retracing some of the concerns that we had earlier in the year. Now, the big concern is, of course, what the implication is to inflation, second-round effects, and therefore how the Fed is going to respond. Now, of course, tomorrow we have the CPI data, which is going to be really key. But actually, we won't really see any evidence for a couple of months. So I think the debate around what the Fed is going to do and how they're going to respond, particularly considering that we have a new Fed chair that we're not very familiar with, I think just adds a lot of volatility into the market at this point.
So how important are those comments from Kevin Warsh later this week?
They're really important, but I don't know if we're necessarily going to understand or see anything else that he hasn't already said in terms of not committing to any forward guidance. And that tells us that uncertainty is likely to linger. It may well go through to Jackson Hole. I think that's a new kind of key date that we're looking to have a better understanding of how the Fed is going to be responding. But of course, we're heading into earnings season, and when you have this renewed inflation concerns and how the Fed is going to respond, it means that the importance of that earnings season really coming through and delivering has just been raised quite significantly.
So I want to get your take on the earnings season, but before we get there, so markets pricing at about 30 basis points of hikes from the Fed. Does that seem reasonable in the current environment? Are you basing your assumptions on that level of interest rate hike coming through from the Fed, or are you calculating, is your base case somewhere else?
So we're expecting no hikes through the rest of this year. Now, that is based on the idea that inflation is likely to peak fairly soon and start heading down, and because inflation expectations have been anchored to this point. But of course, we have to acknowledge, particularly given what's been happening in the last few days with the US and Iran, that the risks around that are very, very heightened. So the odds of a hike are clearly much, much greater than the odds of a cut. So I wouldn't say that we're particularly wedded to that forecast, and it's something that we have to watch and see how that pans out. The market has fluctuated a lot between how much they're going to price in any hikes this year. For now, we're sticking to no move, but that is definitely under challenge.
On earnings, is it still all about AI and whether that gets confirmed?
I think that's definitely the predominant focus, and we have to make sure that demand is not waning. That would really start to be a significant challenge, not just for the specific tech stocks, for the broader market as well. But the other thing that we did see last quarter was this broadening out in earnings growth, which was a really, really positive take on how the economy was responding, the resilience of the economy.
Europe was part of that.
Europe was certainly part of that, and actually we have seen some really good news coming through. The problem for Europe specifically, though, is that vulnerability, the greater vulnerability to the US-Iran conflict. And so for Europe, the earnings growth factor is very important, and almost the hurdle has been increased. So it's important for everyone, but particularly for Europe, I think, coming into the earnings season with the increase in tensions.
Is there a margin concern for Europe then on the back of that oil price story? Or do you see margins holding up? The earnings forecasts, do you align with? Are they looking a little punchy, or are you comfortable with where the forecasts are for European earnings?
I mean, they are quite punchy, and I'd say that that's actually the case globally.
Yeah.
And specifically with regards to margins, that is one of the key things that we're going to be looking out for, particularly with regards to guidance. How are they talking about margin pressures? Are we starting to see them peak, given the increase in input pressures? So I think there's a lot to be discussed, or at least to be seen, in this earnings season for Europe and broadly for the rest of the world too.
When do higher yields become a problem for the equity markets? Do you expect a further sell-off for the bond markets?
We are expecting yields to rise a little bit further. We're not expecting them suddenly to come down. Even if the Fed doesn't hike any further, we're expecting a little bit of upward pressure. In terms of how the equity market can digest it, it really comes down to the strength of the economy. If the macro backdrop stays really resilient, constructive, which itself comes back down to the AI capex story, then actually slightly higher yields is okay. It's when you start to push the 480 kind of course, towards the 5% mark that we do start to get some concerns. But at least at this stage where yields are, we do think that it's not a headache for equities.
We had a previous guest on the opening trade saying that they were avoiding investment-grade credit because of how tight the spreads are, not being rewarded for the risk. How are you thinking about credit and about that tightness that we're seeing in spreads?
Look, I mean, the tightness of spreads is really interesting because it does show us that actually credit has been incredibly resilient. You know, equities have gone up and down, but actually credit has outperformed from that regard. From here, you're right, that the return isn't that compelling. And I think that from our perspective, given that we're not expecting growth to really weaken over the coming quarters, given that defaults actually seem like they're heading down, that this is probably the time that you can even move into high yield, keeping in mind that the quality in high yield is much, much higher than it was previously. So there is opportunity within the credit space, but if you're looking at a broader asset allocation portfolio, we do think actually moving, have a great allocation to equities does still make sense, and keeping in mind that you need to have exposure to real assets in this environment where inflation is still a concern.
Okay, this is quite a constructive view with important caveats that you've laid out for us. I'm wondering if what your preferred hedge is in an environment where things are looking a bit more negative. Where would you look for safety?
That's a really good story. I mean, look, diversification has been the key story throughout the last 2 years or so. Increasingly, look, it's about resilience, but it's also about trying to access those multiple layers of strength that do exist, created by the AI capex drive. But there is vulnerability within that trade. So Europe and China continue to be a good one in terms of if you're trying to diversify away from AI. The geopolitical conflict, of course, means that it puts a bit of a shadow on Europe. So we are thinking more about China, but also look across at the other sectors that exist beyond AI. So we're thinking about financials. Healthcare, of course, is a good one. And then in this inflationary dynamic, again, you have to look towards real assets. So that's still commodities, a really good play at this kind of time when you are concerned, when we're still concerned about the geopolitical conflict.
Okay, and we're seeing at least parts of the commodities trade playing that role today. Seema, thank you very much indeed for those insights on these markets. Seema Shah, Chief Global Strategist at Principal Asset Management. Coming up, a political reshuffle in Kyiv and the loss of a key Trump whisperer in Washington. We bring you the latest on the Russian invasion of Ukraine next. This is Bloomberg.
Multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is The Pulse. I'm Tom McKenzie in London. Now, Ukraine is expected to be top of the agenda as meetings of both EU foreign affairs ministers and leaders of the so-called coalition of the willing countries are due to take place today. The gatherings come as Ukrainian President Volodymyr Zelensky removed the nation's prime minister as part of a shift in political strategy in the run-up to another winter under threat of Russian attacks. For more, let's bring in our chief Europe correspondent, Oliver Crook, who has the details. Ollie, let's start with the gatherings today. What is going to be top of the in-tray for leaders? What is going to be discussed with the most urgency in these meetings?
Yeah, Tom, two big meetings today. The first is here in Brussels, where foreign affairs ministers have gathered to discuss a number of different issues. Obviously, Ukraine's going to be top of the agenda. They'll also be talking about possible sanctions on Israel in terms of their activity in Gaza and the West Bank, though there's a chance that they'll probably delay that given ahead of the election in Israel. But of course, for Ukraine, particularly at this meeting in Brussels, and then there's that coalition of the leaders meeting hosted by Emmanuel Macron over in France. I think in both of these meetings, the thing that you will find in common is going to be a sort of strategy session for the Europeans now that there has been a pretty radical shift in tone from the U.S. administration and Donald Trump himself following those meetings last week in NATO with a number of European leaders, but of course the one-on-one with Volodymyr Zelensky and President Trump, in which you saw really, I think, the warmest relationship you've seen between these two men. Obviously, Zelensky has gone to great lengths to get himself back in the good books of Donald Trump and has been, having some success with that occasionally, but really you sort of heard the most positive pronouncements from the President of the United States with Zelensky last week. We also had the United States granting Ukraine licenses to produce local Patriot systems, which is something that's absolutely fundamental for them. But for the meetings here for the Europeans, what they'll also be discussing is a 21st sanction package against the Russians. We doubtful to get an outcome on that this week, but it's something that they may be looking at getting into effect next week. But of course, for the coalition of the willing, it's some of that architecture, right, Tom, for those discussions about what the day after looks like in Ukraine, what Europe's role is in guarding security, but of course potentially getting some more of those air defense systems that the Ukrainians so desperately need. So we'll be watching both of these meetings very closely. We'll hear from Kaya Kallas a little later once the meeting here wraps, and keeping an eye out for Emmanuel Macron as well.
Okay, so the French president will be on the ground and you'll be watching for any progress on that question. And Ollie, meanwhile, I know you've been across this as well, the domestic politics of Ukraine obviously having international implications. What is happening when it comes to the new PM, or at least the proposal for the new premier role in Ukraine? What's behind this move?
Yeah, absolutely. I mean, you get these reshuffles every now and then from President Zelensky when you look at sort of the cabinet and the prime minister. The prime minister now stepping down and going to be replaced. She may become ambassador to the United States. There's some reporting around that. But of course, Zelensky does this every now and then. And this is really girding, looking at the possible candidates that would replace her for the winter and keeping the lights on in Ukraine, which is, of course, the fundamental question with the Russians, particularly last winter, really stepping up all the attacks on infrastructure. There's two main candidates. One is the CEO of Naftogaz, which is the national natural gas company over in Ukraine, and his sort of track record of being able to actually keep the gas flowing, keep storages full, all of those sorts of things under extremely difficult circumstances, potentially tease him up nicely to think about the energy question next winter. But of course, the former Prime Minister, Denis Shmyhal, who has also served as energy minister across Ukraine. So both of these men, potentially who would take over this role, are both incredibly well-versed on this question of energy. And of course, as the Ukrainians are gaining momentum on the battlefield, they're gaining support from Donald Trump, and of course they gain that critical loan from the Europeans, that 90 billion euros to keep them in the fight. Really thinking about what the sort of next steps are domestically, absolutely crucial for Zelensky as he enters, obviously now is the summer, but again, another winter which could be, again, very, very difficult for the Ukrainians.
Okay, bracing for another potentially tough winter for Ukraine. Bloomberg's chief Europe correspondent Oliver Crook. Ollie, thank you. Meanwhile, the death of Senator Lindsey Graham has left key U.S. allies like Ukraine without one of their most effective conduits to the White House. The South Carolina senator died unexpectedly over the weekend at the age of 71. In the last 3 days before his death, he met Ukrainian President Volodymyr Zelensky and sealed an agreement with senators to advance a Russia sanctions bill. For more, let's bring in Bloomberg's Jill Desis. Jill, just talk to us, give us the details around the sizable impact that Graham had in terms of pushing the need and the case for supporting Ukraine. He was a central and significant figure in the foreign affairs of the US.
Yes, that's right, Tom. And I mean, we just heard there from Oliver about the relationship between Zelensky and Trump and how that seems to have warmed recently. I mean, you have to imagine that when you have Senator Lindsey Graham, one of the most hawkish Republican senators in the United States, also just one of the ones that's been most insistent on the Ukraine issue. I mean, that's a huge loss in terms of that idea of being that sort of linchpin ally. I mean, again, his death, very shocking. He had just returned from a trip to Ukraine. It was actually his 10th trip to Ukraine since the war broke out in 2022. He had been at the NATO summit in Turkey just before then. So you do see, this really, really heavy involvement in these types of policies. I mean, again, Tom, it's really difficult to underscore or to overstate here. I mean, how important he's been for sort of shaping this type of foreign policy under the Trump administration. Trump is a man who, going into office was pledging to be a little bit more isolationist. Lindsey Graham is a massive interventionist, so he's really been pushing for U.S. involvement in these conflicts. I know obviously we'll have to see what ends up happening post this, but this is a pretty key ally who did have President Donald Trump's ear on a lot of these matters, and so it's hard to imagine that this isn't sort of shifted in some form in terms of how things actually look at U.S. policy going forward.
What does it mean for the domestic politics of the U.S.?
So, I mean, when it comes to replacing Lindsey Graham's Senate seat, it's in South Carolina. This is a very, very heavily conservative area. There was going to be an election later this year, still is, that Lindsey Graham would have been up for re-election for. Not particularly great odds for the Democratic candidate, but there is a little bit of shuffling going around just sort of on the Republican side. So the governor of South Carolina will be able to appoint somebody who can fill out the rest of Lindsey Graham's term. There will also be a special primary, Republican primary, that does sort of create the opportunity for some infighting within the Republican Party, depending on how that shakes out. So again, a little bit of uncertainty about what that ultimately looks like. I do have to point out that when it comes to domestic politics, Lindsey Graham also a big supporter of the Iran war, which of course has become more unpopular in the United States as energy prices remain elevated, gas prices remain elevated. So, interesting to see whether or not that builds into the equation here.
Okay, Jill Desus, thank you very much. Coming up, we're going to bring you, let's shift focus, we're going to bring you the outlook for M&A for the rest of the year after a deals surge in the first half. That conversation is next. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Good morning. Happy Monday. Welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. SK Hynix tumbles in US pre-market trade after shares fell by the most on record in Seoul. But positive news for TSMC, with sales at that company jumping by 36%. Moscow faced a second day of large-scale drone attacks from Kyiv. Ukraine's President Volodymyr Zelensky overhauls his government, including changing the prime minister. Plus, oil spikes and government bonds fall as the US and Iran exchange new strikes, with both sides claiming control of the Strait of Hormuz. Let's get more right now on that story and bring in our Middle East energy correspondent, Anthony De Paola. Anthony, where do things stand in terms of the conflict, in terms of the aggression, and what is actually flowing, if anything, through the Strait right now?
Good morning, Tom. Yeah, the way it stands is conflicting reports from both the U.S. side and the Iranian side. Iran claiming that Hormuz is closed to traffic, the U.S. saying it's open, saying repeatedly that it's open. There's that channel along the Omani coast that the U.S. is saying vessels are able to take. And so far, we are not seeing a huge amount of traffic in terms of vessels that we can see with their satellite trackers on. It does appear that there are some vessels that are going through without the satellite signals on, and that allows them to kind of sneak through the Strait of Hormuz, as it were. If they don't have those satellite signals on, they can't be seen by the regular radars. They're not transmitting, and oftentimes we understand these vessels are going overnight with the lights off, potentially with some military escorts to try to get through there. So those kind of voyages are continuing with vessels that are going dark, as it were. Whereas the flow of normal traffic through the Strait has really dried up, really since last week, when we saw those attacks on shipping, particularly on some vessels that were taking that Omani route. So that's dried up, and it's becoming really difficult for crude buyers, for traders, for shippers who want to go in to the Gulf and pick up some oil. It's becoming really hard for them to do that, and so we're just not seeing the availability of vessels willing to go into the Persian Gulf because of the risk of getting stuck there or even being attacked while trying to make the voyage. So that's really impacting the traffic going through the Strait, Tom.
Okay, Anthony, with that update, thank you very much indeed. With Brent at $78 a barrel, up 2.6% in the session so far. Bloomberg's Anthony De Paola. Of course, the energy price story ties into what's happening with travel as well. But this is a different story when it comes to EasyJet. Investors are awaiting an update from US investment fund Castle Lake after Apollo's surprise £5.7 billion counter-offer, which, of course, came through last week. The battle between the two US funds stands out because the volatile, low-margin airline business rarely draws financial suitors. Let's get more. Bloomberg's European Equity Capital Markets reporter, Pablo Mayo-Sequeiro. Pablo, where do we stand on this story? And this is another example of possibly a publicly listed European company going private in the airline space. How close are we to a deal being actually closed? Two suitors. Where are we in this story?
Well, we'll have to see if there's a bidding war here. Clearly, it fits into a broader theme. There's been a growing number of UK-listed companies that have been taken private in the last few years, and that number just keeps growing and growing. I'm not sure that trend is going to slow down anytime soon.
Okay, and there's an IPO drought in London, at least. Is that what kind of opens the spigots, if anything? What opens the taps on IPOs in London? Is it a question of the LSE making additional changes? Is it a regulatory question, or is it a broader market sentiment story?
It's a great question that a lot of people in the city are asking themselves. And clearly, you're putting your finger on the fact that there's a big gap between the number of companies that are being taken private versus the number of companies that are joining the stock market. The good news is that there is a decent pipeline of IPOs looking to come to London. The question is, when are these companies actually going to come to market, and what happens in the meantime, because these takeovers are not going anywhere. I think that the regulator has done a lot to make London more attractive for companies to list. The question now is around the availability of capital. Capital to invest in these IPOs and remain invested, so that valuations keep going up, and then potential buyers don't see the bargains that they're spotting right now in the market. The current Labour government has done a fair bit in terms of reforming pensions, but there's still a lot to get done, and obviously we have a new administration coming in, and we'll see what they do about it.
Okay, so the pipeline is there, but we need to see that pipeline actually being executed on. Pablo, thank you for that update, of course, in terms of what's happening, potentially with the IPO story in the UK. Pablo Mayo Sequeiro, who is our European Equity Capital Markets reporter. Let's start on the M&A story, or stay on the M&A story more broadly. It's been a bumper first half for global M&A as we think about EasyJet. Of course, it hasn't crossed the line yet, but even before EasyJet, it's been a pretty solid first half of the year for transactions. Values were up transaction values up about 30% year on year to $2.6 trillion between, that sounds like a lot, between January and June. That puts deal makers on course to potentially pass the record haul they achieved in 2021. Let's bring in right now Cassandra Verwey, who is JP Morgan's head of mergers and acquisitions in EMEA. Cassandra, good morning. What is the current state of we kind of gave a bit of a snapshot there. Does that momentum continue into the second half, and what are the drivers?
Thanks for having me, Tom. No, look, I think there's a clear drive and a clear continuation of that trend that we've seen from the second half of last year all the way into this first half, and I think continuation into the second half. There's some structural drivers which sort of drive M&A in the short to medium term. One of them is the propensity to sort of take strategic action from large corporates. We've seen that already happen over the course of the last 6 months, with mega deals being up 250%. We saw 21 of them in Europe. We were fortunate enough to advise on 12 of those. The reality is there's a clear sort of bias to action in the corporate boardroom. That's not going to change. There's a strategic imperative to act, and sort of they need to counterweigh, I would say, the volatility in the markets and the volatility in the macroeconomic outlook with sort of that strategic imperative, and sort of there's a clear...
What is driving that strategic imperative?
It's a search for scale. So if you look at what the board is looking at in today's market environment, scale comes really at a premium. So if we look at valuations in the market, scale companies trade at around 40% on average premium to smaller and mid-cap companies. Scale drive benefits for growth, ability to invest in growth, higher margin, cash flow generation, and therefore scale is at a premium in today's market environment. And if you've seen all the mega deals that I just spoke about, and the volumes, which means that corporates are sort of fearing a little bit that they're sort of being left behind, and therefore there is an imperative to act.
With a particular lens on Europe, what are the challenges around cross-border consolidation right now?
Well, you just talked about sort of the UK, which is a clear example of where there's a lot of cross-border M&A. Cross-border M&A has seen a massive uptick over the last sort of 12 months. Yeah. Following Liberation Day, there's a massive surge of cross-border activity. A lot of that has been into the UK. There's a nuance to it, though. The UK is actually the second largest acquirer of companies globally. So the UK is actually, throwing quite a few punches in sort of the global M&A arena. Now, it's fair to say that the US is above that. The US is the biggest buyer and seller of assets, with a lot of focus on the UK, as I said. But it's clear that the UK is also there.
That's interesting. We don't talk about that side of the story quite as much, so it's interesting you bring that up. But let's bring you back to the other part of the story, which we do talk about it, which is that move from public to private in the UK. Does that continue in the second half? Does the publicly listed stocks, for valuation reasons maybe, look attractive to US investors?
I think there's a valuation argument. Look, U.S. companies trade at a premium to European companies. So that is a benefit when you want to do large-scale M&A, which is what we've seen in today's market environment. So clearly, that is going to be the case in the second half as well, because the valuation differentials will not disappear. I think the reality, though, is that the U.K. will always be an attractive market from a public to private perspective. The UK is the largest market in Europe. It has great international companies. They're trading at a discount to US peers. It has the largest roster in Europe of large companies. So if other companies from outside of Europe are trying to look for scale, the UK is one of the first markets they look for.
Do you think the IPO pipeline opens up for the UK?
I think it's a challenge. I think the IPO pipeline is very much bifurcated towards what we call trophy assets. Those are companies that have secular growth trends, that have high margins, high cash flow generation, and are not impacted or actually are a beneficiary of AI. That's a small group. So there's only a small number of companies that sort of tick all those boxes in today's environment, and that's really the reality that we find ourselves in. But it does mean that the UK and other European companies, by the way, as well, who see public to privates, need to replenish those companies with high growth, innovative companies that grow through the cycle.
How are boards talking about a potential Burnham government and what that could do to deal making?
I think boards take a longer term view. I think what we've seen, if you bring it back to a broader macroeconomic environment, I don't think the UK is specific to that. Boards take a long-term view, and I think they look at long-term secular trends, what is driving our businesses. AI is clearly one of them. If we look at the scale point I made earlier. So I don't think that boards are saying, let's look at the government that's in place and now act on that, and let's drive M&A, yes or no. They take a much longer-term strategic view and therefore come back to that strategic imperative. Are we capable of doing the dream deal that we want to do in today's market environment? Balance sheets are actually quite healthy. Operating and earnings momentum is actually quite healthy. So that actually gives them license and allows them to do these bigger transactions. And I don't think the government in a country is necessarily going to drive that change in the short term of that thinking.
You talked about AI. I'm thinking about Schneider Electric recently doing a deal in that space. Yeah. When we think about cross-border consolidation in Europe, then, which industry is kind of top of mind for you in terms of where we could see major deals coming through?
If you look at one of the growth drivers is AI, but AI is a big buzzword, and it talks about many industries. Of course, it's about compute, it's about storage, it's about data centers, right? That is a massive area of investment. There's $5 trillion of capex coming to the market in the next 5 years. But there's a whole roster of adjacent industries that are sitting next to that AI trend. Think about electrification, think about automation, robotics. So those are thermal management. So those are all sorts of areas where AI is, and the investments in AI and the capex in AI is creating a lot of side effects, if you will, that are going to drive sort of the trend and the growth. Now, as a company, if you're not in those industries or those adjacencies, you want to be in those adjacencies. So we see a lot of growth in those sectors. They tend to be industrials, they tend to be technological, and we see a convergence of industrials and technology to create those large corporates that, and the example you gave just now about Schneider is exactly on trend. It's creating a software platform within Schneider, which historically was a traditional DI company.
Are you getting the sense that Brussels is more accommodating to deals either within AI or within defence? Is there more? What is the signal? What signals are you getting from the regulators?
Yeah, look, I think around the regulatory sort of environment, both in the US as well as in Europe, both the CMA as well as European regulatory authorities, we've seen a more pragmatic stance towards antitrust in particular, which went from we say no to let's think about remedies. And therefore, as a board, when you think about doing a transaction, you want to know what the certainty is that you're going to get to the finish line. So that's helpful. That has limited the amount of time that people need to spend on things, and also the regulatory throughput and the lead time for it to close is different. However, there's a big but. In today's market environment, there is more focus on security, resiliency, and therefore, in that context, the dynamic shifts from only antitrust more toward foreign direct investment regulations. And we haven't really everybody's talking about national champions in Europe, but we haven't really seen those deals yet.
Okay, that's interesting. The banking space. I mean, do we get? I mean, I'm thinking obviously of UniCredit and Commerzbank, and you don't have to talk about individual names. But do we get banking consolidation? I mean, that is one example of where things are held up, arguably for domestic political reasons. do we get more activity in banking? Is there more consolidation that can come through this year?
The reality is FIC and banking as part of that, and insurance is already the second largest area of M&A activity. So the reality there is that we will continue to see that. What we've seen so far, though, is really transactions that are about economies of scale, and they tend to be more local. So we've seen that in Italy. We've just seen the Intesa transaction. We see that in Spain. We see that in other jurisdictions. One could actually argue about the Commerzbank situation. There's a big domestic German angle to that one as well. So you see that more on a national level, I would argue. The reality is that we haven't seen these cross-border M&A situations yet in banks across Europe, and that's because the regulatory framework is still not quite there.
Still not quite there for those cross-border banking deals. Kasana, thank you very much. Really interesting insights. Kasana Verve, who is JP Morgan's head of mergers and acquisitions, M&A in EMEA. Now, to defence, and more details on the defence space. Europe's largest defence startup, Helsing, has completed a financing round at a valuation of $18 billion US. Helsing has gained prominence since Russia's invasion of Ukraine. Let's get more details and bring in Bloomberg's global defence editor, Jerry Doyle. Jerry, how significant is this latest funding round for Helsing?
It's quite significant just in terms of the dollar value. Obviously, 18 billion valuation is very high, but it also shows the seriousness of investing in the defense space even now. Goldman Sachs, JP Morgan, they're a big name pouring money into this space, and something that started out as a hot investment area after the full-scale Russian invasion of Ukraine in 2022 is now turned into an even larger space after the Iran war sort of showed the importance of a lot of the technology that defense startups are working on. Things like drones and drone defenses are now extremely hot areas.
Jerry, as we think about drones, we think about connectivity. It's so important, and clearly the Ukrainians are showing some strength there. But that relies on having satellites in space. Where does Europe stand? Europe has strength in the satellites in the satellite sector. I know you've been doing reporting on this. Is Europe positioned strongly enough when it comes to ensuring it can get satellites into space and maintain connectivity?
Yeah, I mean, Europe has some excellent technology companies. It has companies that can build these high-tech satellites that can do Earth observation, spy satellites. They can track fires. They can track things on the ground, radar, communications, all of these things Europe is able to manufacture for itself. The tricky thing is getting these objects into orbit. Right now, it relies on heavy lift for Ariane space, the Ariane 6, which can only launch, say, 10 times a year, 22,000 kilograms to orbit. That's a big number, but it can't do it very often. So for national security payloads, they really have to rely on a lot of foreign companies, most namely SpaceX. And Europe wants to get away from this in order to get more deeply into the defense space in orbit. Right now, that's a big challenge for them.
Okay, Bloomberg's global defence editor, Jerry Doyle, with that update and that reporting as well. Jerry, thank you. Coming up, as Europe endures its third heat wave of the season, the World Health Organization warns extreme temperatures are a dress rehearsal for what's to come. More on that next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Welcome back. This is The Pulse. I'm Tom McKenzie in London. To UK politics then. Andy Burnham is reported to be considering unveiling a bolstered budget later this year. This as allies and experts seek to persuade him to pursue a land tax, public control of utilities, and a more ambitious devolution strategy. Burnham is on course, of course, to take over from Keir Starmer as the UK Prime Minister next Monday. Let's get more with Matt Bunny, UK economist and Bloomberg with Bloomberg Economics. Matt, what more do we know about these ideas being kind of tossed around by Burnham's team, how real they are, and whether the Treasury is ready to kind of implement them?
So the bigger budget you referred to would be bringing forward the spending review that happens, which sets out departmental budgets for 3 years ahead. So essentially, this kind of measure would allow Burnham to really reset fiscal policy in quite a clear way and demarcate himself from Starmer. In terms of the specific policies, they are still shaping up, but one of them you mentioned is land tax. This is something which economists have been advocating for a long time. It is less distortionary than things like a stamp duty tax, for example, although it is complex to reform the property tax system, and that will take some time. Fiscal devolution is another particular point that Burnham has advocated for in the past and has continued to do so in recent speeches. So fiscal devolution would basically allow the regions to have more power over tax and spend. So the UK is actually one of the most fiscally centralised nations compared to other G7 countries, for example. The idea being, if you allow more power to the local regions, they can make better decisions for their area about how best to raise money and how best to spend it.
Matt, any other clues about other policies that are being worked out by Burnham? Do we believe him and the team when they say that they've been working on things for 12 months? I mean, is this a team that's going to come in and actually have policy ready to go?
I mean, this is a question that time will tell. I mean, certainly we are still trying to figure out the details. The policy platform is hazy at this point. What we can kind of glean is from recent public statements from people in his circle and policy papers that have been put out. So, I mean, we know one key thing he said, he's going to stick to the fiscal rules that Rachel Reeves implemented, which will be some kind of which will appease bond markets. He's also said he's going to stick to Labor's manifesto commitments on tax, which kind of narrows the room that he has to make any major changes. What we do expect, I mean, all these policies we've just been speaking about are things which are going to get long-term growth going, or hope to get long-term growth going. But those kinds of policies usually have little short-term political payoff. So what we expect is that in the upcoming budget, it's quite likely Burnham would implement some kind of cost of living package, which would quite possibly be funded by something like a capital gains tax hike.
OK, Matt, thank you. We continue to watch, of course, and get any signals and monitor and assess any signals we're getting from Burnham's team in the lead-up, of course, to Monday. Matt Bunny from Bloomberg Economics, thank you. Meanwhile, this year's record-breaking heat in Central and Western Europe has already caused close to 10,000 deaths across the UK, France, Spain and Germany. That is according to research groups and government bodies, 10,000. In England and Wales alone, heat waves may have resulted in more than 2,700 deaths. That's according to an estimate by researchers at Imperial College London. The World Health Organization, the WHO, has warned that the extreme temperatures are a, quote, dress rehearsal for what's to come. Let's bring in Bloomberg climate and weather reporter Joe Vertz. Joe, it's pretty terrifying in terms of the human toll that's already been taken as a result of these record high temperatures. Is this part of the new normal? Talk us through. Put this in context for us. These sound like huge numbers in terms of lives lost.
These are big numbers, and really these are early counts. I mean, I've talked to some health authorities and researchers, and they expect those numbers could climb even higher. And to the dress rehearsal line, we know that these heat waves are getting more intense and more frequent. And look, this summer they started early. We started seeing these heat waves in May. We saw, monthly records in May across UK, France, and then hit again in June, and again right now in July. We've had 3 of these in a row, and each of these heat waves, had their own toll, but the accumulation of that over time is really starting to wear. It's wearing down, any of the really all of the human systems that people rely on for their lives and livelihoods. It's we've had factories have to rotate workers off to because it was too hot. We've had just daily life be suspended. It's been too hot to do a tour of the Eiffel Tower in the afternoon at some of these places. And the 2,700 number out of the UK, that doesn't account for some of the deaths we're starting to see now from other artifacts of the heat, including the wildfires. We've had a big one in Spain. It's the deadliest in at least 5 years, one of the deadliest ever. 13 people died just in that event alone. So we're just in July now, and more hot weeks.
Starting earlier and going on for longer.
That's right.
And so the human toll is there. Talk to us about the infrastructure. But we are not built, our infrastructure is not built for these temperatures. What do you see when it comes to European and UK infrastructure?
Well, I mean, the infrastructure not built at a time where they were dealing with these types of temperatures and these types of extremes. Many homes here in the UK don't have air conditioning. 7% have built-in air conditioning here in the UK. A further 8% are using these portable, air conditioning units, and you could stretch that out and look at rail infrastructure. We've seen rail lines have to be suspended due to concerns about reliability and safety on these networks, all the way to power. We've had the UK grid operator warn several times about potential energy shortfalls, and in France, the nuclear plants have had to curtail output due to hot rivers.
Okay, Joe, thank you for that, an important update in terms of the climate damage. Bloomberg weather and climate reporter Joe Wirtz. There's a lot more coming up. Looking at European stocks, currently flatlining. US futures down 0.3% on the S&P evenings. Nasdaq 100 futures down a full 1%. Bloomberg Brief is next. This is Bloomberg.
What happened was you were up.
Are you a different president from your father?
I have to be. It's a different time. There's fundamental lessons that I still hold close to my heart. But in terms of the practical things that you do, very few of those things apply any longer.
How is Mom?
She's
in her 90s.
Yeah, but I always say she's 95 years old. She didn't get the memo. She doesn't believe she's 95 years old. And she's still very active. I mean, I still get calls from her, and she says, you need to do this, you need to do that. And she doesn't let her age hold her back.
Does she try to advise you, even as president of the Philippines?
Constantly. And, I always learn something new with my mom. In my family, she's the real politician, and she's a natural. My father was an intellect. He was a statesman, and we always said that he lived in his head. He was very, very, very deep thinker. That's where I learned. My mother, on the other hand, she has this uncanny ability to connect with any kind of person. Any person she runs into in the street, kings, presidents, anyone, her childhood friend, she doesn't know how to fight. She's very bad at conflict.
Know how the market day started.
Find out how it finishes.
public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The U.S. and Iran trade fresh strikes. Oil jumps on conflicting claims over whether the Strait of Hormuz is open. Two tech tales. SK Hynix posts its biggest drop on record in Seoul after its U.S. debut Friday. TSMC sales soar on AI momentum. And a big week for markets. Kevin Warsh makes his first appearance on Capitol Hill as Fed chair, plus CPI data and Wall Street earnings on deck. It's been a big session, though, in Asia. A heavy Monday, particularly in Seoul. Let's get a check now around the world. We'll start in Hong Kong with Winnie Su. Winnie.
Yeah, good morning, Vonnie. A very dramatic sell-off in the South Korean market, with the Kospi here down about 9% today, having also triggered a seventh circuit breaker so far this year. Now it's mainly being led by SK Hynix, as you just mentioned, stocks tumbling 15%, having its worst day on record. There is a bit of profit taking, of course, after that U.S. ADR listing surging about 13% on Friday, but also investors pointing to some concerns about the potential peak out of the memory cycle. And also we have heard from local brokers that expectation for the second quarter earnings might actually miss expectations. So that's also dragging tech stocks further down. As you flip the board and see how that spillover is into the Asian session, we have broader Asia gauge here down about 1.8%, having also headed for its worst, its lowest in about a month. Now Taiwanese stocks are doing slightly better, slightly helped by the TSMC results. We did see quarterly sales jumping about 36%, meeting expectation, but a bit of optimism into the Thursday's earnings. Now, in terms of the broader market, when it comes to currency space, we are seeing Japanese yen actually a bit lower on the back of that stronger U.S. dollar, but also we did hear from Japan that they have no plan to, in fact, change that pension fund allocation. Back to you, Vonnie.
Fascinating, Winnie. Thank you so much. Winnie Su there in Hong Kong. We'll begin in Europe ourselves. Brent crude, one of the main stories today. The Iranians saying just in the last few minutes that the Memorandum of Understanding is in a crisis phase. It's also warning ships not to pass through the strait, even on so-called U.S. routes through that strait. So we do have Brent crude higher again. We seem to be capped, though. We haven't gone up to $79 a barrel yet, but we are still up 2.5%. As regards stocks in Europe, we have $2 trillion worth of market cap reporting this week. That'll be $6 trillion in the United States. So we are going to be reacting a lot to that, also to this Iran story, also to the South Korea story. We have the Stocks Europe 600 just inching into the green in the last few minutes. It had spent the last couple of hours in the red. And as you can see, energy is a big part of that, with oil prices higher. Also telecom in Europe after Vodafone and that stake by Niels last week. Let's take a look at the U.S. picture. A lot of the same reaction, a lot of the same drivers. Earnings, the Fed chair testimony on Capitol Hill, and data, including inflation data. We do have futures lower, primarily too on that SK Hynix drop, which was a huge drop. It is something like a 27% discount now trading in South Korea versus where the ADRs traded Friday. They were up 13% at the end of the session. As you can see, futures pointed lower across the board, with the exception potentially of Russell 2000 futures. And then Treasury yields are higher once again. We are testing those highs that we saw last week, with the 2-year yield almost up at 422 and the 30-year yield at 507. And for some context, Friday was the lowest volume of trading this year. It was also the lowest for the VIX this year. That is not going to be the case today. All right, let's get to some individual movers now. Back over to London and to Chloe Melly.
Good morning, Bonnie. U.S. tech stocks are very much in the red this morning in pre-market trading after we saw this huge plunge in the Kospi index in South Korea. And so this actually created a lot of weakness in European tech stocks. We saw the likes of Infineon, ASML in the red as well at the open in Europe this morning. And we can see that also spilling over into this U.S. tech stocks, with SanDisk in particular, we're down almost 7% there. But Intel and Nvidia are also in the red. We're seeing this growing volatility in the South Korean market, some of it due to those renewed U.S. and Iran tensions, some of it due to this massive drop in the shares that we saw for SK Hynix. And so this volatility and this growing concern around whether AI spending, the AI boom is overstretched, that is really spilling over there into the U.S., into Europe. And so we're having once again these questions around the AI trade and how much further really it can go after so many ups and downs. So very much those names to keep in mind as well this morning.
It really is a yo-yo market these days. Chloe, thank you so much. Chloe Melee there in London. And coming up this hour, we look to the busy week ahead with Terry Wiseman of Macquarie. But first, oil rising as the US and Iran continue their tit-for-tat attacks and debate whether the Strait of Hormuz is actually open. Iran's foreign ministry saying in the last hour that the memorandum of understanding is in, quote, crisis phase. Joining us now is Bloomberg's Abir Abu Omar. What does this mean, Abir? Have crossings completely stopped?
Good morning, Vonnie. What this means is yet to be seen. For the time being, we're watching these tit-for-tat attacks, as you have mentioned, through the early hours of the morning in the Middle East. Now, this whole thing started, of course, with Iran hitting a ship in the Strait of Hormuz at the beginning of last week. That was a Qatar-flagged ship. And then the U.S. launched 2 straight days of attacks. That also coincided with President Trump at the NATO summit saying that as far as he's concerned, the ceasefire talks are over. A lot of caveats that we reported about that, him saying that the negotiators can go back to the table and negotiate with Iran. Now, over the weekend, things escalated a little bit more with Iran hitting yet another ship, Cyprus flag this time, and then the U.S. Central Command in the early hours of the morning here in Dubai saying that it finalized yet another round of strikes on targets in Iran, a lot of them military targets, some of them in the southern part of Iran. Bushehr, a province there, a famous province there, was also hit. Now, Iran's retaliation came in a shape that is familiar. It attacked countries in the region, that is Kuwait, Qatar, Jordan. Air bases in Jordan were attacked. Qatar saying yesterday 3 people were injured, including a child. And so we're watching, again, the tit-for-tat, the escalation in the rhetoric. We're not yet seeing signs of us going back to full-on, full-fledged war, similar to what we saw back in March or the beginning of this whole thing. But it definitely seems to be tilting towards a slightly more dangerous phase. You just mentioned the foreign ministry through the spokesperson Ismail Baqai about an hour ago saying that the MOU that was reached about a month ago at this point is in crisis mode. We wait to hear from the Iranian side a little bit more just about what the retaliation is going to look like. But up until the early hours of Monday, Vonnie, we came into the office with Iran continuing its attacks on countries in the region, the U.S. not backing down either, saying that if Iran continues to attack ships in the Strait of Hormuz, it will retaliate.
All right, Abir, thank you so much. Bloomberg's Abir Abu Omar keeping us up to date. Diverging stories in Asian tech stocks this morning. SK Hynix shares falling the most ever in Korea after debuting on the U.S. stock market Friday. Meanwhile, TSMC shares are soaring after reporting impressive quarterly sales. Matt Bloxham of Bloomberg Intelligence joins us now. Matt, why this continued repricing? Let's just take SK Hynix, for example, trading at a massive discount to where the ADR is traded Friday in the US. Who's right? What valuation is more correct?
Yeah, it's interesting. I think I've 2 very different views of the world here going on. I think, particularly when it relates to AI, I think generally US investors very optimistic about the runway that AI has ahead of it, and that companies like SK Hynix and TSMC are going to be really critical as that industry continues to expand. I think direct investors in Korea and SK Hynix perhaps have kind of painful memories of the kind of historical cyclicality we've seen in this industry, and aren't yet prepared to kind of buy into a kind of a permanent shift in that dynamic. And so, the shares trade at a single-digit price earnings ratio, reflecting an expectation that at some point the demand is going to slow down, and they're perhaps going to be left with oversupply in the market, which squeeze their pricing power. So two very contrasting views. Can be interesting to see how the ADRs open today, given, as you said, there's close to a 25-30% difference in the pricing of the ADR versus the underlying.
Matt, on TSMC, we'll get the full quarterly results on Thursday, but we do know several details, including that TSMC is setting aside close to $56 billion for CapEx this year. I mean, is the market still okay with these kinds of massive, gargantuan figures?
Yeah, I think obviously we had good results today, 68% year-on-year growth in revenue for June, so overall about 36% for the quarter. Largely where the market was expecting it to be. And interestingly, the market's looking for an acceleration in growth in the next quarter, so increasing to about 40% year-on-year. So I think it's going to be interesting to see what they say about forward growth when they come up with the numbers on Thursday. Yeah, CapEx obviously in focus. I think for now, TSMC is in an incredibly strong position, being the primary supplier to the likes of NVIDIA and Apple. I think whilst there's been some softness in the consumer electronics market, I think largely the AI market, particularly through NVIDIA, is supporting that. So I don't think there's so many concerns about the CapEx cycle near term for TSMC. I think like a lot of these companies, though, perhaps what's on the horizon is that some companies, particularly in the US, are looking to kind of self-provide. And so that might be the disruptive layer of competition that TSMC faces. We've seen them talk about expanding their US manufacturing capability. I think they're going to need to do that to kind of keep the demand that they've had historically from US customers.
Just when we thought the AI trade had got reinvigorated last week, Matt, thank you so much. That is Matt Bloxham of Bloomberg Intelligence. Well, it's a big week for markets in general, with CPI data, the Fed Chair Kevin Warsh's congressional testimony, and of course, big bank earnings. Joining us now is Bloomberg MLive editor Morwenna Coniam. Morwenna, it's been pretty chaotic in the last couple of weeks. How will markets digest everything that needs to be digested this week?
Yeah, there is definitely a lot coming up, and there's a lot of context around that. So key economic data this week will be the US's CPI report. We also have PPI as well. Those will be the final inflation readings before the Fed's meeting at the end of this month. But of course, the data is for June. It's expected to show inflation easing slightly, but any upside surprise is going to be particularly negative, I think, given that since the month ended, we've seen a re-escalation of the situation in Iran, and the volatility and uncertainty is there. And with oil prices rising again, then we do have that inflation concern being priced back into rate hike expectations as well. So I think it's going to be very closely watched within the context that things are probably slightly worse than the data shows. And as you said, we also will hear from Kevin Warsh this week, so I think what he says will be extremely closely watched as well.
Well, would he calm the markets on inflation? He seems to be concentrating only on that for the moment.
It will probably be the focus. I think what he says about where the bank is looking at it, he's already previously sort of dialed back the forward guidance slightly, and obviously the bank did keep rates on hold. So I think any indication there about how concerned they are about inflation will certainly feed into further expectations. I think it will be very interesting to see how the market responds to what he says as well as what he says.
Morwenna, is there more of a connection between what happens in South Korea and the US now, and will that sort of decouple at some point? I mean, for the longest time, whatever happened in South Korea didn't matter that much to US trading. It always started off on a fresh footing. But recently, with these massive swings, we have seen a little bit of pass-through.
Definitely, we have started to see this recurring sort of risk-on, risk-off trade where when tech does well, it's not the same as before, where I think we did see them moving quite separately in Asia and the US. Certainly what we're seeing is that the sort of days when oil prices are driving up inflation concerns, we've got energy stocks outperforming, but we have tech lagging. And that does seem to be the trade, because it suggests that more of it might be about broader sentiment and concern about that AI trade momentum waning, rather than the specifics of company reports. It does seem to be sort of moving more as a sort of general trend. And I think probably that is a bit concerning because it's not so much on the fundamentals anymore.
Yeah, exactly. Morwenna, thank you so much and good luck this week. That is Bloomberg MLive editor Morwenna Coniam. Now to other top stories trending on the terminal this morning. MUFG's stock market value shot up to the highest in Japan, surpassing Toyota. It's the first time a bank has reached the top position since the so-called 3 mega bank groups were established. Stellantis shipments climbed 10% in the second quarter to an estimated 1.6 million vehicles. The jump is fueled by growth in North America as the carmaker pushes on with its turnaround plan. Moscow is facing a second day of large-scale Ukrainian drone attacks. Officials are reporting hundreds of unmanned craft flying towards the Russian capital and 3 fatalities in the surrounding region. Coming up, we'll look at what Republican Senator Lindsey Graham's sudden death means for the GOP. Next, this is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg. Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bloomberg Brief. I'm Bonnie Quinn, New York. South Carolina Senator Lindsey Graham's sudden death over the weekend is setting up a succession drama that could upend the state's Senate race. Bloomberg's Kasia Klimaszinska joins us from Washington. Kasia, who takes over the senator's spot? Is it going to be President Trump that has the final say in that?
Hello, Vonnie. So President Trump already spoke about this tragic sudden death. He and the South Carolina Senator Lindsey Graham were very close. They talked very often. In fact, they even golfed together. And I suspect that Senator Graham was in touch. He was definitely in touch with the White House in perhaps his final hours, because he was trying to negotiate this bill that would impose additional sanctions or penalties on buyers of Russian oil. So the two were close, and so then President Trump went on TV networks yesterday to talk about the senator, and he said that he has a replacement in mind, but he didn't mention a name, and in fact it's not up to him, it's up to the governor of the state to name a replacement. So in short term, I suspect that it will be a relatively smooth process. Republicans will pick somebody who will fill the seat. Obviously, that person can't possibly have the name and the impact that Senator Graham had. But in the longer term, over the next 4 months, it does create another headache for Republicans, even as South Carolina is a safely Republican state. Democrats have a candidate trying to get this Senate seat in November, and now this candidate has a kind of an advantage given the surprise that Republicans have to deal with.
Well, beyond giving Ukraine huge support, the senator was also key to the Save America Act. Can it survive in its current form without him? Will whoever takes his place keep his opinions?
Yes, that's a big loss here domestically for Republicans, but also internationally. As you mentioned, Senator Graham was a big supporter for Ukraine, visiting that country just before he died for 3 days. And in turn, here domestically, he was representing interests very much aligned with President Trump. It's hard to say what will be the views of the next person. It's clear that President Trump, again, he's engaged here. He has his thoughts, so he will try to get somebody in this seat who will have similar reviews. But again, without Senator Graham's seniority and his kind of persona, it's doubtful that this person will get as much traction as this senior senator used to have.
Well, it's funny, the senator's death seems to have prompted GOP Senator Mitch McConnell to break his weeks-long silence. So he posted on social media finally that he had suffered a fall in June and also contracted pneumonia that sent him to the hospital. What more do we know about when we might see him return?
Yes, this statement came, at the right time, or perhaps maybe even a little bit too late. Senator Mitch McConnell wasn't seen here in DC since mid-June, and so there was speculation about his health, his condition, whether he will be able to come back to work. So Senator McConnell issued a statement yesterday. The statement came with a photograph of him with his wife smiling, reading a newspaper, but he said himself that yes, he suffered a fall and then he contracted pneumonia, and even as he's out of the hospital now and just undergoing therapy, he's not able to come back here to DC just yet. So another important, crucial and strong voice on the Republican side missing for another couple of days at least.
All right, Kasia, thank you so much. Bloomberg's Kasia Klimashinska there joining us from Washington. Coming up, we're going to be taking a look at what else is making headlines in your front page news. That's next. This is Bloomberg.
is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
to the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bloomberg Brief. I'm Vonnie Quinn in New York. Time now for your front page news. First up, the Financial Times reporting Senator Elizabeth Warren has written to JP Morgan CEO Jamie Dimon requesting clarification about the bank's relationship with Jeffrey Epstein. In the letter sent last week, Warren pressed Dimon on whether he took advice from Epstein while lobbying against a UK tax on banker bonuses. Next up, the Wall Street Journal reporting real estate giant Brookfield is in exclusive talks to acquire a stake in Hudson Square Properties. The deal would value the complex at $3.5 billion and solidify the status of Manhattan's West Side as a tech and media hub. And finally, the New York Times reporting a group of states are preparing to file a lawsuit to block Paramount's $111 billion acquisition of Warner Brothers as soon as this week. The legal challenge would create a major obstacle for one of the biggest media mergers in history. Let's take a look at the macro picture as we head into your Monday session. We have futures pointed lower, but fractionally, the dollar index unchanged and the 10-year yield close to the highs of last week. Coming up, we're going to take a look at the big economic week ahead with Terry Wiseman of Macquarie. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The U.S. and Iran trading fresh strikes. Oil higher on conflicting claims over whether the Strait of Hormuz is actually open. Two tech tales. SK Hynix posts its biggest drop on record in Seoul trading after its U.S. debut Friday. TSMC shares are higher. Sales soared on AI momentum. And a big week for markets. Kevin Warsh making his first appearance on Capitol Hill as Fed chair, plus CPI data and Wall Street earnings on deck. So let's take a look at those markets then. Futures pointed fractionally lower. Nasdaq 100 futures are off their lows. We had a massive drop once again in Korea, particularly SK Hynix and Samsung dragging down shares, down 11 and 9% apiece. At one point, in fact, SK Hynix dropped 15% for the close of the session there, even after Friday's 13% gain for its ADRs. Treasury yields back up to last week's highs. We're at 5.07 on the 30-year yield. And then things like the VIX are also showing just a little bit of pressure. It did have its lowest close since January on Friday, though, and volume has been very low. It's actually at the lowest all year. That could all come to an end today. A massive week. $6 trillion in market cap reporting in the United States this week. Let's get to some individual pre-market movers down, though, with Chloe Melee.
Good morning, Bonnie. Those U.S. tech stocks are seeing quite a bit of weakness this morning after this huge sell-off in the Kospi in South Korea. There seems to be growing concerns around whether or not this AI boom is becoming overstretched. And so this is resulting in a lot of volatility in that South Korean market, which is spilling over into that global AI trade, with European stocks and now also U.S. stocks are seeing some of that weakness, with SanDisk in particular down more than 6% this morning. Staying within this tech trade, but going to an individual name, we've got TSMC doing actually a little bit better than some of its peers, and that is because it reported a huge jump in sales, which seems to indicate that there is this demand that is still there, that is intact for AI compute. So there's that is a bit reassuring in terms of this AI trade. And finally, let's go over to the biotech company Q32, which is soaring this morning in pre-market trading, up almost 26% as it prepares to unveil clinical trial results for an alopecia treatment. We've got the presentation due this morning, and it seems that analysts are very optimistic ahead of those clinical trial results for that biotech company.
All right, Chloe, we'll keep an eye on those shares in particular today. Thank you, Chloe Melee there in London. It is a big week for markets, with Fed Chair Kevin Warsh appearing before Congress and new inflation data coming during his two-day testimony. Also, of course, all of the earnings that we're about to see. Joining us now is Terry Wiseman, Macquarie Global FX and Rates Strategist. Terry, how complex is this trading environment? We went from war off to war on. We've got this massive yo-yo trade in South Korea that seems to be suddenly impacting U.S. markets. What do you do?
Well, I think you have to take a close watch at the news and the headlines and try to infer from those headlines what the direction of geopolitics certainly will be in diplomacy. I think the biggest issue right now for the markets is whether or not this war will resume. Because if you think about it, the most important variable for the markets right now is the price of oil. And the reason is because it's going to drive inflation over the short and medium term and potentially inflation expectations. And we are all obsessed with what the Fed does. But of course, what the Fed is going to do is going to be determined by what inflation does. So it all goes back, at least in the short and medium term, to what's going to happen to the price of oil. Unfortunately, that's not going to be driven by, unfortunately, standard analysis. You really have to watch what the diplomatic track is doing here and whether or not the U.S. and Iran could stick to an MOU that allows uninterrupted passage of traffic through the strait.
It's so difficult to infer anything, though. So we got an Iranian response this morning, and it was that the MOU is in crisis phase, but that means the MOU is still in effect, right? That's sort of what that means?
Yes, but keep in mind, if an MOU can be broken this easily, even if we reach another MOU, I think the market will have doubt as to the durability and stability of that MOU, given that we have a precedent now for how easily ambiguous MOUs, very fluid and MOUs with a lot of latitude can effectively be. So, the market is now going to discount whatever agreement comes, whether it's on paper or not, with the U.S. and Iran. So I think that's a problem, and as a result of that, you're going to see an embedded premium in the price of oil that may stick for a while.
So we do seem to be capped. We're around $78, $79 a barrel in Brent, $74, $75 in WTI. Are you anticipating that that would go higher if the current situation persists?
It's important to keep in mind that there is a structural glut of oil on the market right now, and I think you could use that as a reason for why oil prices didn't go even higher during the war. There have been workarounds. There are plenty of countries that are pumping more. We have the UAE leaving OPEC. We have the U.S. pumping maybe 1.5 to 2 million barrels a day extra. So there is a structural glut that has, part of which has come in response to the blockage. I don't think that oil prices will go up above $100 that easily per barrel. But keep in mind, we were getting very excited about the prospect that we would see declining inflation in the U.S. if the barrel stayed in the low 70s, high 60s, and at least in the short term, that doesn't look to be the case.
Right. Now, a $5 or $6 premium, is that enough to send inflation materially higher?
Not materially, no, but I think it might draw out the more cautious elements of the FOMC to say, look, let's take some precautionary steps just in case. We already have inflation in the U.S. that is high. We've had inflation on a core basis running near 3% for many years now. So even without that extra $5 or $10 per barrel in the price of oil, there are reasons, of course, to be somewhat cautious here and not assume that inflation is going to go down that easily, especially on the core side, because it's been high even before the war began.
Now, you were looking for a hike this year. Is that still the case? Might you even bring that hike closer?
Yeah, so we've been thinking about a Q4 hike, and I'm inclined to think that it's going to be October. Why October? Because we're going to have some revisions in the PCE data, the Personal Consumption Expenditure Price Index that date back a full year. They may be coming down a little bit. To the extent to which they come down may determine what the Fed wants to do. But I think Kevin Warsh has an excuse to now wait until he sees those revisions. Those revisions are not coming out until late September, so he may be able to say or nudge the committee towards thinking, let's just wait, and that would take us into October. Of course, if the price of oil goes back up because of the recurrence of these hostilities, then I think that we could move that rate hike in September. But our baseline right now is October.
Terry, you'd been looking for a weaker dollar, but what is that contingent upon?
Well, it's very contingent on what happens to the price of oil again, right? We saw during from late February and into March, into April, and into May, and even into early June, generally speaking, the dollar was strong. I'm not saying it was a straight line through those months. There was some time when the central banks in Europe, the BOE, the ECB, were sounding very hawkish, and the dollar weakened as a result. But the general tone had been towards a stronger dollar when oil prices were higher. Now, if oil prices go back up, I would expect that would recur, that we would see a strong dollar again. If oil prices come down, I think we would see a weaker dollar. At least that would be the tendency. And the reason is very straightforward. Higher oil prices actually help the U.S. economy. We are a net oil exporter. Our real incomes actually do well when oil goes up because we can sell what we export at a higher price. Countries that are oil importers see effectively an erosion, a degradation in their terms of trade. So that's one reason why the dollar can continue to do well if oil prices go higher. If they don't, I expect the dollar to weaken.
So favorite pairs at the moment, and how long do you anticipate that you can hold on to those, targets, in the sense that things seem to be changing literally every day?
Yeah, look, I mean, how to play the weak dollar that we might anticipate, I think it should be through dollar Asia, right? I think the strongest case for where we could make for the dollar weakening is against the yuan. It's against the against the Japanese yen, where the pair is very overextended. Conceivably, also the euro, if the ECB continues to raise rates as well. Those are the places we would expect the dollar to weaken if it does.
Is risk so much higher now, though? Because if anything goes wrong with those trades, if the Bank of Japan doesn't hike, or if it does an emergency, 50 basis point hike, or if something goes wrong with Korea, for example, you're cooked, right?
Yes, but I would say any trader who makes the wrong call is cooked. I would not single myself out in that regard. But we're in the business of making money, and you have to have an opinion. And you have to sell that opinion effectively if you're going to get attention and people to follow you.
But is it riskier than, I don't want to say normal times, because no time is ever normal, but...
Look, in terms of the day-to-day volatility of the markets, and I'm singling out the foreign exchange markets here, things have actually been relatively calm. If you look at implied volatilities, they're actually low. I would say that the market is underestimating how much volatility conceivably can be out there, not overestimating it. Does that make my job harder? Yes, conceivably, because at some point we can see an explosion of volatility on this news. And of course, if you're trading the wrong way, you would get hurt. But let's not submit right now that the market expects volatility. The market actually doesn't expect volatility.
Okay, all right. Well, we should listen to the market and sleep soundly at night. Terry, thank you so much for joining us this morning. That's Terry Wiseman of Macquarie. Now, to other top stories trending on the terminal this morning. Andy Burnham, the UK's presumptive next Prime Minister, is considering unveiling a bolstered budget later this year. The Financial Times reporting that Treasury officials are exploring the idea of merging the annual budget and the spending review. Burnham is on course to take over from Keir Starmer on July 20th. A bipartisan group of lawmakers have signed a letter saying a California business tax credit cap aimed at saving $4 billion threatens to drive away film and television production. They warn that efforts to woo production to California will be significantly kneecapped, and that's a quote, without a quick fix to the budget. The U.S. is advising its citizens to avoid all travel to the Democratic Republic of the Congo because of Ebola. The warning comes after a second American aid worker was infected while responding to the country's escalating outbreak. Coming up, Iran says the MOU is in crisis after the U.S. and Iran exchange fresh strikes. More next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Ed
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. The US and Iran trading fresh strikes overnight. Both sides are claiming control over an open Strait of Hormuz. Iran says the MOU is in crisis phase, though. Bloomberg's Kasia Klimashinska joins us from Washington. So, fresh word from Iran just in the last hour, Kasia, that the MOU is in crisis phase and that no ship should cross through the strait on the US so-called routes. What happens next? How does the US respond to this?
Vonnie, that's a very good question. We haven't heard from President Trump yet this morning. He will have at least one event open to the press later today, so I'm sure he will address the situation. But what we know is that yesterday, around 5 p.m. In the afternoon here in Washington, D.C., the U.S. Central Command resumed attacks on Iran, targeting their capabilities around the Strait of Hormuz. What the U.S. wants to do is to diminish Iran's ability to hurt any vessels that try to cross. But this is the key area for disagreement. Bad news for the markets. We saw oil going up. Now it's off the session highs, but it's still up compared to where it closed, for example, on Friday. And that's because the Strait of Hormuz is the area of main disagreement. Iran says that no ships should cross, and in fact, it tried to attack some of the vessels over the past week, whereas the U.S. says that this key waterway is open and that the U.S. is prepared to help ensure the freedom of transit. The U.S. wants to see oil flowing from the region, and so do its allies in the region as well.
I suppose the one silver lining is that if somebody says something is in crisis phase, it means it does still exist, right? So at least Iran is acknowledging there is still a memorandum of understanding. Domestically, South Carolina GOP Senator Lindsey Graham passing away Saturday after a brief and sudden illness right after the NATO summit and, of course, his trip to Ukraine. It does set up a succession race in South Carolina. Who will most likely toe the Graham line most?
Very surprising development over the weekend. Very big loss here domestically for Republicans. Senator Graham was a big ally of President Trump. He was, for example, a big supporter of war against Iran, and he also tried to help Ukraine. As you mentioned, he went to Ukraine. He spent his last 3 days pretty much in Ukraine, meeting with President Volodymyr Zelensky and touring a drone plant over there. He also was in constant talks, not only with other Republicans here on the Hill, but also with his Democratic counterparts and with the White House. So basically on Friday, he issued a statement urging Congress to pass a bill that would increase penalties on buyers of Russian oil. It's unclear. We don't know yet who will replace Senator Graham. President Trump said that he has somebody in mind. It's the governor of the state, so governor of South Carolina, that will get to pick somebody, but obviously this person will not have the personality and the skill that Senator Graham had, again, being able to talk to both sides of the aisle, and he was very persistent on the issues that he cared about.
All right, and we just saw some names crossing our screen there of potential candidates. Kasia, thank you so much. Bloomberg's Kasia Klimashinska there from Washington. Oil higher after the U.S. completed another wave of strikes against Iran. The two sides are disputing whether the Strait of Hormuz is open. Joining us now is Bloomberg's Anthony DePaula in Dubai. So we got the Iranian response just a little while ago, Anthony. How do you read it? A couple of messages about the MOU being in crisis phase and also a warning for ships not to cross even what the U.S. considers U.S. routes.
Hi, Vonnie. Yeah, as you said, there are those conflicting points of view on whether the Strait of Hormuz is open or not. And really, this is kind of a continuation of what we were saying last week, with a lot of caution from shippers, traders, potential crude buyers about going into the Persian Gulf. So what really needs to happen is vessels that are empty and outside Hormuz need to pass through Hormuz, get into the Gulf, pick up oil, and be able to bring it back out. But because of that heightened risk, we are seeing a huge reluctance by ship owners to take their vessels into the Gulf under fear of getting attacked or even potentially being stuck in the Gulf once they do load if they can't come back out again. So these are real risks, and that's adding cost to the voyages if they do go through, and it's adding cost into the oil market because that oil is not getting out and getting into the market. We're around about $80 now. So of course, well off the highs that we had seen during the earlier parts of the crisis, but we are back up again where we were before when that MOU was signed, and up again before where we were prior to the war. So we'll really need to see whether these vessels continue to sneak out, going dark, turning off their satellite signals, and getting out to get some of that oil to the market. We've seen some of the national oil companies here, ADNOC in particular, the Kuwaitis as well, really being aggressive about using their own vessels or vessels that they've leased to get their oil out into the market. So we'll need to see that keep going. Of course, those are voyages that we can't see because the satellites are off, and what we can see going through is really nothing. Satellite signals turned off, not much traffic going through the Gulf, going through Hormuz. So that's the situation that we're seeing right now, Vonnie.
Yeah, dark crossings. Anthony, there had been a lot of talk about a glut because a lot of things had gone into effect in order to make sure that countries had oil, right, including China dipping demand and the US producing more and so on. How long could we run through that glut for before we would see oil prices really climb again?
Yeah, I mean, well, things are moving so quickly here. I mean, you saw how quickly we went from higher prices back down to where we were before the war. And as soon as that happened, that talk of that glut returned. So that was a glut that we'd been talking about appearing in the market this year, really weighing down prices. Of course, the war reversed that mentality. But as soon as that oil that was stored up on tankers was able to get out of the Gulf and get to markets, we saw talk of that glut return. We saw the prices go down. But we are potentially going to keep some of that risk premium on prices. We are going to have to see how long it takes for demand to come back. You mentioned China there. I mean, cutting 5 million barrels a day of exports, which is what the Chinese did, is a major move that took a long way to balance the markets. At some point, they're going to have to bring that back because they will need more fuels, and we are still seeing fuels expensive. So those are all factors that we're watching here, Vonnie.
Yep, very closely. Anthony, thank you so much. That's Anthony De Paula in Dubai. Nasdaq futures down today on further volatility in tech stocks. SK Hynix shares plunged the most on record in Seoul. Its newly listed ADRs lower in the pre-market. Meantime, though, TSMC shares soaring after it posted strong quarterly sales, signaling AI spending momentum. Matt Boxham of Bloomberg Intelligence joins us now. With today's drop, Matt, SK Hynix shares are down 35% from their peak, even though we know there's clear U.S. demand. ADRs were up 13% on Friday. Why the repricing here?
Yeah, I think we've got this kind of big profit-taking unwind in Korea right now. It's obviously been going on for a week or more, and I think, to some degree, perhaps got a little bit of a life of its own and some technical stuff going on there. And it does create this kind of big arbitrage between the ADRs listed last week and the underlying. I think something like a 25 to 30% premium that the ADRs are trading on. So it's going to be interesting to see what happens when that opens. I think obviously that there's two quite different fundamental views at play here. I think the US investor base perhaps more open to the idea that the chip market can break this kind of cyclical boom and bust cycle that we've had many times in the past couple of decades, and that we have seen a permanent structural shift in the way that market works because of the huge amount of demand mainly from the hyperscalers for AI chips, which also need a lot of high bandwidth memory. On the flip side, I think there's still a lot of people that have painful memories of those previous boom and bust cycles and are reluctant to kind of really buy into that until they see more evidence that really this AI cycle has got a lot more legs to it. And I think for that, you need to see sustained enterprise demand and probably another big leg up in enterprise AI demand as the return on investment becomes clearer.
Okay, Matt, we have to leave it there, but I do want to point out that TSMC sales were up 68% in June, and that means 36% for the quarter in total. Matt Bloxham of Bloomberg Intelligence, thank you. Coming up, Wall Street earnings this week. Also, the Fed chair on Capitol Hill will get you set up for your trading week. This is Bloomberg.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead this week, and there is a lot. We'll kick it off with big bank earnings on deck. We get 5 of them on Tuesday. JP Morgan, Citi, Wells Fargo, Goldman Sachs, and Bank of America. Morgan Stanley wraps up Wall Street results on Wednesday. We get inflation reads, CPI Tuesday and PPI on Wednesday. And then Fed Chair Kevin Warsh gives his first semi-annual testimony before Congress, Tuesday before the House and before the Senate Banking Committee on Wednesday. Here's your macro picture going into your Monday session. A similar story. We have oil higher off the back of tit-for-tat strikes and Iran responses. NASDAQ 100 futures lower and the 2-year yield at last week's highs.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm election.
hear it first on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
We're still in a really strong earnings environment for U.S. stocks.
Tech is going to remain well supported. Really, it's about rebalancing.
The churn is not necessarily detrimental.
Investors are being cautious ahead of the earnings season.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, equity markets sliding. The United States and Iran trading strikes, pushing crude higher as a record drop for SK Hynix is sparking a rout across tech stocks. Investors are facing down a week absolutely packed full with event risk. Bank earnings, CPI, Chair Walsh, just around the corner.
And this morning, really, the event risk is the heightened tension in the region, in the Gulf. What's going on between Tehran and Washington? Continuous strikes over the weekend, tit for tat. They're targeting each other, military installations back and forth. And then you have the Strait of Hormuz, and they don't agree on whether or not it is open or not. Iran's foreign ministry this morning came out with a statement saying the U.S. has, quote, undoubtedly entered a crisis phase, basically saying the MOU is not useful anymore. And right now what you have is some ships getting through. We saw that over the weekend, but in secret, their transponders off. Today, it looked like the Strait of Hormuz pretty much grounding to a halt.
So here's the move in crude this morning. Bring it up, Brent and WTI. Got a move of about 2 to 3% here. Brent at 77, WTI at 73. Let's take WTI. WTI this morning is $5 above the post-war low. It's $35 below the post-war high. So this is a market that's still discounted a lot of tension in this region. I'd go one step further. There are some guests over the last week that are suggesting this is just the new normal, a messy negotiation punctuated by strikes every other week, and we carry on without a destination in mind.
This is what I hear from a lot of people. We need to get used to this stalemate when potentially there's going to be calm waters for a few weeks and then the strikes start again because talks break down, or you see the IRGC going after the vessels in that U.S. path that hugs the Omani coast. When you have a moment like that, you would arguably think that if prices get higher, that could push the president to maybe want to go back to the negotiating table and have these kind of talks when it comes to nuclear.
And the back and forth continues. I've got no idea if that's the right way of looking at this, but that's the way a lot of people are looking at this. Let's pull up the bond market. 2s, 10s, 30s. Yields higher across the curve just a little bit by a basis point. The very long end of the curve this morning. 30s up by 1 or 2 basis points to 5.07%. This Fed is dealing with some really, really fine margins. And a move in crude can push the story one way or the other. Chair Walsh just around the corner. The final CPI print before the Fed's next meeting just around the corner. Setting the stage for a real debate. Is this meeting live or not?
And how much is that CPI print going to push him in the direction of how he communicates what the Fed should be doing, even though he refuses to offer forward guidance, in front of congressmen and women and then senators for the first time ever, having this testimony as the Federal Reserve Chair after we get that CPI data? This is going to be an incredibly interesting hearing. And a lot of people say he's just going to say what we have already heard, but he's going to be pushed by these elected officials to give potentially a little bit more guidance than he's been offering us journalists.
Chair Walsh testimony coming up tomorrow in front of the House, the day after in front of the Senate, a few weeks away, the Fed's next meeting. Coming up this hour, we'll catch up with Jeff Yu of BNY as tech names lead equities lower. Clayton Siegel of CSIS as the US and Iran clash over Hormuz, and Sarah Kunst of Clio Capital with the volatile semis trade keeping investors very much on edge. We begin this hour with stocks lower and oil higher. Jeff Yu of BNY writing the following: disinflation hopes are still carrying sentiment. Growth, earnings and policy risks are harder to ignore. Jeff joins us now for more. Jeff, welcome, buddy. Let's frame the next 24 hours together and you tell me your priority. We've got earnings, we've got CPI, we've got Chair Kevin Walsh, we've got developments in South Korea and issues through the Strait of Hormuz. Where's your focus this morning?
Well, so all of the above and how that impacts Fed expectations, how that impacts policy expectations, full stop. Everything will be fine as long as there's no major shift higher in inflation and inflation expectations. For now, that remains our base case. And to be frank, don't think anything changes that. We need healthy disinflation at this point. But I agree what you were saying earlier. What's going on in the Strait right now, it's a new equilibrium. We have to get used to it, not just in the short term, but over the long term.
Well, Jeff, let's turn to 8:30 Eastern time tomorrow morning. CPI drops. If we get an inline CPI, do you think that closes the door to a July rate hike?
I would say the door wasn't really open, maybe ajar in the first place, but clearly yes. And to be frank, I don't think any central bank right now, given the state of demand globally, should be thinking about rate hikes unless there's a serious change in the inflation outlook right now, be it the Strait or otherwise. The US, the Fed, is a bit different, where there's more of a demand impulse in the US, and you're driven by the capex for the hyperscalers and the like, driven by the AI view that you don't see in Europe. But right now, to be frank, I really don't see a case for hikes anywhere.
Well, you see it in the market, the front end of the curve. Just the market starting to speak to that story, Jeff. The 2-year trading this morning around 421.64. So where are we? Something like 50 basis points above where the policy rate is at the Federal Reserve. Jeff, how do you see that spread closing?
So the spread will close with the CPI prints and with Fed Chair Walsh's upcoming guidance. And I think he will need to raise a very high bar for rate hikes. So it may not be the entire view on the FOMC right now, and there's still questions over how much he will be actively disclosed. But the bottom line is, again, given the state of demand, we keep on drawing comparisons with 2022. This is very different compared to where we are in 2022. So the bar is far higher, and I think he and his peers around the world, especially Madame Lagarde, I might add, need to make that clear. If that is set, then I think all of the hikes that were priced in around February and March and onwards, that should really come down.
Jeff, if you take this view that he's going to potentially be a little bit different than some of the other members and some of his colleagues on the Fed, who else are you looking at in terms of speaking this week? So you have a ton of Fed speak, including Waller and Cook and Jefferson.
So yeah, that's a really good question. All of them, will have their own views on this, but I think there are two things that matter. A, do the individual views of the central bankers matter, and two, how do we find a consensus? There's an article today noting just the Bank of England, which is in a good place, and you've got diverging views across the board in the UK, and that's starting to cause communications issues and market guidance. But at the same time, the Bank of England, taking a leaf from what Fed Chair Bernanke advised, is looking at scenarios. So the Fed perhaps should be looking at scenarios. Maybe that's what the task force will try to elaborate upon as well. So which FOMC member will adapt to which scenario? Where do we set the bar? Let's not look at individual names, but where the data conforms to the scenarios, then we go from there.
Well, traders are almost fully pricing in a hike in September. Do you think they're just getting used to this new normal, what's going on in the Strait of Hormuz?
So I think two aspects there. I think less about the new normal and the Strait of Hormuz. If I had to decompose and just ballpark numbers out the air, probably 20% at most from the Strait of Hormuz and the remaining 80% from the CapEx trade in the US, from the AI trade, because that's still what, again, is separating the US from the rest of the world. There is genuine growth. But why I mention that 80% number, if 80% of US growth is being generated from the AI view and the relevant investments, then that's what the pricing is. But then we get into an equity story. So if inflation comes off, but because demand is coming off from the AI side, but without anything on the consumer side, the household side to compensate, then I think that's where we get a few more wobbles. But let's cross that bridge when we get there.
Jeff, there is an inevitable home bias to this conversation, sitting here in New York, focused on US events, CPI tomorrow morning, Chair Walsh as well. For the global fixed income market, which market is in the driving seat right now? Is it Washington or the latest in Tokyo, Japan?
So we're trying to get a straight answer out of Tokyo, I guess. And I think what happens in Tokyo will matter for the US Treasury market as well, given not just the Japanese holdings, but also broader North Asia holdings. But let's make it clear, what GPIF does, what any one fund in Japan or elsewhere in Asia does is not enough. You need a comprehensive change in behavior. Total Japanese assets are 10 times the level of GPIF. If we get a 10 percentage point or more move in asset allocation there, then that we can start to discuss whether it's a game changer or not, especially if those in Korea, Taiwan, and China follow onwards as well. For now, we're just talking about one fund, but I think that discussion is a healthy one. That's what's needed to change behavior to get dollar down against the rest of Asia, because that's desperately needed right now.
Jeff, that discussion is live, so let's have it now. What do you think would change behavior? Regulation or price? And is price right now sufficient to get that money to come home?
Right. It's price, and let me tell you my favorite headline this morning: Tokyo Disneyland is raising prices. Right. Those are the things that people on the ground will feel, and they'll ask, why are they raising prices? Is it because the yen is too weak, or is it other aspects, labor market too tight, a combination? But when you start to feel it in inflation that people look at every day, maybe Tokyo Disney Sea prices will go up as well. That one's even more popular. Then I think there will be pressure on the government to act. We need to get inflation over and beyond a certain level that's tolerable, and then you realize if the weak yen is a part of that story, then behavior will start to change on the part of government and associated entities.
Jeff, is the income and yield level available in Japan right now enough, sufficient to offset some of those concerns?
So, right now, probably not. I think international investors are looking at 3–4%. But again, let's go back to real yields, right? So if inflation hovers around 2% or so, and then longer dated bonds, go 3, 4, 5, those kind of levels, you get real yields at a comfortable 2%. Then I think more money stays at home. Then you get international funds going in as well. But as always, given Japan's debt stock, can the government's debt to GDP ratio and funding, financing live with 2% real yields? That's a different situation. But there are trade-offs. And I think right now, the trade-off with dollar yen is becoming a bit too hard to ignore.
That's a very different question, Jeff. Thank you, sir. Jeff Yu there of BNY. It's a difficult question for the Japanese authorities. Dollar yen around 162 this morning. Can't get away from the 160s, even with the threat of intervention on both the regulatory side and the policy side. Let's turn to equity futures this morning. Equity futures sliding by about 0.25% on the S&P 500. Turbulence in South Korea. We'll spend some time on that. That ripples through global markets. The Nasdaq underperforming so far this morning. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. The US and Iran exchanging fresh strikes over the weekend and issuing conflicting reports on the status of the Strait of Hormuz. Tehran saying the strait is closed, the US saying it's open to all vessels, and the military is prepared to ensure freedom of navigation. Shares of SK Hynix tumbling by a record 15% in Seoul. The sell-off sent the Kospi down 9%. SK Hynix's newly listed American depository receipts may be under pressure today after surging 13% in their debut Friday. South Carolina Senator Lindsey Graham died unexpectedly over the weekend at age 71. His death sets up a succession drama in the state less than 4 months before midterm elections. The governor can name a replacement for the remainder of Graham's term, but state election law then calls for a special primary election. And that is your Bloomberg Brief. John.
Vonnie, thank you. Thank you very much. What a life that man had. Just reading about in the last 24 hours or so. Lost his parents young, both of them some 15 months apart. Became the legal guardian of his sister. Went on to have a military career, then went on to be the senator in South Carolina. Just an absolutely phenomenal life that man led.
He's dedicated almost his entire life to public service. Air Force, then congressman, then, of course, a senator. senior voice on foreign policy, which is why there has been a ton of talk about who replaces him and also what kind of void this is going to leave in terms of this was an individual that sometimes was able to speak for the entire Senate to the President of the United States.
We'll spend some time on that dimension in the next 15 minutes or so. Up next on the program, fighting for Hormuz.
Those boats are coming out of the Hormuz Strait.
We're doing very well with respect to the Hormuz Strait. Those ships are flowing out of the Hormuz Strait like nobody's ever seen before, actually. The strait is open.
A conversation up next with Clayton Siegel of CSIS, live from New York City this morning. Good morning. We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
To the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
2 days of gains on the S&P, 2 weeks of gains dominated by a bounce back in tech. This morning, a bit of a reversal, a bit of a slide. So we're down 0.25% on the S&P, down 1 full percentage point on the Nasdaq. Some real weakness in South Korea on SK Hynix specifically. On a Russell this morning, some relative outperformance in a down market. We're down by 0.1%. Into the bond market, what are 24 rounds we've got coming up for you? Chair Wash, CPI, bank earnings, and more. Yields this morning just a bit higher, up a single basis point on 10s, 457. On 30s, just north of 5% at 5.07%. And setting the tone for the market action, in some places at least, as this move in crude. The bleed higher continues. WTI and Brent up by close to 3% this morning. WTI right there at 73.50 so far today.
Based off the rhetoric you're hearing from both Washington and Tehran, if you are an individual that's in charge of a vessel and you're sailing through the Strait of Hormuz, you don't know what to do. Do you actually go through or not? Tehran's saying it's open, you have to use their strait, but you won't get the protection of the United States. If you go through the United States way, then potentially you have a target on your back from the IRGC. All of this is happening as you make that decision when you have strikes continuing from both sides. The U.S. going after their military installations and vice versa.
It's one of our top stories. Under surveillance this morning, fighting for Hormuz.
The strait is open.
Those boats are coming out of the Hormuz Strait.
We're doing very well with respect to the Hormuz Strait. We have an oil gusher. The strait is totally open. Those ships are flowing out of the Hormuz Strait like nobody's ever seen before, actually.
So here's the latest this morning. Crude pushing higher as the US and Iran remain at odds over the status of the Strait of Hormuz. The two exchanging fresh strikes overnight following a weekend of fighting. With the latest, Bloomberg's Tyler Kendall has more. Hey, Tyler.
Hey, John, good morning. Well, this standoff over the strait only appears to be deepening as the U.S. military confirms it conducted at least 3 waves of strikes over the weekend designed to degrade Iran's ability to attack commercial shippers. The thing is, the threat is still very much there as Iran chose to retaliate by targeting U.S. allies in the region. And we heard from the IRGC declaring that the strait would remain closed until further notice unless ships get the approval from the Iranian military to cross. Now, CENTCOM is disputing that notion, says the U.S. is working to ensure freedom of navigation, though the satellite imagery is showing us that observable transits have all but ground to a halt, though data analyzed by Bloomberg News shows that so-called dark crossings, when ships transit through with their transponders off, have now exceeded observable transits for the last 3 days in a row. Now, this wave of escalation started in part because Iran has been dismayed by the fact that ships have been using that corridor that hugs the coast of Oman instead of getting closer to the coast of Iran. But John, we should point out over the weekend, we saw that Iran's foreign minister was in Oman for meetings about the Strait of Hormuz, but there was no sign of U.S. Counterparts taking part in those discussions.
Tyler, as you've seen repeatedly so far this year, Capitol Hill has pushed back against action in Iran. We've just lost a key voice, a key interventionist voice in an increasingly isolationist Republican Party, Senator Lindsey Graham. How will that change the relationship potentially between this White House and that Congress?
It has the potential to really change the relationship, John. I mean, Washington has been absolutely stunned by the passing of Lindsey Graham, who also worked to build those bipartisan ties over his 30 years in Congress, as well as be that close ally of President Trump. But as you're outlining, Lindsey Graham was considered to be a foreign policy hawk in the Senate, perhaps the staunchest supporter of President Trump's policies when it comes to Iran, as well as the staunchest supporter of Ukraine in the Senate. And that's another angle that we should definitely be watching here, considering Graham had just come back from his 10th visit to the country over the weekend. And he had just announced with a group of bipartisan senators that they had gotten White House approval to move forward with this critical sanctions package against Russia. So a lot of different dynamics to watch here, John. Also important to note, he was the chair of the Senate Budget Committee, which has been absolutely instrumental in getting through some of President Trump's top priorities, like the One Big Beautiful Bill, and now the potential that we could see a third reconciliation package is going to hang in the balance.
Tyler Kendall with the latest. Tyler, thank you. Appreciate it. More from Tyler in the next hour. Clayton Siegel of CSIS with this to say this morning. As fighting steps up and Gulf export flows recede, the MOU trade is poised to fizzle. Washington will stay worried about higher fuel prices and may consider market interventions. Clayton joins us now for more. Clayton, let's just get to how we define this current phase. We've had some people come on the program and call it the new normal. What would you call it?
Hey, good morning, John. I do think that that's the case. I think that we are basically in the third phase of the Battle of the Strait of Hormuz. That first phase, of course, being the open warfare between the two sides that we saw in March. And then we had a second phase between the April 8 ceasefire and the imposition of the U.S. blockade all the way until the MOU was adopted in early June. And we've started to see a resumption of those flows from the Strait of Hormuz and the Mideast Gulf. But as Anne-Marie noted in the last segment, it's really rolled over. It's really tailed off in the last few days. The market thought that this thing was over, but the signals that we're seeing in the Gulf, on the ground, in the field are it's not over. Oil assets, particularly ships, are coming under fire. But at the same time, the Iranians are probably keeping some of their powder dry. They're certainly not attacking oil installations, export terminals, refineries, et cetera, like they were during the hot war in March. But again, to Anne-Marie's point before, if you're a ship operator, you have to wonder what's the best thing for safety. Is it taking the new and improved route through the southern side of the Gulf, through Omani waters that's been endorsed by the United States, by the International Maritime Organization, or is it complying with Iran and its new Persian Gulf Strait Authority to use only the northern route through Iranian waters? And it's not only about safety, it's also about the business implications for that oil trade, because after all, if you take the northern route, you might be safer from Iranian attack, but if you run afoul of United States sanctions, what can you do with the oil anyway?
Clayton, when it comes to Washington's response, how long can they withstand this current phase before the president decides he wants to escalate or de-escalate?
Hey, Anne-Marie, well, I think that apparently in Washington they've already decided to escalate, and we saw much more widespread attacks against Iranian military targets over the weekend, and I think we can expect more of the same. I think crude prices are probably going to follow that headline risk a bit higher. But remember that a lot of the paper traders thought that it was much to do about nothing, that flows would eventually resume from the Gulf. Those guys look like the smart money at this point, but you can stay too long at the dance. And it's not clear that in this third phase, the United States and the Trump administration will be able to keep those flows at the levels that we saw during the past 4 weeks or so. And as we mentioned, we've already seen a pretty substantial rollover of the ones that are using their AIS beacons and the ones that are so-called going dark. And so both of those numbers are rolling over, and it makes us think that ship operators are going to pull back. So we have this battle of the narratives where I think the Trump administration will continue trying to assuage the concerns of ship operators and their owners, their other stakeholders, that the Strait is safe for use. We see these comments from CENTCOM, from the United States military, almost on a daily basis. But they have to worry about safety, and I wonder what the administration will be thinking of next if we see a resumption in fuel price escalation.
Well, Clayton, you say keep one eye on Russia, and this morning we heard from the Iranians that Sergei Lavrov will be visiting Tehran. Is there going to be more coordination between Tehran and Moscow?
Well, I think it's too early to say. I think that Russia has a lot of risk here when it comes to oil supply policy. They're going to see more competition from the Mideast Gulf if the Strait remains generally open. And it's going to be even more than before once we get to a steady state because, of course, the United Arab Emirates has left OPEC and OPEC supply coordination. So it seems like there'll be more competition there. And at the same time, the Russians have a newfound need to export even more volumes of crude oil than before because of these devastating attacks by Ukraine on Russia's refineries that have taken fully offline 6 or maybe 7 refineries at this point at peak gasoline demand season over there, just like we have it here during the summer. So there could be more gasoline tension there and also more crude supply flowing from the Mideast Gulf and Russia that has to be coordinated.
Clayton, you've alluded to this a few times now, the prospect of market intervention. We've seen the intervention throughout the summer so far. We have really eaten into inventories worldwide. What options are elsewhere on the table, Clayton, if things start to go the wrong way again?
I still think that it's too early to completely take off the table the risk, and I'm talking about the risk primarily for United States producers and sellers of controls over oil and refined product exports. You would think that with gasoline prices coming down substantially during the month of June, and I think that we'll see that reflected in CPI tomorrow, that maybe the pressure is off there. But we still have a few months to go before that critical midterm election where we really do have the balance of power kind of hanging on the results here in Washington. And so I think that the administration and other folks in Washington are going to keep a close eye on retail fuel prices, not only gasoline, but also diesel. And they could consider even ill-advised policy options like controlling or even banning exports if those prices resume their escalation.
Hey, Clayton, it's good to see you. Thank you, sir. Clayton Siegel of CSIS. We're both smiling because that policy proposal just won't die, will it? It just won't go away.
No, this is a case of good politics, potentially ahead of the midterm election, but bad policy because we operate in a global market. But I agree with Clayton, which is why I continuously ask the administration and sources, and everyone says, no, stop asking, it's not happening. But what happens when prices potentially go higher?
Crude this morning, up 3%, 78 on Brent, WTI at 73. Up next, we'll catch up with Sarah Kunst of Clio Capital with the volatile chip trade back under pressure.
exploring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bramo is on tour this morning. We'll catch up with Lisa at 8:45 Eastern Time, a few hours away, as she catches up with Ed Bastian, the Delta Airlines CEO, as they confront and navigate record quarterly fuel costs in a previous quarter. And they navigated pretty well because demand in this economy is so good.
Well, that's what's going on right now when it looks at airlines. You think that how much can you throw at the airline industry? A lot. And still robust demand when it comes to the summer. Everyone is out there vacationing, going on holiday, business travel, take your pick.
Bramo doing lots of business travel.
Lots of Rio,
not jealous
Atlanta.
at all.
I had my
trips.
fair share. I went to Turkey, so.
You're helping Delta too. 8:45 Eastern Time for that conversation later on this morning. If you're just joining us, welcome to the programme. Good morning to you all. Getting your week started with equity futures just on the back foot. We're down by 1/3% on the S&P, on the Nasdaq down by 1 percentage point this morning. Some relative outperformance on small caps. We're down by 0.1%. Underperformance through last week. Back-to-back weekly losses on the Russell for the first time since March. Big cap tech making a comeback in the last week. This morning, a bit weaker. We turn to the bond market, 2s, 10s and 30s. Yields up at the long end of the curve by a basis point or two. Up a single basis point on 10s to 457. 2s up a basis point as well. Let's call this 422. Trading comfortably above the policy rate of the Federal Reserve. A market that on the margin is pricing in the risk of rate hikes from this Fed. Setting the tone for that, at least for the conversation this week, CPI tomorrow morning and testimony from Fed Chair Kevin Warsh. Heading into CPI, crude bouncing, WTI and Brent. Crude this morning just short of 80, up by more than 3%.
So tomorrow at 8:30, everyone was thinking it's going to be a really good CPI print in the sense that potentially some of the inflationary impacts from oil will start to ease. But now you have a spike once again. We just heard from a guest who said the MOU trade is basically fizzling. We're in this moment where the president is really struggling to communicate what's happening. He says the ceasefire's off, but refuses to say we're back to full-fledged war, even though if you look at what everyone's doing, it's a lot of strikes that are happening. And then Kevin Warsh, for the first time as Fed chair, is going to have to speak to the Finance Committee after the CPI print. That's going to be a challenging one because with journalists, he can maybe say, I'm not offering forward guidance. I'm not sure that's going to work with congressmen and women.
It's difficult to strip the energy story out of the broader debate around inflation when inflation has been above target for 5 years of this Federal Reserve, and anxiety on the committee is already quite high. Get a bounce back in crude, it could tilt one member here, one member there to start thinking about rate hikes sometime sooner. That July meeting, only a few weeks away. As we count you down to the cash open, a few hours away, let's get you some morning movers, some single names. Yahira has more. Hey, Yahira.
Hi, John. We are seeing SK Hynix's ADRs falling at 8.7% in the pre-market, giving back some of the gains from its stellar debut on Friday. And this weakness comes after overnight in South Korea. Its shares suffered their worst drop on record as investors took profits following the U.S. listing on Friday and reacted to a report from a South Korean brokerage that suggested its quarterly earnings may miss expectations. But there is a broader risk-off mood in the market, and that is weighing on the biggest winners, the memory, the chip makers, with Micron, SanDisk, and NVIDIA all falling in the pre-market, and that overshadowing what would normally be viewed as bullish news for the sector. TSMC just gave us a preliminary look at its earnings, which come out on Thursday. Sales were very strong, reinforcing this idea that AI demand remains strong, but investors looking past that this morning. And that broader risk-off mood is also spilling over into the airlines, where higher crude prices are raising fresh concerns about fuel costs. As you said, Delta just told us on Friday that it recorded its biggest quarterly fuel bill in its history. So that just is adding to concerns of whether that could just be the beginning for these names. The next up to report is United on Wednesday. Those shares falling 1.6%. John.
Yahara, thank you. Thanks for the update. More from Yahara in the next hour. On our radar this morning, one of our top stories, the US launching fresh strikes on Iran, targeting air defenses and missile sites. Tehran responding with strikes on sites in several neighboring countries and reportedly intercepting at least 2 vessels through the Strait of Hormuz. Elsewhere, the Republican Senator Lindsey Graham has died at the age of 71. Graham representing South Carolina in the Senate for more than 2 decades. State officials expect to move quickly to appoint a replacement to serve out the rest of his term. And finally, a blockbuster week ahead. 5 of the nation's biggest banks reporting earnings before the opening bell tomorrow morning. CPI due out later in the morning at 8:30 Eastern Time. Then, later that morning, we'll hear from Fed Chair Kevin Warsh, testimony before lawmakers on Capitol Hill. You'll hear from him again on Wednesday, I believe, and we get PPI as well.
Yes, so you get CPI, you hear from him. You get PPI, you hear from him. Basically, his reaction in real time, his first Humphrey Hawkins testimony as Fed chair. And it also comes at a time that not only is he going to be able to digest all this data, but it's not just him. Before the blackout period at the end of the week, we're going to get a ton of Fed speak. So what is he saying when it comes to the testimony versus what's the rest of the committee saying, especially Governor Waller, based off what he had to say last week? A year ago, he said I was advocating for rate cuts because the labor market was not looking good. He's feeling a little bit different now. Does it mean that potentially we're moving towards a committee that thinks those insurance cuts you took last year, maybe they need to come out?
I'm pleased you brought up Governor Waller because he speaks later on today at 12:30 Eastern Time. Is that a man who thinks this meeting is live or not? That's what it comes down to for me, at least. Got a broader debate about the backdrop, got thresholds. You want to understand how they react to the incoming data. No doubt the governor's going to spend time on that, but the headline people are looking for is whether that meeting is live or not in a few weeks' time. Are there individuals actively going into that meeting looking to push for higher interest rates?
And potentially won't know until we see the CPI data and the PPI data. Potentially that, for some individuals, is going to push whether or not this meeting is live. Are we actually going to see some of the heat get taken off of that data or not? What's interesting is we hear from Waller before the data, and we hear for, of course, the Fed chair after we get both CPI and PPI.
Governor Waller today, 12:30 Eastern Time, speaking at the New York Association of Business Economics. Looking forward to hearing from the governor. A key speech to start the week. Turning to tech, the volatile chip trade under pressure. SK Hynix plunging by the most on record, sparking a sell-off in Korea and US equity futures. Sarah Kunst of Clio Capital writing, tech isn't a monolith, and that's even more true in semi and AI exposed names. This week, we'll see if they move in a block or on their own merits. Sarah joins us now for more. Sarah, this morning at least, moving on a blog and really setting the tone is South Korea once again. Sarah, how key is that trade in South Korea across just 2 names for the global tech trade?
It does seem like it's the story right now. And the ironic thing here is that sell-off you're seeing, particularly in SK Hynix today in Korea, you pull back and you look at the 1-year chart and they're up something like plus 500%, right? So wanting to lock in a little bit of those gains as all of that exposure that had been maybe from the US, through indexes, through some of those more synthetic trades, or just from people sitting in the US who found a way to buy in Korea, now they can buy in the US. And we know that those valuations tend to be higher, so they're likely going to do that. So I don't see this sell-off as a huge problem. Now I just need the entire rest of the market to agree with me.
We'll see if that changes as we get closer to the opening bell, Sarah. We can reflect on Friday as well. Fantastic demand for a record issue by a foreign company, equity issue here in the United States. Sarah, what was your reaction to the amount of people that just welcome that supply with open eyes, open arms?
I wasn't surprised. I wasn't surprised. I think that Asia has taught the market over the last couple years with Taiwan Semiconductor, which is one of my favorite names, as well as obviously a lot of the exposure that you have to fabs and the entire ecosystem there, that, hey, you want to track this, and if you can buy in, you should. We know that historically South Korean companies do trade at a little bit of a discount, so it's not shocking to me that there was a feeling that there is value here, that maybe this is a better priced way into some of these AI and semi positions versus, Taiwan Semi's had a monster couple of years. NVIDIA, obviously, everybody in the US feels like they have already been kind of fully bought. And so I think people were really excited to bring in new names to buy.
When it comes to memory chip shortages, the SK Hynix CEO caught up with Ed Ludlow and said it'll probably persist beyond 2030. Do you agree, Sarah?
I think the question is going to be demand. Yes, right. If the demand continues to follow kind of the current trajectory, there will be sort of behind. Keep in mind, it's not bad for them necessarily to have a shortage, because it means people are willing to pay more to lock in orders further in advance. It means that their businesses are healthier, but certainly they are trying to produce more as quickly as they can, which is slow. The real question is, does the demand stay? We know that companies are looking at their bills from the Anthropics and OpenAIs of the world, wanting to tone that down, capping usage. The leaderboards are going away that were ubiquitous a couple months ago. And then on the flip side, we know that Anthropic and OpenAI and SpaceX and all of these AI names are also kind of looking at their P&Ls going, oh, wow, this is insanely expensive to let everybody make a cat video of their cat that died 20 years ago 10 times in a row and not post it anywhere and not pay us for it.
Well, when you say it's all about demand, a few weeks ago, I remember, of course, Apple having to raise prices because of the memory shortage. At some point, will demand destruction solve this problem?
I don't know that demand destruction on price will, unless the OpenAIs and the Anthropics of the world massively raise prices so that you're actually paying what you spend. A lot of people have been likening it to kind of the Ubers of the world. You used to be able to basically go across the country in an Uber Black for $10, right? And then the VCs and the public market said, hey, maybe you should pay what this actually costs. The prices went up, and they still have a healthy business, but it did change sort of how people value it and how people think about usage. So I do think we will eventually see something similar with the Neo Labs, but then you also have to remember that the Metas and the Googles of the world have tremendous amounts of cash, and so they do make money already, so they can actually afford to sort of subsidize our AI use for longer. And so I do think there's a really big question, especially when you pull back and remember that for the most part, we don't actually know what month over month or weekly users look like for most of these AI labs.
They are increasingly turning to the debt market to raise capital, though, Sarah. I think it's interesting to see how the warm welcome that we received, that SK Hynix received for the equity issue, wasn't really reflected in the Amazon debt issue earlier in the week. Just raises questions. I'm not saying that we're getting a full-throated pushback by capital markets on the fixed income side, but just the fixed income message, for me at least, was if you want to issue here, you're going to have to pay up. Sarah, did you see the same thing in the Amazon debt issue last week?
Yeah, I think that the debt piece of it has not gotten the same warm reception. One, I think that it certainly doesn't have as much retail and Main Street exposure as the equity does. And two, I think that people are starting to really dig in and say, wait, why do you need this money, right? If this is going to work so well, is there something that we don't understand that you do that makes you want debt instead of just relying on your cash flows, instead of relying on the equity? And so overall, the debt buyer has been much more cautious than the equity buyer.
Sarah Kuntz of Clio Capital. Sarah, thank you. Appreciate it. That was a key distinction last week. We had two big offerings. One on the equity side, SK Hynix, the biggest equity issue we've seen from a foreign company here in the United States. Open arms, well received on the equity side. You saw that stock rally into the weekend. On the debt side, when Amazon came to market, bit of pushback. Not just on the Amazon debt, but in the secondary market across a lot of tech issuers. And maybe the prospect of, increasingly the prospect of later this year, if you want to issue debt in this market right now, this market's going to push you to pay up for it, and pay up maybe big time in the years to come if it continues. Equity futures this morning on the S&P, negative by 1/3%. Tech stocks underperforming. With an update on news worldwide with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Thank you, John. Qatar's former emir, Sheikh Hamad bin Khalifa Al Thani, has died at the age of 74. Sheikh Hamad overthrew his father in a bloodless coup in 1995. He transformed the Gulf state into one of the world's wealthiest nations thanks to its vast natural gas reserves. Apple is taking OpenAI to court, accusing the startup of stealing trade secrets. The lawsuit accuses a former Apple engineer of downloading confidential files and continuing to access Apple's systems after joining OpenAI. TSMC reporting a 36% jump in quarterly sales. The results meeting elevated expectations, signaling global demand for AI computing remains intact. The company's steady growth highlights its central role in producing the world's most advanced chips for data centers and smartphones. And that is your Bloomberg brief. John.
Vonnie, thank you. Tells you a lot about sentiment that people are talking more about what's happening with SK Hynix and less about fantastic numbers out of Taiwan Semi. That's the situation for now, at least. Up next on the program, awaiting inflation data.
Pieces of the CPI this month are going to matter more than what we've seen historically.
This is not like we're waiting until 2028 to see inflation moving down.
You have the market pricing in one hike and then followed by cuts. That to me looks like risk management.
Up next, we'll catch up with Sonal Tazai of Franklin Templeton. Live from New York City, you're watching Bloomberg TV.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Live Live from New York. Welcome back to the program. A snapshot of the price action for you. Down a third on the S&P. Underperformance in tech. It's last week upside down in reverse. The Nasdaq 100 is down by 1 full percentage point. The Russell with some relative outperformance. In a down market, we're down by close to 0.2% on small caps. Switch up the board and get to the bond market. Yields bleeding high by a single basis point across the curve. 2s north of 420, 10s north of 450, 30s north of 5%, heading into CPI tomorrow morning. Heading into CPI tomorrow morning, this data here. In the commodity market, Brent and WTI pushing higher, up by more than 3% so far this morning. 2 weeks of gains for crude. Last week, a move of 5% plus, briefly breaching $80 a barrel last week on Brent. This morning, getting close to that level again.
And right now it's a deadlock in the Strait of Hormuz. And even though over the weekend you had some ships go through, put their transponders off, basically guide in the dark, in secret, today what we're seeing in terms of the data is no ships are moving through. So potentially this story is going to get a whole lot worse if ships are unwilling to take that risk right now.
What does it mean for the outlook for prices? Under surveillance this morning, awaiting inflation data.
Pieces of the CPI this month are going to matter more than what we've seen historically.
This is not like we're waiting until 2028 to see inflation moving down.
You have the market pricing in one hike and then followed by cuts. That to me looks like risk management.
If the Fed does feel the need to hike before the end of the year, they're arguably hiking for the right reason.
So here's the latest this morning. Fed Chair Kevin Walsh testifying before Congress this week with new inflation data also on the way. Sonal Desire Franklin Templeton writing, Walsh wants to move back towards a situation where financial markets react mostly to the economic data. Asset prices would then become a valuable additional source of information for the Fed. Sonal joins us now for more. Sonal, good morning and good to see you. Let's get to the price action. What's the source of information and the shape of the curve this morning?
You know, honestly, very little. Day-to-day movements aren't telling you much. I do think we're moving to a point where 10-year treasuries are moving back to where they probably should be, which I've said for a while is more like 4.75 to 5 in terms of fair value. So overall, I think these are short-term moves. We're going to see more volatility as markets absorb the fact that we're not getting forward guidance or will not be getting forward guidance from the Fed.
So now why do you believe that the 10-year belongs somewhere closer to 5 than, say, 4?
So mainly because, Jonathan, look, I think that neutral Fed funds is closer to 4 than 350. 2% productivity growth, 2% inflation, if the Fed actually meets its target, gets you to 4. Now, if I just look, rule of thumb, if I look at historical yield curve shape, at a time that the economy is not falling into recession and is not overheating, we should have an upward sloping yield curve of 100 to 150 basis points. Knock off half of that, if you will, for the fact that, you know, you've got abundant liquidity, you've got, all of that feeds in to generally saying, okay, you're not going to get all the way to fair value. And I just don't see a recession in the horizon.
So now just build on that if you can then. So you've got the yield curve potentially normalizing to something as steep as 100 to 150 basis points. Shouldn't you expect tends to be higher eventually beyond 5 if the Fed needs to catch up on the front end and maintain that spread?
I think that it could, yeah. I think we could, but the other piece to keep in mind is we're still in a situation of truly abundant liquidity. Therefore, you might not get back all the way to what I would consider theoretical fair value on the 10-year in a rush. On the other hand, there are so many other factors which come into play, including what's happening to fiscal policy, which people aren't talking about very much, but, there's absolutely no consolidation coming. And around the world, fiscal policy is very easy as well. So overall, I'd say yields are going higher, and that's before we even start talking about inflation.
Well, Kevin Walsh will have his first Humphrey Hawkins testimony this week, of course, tomorrow, and then Wednesday in the Senate. Can he avoid the questions he avoided with journalists in front of elected officials?
Well, I'm not sure he really avoided it. He said he wasn't going to comment on the near-term outlook for the economy, and I think it's fair for him to avoid that because he is sitting there and the entire council is sitting there and they're taking into account all available data. And he can certainly recap what that available data says, which is an economy which is certainly not in dire straits. And on the other hand, from an inflation perspective, there are definitely some tailwinds and there's some headwinds. And so I think he can certainly talk about all of that and not get into what the Fed's next move is likely to be.
Is the risk then for this week that someone else fills that void, like a Philip Jefferson or John Williams or, of course, Governor Waller?
So, that to me is the most interesting thing, Anne-Marie, because I think that Kevin Walsh has made pretty clear that he would like the Fed to step away a little bit from essentially forward guidance in terms of the next policy moves. I didn't get the impression that the FOMC disagreed with that. So to me, the most interesting thing this week is going to be exactly how each of these governors responds to questions and how explicit they're going to be on something which could be interpreted as forward guidance.
Well, so I'm with you. They agreed to have a very short statement, but I'm not sure how much you can read into that at this point. Have they agreed? Can you mandate other officials on the committee not to provide guidance and say where they think policy should be?
No, I don't think you can mandate it. But the question is, Jonathan, did they talk about this and talk about the relative usefulness of having a market which is hanging onto every nuance of a Fed official's words instead of every nuance that comes out of the data? And I don't know. I think that for a market which isn't illiquid, which isn't frozen, we're not in immediate post-COVID global shutdown, we're not in a post-global financial crisis space, maybe the market does need to revert to a little bit more of what I would consider healthy volatility and pricing in of risk. And that is something, it's not happening overnight, but I'm going to be very interested in seeing over the next several months if the Fed in general moves in this direction.
Well, help us price that risk this morning. Do you think the July meeting's live?
Honestly, no. I don't think they're raising rates this week because you just don't have enough data. Why would they raise rates as quickly as this week? There is absolutely no reason. We've got close to zero visibility on what's happening in the Middle East. We have zero visibility on whether we're getting second-round effects yet. We're all waiting to see, are we going to see food price escalation? We haven't seen any of this so far. We have not. That's a genuine truth. And where they are in relative terms is not so far away from where they need to be that it's egregious. We're not talking about, we're not talking about the transitory point for the Fed, right? We're not talking about a Fed which is on the verge of seeing inflation ratchet up to 6, 7, 8%. Above target, and we have been above target for the better part of 3 years. And so I don't think they're under any pressure, frankly, to do anything this week, meeting.
It's good to see you. Sonal Desai of Franklin Templeton. No pressure on the Fed. Little pressure, according to Sonal. That next Fed meeting, July 29th. CPI tomorrow morning. We'll hear from the Fed Chair, Kevin Walsh, as well, later that morning, too. Coming up next, we'll catch up with Steve Author, Federated, John Lieber of Eurasia Group, Erica Nigerian of UBS, Christina Campbell of Invesco. The second hour of Bloomberg Surveillance is just around the corner, with equity futures down 1/3% on the S&P. Bond yields higher across the curve by around a single basis point, and crude on WTI and Brent higher by more than 3%.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you? I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca? Maybe somewhere in the middle.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The U.S. has too much inflation.
Pieces of the CPI this month are going to matter more than what we've seen historically.
The scenario for a hike is one where inflation stays elevated.
You have the market pricing in one hike and then followed by cuts.
If the Fed does feel the need to hike, they're arguably hiking for the right reason.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your price action of scores looks like this. Equity futures on a back foot this morning, just a little bit softer on the S&P. We're down a quarter. On the NASDAQ 100, we're down by 0.8%. The tech trade at the epicenter of the weakness out of South Korea. In the bond market, 2s, 10s, and 30s. Yields bleeding just a little bit higher, up by a basis point plus across the curve. 2s north of 420, 10s north of 450, 30s north of 5%. Setting the tone for this morning, this move in crude, WTI and Brent. WTI and Brent this morning up by more than 3%. Brent crude breaching $80 a barrel briefly last week. This morning, 78. WTI at 73. Heading into this in the next 24 hours. Take a look at this. Look at it twice. Sit on it for as long as you want. Tomorrow morning, we get 5 banks on Wall Street reporting earnings. We get CPI at 8:30 Eastern Time, and then later, the Fed Chair Kevin Warsh testifies before the House Financial Services Committee. All of that in the space of what, 4 hours?
Pick your poison, what you care about this week and what's going to be the next catalyst. I go back to what Sonal Desai just said, though. The Fed has no insight, which is why she doesn't think this is a live meeting in July, or what's going on in the Middle East. But I look what's going on in the Middle East and think, when are we going to get that insight? We went from war to somewhat peace, to now this purgatory, this stalemate that I don't see ending in the next few months based off of what we're seeing out of Iran and the United States, continuously both laying different claims to what's going on in the Strait of Hormuz. And that's going to push oil prices higher, and it's going to potentially make it much more challenging for this Federal Reserve to talk about the inflation story.
As Lisa and others have said repeatedly, it's persistence that can be the problem. And as many guests have suggested in just the last week, included this morning, if this is the new normal, and it keeps crude and energy prices elevated, even if we don't retest 100, if you've got a Fed that's anxious about being above target for 5 consecutive years, the itch to hike interest rates will only get greater if the energy story continues to be a problem through the summer.
Especially if you think about it, if you're on the Fed and you think about it as actually, we're not hiking from here, we're just taking back insurance cuts that we had last year. And what we are doing is what we were supposed to do, which is risk management.
3 cuts last year, 3 cuts the year before that. Those cuts have been adding up. Later on this morning, 8:45 Eastern Time, speaking of Bramo, Lisa's on tour. She's catching up with Ed Bastian, the Delta Airlines CEO, a little bit later this morning. 8:45, don't miss that. Navigating higher energy prices against the backdrop, at least if you're the Delta CEO, of good demand.
Good demand. They reaffirmed a full-year profit guidance, even though they have an incredibly challenging environment. How do you think about jet fuel costs, not even the present day? What is it going to be in August? What's it going to be the end of the year? At the same time, people are still traveling. It is peak travel season this summer. People are traveling for business. I mean, you see all the travel right now, what's going on in the United States with the World Cup, on top of everyone chasing the, cheaper yen, what's going on potentially in Japan.
Need to make Japan happen this year, right? Trip to Tokyo, 160.
I told my parents this,
Crazy.
and they looked at the flight times, and they're like, ooh, and I was like, but you don't understand. It's
Dollar
the
yen.
cheapest we can ever go.
Dollar yen around 162 so far this morning. Brent crude, 78.60. Coming up this hour, Stephen Orth, the Federated Hermes, expecting earnings season to bolster the bull market. We'll catch up with Erica Najarian of UBS with 5 key themes to watch ahead of results from the big banks, and Christina Campmany of Invesco previewing a busy week of inflation data and Fed speak. We begin this hour with stocks lower as AI concerns weigh on investors ahead of the latest round of earnings. Stephen Orth of Federated Hermes are writing, given high expectations, the setup isn't perfect for this season to ignite another big move higher in the next 6 weeks. But for longer-term investors, this season should reinforce the bull case. Stephen joins us now for more. Steve, good morning, sir.
Good morning.
I can't believe that's the last time I get to say that on TV. Stephen Orth retiring in the next couple of months. Steve, can I just say how much I've learned from you over the last decade plus? I came from London in early 16, scarred by back-to-back crises, obsessed with what can go wrong. And you taught me pretty quickly to start thinking more about what could go right and that risk can cut both ways. You've rode the bull market the whole way up, and every time you've been on, I've sat here opposite you and said, Steve, what can go wrong? What can go wrong? And over time, I've started to ask more, what can go right? What can go right this morning?
Well, in the long term, a lot of things are going right. I mean, earnings are exploding to the upside, Jonathan. I mean, this bull market started with earnings down below $200, and we're looking at $450. We raised our numbers twice now on 28 earnings. Kind of, we like to look at where things are heading. I think this earnings season, looking at plus 22% year-over-year earnings growth, and those numbers are probably too low. So yeah, I mean, the earnings, stocks eat nominal earnings, and some of that is inflation for sure, but that's why people invest in stocks and not bonds, because they eat nominal earnings. And yeah, I think it's going to reinforce the case. Now, the stocks have run up into this. The sell side has raised their numbers into the earnings season. Last 3 months, earnings are up about 4% estimates off of where they were three months ago. Normally, we're cutting into earnings. So it doesn't seem to us like there's going to be a big disappointment out there. There may be stock by stock for sure. It's become a stock picker's market, but it looks pretty solid to us. I mean, the earnings, the banks' earnings, the banks have been raising dividends, since their capital test the last few weeks ago. So they're not doing that because earnings are about to surprise to the downside.
We should reflect on how unusual this is, though, in direction and in size. As you indicated, to be raising estimates into earnings season and to have expectations this high outside of recoveries is incredibly rare. Very, very unusual. In fact, some people might say unprecedented. What's behind that positive earnings shock?
A lot of it is margins. The bears have been saying for actually the extent of this bull market, which has been almost 15 years, a 13-year anniversary a few weeks ago. The bears have been saying quarter after quarter we're at peak earnings, because it makes them crazy. I mean, peak margins rather, that the margins keep going up, but the margins do keep going up because the mix of the U.S. economy is shifting increasingly towards higher margin businesses. And the companies that are in the index are using things like now AI, but before that, the Internet of Things and the cloud. It's a transformative technological change that's driving across the board margins to go higher. And, one of the reasons we've had this broadening out idea for the market is that, the first stage of AI was the spenders, then it was the you know, the companies that are immediately beneficiaries of that, and now it's the guys that are using AI across the broader economy. So we see margins going up, and we've got margins continuing to rise over the next couple of years.
I'm going to take the flip side of Jonathan's question. What could go wrong?
Well, a lot of things could go wrong as usual. That's the wall of worry we're riding. But you know what is it? The Strait of Hormuz. That was supposed to shut down everything. And what's happened is the world has figured out how to get oil out of the Mideast without the Strait of Hormuz. We were looking for 10 million barrels a day. We were all hysterical. You know, how many barrels a day are now getting through the Strait or some other means? I said to you this a few months ago, if it can't happen, it won't happen. People are figuring out how to get the oil out. So I think I know it's the headline today, but my guess is a year from now, no one's going to really care about the Strait of Hormuz.
But how long can we live in this somewhat purgatory? We're not at peace. We're not at outright war.
It looks like we can go on for a while, Anne-Marie. I don't see it. Every day, the Iranian military capability is declining. So it feels to me like we hit the peak of problems here probably 3 months ago. And since then, it's been going down. It's going to be kind of like a purgatory, as you said, but we're finding other ways to get the oil out. And the market's kind of looking past this issue. You know, another thing, like the chip stocks today are getting hammered. And we talked about this on the show. You guys have been talking about this for a while. Spot market versus futures market. And, you know, one of the lessons I've learned over the years is focus on the futures market, not the spot market. So for oil, it became very obvious to people. Spot oil has a clearing price. Longer-term investors were looking at the futures market. You guys kept talking about that. That was the right thing to do. But if you think about it, even in the stock market, there's a kind of spot market for stocks and a longer-term market for stocks. The spot market in chip stocks, is being set in Korea. These are folks that are using the market as a gambling mechanism. They're playing short-term movements. They're playing charts. They're not really looking at fundamentals. So we had a huge move up, 5x. Now we're had a 30% correction. A long-term investor looks at that and says, okay, the first move up in these chip stocks was an earnings explosion. We've seen that. The next move now is a revaluation, because now we're down to 3 manufacturers. We had, which is a really well-controlled oligopoly. Adding CapEx is very, very expensive, so that is a discipline in itself. And what's happening is, and we're seeing it, we've been expecting this, the chip manufacturers are now getting long-term contracts with built-in price increases. That's changing them from being cyclical growth companies to growth compounders. They're still priced like cyclical companies. So somewhere out there is a revaluation in these stocks.
Give me an idea what those numbers look like. They trade at single-digit PEs right now. Where should they be?
We think they should probably, over the next 5 years, trade up closer to a market multiple, at least to 15 times.
That's a big reevaluation.
Sure.
You think they'll be able to convince this market that this earnings story is that durable, that sustainable?
I think it's going to prove to be.
They've escaped the boom-bust cycle.
We'll see. No, I mean, not completely, Jonathan, but not like they had. Not boom-bust. Maybe a little more like this.
They're less cyclical, which is what you're getting at.
Right.
Why have they become...
But that revaluation takes more time.
Well,
I mean,
just explain to everyone why they've become less cyclical.
Well, we had...
Because this market right now is not buying the valuation story.
We had 6 or 7 of these guys. Every time prices went up, they added capacity, and then it's like an airline. You know, too much capacity. You got to drive the price down until you can sell it. Now there's only 3 of them. It costs an enormous amount of money to build a fab nowadays, and they're being much more disciplined about adding capacity. And they're basically don't have enough capacity for the next 3 years. So we've got a pretty good backdrop, and now they're signing long-term contracts. We think probably 50% of their revenue base over the next couple of years is going to be kind of locked, not softly locked in.
Is this your contrarian bet right now? The revaluation trade of some of these names? Because it feels slightly contrarian. A lot of people are saying maybe this is the peak of the story. They started to raise capital. This is SK Hynix on Friday to build out capacity.
Well, we've been warning our investors that a correction was coming across the board. To us, the spot market for stocks in general has gotten kind of overheated. What we've been happy to see is been more of a rolling correction, which is a healthier way to do it. You guys have been talking about that as well on the show. And on the chip stocks, yeah, I mean, this has been a pretty serious correction. And usually in bull markets, 20 to 30% pullbacks are the time to beat for long-term investors to add. Now, do I know anything about the spot market? Not much more than you. It could be down another 10, 20% the next 3 weeks. But I think layering into these stocks here makes sense.
We've got some time for some final words of retirement wisdom. Over your career, going back to when, the 80s? Prudential?
Yeah,
right.
The 80s, 79.
What have you got to share with us this morning? Just reflect on that. Just some advice to the next generation of investors. What's your advice for them?
Well, the big piece, I'm writing a book about this, humility at the highs. But humility at the highs, confidence at the lows, integrity always. Those 3 lessons in equities or in any other form of advancement in life make a lot of sense.
Steve, you're a gentleman. Thank you, sir.
Thank you, John.
We're going to spend more time together away from the studio anyway. It's good to see you. Thank you, Steve. Stephen North there, a Federated Hermes, just a fantastic career. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. Republican Senator Mitch McConnell giving an update on his health. The 84-year-old saying in a statement that he suffered a fall in June and contracted pneumonia that required hospital treatment. He says he's moved from the hospital to a rehab center, but still isn't healthy enough to return to the Senate. Meta is expanding its plans for a data center in Louisiana. The social media and AI company committing an additional $40 billion to the site it began constructing in 2024, bringing its total commitment for the campus to over $250 billion. The World Cup semi-finals are set. England moving on after defeating Norway 2-1. They'll take on the defending champions Argentina, who once again survived, beating Switzerland 3-1. Kicking off the semis tomorrow will be a European blockbuster with France taking on Spain. And that is your Bloomberg Brief. John.
Couple of days of fantastic football coming up. Away from the markets, of course, the week is absolutely stacked already, if that wasn't enough. Up next on the programme, protecting the Strait.
Those boats are coming out of the Hormuz Strait. We're doing very well with respect to the Hormuz Strait. Those ships are flowing out of the Hormuz Strait like nobody's ever seen before, actually. The strait is open.
Up next, John Lieber of Eurasia Group, live from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Stocks are negative this morning, down by 1/3 on the S&P. Just fantastic advice from Steve North of Federated. What was it? Humility at the highs, confidence at the lows, and integrity in between.
Yeah, but Fantastic advice, I think, if you're in the market, but also just for life.
Yeah, for life and markets. Steve, just one of the best. NASDAQ futures this morning down by 0.9. Some tech jitters coming out of South Korea. We'll see if those losses hold as we get closer and closer to the cash open. That's the equity story. In the bond market, 2s, 10s and 30s, yields pushing just a little bit higher, up by a basis point at the front end, up by 2. The further out you go. On 10s this morning, 457 on 30s, just north of 5%. Crude up on WTI and on Brent. WTI this morning at 73, Brent crude at 78. Under surveillance this morning, protecting the Strait.
The Strait is open. Those boats are coming out of the Hormuz Strait. We're doing very well with respect to the Hormuz Strait. We have an oil gusher. The Strait is totally open. Those ships are flowing out of the Hormuz Strait like nobody's ever seen before, actually.
So here's the latest this morning. Crude moving higher as the US and Iran conflicting claims over the status of the Strait of Hormuz. Both sides exchanging new strikes following a weekend of escalation. Bloomberg's Tyler Kendall has the latest from Washington. Hey, Tyler.
Hey, John. Well, breaking within the last hour, we heard from Iranian state TV reiterating a threat from the IRGC that the Strait of Hormuz will be closed until the U.S. ends interference. In their words, we know Iran has been dismayed by the fact that more vessels started using that U.S. coordinated route that hugs the coast of Oman instead of getting closer to that route that would be closer to Iran. But still, the U.S. is saying that that's not true. CENTCOM says that they are working to ensure freedom of navigation after the U.S. military confirmed it conducted at least 3 waves of strikes this weekend designed to degrade Iran's ability to target commercial shipping. There are still a lot of big questions here, though, as we know that observable traffic in the Strait has basically ground to a halt, though data analyzed by Bloomberg News does show that ships transiting with their transponders off, so-called dark crossings, are now exceeding those observable transits for at least the last 3 days. And the fighting is continuing. This morning, Iran says that its military is launching drones at U.S. Army positions in Kuwait following a weekend of targeting allies. John, it's very clear that Iran is making its outreach to some of its regional partners, including Iran's foreign minister meeting with his counterpart in Oman, and then Iran's oil minister meeting with his counterpart from Russia ahead of what is expected to be a planned visit from Russia's foreign minister to Iran sometime in the near future.
Tyler Kendall with the latest in Washington. Tyler, thank you. Appreciate it. What's important for markets here, what they chose to hit, what they chose not to hit, is just as, maybe even more, important.
Why it's interesting that CENTCOM is saying U.S. forces did not strike Karg Island in Iran. That would be a serious escalation when it comes to the risk premium and the price in the oil market.
This is not a popular conflict down in Washington, D.C. Capitol Hill has been pushing back against the White House, and the Republican Party has lost a key interventionist against the backdrop of an increasing isolationist party. Lindsey Graham, the senator from South Carolina, has died over the weekend. John Lieber of Eurasia Group wrote this: Graham was a hawk on Iran and cultivated a lot of relationships overseas, one of the most prominent Republican senators on foreign policy. John, we have a hole in that party this morning. What are your reflections on the senator from South Carolina and what it means for the outlook for foreign policy for his party?
Yeah, I mean, look, Lindsey Graham was he would be the first to tell you that he was in favor of an extremely interventionist American foreign policy. He'd been somebody that had wanted the U.S. to target Iran for a very long time. And he was a key interlocutor across the Middle East, across Europe, for the U.S. and for the Republican Party on that interventionist agenda. And of course, importantly, he was also an important influence on Donald Trump, who kept a lot of the relationship alive and warm with the United States Senate when a lot of people wanted to walk away from Trump. And I think we have to give Graham a lot of credit for pivoting from being one of Trump's biggest critics to being somebody who was pretty effective at pushing the president towards this more interventionist stance that we've seen in Iran, in Venezuela, and even keeping a lot of the U.S. influence alive in Ukraine. So I think that's an important role that Graham played. It's not entirely clear who will play that. Now, of course, the president's got a lot of other influences around him, and he's in this war far too deep now to back out of it. But over the longer term, this is going to represent a shift in the Republican Party, like you said, John, from this interventionist type like Lindsey Graham, who are, sadly dying off, to the more isolationist Republican that I think keeps the U.S. out of these types of foreign entanglements.
John, he wasn't just an interlocutor on the international stage, also domestically. It wasn't just Republican senators in the White House. He also was an individual that has very long-term relationships with Democrats. Who can fill that kind of void? An individual that's almost a fixer behind the scenes.
I mean, I'm not sure we know yet. A lot of the new generation of Republicans are quite a bit younger. Graham had been around a long time, since about 25, 26 years in the United States Senate. And I don't think you see those kinds of relationships developing the way they did, or they could have. They had spaced to 20 years ago when members would go on congressional delegations together frequently and generally were much more positively inclined towards each other. So I think it might be, you're going to lose a bit of bipartisanship too with the passing of the torch to the new generation.
Do you think there's more of a chance now with his passing that the Russian sanctions bill gets put through and Trump signs it?
I doubt it. I think that bill faces hurdles, and Graham was one of the biggest proponents. I don't think Trump's in favor of it. Now, that probably depends on what happens in Ukraine. The dynamic over the last month or two has been that the Ukrainians have sort of got a boost of momentum, have been attacking a lot more deep into Russia, and so as a result are looking like they're on their front foot instead of their back foot in that war. That dynamic could actually help push the Trump administration to be much more tougher on Russia and maybe potentially embrace those sanctions. But they've got to get past Iran right now, and they've got to get past the bigger issues they're dealing with across Latin America as well.
John, another key senator in focus as well is a man that you've worked quite closely with in the past, Senator Mitch McConnell. Can I get your reflections on what's happening with Senator Mitch McConnell? Because it was a bit of a mystery up until the last 24 hours, and for some remains a bit of a mystery.
Yeah, and it's no mystery that Senator McConnell is getting up there in years, and he had a childhood battle with polio that has, I think, affecting him to this day. He's announced his intention to step down, and he's going to be vacating his seat for the next generation in this upcoming election cycle. And I think that, he's always been fairly private about his health, and he doesn't share a lot of details. And so what we've seen is an aging senator dealing with health issues who doesn't really want to talk about it in public. And I think that's led to a lot of speculation about what's actually going on with him. He's not missing any important votes at the moment, and he's finally over the weekend released a statement giving some clarity about what's going on. I think that we're looking at the end of a long and well-regarded career for him, and I wish him all the best in his recovery from this illness.
John, we appreciate your clarity this morning. Thank you. John Lieber there of your Asia Group. To John's point, when you seek out privacy, your impulse tends to be incompatible.
Well, this is where I have a problem. If you're scheduled to come for votes, scheduled to represent a state, well, then when you go missing and there's not a lot of clarity about you and also your wife, who was a former cabinet secretary, goes to China, there needs to be answers. You can't just go dark.
It provides some oxygen for conspiracy theories, let's put it that way. Okay, coming up next on the programme, Erica Najarian of UBS looking ahead to a key week of big bank earnings, plus Shahira has your morning movers. SK Hynix ADRs are lower ahead of its full first day of trading. The stock is down by more than 8%.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Coming up in 1 hour and 15 minutes, don't miss it, Ed Bastian sitting down with Bloomberg's Lisa Brambitz. Bramo coming up a little bit later with the Delta Airlines CEO. Looking forward to that at 8:45 Eastern Time. Ahead of that, the price action looks like this. Equity futures on the S&P 500 pulling back following 2 days of gains, 2 weeks of gains. On the S&P, we're down by a third this morning. On the Nasdaq 100, we're down by 0.9. The epicenter for the tech jitters, guess where? South Korea. SK Hynix down a record 15% plus overnight in the Asian session. That ripples through Europe and into US equity futures. In the bond market, 2s, 10s, and 30s. Yields higher across the curve by a single basis point, setting the tone for this move in crude. WTI and Brent higher by more than 3% through much of this morning, following a weekend of escalation over the weekend and into Monday to start a new week. Trading strikes between the US and Iran.
Trading strikes in the Strait of Hormuz right now. There's no ships moving through, according to the data what we're seeing. You saw some ships, about a dozen commodity vessels moving over the weekend, and they did so by putting their transponders off. So going in secret, going in the dark. Right now, today, no one is feeling safe enough to go through. And I am interested why CENTCOM came out and said U.S. forces did not strike Karg Island in Iran. They came out and felt the need to say that. Something potentially is going on there. And I think that's important because Karg Island obviously is the epicenter, the lifeblood of the Iranian oil and gas world. And if that was to be struck, you would see prices potentially a lot higher than we are today.
We breached 80 last week, still south of that this morning, 78.50. If you look at WTI, 73 handle, so $5 away from the post-war low. And I mentioned that we're still $35 away from the post-war high. So it's a market pretty comfortable, relatively speaking, to the developments in the last week.
Yeah, what did Steve Alf say? We can pretty much live through, and it's proven, we've already proven in this market that we can live through this almost purgatory. We're not at peace, but we're not at full-fledged war. And it's been difficult to understand from the president how he would describe this, because he said the ceasefire is off. But when pressed by reporters last week when I was with him in Turkey, he would not commit to going back to a full-fledged war.
Purgatory comes with its own problems, just short of 74 this morning on WTI. As we count you down to the up and about, 2 hours away. Let's get you some single names to morning movers. Yahara has more. Hey, Yahara.
Hi, John. This is not purgatory. SK Hynix ADRs are falling 8.4% in the pre-market, giving back some of the gains after its Friday debut. The weakness coming after overnight, as you said, it suffered its worst drop on record as investors took profits following the listing and reacted to a report from a South Korean brokerage suggesting that quarterly earnings could miss expectations. But there is a broader risk-off mood in the market tied to, as what you were talking about, the war in Iran, and that is weighing on the market's biggest winners, the memory names. So Micron, SanDisk, and Western Digital all falling in the pre-market, and that overshadowing what would otherwise be seen as good news from TSMC. It gave its preliminary report. Its full earnings come out on Thursday, and sales were strong, reinforcing that AI demand remains strong, but investors looking past that. this morning. And we end on some sell-side action with Shopify rising 2.6% in the pre-market after Jefferies upgraded the stock to a buy, saying it expects it to beat quarterly results. Plus, they say that the e-commerce giant is well positioned as AI agents become increasingly part of the shopping experience. John?
Yahara, thank you. Thanks for the update. More from Yahara in the next hour. On our radar this morning, shares of SK Hynix tumbling by a record 15% plus on the South Korean exchange, sparking a row across the broader tech sector. The group's chairman remaining confident in the company.
I have some confidence that the demand will be grow. Our supply capacity never going to catch up. So first thing is that we have to keep the stock price stable, and hopefully in the long run, then we can have that upside potentials.
Nothing stable about the stock price this morning. The chipmaker's US-listed shares falling ahead of its first full trading day. Their stock is down by more than 8%. Elsewhere, the US and Iran trading fresh strikes while issuing conflicting declarations over the Strait of Hormuz. Tehran saying the waterway is now closed, quote, until further notice. US Central Command disputing claims, saying the strait remains open. And finally, Kevin Warsh making his first appearance before Congress as Fed chair this week. Warsh will testify in front of the House Financial Services Committee tomorrow following the June CPI report. His testimony continues Wednesday before the Senate Banking Committee.
So his first Humphrey Hawkins testimony as Federal Reserve Chair. And I think what's so interesting about this week is that we're going to get live reaction from the Fed Chair after two key data points that we really care about. You keep asking this question, is July live? Is this a live Fed meeting? Well, we're going to find out tomorrow morning, potentially at 8:30, and then we're going to get some color around that from the Fed Chair. Then we're going to get PPI. And then we're going to once again get some color around that from the Fed Chair. On top of that, we have a ton of Fed speak this week before we have the blackout period at the end of the week. So I think it's incredibly important that we're having the data on the front end of the week, and then all of that, we're going to get the Federal Reserve massive members talking about what all of this means.
Governor Waller, a key member, speaking a little bit later this afternoon. Before we get all of that, the data and hearing from Chair Warsh, we get this. Earnings on deck, with 5 of the nation's biggest banks reporting before the opening bell tomorrow. Erica Najarian of UBS remaining mostly bullish on the sector, writing, we expect any beats to come mostly from cap markets and trading, and any misses to come from deposit cost surprises and higher costs related to higher transactional fees. Erica joins us now for more. Erica, good morning.
Good morning.
It's never been like this. I don't remember the last time they all did this at the same time. What's that about?
I don't know. Everybody had a great 4th of July weekend, long weekend, and like,
I'm feeling sick.
I'm feeling sick Tuesday. Look at my earnings, everybody.
Right. Fantastic. What are you expecting to see tomorrow morning?
So we're all expecting great things, right? But can the mega cap banks really exceed the mega expectations that have been put on? So the whisper numbers from the buy side or the investor base, especially for Goldman and Morgan, tend to be higher than where consensus is. And so with 5 of the 6 of them reporting and expectations ratcheted up pretty high, I'm a little bit nervous that tomorrow is going to be a little bit of a mess and that it's going to be difficult to stand out, especially since I expect that JP Morgan's earnings call will be somewhat dominated by succession questions. And so if you think about sort of what sticks out in a 5-day sort of 5-bank reporting day, that might be it. So results might be, you have to really stand out, right, to catch the headline.
So let's try and unpack some of it now. So you mentioned the likes of Goldman. So Goldman's up 20% this year. Morgan Stanley's up 25%. Those two names have almost traded as one. Had a fantastic year. How crowded is positioning around some of those names within the banking sector? Because I would often come on air and I'd say the banks as a group on the S&P, record highs. But the performance spread across that group of banks is actually pretty wide, isn't it?
So it feels a little bit like the investor base is playing kind of like a little dangerous game, and they're actually long Goldman, short Morgan Stanley. And so they're trying to be long the purest expression of capital markets and short a name that's trading at a very lofty price to tangible book multiple. And seasonally speaking, wealth flows are typically negatively impacted by tax payments. So they're, I think, also banking on that. But that is a super, super crowded trade. And so not only do they have to beat consensus significantly, both companies, but we also have to have pretty encouraging, outlooks in terms of the pipeline.
So when it comes to Goldman, out of all of them, is that going to be the highest bar for them to clear?
I think Goldman has probably the highest bar to clear, yes, tomorrow, given positioning.
So then who do you want to be exposed to if you're an investor going into tomorrow?
I like a little Wells here, right?
Because no one's talking about it.
No one's talking about them. Everyone's like, oh, they may not make their $50 billion net interest income target, although Charlie, the CEO, and Mike, the CFO, had reiterated it during conference season in May and June. And, they're not as purely exposed to cap markets names, but, if they can hit anywhere near consensus, that stock is really sort of inexpensive. And if they could reiterate in that public forum that they could hit their targets, I think that stock could actually have a little bit of a squeeze.
Do you see a new phase to the banks trade emerging with the likes of Wells Fargo and others, a purer play on just the traditional banking story away from capital markets? Is there a next phase to this long bank trade?
I had hoped so, but I'm still skeptical.
What
right?
makes you skeptical?
Because at the end of the day, as I think about what the fundamental question mark is, it's really about deposit growth and deposit cost challenges. And that is a little bit more acute in the regional bank names or names that don't have as much capital markets exposure. So if Warsh sounds hawkish, for example, during the testimony, and all of a sudden September is live, and by the way, loan growth is fantastic. However, it's outpacing deposit growth by 2 to 1. And then all of a sudden there's sort of like a potential for earnings downgrades because of higher deposit costs versus the fantasy of the capital markets revisions continuing to go up and up and up.
So wait a second, higher rates would be a problem for some of these banks?
I think higher rates could be a problem for some of these banks if it's coming from the short end. The regional banks are very much tethered to the shape of the curve. The ideal scenario for them is that if we had a few cuts on the short end of the curve and the curve was steep.
You said September. So do you not think July is even an optionality to be live?
Girl, who knows? But I mean, if you don't see those ships passing,
we got a problem.
We have a problem. If the CPI number's hot, we have a problem.
Maybe good news for JP Morgan. They won't talk about any of this because on the call, you know what they'll be talking about. They'll be talking about succession planning. You said it. Succession does matter, though. What did you find out? What did we learn in the last few weeks with JP Morgan?
So I think we learned that the sort of rolling retirement for Jamie is over, right?
You think it is done now?
I think it is done now. And I think that I would peg his remaining time with the length of the retention award contracts that they gave to Doug Petno and Troy Rohrbaugh.
So do you think he needs to come out with clarity on when he is going to retire?
I think so, because I do think that long-only investors that are staunchly loyal to owning the stock, still somewhat believe in this rolling retirement, right? Especially since, the sort of heiress apparent, the star that everybody had thought was going to take over had left, right? And so they have sort of less time to get to know Troy Rohrbaugh, especially, who's newer than Doug Petno. And so I think a little bit of clarity, but also I think investors are wondering, what is Jamie looking for the new CEO role? Right?
What do you think he's looking for?
I don't know. I'm going to ask him tomorrow, right? But what are the key characteristics for JP Morgan, who's already so far in the lead to further future-proof their business? And by the way, you're not just CEO and chairman of JP Morgan. You are the spokesperson for the entire financial services industry. So
do we want that as a shareholder? Do we want that person to fill those shoes, to be the spokesperson for the industry? Is that something we actually want?
There's no choice. They're huge, right? They're going to be $1 trillion in market cap pretty soon.
Does it automatically pass to the next CEO of JP Morgan, or potentially the spokesperson is someone who's already a CEO at another bank?
Just given, technically it could be Bank of America, right? But given JP Morgan's size and just its returns, right? I mean, and also, there's also a retirement question over the next several years with Brian Moynihan as well, right? And so, it does automatically still is JP Morgan.
How great is the key man risk at JP Morgan? I ask this question with a great deal of respect for the man and, of course, the institution. That goes without saying. But to believe in the stock, you have to believe that the company survives past the handover from one man to another. There's got to be more to a company than just one man running JP Morgan.
You could have said that about GE and Disney, right? And you can say the same thing on the like Berkshire Hathaway and Apple, but there is an enormous amount of talent. The reason that JP Morgan's returns are 20% plus on tangible common equity is everybody goes into 270 Park or wherever else and rows the boat in the same direction, right? Obviously, it's chock full of talent, but for the stock and for investors, key man risk is real. At some point, hopefully, it's called key woman risk, FYI. But the key man risk is real.
Well, it is over at Citi. But when it comes to John's point, isn't this part of his job to set up a proper successor? So as a shareholder, you're not sitting here wondering what's going to happen next.
But I think that's what he's doing, right? I think that we're just a little bit perhaps surprised that Marianne Lake is not part of the discussion.
Was that a fumble?
Is that a fumble? Look, I think Marianne Lake is extraordinarily talented, but there has to be a reason why one of the best boards in the globe, one of the best bank boards in the globe decided that Troy Rohrbaugh and Doug Petno had to be sort of the ultimate successors. And I think he's doing the right thing, right? Troy comes from a trading background, and now he's running, the largest consumer bank in the U.S., and Doug Petno gets to run the whole, corporate investment bank on his own. So I think they're doing the right thing. I just think that Marianne was so considered to be the heiress apparent that everyone needs a second to digest the new reality.
Does this feel like a repeat of Goldman, Harvey versus David? Does it feel like that again, or is this different? You lived through that, we all did. Is this different?
A little bit.
What makes this one different over at JP Morgan?
It was just such a longer, we have been talking about succession like forever, right? I think I had a 3 handle in my age when we were started talking about, succession. And so it's just that there's been like so many, like Mike Kavanaugh, there's so, Jen Piepsack, there were so many other folks to have considered. That's what makes it different from, the Goldman succession.
Nobody believes you've got anything but a 3 handle on your age, Erica. It's good to see you. Thank you. Appreciate it.
Thank
Erica
you.
Najarian of UBS, thank you very much. The big banks, 5 of them reporting tomorrow morning. Just Morgan Stanley, I believe, sitting this one out and reporting on Wednesday morning. Let's give you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. The U.S. and Canada are preparing to open a new bridge connecting Detroit with Windsor, Ontario. The Gordie Howe International Bridge will open July 27th. The deal was announced after Ottawa agreed to give the U.S. a share of net toll profits. The U.S. Department of Justice launching a grand jury investigation into United Auto Workers President Shawn Fain. The DOJ is looking into accusations that Fain pressured another high-ranking union official to secure benefits for his fiancée and her sister. In an email to Bloomberg, Fain called the allegations false. In sports, Jannik Sinner winning his 2nd straight Wimbledon trophy, beating Alexander Zverev in 4 sets. The world #1 player dropped the first set before pulling ahead for the rest of the match. It's the Italian's 5th Grand Slam title and first since last year's Wimbledon tournament. And that is your Bloomberg brief. John.
Vonnie, thank you. Thanks for the update. Up next, awaiting inflation data.
We're already starting to see some downside surprises to inflation, and that's why we do see value across a number of the different government bond markets.
Up next, we'll catch up with Christina Campmelli of Invesco, live from New York. You're watching Bloomberg TV.
is back to take a look under the hood of the business of Formula One. Hi, I'm here to CPR Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'd still be driving something.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Stocks down this morning by a third of 1% on the S&P, by 0.9 on the Nasdaq 100. In the bond market, yields higher across the curve by a single basis point. 2s, 10s, and 30s. 2s up by a basis point to 4.22, just off the highs of the year. And in the commodity market, Brent and WTI look like this going into CPI tomorrow morning. Brent at 78, WTI at 73.80. Under surveillance this morning, awaiting inflation data.
You will be able to see enough sequential improvement in inflation to keep the Fed on hold. We're already starting to see some downside surprises to inflation, and that's why we do see value across a number of the different government bond markets.
So here's the latest this morning. Investors bracing for a busy week of economic data and Fed speak, hoping they'll get some for insight into the central bank's outlook for monetary policy. Christina Campmany of Invesco writing, inflation data will continue to drive markets' behaviour, with general labour market resilience removing much of a tail for easier policy in the short term. Christina joins us now for more. Christina, good morning. Good to see you.
Good morning. Thanks for having me.
So we get back-to-back CPI and then share wash. What do you expect to see and hear tomorrow morning?
So I think that the market is very excited for this week. We have earnings. We have all the Fed speak, just beyond wars too, because so far it's been a little cagey of like how much information and insight we really get. I think for the inflation number itself, the markets are looking for a kind of okay number with like a 0.2 core. I think it takes really like a 0.4 core or more to say July is 100% a done deal.
That's what I was going to ask you, Christina. If we get an in-line,
yeah,
okay, does that just shut the door on the July debate?
I don't think that they go in July, but I don't think it shuts the door in the pricing of July. I think we kind of sit here maybe at 7, 8, even half price. I think we live in a different world that you can go into meetings with much more price and it's less of this certainty. And it's interesting because in the press conference after the meeting, Wirtz talked a lot about, I want to take a step back from forward guidance and all of this market hand-holding, and it's not what the market dictates because we're not in crisis. But at the same time, we have to have a shift back to how the market's pricing is the most valuable tool for the Fed and switching of this. So I think it'll be this interesting dynamic as we learn of how do we interpret the Fed chair's communication. Does the balance of communication from the rest of the board change, or is it status quo? Like how much agreement is there on how much we give? So I think we're still in this learning phase, and I think that we need a bit more, and maybe September is the more likely of if the data goes that way, and if you see a pickup or stickiness further in inflation, that may be September, but I think July is a harder case.
How much do you think he's going to be influenced by the CPI print, his testimony?
I don't know that he'll be influenced by it particularly. I think it'll be interesting how he responds into the questioning, because both the press conference and at Sintra, he was I have a task force for this. I don't want to give you anything, really. I think that's a harder case to do when you're testifying to Congress. But I don't think it'll be as much like reactionary to this data point versus here's the trajectory of where we're coming from. We're coming from years of sticky inflation. We were concerned about the labor market. That's proved stronger in the last 6 months.
I agree with you. I think it's harder to back away from elected officials. Tuesday then might be a little bit easier because some people will say, you know, no offense to, you know, Chairman French Hill, but the Senate might be a little bit more of a serious juncture. And that's going to be after PPI. Is Wednesday the more interesting testimony?
I think both will be interesting. I think you might get more challenging questions and like, I think what his tone is and how he responds and his willingness to engage, this is new to all of us in terms of how we're reading him in this role. So I think it's the jury's out of, are you talking strong? Is it speak softly, carry a big stick, that like just the threat of saying we're very aggressive on inflation is enough for the market, or are you ready to act at a moment's notice?
We always frame this as a grilling, and then it turns out to be a total dud down on Capitol Hill. You know how it goes. Sort of individual social media videos that each individual is trying to clip and send to their constituents.
Especially in the House.
Right.
But what did we see in Sintra? A lot of dad jokes. Like, that's not going to fly. It's not going to fly in the Senate. It's just not at this moment.
Christina, before you go, I want to talk about supply and the price you need to pay to clear that supply. Amazon last week, are we getting some pushback in credit?
Finally, a little bit. But credit spreads remain very tight. I think the market is starting to deal with this, like grappling with this. You have a lot of supply that's come into the market, and you really are not being compensated out the curve for that. And you have questions of why are some of these hyperscalers issuing so much? What is there something under the hood that we don't know about? Is there a need for this cash? Are you just optically taking advantage of the market because you think you can? And up until this point, it's been gobbled up. I mean, this spring, long dated supply has been absorbed super easily.
I see the door being open, but for a high yield, a wider spread maybe. What would it take for the door to slam shut?
I don't know. I think when we take a step back and look at like who is the investor base for market, there is a structural investor base for long duration assets. And even internationally, there is still that money coming into US credit. So I don't know, like barring some kind of crisis, that the door slams shut. I think you have a slower supply period over the summer, so maybe that kind of can support things a little bit more. But I think it's either we have a very different world from the Fed and talking about, even different from what we're talking about now, of we might get hikes, but it's, do we get 75 basis points of hikes? That's normalization off of this, the last 75 of easing, for, like a real hiking cycle or something that changes the dynamic in terms of that, I think, to change it.
Christina, good to see you. It always is. Thank you. Christina Campmany there of Invesco. Looking ahead to what we could hear tomorrow morning from Chair Walsh and what we could see in the CPI data. Coming up tomorrow, we'll be continuing to cover that and all the financials. In the next hour, we'll catch up with Chris Harvey of CIBC, Steve Paliuca of Bain Capital, Lindsay Piegza of Stifel, and the Delta CEO, Ed Bastian.
On AI, some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, you know, there are adjustments, there will be drawdowns, there'll be rebalancing, and just it's hard to call it because the trend, the technology trend and the investment is real.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
We're still in a really strong earnings environment for U.S. stocks.
Tech is going to remain well supported. Really, it's about rebalancing.
The churn is not necessarily detrimental.
Investors are being cautious ahead of the earnings season.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Did you hear about the Jay-Z concert last night? It took hours for people to get into Yankee Stadium.
Yeah.
Some problems outside of the stadium.
I heard it was crazy.
The performance didn't start until midnight, and it went on until the early hours of this morning.
Went on to the early hours this morning. I felt really bad for those people who had to go to work.
Were you one of those people?
I was one of those people who had to go to work.
What time did you get out of Yankee Stadium last night?
I left at 2 a.m.
Okay, so 6 hours ago.
But guess what? He still did. I left friends behind. Hello, friends, Chris, Marcy, everyone.
Okay.
50 minutes. He did another 50 minutes.
After you left?
Yes, he said.
Right.
So I left after Rihanna. I had some intel that Rihanna was going to come out, and I was like, I'm not missing Riri. Then Beyonce came out. It was unbelievable. Saturday night, Eminem was there. Incredible. Jay-Z, incredible. And you know what? Hats off to the Yankee executives and Rock Nation. Once they realized there was a problem outside, they wanted to control the crowd and said, we're going to get everyone in safely, then we'll start the concert. And that meant Jay-Z started after midnight.
So let's just do some basic maths on this. So you got to studio a few hours before the show when I walked in the door, and you left there at 2. How much have you slept?
Sleep.
Have you slept?
You sleep when you're dead, isn't that the saying?
Something like that, yeah. Okay. Not made anything up this morning as far as I can tell, so you're doing pretty well. Hang in there. All right. We've burned through another 2 minutes, 58 to go. You can do this, all right. Live from New York City this morning. Good morning to you all. The third hour of Bloomberg Surveillance starts right now, and your price action looks like this. Equity futures down by a third on the S&P. We're down by 1% on the NASDAQ 100. On the Russell, some outperformance this morning following some underperformance last week. In a down market, we're down by a third of 1% on the Russell 2000. Elsewhere in the bond market, 2s, 10s and 30s. Yields bleeding higher by a single basis point. 2s up to, let's call it 422. With this move in crude supporting higher yields. WTI and Brent higher by more than 3%. 78 on Brent. WTI just short of 74. Heading into this week right here, and what a week it is. Wow, what a Tuesday morning we've got coming up for you. Tomorrow morning, 5 major banks on Wall Street reporting earnings. By the time you get to 8:30, you'll have all of that plus CPI data, and then about 90 minutes after that, Chair Walsh on Capitol Hill in front of the House Financial Services Committee.
How many aides are going to have to change some of their questions for Kevin Warsh because of all the data, the slew of data and the bank earnings we're going to get before he appears his first testimony in front of Congress as Federal Reserve Chair? I just wonder how much the data might influence or tilt how he talks about the market right now. And then if that's not enough, Wednesday, PPI and his live commentary once again.
Remember his confirmation hearing when he was asked about being a sock puppet?
Yes.
Sock puppet and things like that. Looking at the caliber and the individuals that he's put together to run some of these task forces that are both international and domestic and lean Republican and have worked in Democratic White Houses as well.
Obama, yeah.
I think it's a bit of an effort to sit here and sit there tomorrow morning and make the case that this is somehow a partisan individual who's looking to do the work of the president in the White House.
The task force are anything but partisan, and they're also global. You have the former Bank of England governor, Mervyn King, also part of this. You have individuals like Mark Andreessen who understand what's going on in the AI trade and potentially what is that going to mean for the productivity of this economy right here in the United States. You have a lot of individuals that can meet the moment right now. But I do wonder how much that is going to be a punt for Kevin Warsh. He's like, well, now let me talk about...
We've got a task force.
Yes, we have a task force. I have names to the task force. Let me read off everyone's CVs and burn a ton of time.
24 hours away, full coverage coming up right here on Bloomberg. Coming up this hour, we'll catch up with Chris Harvey of CIBC, with markets facing a week full of event risk. Steve Pagliuca of Bain Capital on how the World Cup has boosted football's future in America. And the Delta Airlines CEO, Ed Bastian, on navigating record quarterly fuel expenses. Lisa catching up with Ed later on this hour. We begin this hour with stocks sliding following a rocky session for the tech trade in South Korea. Chris Harvey of CIBC writing the CapEx AI cycle still has legs and demand is fire from satiated. Chris joins us now for more. Chris, good morning. Good to see you.
Good morning. Good
Spreads are tight. The data's good. Is it as simple as that? Keep buying stocks?
It's a secular trade. We don't want to overthink the secular trade. We're looking for things. We went back to 2008 when real rates were higher, spreads were widening, June was weak, and there's some similarities, but they're far from that close.
You know what people are sort of digging into now, the pushback you saw in credit and investment grade last week, some of the tech debt that was issued on Amazon, that kind of stuff, starting to think about whether that reshapes the outlook for CapEx, what that could mean for the overall trade. What's your reaction to that?
My reaction to that is the first thing I would say is the capital markets are wide open, right? I think we had 7 $25 billion offerings this year. I think you had to go back to between 19 and 25, you had that many. So that's telling you that there's plenty of capital around. People are willing to fund risky endeavors. And if I'm Kevin Warsh, what I'm thinking about is if I need to slow things down, I have to start attacking the balance sheet, because all the liquidity that you're seeing coming out of the credit markets, that's where there's a lot of inflation coming from.
Is that the potential headwind to the bull trade, that you see a Fed that emerges that needs to tighten financial conditions?
I think so. He said that in his press conference. The good thing is, at least for risk seekers, the good thing is you're not going to attack the balance sheet probably until late 27, maybe 28, right? And so as a result, it's still open, right? But if you look at what's happening, the credit markets are, spreads were at generational tights. Issuance has been phenomenal, and the amount of issuance and risk-seeking that's being done with it is incredible. It's just driving things at this point in time. And until you stop that, you're just not going to stop that equity trade.
Jonathan and I were just talking about the task force, and I loved this line in your note. We subscribe to the belief that the new Fed would feel and act like a tech investor walking into an old economy company. Are you happy with the names you've heard?
I'm happy with the name. I'm happy with what he's doing. I'm happy that he's going back and saying we need to relook at everything. I'm happy that he did not put dots down, because that shows that tradition is not so important to him. He's really about the empirical data and the empirical evidence. And I'm happy that, we're getting a different look at things. At the end of the day, he's right. We haven't got inflation back down to our 2% target in 5 years. Something needs to be done, right? And I think he's working on that something right now.
Do you think him not putting a dot on the plot is a harbinger of potentially we're just getting rid of the dot plot?
Maybe, I don't know. That gets a little complicated for me because I'm not sure the rules and the rationale for the dot plot. But what it tells me is that I'm just not stuck to tradition, right? I need to look, he's going back and saying, hey, we're not getting the right data. We're not getting enough data. We're not getting timely enough data. We're not getting quality data. We need to look at communication, inflation, balance sheet, so on and so forth. Nothing is sacred at this point in time. Nothing's off the board. And I think that's very important. And that's a very strong signal to the markets and to myself.
That's why I really like Doug McMillon, former Walmart CEO. Is there a man that knows more about data and prices than that guy right there to help oversee the task force on prices and data?
Especially a part of the American consumer base that potentially rate hikes or rate cuts influence and impact the most.
The itch, Chris, to rotate away from the winners. I see it all the time. The start of every quarter, the start of every year.
Yeah.
Do you resist the urge to rotate away from the chips, the high flyers?
Every quarter, every month, every day, we look for reasons to get away from the momentum trade. What we said is, it's overbought, it needed to reprice, it did. The thing about the momentum trade is you need regime change. You're not going to get regime change unless you're getting a much more aggressive Fed or the economy is going to accelerate much quicker. Right? You can have these bouts of repricing, we've had that, but you need regime change. And we're just not seeing it at this point in time.
You see this as short term then?
We do see it as short term. There's certain areas of the market that we think got a little bit ahead of themselves, a little bit bubbly. But at the end of the day, I just don't see regime change in the short term.
Where did the hyperscalers fit into the outlook then? Because that was part of the trade. And I'm sure you saw it a million times from a million different people. Lean away from the chips, lean back into the hyperscalers and the Mag 7 that became the Lag 7.
Yeah.
What's the outlook now for you?
So if I look at the communications sector, and you have a couple of hyperscalers in there, that sector looks pretty attractive to us from a valuation point of view, from a technical point of view, from a fundamental point of view. I'm not going to they don't allow me to talk about individual stocks so much.
Not going to pin you down.
But that group looks pretty interesting to us. And if you look at the momentum trade, and this is always true, the momentum trade begins to morph. You're starting to see more healthcare names pop up in the momentum trade. And so at the end of the day, until you get that regime change, momentum's going to be here. It's not time to go bottom fishing.
Big morning for the banks tomorrow morning.
Right.
Morgan Stanley and Goldman, I'm not expecting you to do single names, but the pure capital market plays have had great years, up by more than 20%. Rest of the sector, the other names, they're a little bit more diversified, have lagged. Right. What do you want to do with the banks and the financials into the remainder of the year?
Yeah, we still like the capital markets group. The capital markets, I think M&A still has another leg up here. One of the issues that I think the banks are dealing with, or investors are questioning about the banks, is just as rates go higher, especially at the front end, deposits need to reprice. And what does that do to net interest margins? And so that there's that overhang with the banks. And they just don't have enough. They have some capital market exposure, just not enough compared to some of the other players.
My deposit rate's been going down even though they've not been cutting interest rates. What's that about? Yeah, we'll have a word with them. Chris, it's good to see you. Thank you. Chris Harvey there of CIBC on resisting the urge to rotate. Let's get you an update on news elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Republican Senator Mitch McConnell giving an update on his health. The 84-year-old saying in a statement that he suffered a fall in June and contracted pneumonia that required hospital treatment. He's moved from the hospital to a rehab center, but isn't healthy enough to return to the Senate, he says. Apple is taking OpenAI to court, accusing the startup of stealing trade secrets. The lawsuit accuses a former Apple engineer of downloading confidential files and continuing to access Apple systems after joining OpenAI. Disney's live-action version of its animated hit Moana flopping at the box office. The film grossing an estimated $95 million globally. The original 2016 animated film grossed $643.3 million and became the most watched Disney movie of all time on Disney+. And that is your Bloomberg Brief. John.
Vonnie, thank you. Thank you for the update. So this from the president just moments ago, speaking to an American broadcaster. We're taking over the Strait of Hormuz. Iran has nothing. I'm not sure how to read into those comments this morning, given the strikes we've seen over the weekend. and into the start of this week.
The United States has control of the one part of the Strait of Hormuz. It's the part that hugs the Omani coast, and that is where, if you are a vessel, you could potentially get the protection of the United States. But it hasn't meant you are safe because we have seen IRGC attack those vessels. The IRGC and Iran basically control another part of the strait where they want to make sure that you get approval before you decide to traverse the strait. Potentially then you're going to have an issue with the U.S. government.
Crude up by almost 4% this morning. Brent crude just short of 79. WTI 374. Up next on the program, the Morning Calls Plus, we'll catch up with Steve Paliuka of Bain Capital on surging sports team valuation as World Cup mania sweeps across the nation.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
A lot of things are going right. I mean, earnings are exploding to the upside. It doesn't seem to us like there's going to be a big disappointment out there. There may be stock by stock for sure. It's become a stock picker's market. It's a transformative technological change that's driving across the board margins to go higher. We've got margins continuing to rise over the next couple of years.
I'm going to miss Steve. Stephen North of Federated in his last broadcast conversation before his well-earned retirement. Congratulations to Steve and to his family. Equity futures this morning look like this. Your scores building as follows. Going into the cash open 1 hour and 14 minutes away. We're down by 0.4 on the S&P, down by 1 percentage point on the NASDAQ. SK Hynix in a South Korean trade down by a record 15% plus. That took the Kospi down. That's rippled into Europe and across into US equity futures as well. Into the bond market, 2s, 10s and 30s yields a bit higher into CPI tomorrow morning, up by 2 basis points now, 423 on 2s, close to 460 on 10s. With this move building in crude and not fading, WTI and Brent up by close to 4%. Brent crude closer and closer to 80 once again.
In comments from the President of the United States this morning, talking to the American press, Jonathan, the latest being we'll probably run the strait. So it's giving concepts of a plan, not that they're definitely going in and taking over. Remember, there's really 2 paths right now with the Strait of Hormuz. There's one that's U.S. controlled and there's one that's Iranian controlled. Could the U.S. go in a little bit more forcefully with the Fifth Fleet and other naval assets and maybe take control? Potentially. But the president came out first a little bit more forceful, saying we will run the strait, to now probably run the strait. So we will become the guardian of the strait. We've heard some of this before, and yet here we are in this stalemate between both these countries fighting over control of that and continuous attacks over the weekend.
That story just won't go away. Crude pushing higher this morning. That's the price action. Let's get to some morning calls. First up, Citi raising its price target on Apple to $365, saying the tech giant should continue gaining market share. Your second call from JP Morgan upgrading American Express to overweight, saying the company offers exposure to the most insulated cohort in consumer finance. That stock is up by 1%. And your third and final call from Bernstein, lifting its price target on Delta to 106, citing growing confidence that the industry's pricing environment is improving. That stock up this morning, or rather down by 0.6%. And that this morning are your morning calls. Let's turn to sports. World Cup fever erupting across the country. More than 50 million people tuning in for the US match against Belgium, making it the most watched football game in the country's history. It comes as valuations for sports teams surge to new records. The world's top clubs more than doubling in value in the last 4 years, with private equity and media deals injecting massive amounts of capital. Steve Pagliuca, Senior Advisory Partner at Bain Capital and co-owner of Atalanta Football Club, joins us now for more. Steve, welcome to the program, my good friend. It's good to see you. How do we translate this fantastic interest in a 4-year World Cup cycle into a bigger, stickier interest in club football being played around the world all season, every year?
You're seeing that already with the World Cup, but I think fundamentally what's going to have to happen for soccer in the USA to be a top 5, dominant sport is the economic structure is going to have to change. Right now, the payments for players in UK, Italy are probably 5 to 6 times what they make in the United States. So the best talent really is centering on the Premier League, Serie A, and the leagues in Europe. So unless you change the economic structure, you're always going to have lesser players in the United States.
And Steve, one thing I've found as well at the youth level, and it was a surprise to me coming to this country more than a decade ago, is that for the rest of the world, this is a very accessible, almost working-class sport. You don't need money to play football in the rest of the world. What I've found here increasingly, Steve, is that this has become a rich kid's sport. Steve, what can we do about that at the ground level for youth football in this country, in America?
Well, I think we have to look at the whole ground level grassroots system. As you know, Europe, it's very easily to get trained. These clubs can have boys. We have an academy with 452 boys in the Milan area in Bergamo, and it's very cost free, and everybody can play. So we have to look at the United States system and say, how do we kind of get away from it just being a rich person's sport where you can get the training and get training across the country.
At the same time, Steve, these conversations often descend, I think, into what can the US learn from the rest of the world. I do think the global sport can learn something from the US. The Seattle Seahawks and evaluation of that franchise, I think, speaks to that. Selling for a close to $10 billion. For a franchise that outside of this country, I hate to say it, hardly anyone will know what that team does, let alone where it plays. If you say the Seahawks to anyone in, say, Italy, Steve, they don't know what that team does. And yet they have a valuation at a multiple of a football club out of Europe that the whole world recognizes. What can Europe and the rest of the world learn from the way sports is run in these countries to make sure that we get full valuations and the kind of franchise values that we see across this country, Steve?
Well, first of all, a big advantage in the USA sports is there's no relegation. So relegation, which is has always been happening in English football and the rest of Europe, really gives you more risks as a club, number one. Number two, the economic structures of the USA sports are better with cost controls. There's a hard cap in the NFL. The NFL is kind of the, I would say, most profitable and best run league out there with a hard cap so that the clubs can generate revenues. So really getting a system over in Europe where there is more financial fair play, cost control, and maybe playing around with the relegation rules could make the values go a lot higher.
Steve, for a lot of Americans, this has been the first introduction to FIFA, really firsthand. Do you think they've done a good job with the World Cup stateside?
Well, you know, if you look at record revenues, I think they're creating, the World Cup has created $13 billion over the cycle, $10 billion right now. And so far the games have had more interest, I think, than any other games in the history of the sport. So I think it's hard to be critical. Obviously, there were some issues with pricing and crowds, but so far it's gone very well. It's gone very well for America. I know up in Boston, they're now in love with Scotland. I think we ran out of beer in the whole city, which I never thought could happen, but it's been an amazing experience for everybody.
Yes, if you can get a hold of tickets. To Jonathan's point earlier, how expensive soccer is in general in the United States to breach that entry. But I'm talking more about some of the controversies with FIFA. Do you think that's maybe put some Americans off of soccer?
I haven't seen that. I mean, people really are in love with the game, and it's certainly, the controversy makes people talk about it even more. And everybody's really focused on, you know, who's going to win this incredible trophy, being the best country and best soccer team in the world.
Steve, have you got any tickets to the final?
I'm going to the semifinal in Atlanta tomorrow, and then leaving from there and actually going to Milan to introduce Coach Sarri at Atalanta, then coming back for the final.
Very cool.
It should be an exciting week.
Very, very cool. Always envious of your life, Steve. Always envious, aren't you?
Yeah, I'm Steve, who are you rooting for? Who do you want to win?
Well, I was rooting for Belgium since we have Charles de Ketelaere scored 3 goals in the competition. He plays for Atalanta. But I think I'd like to see England win, Great Britain. They haven't won in such a long time, and I love watching Harry Kane. He's kind of a magician out there.
Steve, can I just say congrats to CDK as well, because his growth at your club, far better than anything we did with him at AC Milan. And I'll leave that there. Steve, it's good to see you. Best of luck for the new season. Thank you.
It's great to be here.
Steve Pagliuca there of Bain Capital.
Interesting. He thinks it's coming home. Isn't that the phrase? In
Yeah,
England?
it's coming home.
I lived there for 8 years, and that's all I heard. It's coming home. It's coming home.
That's all I've heard for 30 years since the song came out in 1996, and here we are. It used to be 30 years of hurt, and now it's 60, because the last time we won it was 1966. Can I just say, the complaints that I hear about soccer or football in this country, about the lack of fluidity, the lack of athleticism compared to, say, the speed and strength of something you'd see in American football. I've heard loads of complaints, VAR.
Total garbage.
I'm going to park that. What I think it comes down to is something much more fundamental. As a guy, as a boy, it's the sport you watch with your father. You grow up watching. And then you start to gravitate towards that sport. You play it with your dad, your parent. And then you learn to grow and love the team that they supported. And then it gets passed on from generation to generation to generation. To crack that, in this country, you need to focus aggressively on making sure that this is a game that is played by kids. And unfortunately, as you know, that once you get to a certain age in this country, to play football or soccer, it becomes very, very expensive. That is not true in Europe or anywhere else, to the same degree that it is true in this country.
Playing soccer growing up, it was expensive when you started joining all these travel teams. It became a lot more pricier, and then you have to do the indoor leagues in the winter. What you're describing in America is akin to baseball. Little league, very inexpensive. You can start off with t-ball, and everyone has a team. That is what it feels like having lived in Europe, how everyone feels about either their Serie A team or their Premier League.
That's where the focus needs to be, at least in our opinion. Up next on the programme, Lindsay Piegza as Steve Full.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative. Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is open interest.
Only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
So equities stand near the lows going into the cash open 1 hour away. We're down by 0.4 on the S&P. You can just see from this picture where the losses are concentrated. It's in tech, it's in the NASDAQ. We're down by more than 1 percentage point. But the issues around tech and SK Hynix, South Korea, importing that volatility, it's not the only story this morning. Yields are pushing higher too across the yield curve, going into inflation data tomorrow and testimony from Fed Chair Kevin Walsh. We're up by 2 basis points on twos, up by 3, close to 3 basis points. The further out the curve you go, tends around 460 so far this morning. Building on this move in crude, up on WTI, higher on Brent. Brent crude up by close to 4%, WTI at 74. And not really words of comfort coming from the president this morning. I'm not sure how to translate this for you. I'll just share the headlines. This from the president, speaking to Fox earlier on this morning. We're going to get paid for guarding the Strait. We'll become the guardian of the Strait. We'll probably run the Strait. What does that mean? I've heard it before. I'm not sure how it works in practice.
Yeah, and he just said we just want to be reimbursed for doing all this, for putting our people in danger. Basically saying, I mean, the Strait of Hormuz is an international waterway, but obviously I think potentially protecting it for years has been the U.S. Navy and Fifth Fleet, of course, right? Now we're in a new paradigm. There's been a paradigm seismic shift with the fact that the Iranians have demonstrated they can take control of the Strait of Hormuz. I'm not really sure what the president's getting at here. No one will be reimbursing him unless maybe he struck up some deal with NATO. Don't think that's happening. But the fact of the matter is, it would be beneficial to this White House and everyone else if potentially the Fifth Fleet is able to get control of the Strait of Hormuz.
Those comments this morning, not reducing prices, that's for sure, on both WTI and on Brent. 60 minutes out from the opening bell. Let's get you some morning movers. Yahara has more. Hey, Yahara.
Hi, John. After its hot debut on Friday, SK Hynix shares ADRs are giving up some of those gains, down nearly 10% in the pre-market, and that coming after some major weakness overnight in South Korea, where its shares suffered a record drop, down 15% as investors took profits after that U.S. listing on Friday. But overall, as you mentioned, it is a risk-off mood in the market, and that is weighing on the biggest winners, the memory names. So we are seeing Micron and SanDisk falling in the pre-market and overshadowing what would otherwise normally be viewed as good news for this sector. TSMC came out with preliminary results. Its full results are out on Thursday, and its sales came in strong, reinforcing this idea that AI demand remains strong, but investors looking past that this morning. And we end on some bank M&A. We are seeing First Hawaiian shares falling after announcing it's buying Trico Bank shares. This company, which is rising in an all-stock deal. The combined company will have about $34 billion in assets, making it the 6th largest bank headquartered in the Western U.S. It's a reminder that we have a lot of regional banks scattered all across the country, so this is an area ripe for M&A, and it comes just ahead of bank earnings bonanza tomorrow. John?
Yahara, thank you. Thank you for the update. The bank earnings bonanza, 5 banks kicking off earnings season on Wall Street in one single morning. tomorrow morning. Earnings season just around the corner. We'll be talking about earnings in about 10 minutes' time. Don't miss it. Bramo catching up with Ed Bastia, the Delta Airlines CEO, in about 10 minutes' time. A blockbuster week ahead for the US economy as well. 2 days of inflation data alongside 2 days of testimony on Capitol Hill from Fed Chair Kevin Walsh. Mike McKee has your preview. Good morning, Mike.
Good morning, John. I am not jealous of you and Anne-Marie trying to juggle all of the earnings along with Kevin Walsh and the inflation numbers. Remember when we talked about inflation could go up, either go down? Tomorrow we get CPI, and CPI forecast to go down on a month-over-month basis for the first time in 6 years because gasoline prices fell during the month of June. And then on Wednesday, we get PPI, which should give us some hints of price pressures going forward, although it too is expected to drop a little bit. We also get on Wednesday the Beige Book, and we'll see what people around the country are telling the Fed about prices and where we're going. Thursday, retail sales. How much influenced by inflation? How much influenced by people's concerns about the economy and consumer confidence, which is really lousy? Also, Philly Fed certainly has a price component to it. And then Friday, import prices round out the week of inflation along with housing starts. And we do have this big week of Fed speak. We will start with Chris Waller today, along with Mickey Bowman. She's already out on the wires talking about regulation, but Waller, who is going to be the counterpoint probably to Kevin Walsh going forward on the Fed, speaking at noon today. We'll see what he has to say about the economy. Tomorrow, Kevin Walsh, 90 minutes after that CPI report comes out. So you know they're going to be talking about prices, along with Barr, Goolsbee, Cook, and Bowman. Wednesday, Kevin Walsh is back up before the Senate, and we've got a whole bunch of others speaking on Thursday. We basically have 11 of the 19 members speaking this week, and then Saturday, the Fed blackout begins. By that time, maybe we'll have some idea of what they're thinking about for the July meeting, although if Kevin Walsh has his way, we won't. But we will have a very busy day tomorrow for you guys.
Mike, let's look at those names together. Let's go through them. Can you help me answer this? How big is the gap between the group of individuals that want to keep rates unchanged and the group of individuals more inclined to hike? And can this move in energy, to what extent can it close the gap between the two?
Well, I don't think it's going to close the gap, John, because now gasoline prices are going to start going up again. And Javier Blas has a very good column out on the Bloomberg today about how it's the refineries that are causing us the problems at the moment. Now, crude oil going up again, but refinery crack spreads are very wide, and that is keeping gasoline prices high and probably going to send them up again. There's a division at the Fed, but it isn't that wide between those who would like to keep rates where they are and those who think we might need an increase. If inflation keeps going up or starts to resume going up after this month, then you'll see more people in the raising camp. It's more the people like Mickey Bowman who have wanted to cut rates in the past, and Kevin Walsh, who came in with that sort of cut rates mandate, who you might see as farther apart on the spectrum, but nothing that the cutting group can do right now with inflation where it is.
Mike, thank you, buddy. Appreciate it. Looking forward to your coverage as well. A busy week for Mike. CPI tomorrow morning, PPI after that, lots of Fed speak in between. Lindsay Pieter of Stifel writing the following: there is a clear divide among policymakers, those that remain increasingly focused on tackling now dangerously high inflation, and those that remain optimistic price pressures will cool. Rates are likely to remain on hold, at least for some time longer. Lindsay joins us now for more. Lindsay, welcome to the program. I want to build on a question I asked Mike. You think rates will remain on hold for some time, but would a rebound in energy change that story for you or anyone on the committee?
Well, I do think it's going to be difficult to completely shift some of those more dovish-leaning members into the hawkish camp, even if we do see a resurgence in energy prices and, by extension, then some months of further price appreciation in terms of the headline and core CPI, or more importantly, the PCE. Right now, that camp is very much in the wait-and-see position. They want several months of data, if not more, convincing them that inflation is going to be a long long-standing issue to tackle. So right now, there still is a good amount of optimism that while acknowledging inflation is elevated and above that 2% target, that eventually price pressures will cool, potentially into the end of the year, negating the need for a reversal in course. Now, I don't think there is a strong argument right now among Fed officials for cutting rates, but again, there is that very firm position among those more dovish-leaning members to maintain the current pace of policy until we have a better sense of the underlying momentum of the economy.
Well, this is the momentum in the crude market right now. Brent higher by more than 4%. Brent crude to 79, WTI for 74. Maybe the Fed chair chooses to bide his time here. Maybe he waits to see what the outcome is of these task forces. Lindsay, do you see the others coming along for the ride? Is there enough individuals on this committee right now that share the patience that he might have?
I think right now the committee is very much divided. As I mentioned, I do think there is this cohort of Fed officials that are increasingly concerned about now this dangerously elevated level of inflation. We're talking near double the Fed's intended target, but there's also those Fed officials that are able to look through this and say this could be a temporary, or bringing back a favorite word, transitory impact as a result of not only the lingering impact of tariffs, but of course the international conflict that continues to wreak havoc and uncertainty on the marketplace. So I do think it's going to be very difficult to overwhelmingly convince those that are sitting in the middle of the road. And of course, the more that we see this conflict, just like in politics, this is likely to beget gridlock, keeping policies steady for longer, despite the fact that I would like to see them raise rates, despite the fact that I think looking at the current data, this does more than justify a reversal in course. Again, that divide among policymakers is likely to leave us on this steady course, at least for the near term.
Lindsay, let's get into that. You would like them to raise interest rates. Let's sit on that for a moment. Why would you like them to hike? What do you see that the dovish members of the Fed don't?
I think the Fed made a significant policy mistake early on, stopping short of a sufficiently restrictive level the first time around. Remember, inflation back then peaked at 5.6%, and historically the Fed needs to raise rates, not just above inflation, but often notably above inflation. So stopping at 5.5% really left us with this lingering, ingrained level of inflation for years, never getting us back to that point of price stability. Now, the second time around, we see this additional layer of price pressures, and I think the Fed should act with even more force in order to reinstate that level back to 2%, if in fact they do intend to get us back to that price stability level at some point.
When, Lindsay? When do you think they should act?
Oh, I think they should have acted already. In fact, I continue to question the 175 basis points of cuts going into the end of last year, with us still well above that 2% target. Now, there was a lot of optimism that disinflation was well set and we would move towards that level, but I would have liked to have seen the Fed wait until we actually reestablished price stability. So now on the flip side, I think the Fed should have acted, and at this point needs to act to a higher interest rate environment in order to quell these dangerously elevated levels of prices and get us back to that price stability.
Above target for 5 years, nothing stable about it. Lindsay, thank you. Appreciate it. Lindsay Piegza there of Stifel thinks this Fed will remain on hold, but ultimately making the argument that they should be hiking interest rates. Let's give an update on news worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. The US and Iran exchanging fresh strikes over the weekend and issuing conflicting reports on the status of the Strait of Hormuz. Tehran saying the strait is closed, quote, until further notice. U.S. Central Command saying it's open to all vessels and the military is prepared to ensure freedom of navigation. A group of U.S. states led by California is preparing to sue to block Paramount's takeover of Warner Brothers. According to the New York Times, a draft complaint says the deal would stifle competition in the market for blockbuster movies. The World Cup semi-finals are set. England moving on after defeating Norway 2-1. They'll take on the defending champions Argentina, who once again survived, beating Switzerland by 2 goals. Kicking off the final four tomorrow will be a European blockbuster. France is taking on Spain. And that is your Bloomberg Brief, John.
Thank you. Thank you very much. Up next, setting you up for the day ahead and a week ahead, plus Lisa sitting down with the Delta Airlines CEO, Ed Bastian, as the carrier affirms its guidance despite record quarterly fuel costs.
is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Capital markets are wide open. We had 7 $25 billion offerings this year. That's telling you that there's plenty of capital around. If I'm Kevin Warsh, what I'm thinking about is if I need to slow things down, I have to start attacking the balance sheet. All the liquidity that you're seeing coming out of the credit markets, that's where there's a lot of inflation.
Record IPO, record raise for a foreign company tapping US equity capital markets. Chris Harvey of CIBC. There's been a lot of capital raised in both equity and debt over the last few months. Equity futures this morning negative by 0.4. As we get closer to the opening bell, we're down by 1 full percentage point and change on the Nasdaq 100. Tomorrow morning, packed full of earnings from the banks. In the last few days, we've heard from the airlines. Investors gearing up for the major airlines to report after Delta reaffirmed its full-year profit guidance. The company seeing strong demand despite higher fuel prices. Lisa joins us now from Atlanta with a special guest. Hey, Bramo.
Hey, how's it going, John? I am here in Atlanta at the headquarters of Delta, and I'm here with Ed Bastian, the Chief Executive Officer of Delta, after reporting earnings, overcoming what was a record bill for fuel and still continuing to maintain full-year forecast. You talk about the difficulties of this quarter as well as the resilience of the U.S. consumer. How much momentum is there under the U.S. consumer?
Well, first of all, thank you for coming down. You know, there's not just one consumer in our marketplace, but broadly speaking, I think the consumer is doing well. Certainly the higher end consumer is doing very, very well. That's our consumer base. When you look at what's happening in the market, when you see what's happening in real estate, opportunities for that consumer to invest in themselves, invest in the experience economy. They may not be buying things as much, but they're investing in things they care about for themselves, their families, their friends in the future, and that's travel.
You also talk about the difficulty, and we have seen oil prices inflect a bit higher. How much room do you have to maneuver if this is the new normal, or potentially $80 on Brent crude is the new normal, which we're just up against?
I think we'll do just fine. You know, we look at our business model. Our business model is geared towards a higher end consumer, so our consumer has the ability to sustain this level. In fact, we saw it in the quarter. We made at 9% operating margin with fuel prices much higher than where they are in the existing, the existing landscape. So I think oil is going to stay sticky for longer. I'm not sure it's going to be in crude, though. I think the refined costs, the cracked spreads are where you're going to find it's going to take a lot longer for that to come down. All that's going to mean is those brands that bring value to consumers in terms of experience, bring opportunity for people to go and explore and give them adventure as their means for enjoying life and getting away. And our international travel season is looking very, very healthy. Businesses, international, as I just said, American Express, our loyalty programs, our cargo business, we have so many different lines of business, including here in the U.S., our domestic travel. It's all doing very, very well, and I don't see fuel prices deterring that.
You talk about how this has been a sea change in terms of the ability for airlines to catch up with the pace of inflation. Not completely, but enough. You saw a big jump up in airline prices over the quarter. How much further does it have to go to catch up and potentially offset stickier oil prices?
If you look at post-COVID, airfares are about 10 to 15% below where inflation has been. So I think there's still significant room.
So if oil prices go further, you think that airfare prices could go higher without causing just demand destruction?
I think so. We just saw it in the quarter.
Is it going to come across the board or more particularly with the premium cabin?
It's going to be in the premium cabins. When we look at the lower end of the market, the low fare carriers, they're still losing a lot of money. And so while Delta, which is at the top of the food chain, did very well, we represented 60% of the overall profits for the industry, are estimated in the quarter, despite only having 20% share. It means the other 80% still has a lot of work to do to get caught up, and it's going to happen by being more disciplined in terms of the strategies they deploy, making certain that they can only put out capacity that is profitable, that will return a margin to them.
Do you think that there's going to be more consolidation? Have you been surprised that there hasn't been more during this period of higher prices?
No, I'm not surprised. There's been some in the market, on the lower end. There's been some. Now, I think we're going to be fine. We're going to get through this period of time. Now, if you said that this is going to $4 oil is going to be sustainable for a very long period of time, of course there will be, but not in this marketplace. I don't see oil prices returning back to the peaks we saw a few months ago.
Going forward, you talk about how the premium really is where the revenue driver is, and you recently had the basic business rollout. What prompted a sort of paring back or a more specified product offering at a slightly cheaper price point, but still with the flatbeds?
We've been talking about this for a while. As an airline, we're good about transporting people. We're not necessarily great at merchandising and retail strategies, and we kind of have blunt force instruments. You had your main cabin, you had first class, and not a lot in between. Consumers want different value decisions to take. And if you can give people the opportunity to sit in first class, they may not want different elements. They may not need to go in the lounge. They may not care as much about certain aspects of what the fully bundled first class fare is. Maybe they just care about the seat. And that's actually what consumers care more about than anything, is the seat. Well, the other things are nice, but it's the seat and the comfort of the seat that's most important. We can find different ways to bring greater value, to reduce fares at some times, or increase fares in terms of people say, do you want to have the elite services drive you to the club? Do you want extra frequent flyer miles? We can become a much better merchandiser because we're a consumer brand. I think that's been the biggest change we've seen at Delta over the last decade. We're now not just a consumer brand, we're a loved consumer brand, and we can pull this stuff off.
You talk about how there is flexibility to raise prices at the premium. A lot of people are getting in because it is lucrative. We see, for example, even Southwest trying to get into the premium, or JetBlue.
Roller coaster. We've been on a strategy path to kind of only put in the marketplace capacity and share that we know is going to be profitable and that consumers are going to value. And so we don't follow the day-to-day. We around the edges, maybe one to 2 points here, 1 to 2 points there, but we're very disciplined. And if you look at our history, you'll see Delta will lead the way.
One issue has been pilots going forward, and I just wonder, from your perspective, do you think you're at a good staffing level currently, or do you still plan to expect expansion of the pilot staff?
We're at a good level. We've been hiring pilots this year. We had a number of changes in the contract that created some difficulties with respect to recovering from interrupted operations as quickly as we'd like to, making progress on that, and we'll continue to make progress.
Ed Bastian, thank you so much for being with us this morning. Ed Bastian, the Chief Executive Officer of Delta, and I do happen to be down here at the same time that England versus Argentina is expected on Wednesday, so maybe I'll just have to extend my trip. John?
Why not, Bremo? I mean, you did Brazil. Might as well stay there and watch the World Cup final, semi-final, and then come back up here and watch the final at the weekend.
YOLO. Honestly, you're there?
Brahma's just living it, right?
I mean, I got lucky. I was in Houston,
take
and
the
I
days
went
off,
to San
Lisa. You
Antonio
enjoy
Game
yourself.
5. I think if you're somewhere it's meant to be, you just go.
You think Ed Bastian's got the tickets? You think he's got the in?
Definitely. Yeah, I think so.
Without a doubt. You're not going to see Brahma tomorrow. I hope we see Brahma tomorrow, because coming up tomorrow, we've got this on deck. 5 banks reporting tomorrow morning, followed by CPI in America, followed by testimony from Fed Chair Kevin Warsh shortly after that. What a Tuesday morning we have for you just around the corner. Before we get there, look out for this. Chris Waller, of the Federal Reserve, speaking at the New York Association of Business Economics a little bit later this morning. Look out for that at 12:30 Eastern Time. From New York City this morning, good morning to you all. Thank you very much for choosing Bloomberg TV. This was Bloomberg Surveillance.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market. Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, the network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
The biggest single-day sell-off for SK Hynix ever. 30 minutes until the start of cash equity trading. I'm Danny Berger.
And I'm Bonnie Quinn. Bloomberg Open Interest starts right now.
Coming up on today's show, more tech turbulence. SK Hynix leads a chip sell-off after its Wall Street debut.
And investors face a packed week of catalysts with big bank earnings and key inflation data in focus.
Plus, fresh strikes drive up oil prices as President Trump vows to take over the Strait of Hormuz.
Let's get to some individual stocks to watch. SK Hynix has to be the one we're all watching today after Friday's historic listing where the ADRs jumped 13%. Well, the stock fell the most on record in South Korea today amid growing investor concerns that the rally has become overstretched. Trading at a 27% discount to those ADRs now, Danny.
You mean to tell me a record listing of an ADR that literally everybody in the world knew about wasn't a bullish event for this market? Who would have thought? The AI trade, though, it's completely under pressure today. Had a second quarter earnings results starting this week. We did get some sales numbers from TSMC. They were good, a 36% quarterly jump in sales. Demand is strong, but traders say there will be no mercy for earnings misses this quarter. NVIDIA and Micron, those shares down at least 5% for Micron. Maybe it's the story of Samsung. Expectations are high, so even if you beat, you're going to sell off, Ani.
Well, we've seen it before, Danny. We'll see it again. Let's dig into the sell-off now with Bloomberg Tech's Ed Ludlow. So, Ed, what happened?
Yeah, the why on the Korean session is very difficult to answer. There are some local reports about maybe SK in the near term presenting numbers that aren't as rosy as the market had assumed. Certainly in the Korean session, people are asking the questions that maybe we did ask on Friday during the start of trade of those ADRs, but essentially whether this was the correction we were due in some names that had terrific run-ups, right? You know, SK is still up 180% year-to-date in Korea. It is down 30% from its prior peak, but it's a stock that on a 12-month basis was up almost 1,400%. You know, there's been a lot of focus on how core they are to the memory story, but lots of people in the markets, Vonnie, and I think we did go over this at the end of last week, right? Saying that a pullback was not just inevitable at this stage, but it's something that's quite healthy.
And maybe it has larger consequences, Ed, given your interview with SK Hynix and the desire maybe to bring more shares to the United States. I just wonder how much of this AI trade, not necessarily the trade, but the spend by these hyperscalers really hinges on their ability to see stocks continue to rally that allow them this cheaper cost of capital.
Yeah, it's why the conversation's already moving to this earnings season, right? Because capital expenditures are one data point. What you said about the future, you know, it was the same with SpaceX, to be fair, but when we were in at the NASDAQ Friday, the question is, when does SK think about, or how regularly does SK come back to the market, sell ADRs? And, you know, ironically, the point that Chairman Che made in that interview was, well, not until we see price stability in the ADRs and we see some return. So, like, clearly in the first instance, you know, the fact that the ADRs are down almost 10% and following the Korean session is logical because of how they're structured. But yeah, they might be waiting a little while.
Yeah, we certainly are not there yet. Ed, thank you so much. Again, a really fantastic interview on Friday. Bloomberg Tech's Ed Ludlow. Turn into Bloomberg Tech in about 2 hours' time. Let's turn to Wall Street earnings, though. 5 of the 6 largest U.S. banks are set to report tomorrow, offering investors an important read on lending in the broader economy. Let's get to Bloomberg Intelligence Senior Bank Analyst Herman Chan. Herman, why they got to do this to us? That's way too much. 5 on one day?
It is a lot, right? And then 2 of the earnings calls are at the same time. So we've got our hands full tomorrow for sure.
We definitely do. Do you expect it, though, to be a broadly constructive day, let's say?
I would say so. There's really high expectations. We just talked about tech expectations going forward. The bank stocks are up about over 17% in the second quarter, and analysts are estimating earnings up 20% year over year. That's really led by trading, investment banking, and then lending activity as well. So really high expectations. We'll see if they meet that bar.
If we see a disappointment, where is it going to come from, Herman?
Yeah, if there is going to be a disappointment, probably on the net interest margin side, given the fact that we have rates steady on the short-term side for the foreseeable future until potential rate hikes later in the back half of the year. And then there's a lot of loan demand. So in order to fund the loan demand, you might have higher funding costs, particularly on the deposit side. So that's something that we're looking for throughout the banks that are reporting next week.
Does credit quality largely look healthy? Because we have seen some consumer reports from thinking of Pepsi last week that did start to show some consumer stress creeping in. Do you think any of that will show up among these banks?
I think that's going to be a key question on the earnings call from the analysts, where analysts will probe if you're seeing a pullback in spending on the consumer side, given the fact that we've seen higher energy costs. And what does that mean for consumers that are paying back their credit cards, paying back their mortgages? How is credit quality holding up? And are there any early indicators in terms of delinquencies and the like that really point to a deterioration in the economy?
What will we hear from the regionals that'll differ from the big bulge bracket banks?
That's right. So the regionals, a lot of the same factors that the big banks are seeing are also happening on the regionals. There's a really strong resurgence in lending, particularly in commercial lending. Your bread and butter small businesses, small and then medium-sized corporations are really driving growth, and they're more comfortable with the backdrop where last year there was concerns about tariffs, then the geopolitical concerns. A lot of the sentiment seems to indicate that these borrowers are okay with where we are today and are taking a bit more risk in building CapEx and building plants, equipment, et cetera. So that's helpful for the regional bank space.
All right, Herman Chan, thank you so much. No doubt we'll be speaking with you again several times this week. That's Herman Chan of Bloomberg Intelligence. Brent moving higher after the US and Iran exchanged fresh strikes overnight. President Trump telling Fox News this morning that the US will take over the Strait of Hormuz. Joining us now is Bloomberg Washington correspondent Tyler Kendall. How exactly is the US planning on doing this, Tyler?
Well, Vonnie, we didn't really get much details from President Trump, though it does seem to indicate longer-term U.S. involvement when it comes to the strait, since at this point the standoff over the waterway only really appears to be deepening as we get conflicting information from both sides on the exact status when it comes to what's happening with traffic in the Strait of Hormuz. Iranian state media earlier today reiterated a threat from the IRGC, which said that they are going to close the strait unless the U.S., quote, ends interference, as we know that the country has been dismayed by the fact that more vessels are using that U.S. coordinated route that hugs the coast of Oman. Instead of taking that path that would get them closer to the Iranian coast. There are a lot of different factors to watch here because it is very clear that this White House's patience has worn thin when it comes to the status of the strait, as over the weekend, CENTCOM confirmed that the U.S. military conducted 3 waves of strikes ultimately aimed at degrading Iran's capabilities to interfere and target commercial shipping. But Danny and Bonnie, we're really seeing those ramifications already take hold of this latest wave of escalation in just the past few days, because basically all of that traffic, observable traffic, has come to a halt. According to satellite imagery, though, our analysts at Bloomberg Intelligence analyzed the data, and they say for the last 3 days, the so-called dark crossings, when ships go through with their transponders off, those are now exceeding those observable crossings as commercial shippers show that they are weary of what has been this wave of attacks.
Peter Scheer of Academy this morning basically saying that it appears that Washington is approaching this with a priority of reestablishing deterrence, that is, showing their military might to deter Iran from trying to control the Strait of Hormuz or preventing ships from going through. Tyler, does it essentially seem that any hopes for continued talks are dead at this point?
Well, according to the White House, they're not. The president still says that he will let his negotiators move forward, but he doesn't necessarily think that it's going to actually yield some sort of tangible result. For months, the White House has said that it has been prioritizing a diplomatic solution to the conflict, but it has become very clear that Iran isn't willing to give up its leverage when it comes to the Strait of Hormuz, even without the carrot of that sanction waiver that we saw the U.S. just remove last week amid this escalation. It appears evident that Iran is saying that its control over the strait would take precedent over that potential financial benefit that the country would get from selling its crude to market. Definitely something to watch here, but the U.S. military is making it very clear that more could be to come. We heard a threat from CENTCOM saying that if Iran does not issue this statement saying that the Strait of Hormuz is open, there could be additional attacks after more than 140 targets were hit over the weekend, according to the U.S. military. But Danny and Bonnie, we saw Iran take the opposite tact. In fact, it hit one commercial LNG tanker over the weekend and instead said that the strait is going to be closed unless the U.S. cedes to its demands.
And price of oil higher by 3.5%. Tyler, thank you so much. Bloomberg's Tyler Kendall in Washington, D.C. That's the latest on oil markets. A check on broader markets being dragged down by semiconductors after SK Hynix in the Korean session logging its biggest one-day drop on record. At one trading day after cross-listing in these United States, the NASDAQ leads losses down by more than 1%. As 10-year yields creep ever higher, we're higher by about 1 basis point, 4.57, with 30-year yields back above 5%. Vonnie.
Well, let's get a look at some other movers on our radar, Danny. Bloom Energy down as much as 13%, although it's well off its lows now. This after Hunter Brook Capital disclosed it is shorting the stock. Bloom Energy told Bloomberg it's reviewing the report and will, quote, correct the record.
Spotify, meanwhile, upgraded at Jefferies ahead of second quarter earnings. Analysts say that they will likely beat estimates as its AI tools start to show improvement.
Shopify up almost 3% there. And a check on the travel sector as oil prices climb, as you can see. Not looking too good for the airlines, although we're really only down about 1% apiece. Same for the cruise liners.
Coming up on the show, it's a huge week for economic data and Fed speak. Kevin Warsh heads to Capitol Hill. We'll talk through the details with Michael McKee next. This is Open Interest.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC. Africa CDC is the leader in terms of public health in Africa.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Now to high interest to look at what's making headlines around the world. South Carolina is facing a scramble to replace Senator Lindsey Graham after his sudden death over the weekend. Governor Henry McMaster will appoint an interim senator, while a special Republican primary could shake up the race ahead of November. The vacancy temporarily narrows the GOP's Senate majority as both parties watch that seat closely. Meta is dramatically expanding its Louisiana AI data center, boosting the project's costs to over $250 billion. The campus will deliver at least 5 gigawatts of computing power and support 1,000 jobs. The move also underscores Mark Zuckerberg's massive AI infrastructure push as Meta races towards superintelligence. And Fed Chair Kevin Warsh faces Congress this week as investors press for clarity on how he'll respond to inflation, jobs, and growth. Warsh has rejected signaling future rate moves, but critics say he's also failing to explain the Fed's reaction function, leaving markets looking to other officials for guidance. Danny.
It's going to be a busy week because alongside Warsh's Capitol Hill testimony, we're also going to maybe get a clear picture on this economy. We'll have CPI and retail sales and PPI this week, along with a lot of bank earnings. Let's bring in Bloomberg International Economics and Policy correspondent Michael McKee. Mike, let's just start with the data. CPI, PPI, what are we expecting?
Well, you remember the old days when we just talk about inflation, because it could go either way,
Sure.
not inflation or deflation. We might get that this week because CPI is expected on a month-over-month basis to drop for the first time in 6 years, the first month-over-month drop in 6 years. And that's because energy prices went down over the month with the so-called ceasefire that is no longer in place. PPI on Wednesday, and that's going to give us some sort of clue as to pipeline inflation pressures, also expected to go down on a month-over-month basis. But the real question is what's happening with services. That's what the Fed's going to be taking a look at. We'll get some kind of picture with that with the beige book on Wednesday as well. And Thursday, did you guys go shopping? I noticed you and Danny have, you and Tyler have the same jacket. Maybe you contributed to retail sales. That's something to watch as well. And then, of course, Friday we wind up the week of prices with import prices. But it is CPI that's going to matter. CPI and interest rates, and what we have seen with the rise in the consumer price index. You can see it crossed over wages there. The yellow line is the December market for Fed rate increase, and right now we're at a little more than 1.5. So that's gone up a little bit in the past few days, and depending on what we get the next 2 days.
Just to set the record straight, Tyler and I did not shop at the same place for tech. It wasn't coincidence, but I'm expecting you to add to retail sales and match us next time.
Yes, I will get a green stick.
The semi-annual testimony doesn't usually tend to move markets, but this one has the potential to, Michael. What kind of question might we really want to hear from Kevin Warsh on?
Well, you were just mentioning the idea that the market wants to know how they're at least thinking about how they're going to react to higher prices if they get that, because he doesn't want to give forward guidance. We've got 11 Fed speakers this week, including Kevin Warsh, and that doesn't count duplicates. They're all going to be offering their opinions on this various stuff. Today we start with Chris Waller. So while the focus is on Kevin Warsh, and he's not going to give guidance, we may get guidance from the others or some of the others. What you're probably going to get out of Kevin Warsh is maybe a little bit about how important it is to bring prices down, and also I bet you're going to hear the words, there's a task force for that.
Oh, I'm sure you will. But that's an interesting point. That's what I wanted to ask you about. With Waller today, I wonder if we're just going to be looking to him and other FOMC members to really divine what the reaction function of this Federal Reserve is.
I suspect that Waller's going to be the counterpoint to Kevin Warsh going forward, since he has the sort of most the deepest economic chops, and since he's been right about several important turning points in the past, people will look to him for guidance on how the rest of the committee might be thinking, until and unless Kevin Warsh gives us more of his own views, which at this point he doesn't want to do. So Waller is someone to watch going forward. I'd say Jay Powell, but he doesn't want to talk, so we probably won't hear from him.
He is not going to talk. Also, the difference now between now and the FOMC is that there is actually a task force for that. There wasn't at the time. There was no personnel. Michael McKee, thank you so much. Coming up, Citi's Stuart Kaiser talks tech volatility and the high bar for earnings this quarter. Also, what he's watching from the Federal Reserve. This is Bloomberg Open Interest.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Minutes ago until the start of your cash equity trade. We're being dragged down by chip stocks this morning, down more than 1% for the NASDAQ after SK Hynix booked its largest decline ever in South Korea. Brent crude, that's up 3%. As Iran says the Strait of Hormuz is closed, the U.S. says it's not, that they're going to take control of it, and the dollar unchanged this morning. Let's bring in Citi Head of U.S. Equity Trading Strategy, Stuart Kaiser. Stu, great to see you this morning. And look, already we had seen some previous bleed over from the Korean session. Like, chip makers have a bad day, and the U.S. does poorly. I wonder if that relationship gets even more exacerbated now that we have this big listing in the form of SK Hynix ADRs in the U.S.
It's going to be interesting because what the ADR does, it actually provides you U.S. hours liquidity and access to these stocks in the way you have it in the past. And for that reason, you have a huge premium. I mean, the Hynix shares probably traded about a 25% premium in the U.S. relative to Korea. So yeah, it does kind of create a little bit more reliance, but to some degree, it gives you sort of U.S. hours liquidity in a way that you haven't in the past. And hopefully more liquidity means more price discovery, and these things kind of calm down after a few days.
Yeah, I mean, the shares were down 15% in Korea. The ADRs are only down 8.5% in the pre-market, right? But it does speak to this idea of contagion, right? So Korea never used to affect the US market, not very often anyway. Suddenly it seems to be. Is that just because of the two chip makers? It's the global chip trade?
Yeah, it's the global chip trade. I would even broaden it out. It's the global AI bottlenecks trade. You know, it's just massive amount of CapEx spending coming from the hyperscalers and Mag 7, and people are following that spending down the supply chain, and they're ending up in a lot of these memory stocks in Korea. And, you know, you've also added leverage to a lot of these trades via levered ETFs and other approaches. So yeah, I think it's that theme has become globally interconnected in a way that it hasn't been in the past. And to your point, half of the Korean index is two stocks. So, you know, that's the epicenter of that risk potentially.
Given all the leverage and given just the huge amount of ownership, household and otherwise, to these chip stocks, is what we've created is just chips becoming a high beta trade. Today, for example, there's no clear reason to sell off, maybe after the euphoria of getting this listing of SK Hynix, but we do have a little bit of risk off because of what's happening in the Middle East. And I wonder if chip makers become just that, just high beta now.
Yeah, I mean, they definitely are. It's a tricky one with this whole AI trade because it's not just the chip makers. You know, our quote-unquote AI basket is the equivalent of 60% of S&P market cap. It's over 100 stocks. So I would argue the concentration right now is in the CapEx spending side of things. It's 6 companies in the U.S. that'll spend more than $1 trillion on CapEx next year. That is a very concentrated spend, but that spend then gets it's like trickle-down economics. It kind of spreads throughout the market. So right now, the chip makers and the memory stocks are sort of the flavor of the day, but people are kind of hopscotching around. But again, I think if you're looking at where is the concentration, it's actually more in the spending than it is in the share price performance. I mean, you have the S&P up double digits year to date. The Mag 7 are about flat on a year-to-date basis. And what does that do? That is they are the spenders, and that spending is then translating through to earnings and price performance of other stocks.
Stuart, you had been very hot on the broadening trade, right? The, I guess, rotation trade. Are you still as convinced that it's going to continue on for the rest of this year?
The Mag 7 sort of AI theme?
No, the rotation out of some of that.
You know, it's interesting. Yes, you are getting some rotation out of Mag 7, but it's staying within the tech complex, right? So it's kind of like a mini rotation or a half rotation. If you look at what's not owned in the market, it's things like software, it's things like healthcare equipment, it's the non-AI part of the industrials trade. It's a little bit of financials. So, you know, what you have to ask yourself if you're an investor is, I'd like to rotate, but then I give you the list of, okay, this is what you have to buy, and it's like, you know, maybe not quite yet. So I think what we've seen, to my point earlier, is a broadening out of the AI trade, but the rotation has kind of been limited still, you know, broadly within that space. What would get you out of that trade? You know, there's a good way to get out of that and a bad way to get out of that, I think. You know, the good way is the market keeps rallying and it just drags those laggards higher. The bad way would be you get a broad-based de-risking and the favorite stocks get sold. We're obviously hoping for the first, you know, not the second outcome in that case.
Can I just ask, not to split hairs, but is it even fair to call what's happening in tech a rotation right now? Because it feels like this back and forth between whether the chip makers or Mag 7 are having a good day. It doesn't really seem to be a clear kind of consensus or winner emerging at this moment.
Yeah, look, I think the rotation trade within tech would almost necessarily have to be selling semis to buy software. And we've seen that for a day or two. We've not seen it sustainably. And I think what you're describing, frankly, is the AI trade has become much more fluid and dynamic, and people will hopscotch around. Oh, Mag 7, no DRAM, no memory, no, I'm going to analog semi, but it's all within sort of the same pool of stocks. So I think that has definitely happened. What we have not seen is people saying, oh, no, I'm just going to get out of semis and go into software, other than a day or two. It'll happen for a day or two really quickly, and then that'll sort of like dissipate pretty quickly as well.
All right, Stuart, you're going to stick with us. We have to discuss earnings, too, with yesterday unofficially kicking things off. We are just moments away from your opening bell as stocks fall 1/3 of 1% for the S&P 500, following 2 consecutive weeks of gains. After this commercial break, your opening bell.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Just seconds until we begin your trading day. You're watching Bloomberg Open Interest. I'm Danny Berger. 2 consecutive weeks of gains. We're certainly starting on the back foot when it comes to Monday's trade. NASDAQ, that's down more than 1% in your futures trade. SK Hynix having a really tough go of it in the Korean trade after the cross-listing on Friday. S&P hanging tight, trading down by 0.3%, while the Dow Jones is little change. We have Wisdom Tree. They make a lot of ETFs. 2020 vision, 20 years. I'm going to guess it's their 20th year anniversary, ringing the bell at the New York Stock Exchange. And meanwhile, we have Pegasus down at the NASDAQ. I think they do something AI related because everybody does, it seems, these days. So that's what's happening down at the NASDAQ. Meanwhile, SK Hynix, let me show you what the ADRs are doing this morning, because again, we had a historic tumble down in Korea. We're just talking to Stuart Kaiser about this, the kind of high beta nature of SK Hynix, the bleed over to the U.S. trade. Again, I thought it was very interesting, his comments, that now that you have American hours trading, that you bring in more liquidity and maybe it won't be as volatile. But for now, we're down 8.2%, Fani.
All right, Danny, the AI trade under pressure, as you've been saying, ahead of second quarter earnings results starting this week. Now, TSMC reported a 36% quarterly jump in sales as demand remains strong. We'll get the full data from TSMC Thursday.
All right, and we're back with Citi Head of U.S. Equity Trading Strategy. It is Stuart Kaiser. Stuart, I was just looking through some of your research about what options are implying for this earnings season. It seems that we are implying less of an extreme move this time around, which in itself seems surprising given earnings expectations are so high. We have one day where like 5 banks are reporting tomorrow. It seems like there is, I don't know, odds that we will get something of a volatile earnings season.
Yeah, I mean, I think that has to be your base case. If you look at last quarter, 60 out of the S&P 500 stocks moved more than 10% when they reported earnings. That is a stunningly high number. If you went back 4 or 5 years, that number would have been 10 or 12. So single stocks are moving a ton. It's been a little hard to identify, which ones those might be, obviously. The implied moves this quarter are lower than last quarter, but last quarter was also a record high. So the market is still, I think, expecting a tremendous amount of volatility this quarter, and as they should. I mean, the bar has been reset materially high after last quarter, and as we've discussed, I mean, you're kind of on a knife edge on a lot of these stocks. And if you look at, Broadcom recently reported, Samsung recently reported pretty strong results if you just saw the numbers, and those stocks still moved 8 or 10% on earnings. So the bar is high, and the positioning risks are substantial, and people are very aware of it. So the implied move is maybe not what it was last quarter, but it is still very very high historically speaking.
The Russell 2000 up 20% year to date. Are the gains in for the Russell, given that we really don't know where interest rates are going and they might be a little bit more sensitive to interest rate increases?
And to your point, they may be more sensitive because it's a new index, basically. At the end of June, we rebalanced the Russell 2000, and a lot of the top end of the Russell 2000 had basically become AI stocks, and those are now in the Russell 1000. So if you look at the Russell 2000, the top 10 stocks were about 7.5% of that index at the end of June. Those are down now to about 3.3%. So basically, you've cut the concentration out, and the implied volatility of those top 10 stocks has gone from 90 to 50. So I would argue that the Russell 2000 right now is not the Russell 2000 of 2 or 3 weeks ago. But to your point, I do believe it's actually going back to how we would traditionally think about small cap. It should be more rate sensitive. It should be more sensitive to U.S. economic growth, because we've taken some of that AI trade and moved it up the cap structure and left the rest.
Wait, what I'm hearing for you are more reasons to go back to not loving the Russell 2000.
Well, it depends. If you think inflation's going to print, well, I mean, Mike was talking about, if we get a light inflation print tomorrow, maybe you get Russell moving. For me, it's actually a really positive thing, because you want the Russell 2000 to express a view that's sort of independent of what the S&P and the NASDAQ do. And I would argue the rebalancing has moved the Russell back into its more kind of traditional envelope of risk.
Every time we see hostilities flare up in the Middle East, and it's clear we're not done. We may have thought we were at one point, but we are not. Do you worry a lot that this could spark something very, very serious in the market?
It's all about the price of oil, I think. I think the equity markets, if you go back, as far back as the initial attacks on Israel, the equity markets are generally saying, this is an oil trade for us. If oil gets high enough that it taps us on the shoulder, then we're going to start paying attention. If that doesn't happen, equities are going to focus back, I think, on the AI and CapEx story. So from here, I think you would need oil back into the mid-80s or higher.
But you could easily get that, Stuart. I mean, if tanks are low and the glut goes away and the Strait Strait's still closed, then what else happens?
Yeah, well, I think what the equity market is telling you is they believe both sides of this do not want to do that next step of escalation. And unless that happens, we're going to focus on the $1 trillion in CapEx. But look, from an equity perspective, this is about oil. From an economics perspective, this is all about the price of gasoline. And the national price of gas is back below $4, which is incrementally positive. So it's a tail risk. I don't disagree with you. But I think you would need a tail-type outcome in the price of oil to really get equity markets' attention again on Iran.
Yeah, we already lived through this and demand came down and everything was more or less okay. But we have seen earnings upgrades for energy and for tech stocks. That really seems to be the bulk. And a lot of people have cited the number of 20%. Earnings expectations higher by 20% year over year. Stuart, how high exactly is that bar? Is this something we always beat it? Is it going to happen again this quarter?
Look, the bar is obviously very high this quarter after a tremendous beat last. My guess would be we get a beat of the numbers, but it looks more like traditional, like you're kind of, 5 to 7% type beat. But again, it's going to come down to that CapEx spend because that just trickles down, kind of the rest of the market. But yeah, you're going into this with a higher bar, no doubt, but also with very, very strong spending intentions. And I think in for a penny, in for a pound for a lot of those companies. And for that reason, I think ultimately this will play out well. For banks this week, it's a pretty good operating environment for banks right now. Very good IPO pipeline, very good trading environment. CCAR and et cetera went pretty well for the banks as well. So we do think banks are going to report well. And then, you mentioned banks and inflation. Later in the month, we get the FOMC and tech earnings again. So talk about a big day. You get to the end of July, is going to be some really big days for the market.
Stuart, what percentage of people that you speak to or that call you every day have already moved on from earnings season and are already talking about midterms and what happens after that?
Midterms, there was some interest in it a week or two ago on the view that with Iran risk coming down, to your point, Trump is going to refocus on domestic policies, and folks were looking for, how do I get exposure to that? How do I get exposure to the affordability theme or to the domestic growth theme? XHB and home builders was one sort of talking point there. That's going to get put on pause a little bit just because of earnings. As I mentioned, you have these are trillion-dollar stocks moving 10% on earnings. It's very hard to focus on the election when your portfolio is moving that much. So I think we had a little bit of focus on the election. Probably for the next 2 weeks will be earnings again, and then back half of July into early August. Other than SpaceX, I think hopefully we'll focus on midterms.
We're not going to get a quiet summer, are we?
No, definitely not.
That's so disappointing. But we haven't had a quiet summer in a very long time, so maybe that checks out.
The World Cup will end. You'll get more sleep, and it'll all be good.
No, that's going to be a sad day for me. Stuart, thank you so much for joining. Such a pleasure to see you. That's Citi Head of U.S. Equity Trading Strategy, Stuart Kaiser. All right, just under 8 minutes into your trading day, let's get a check on this equity market. Again, we're off the back of 2 consecutive weeks of gains, but this is an S&P 500, which in today's session is being dragged down by chip stocks. A lot of the Mag 7, though, having a pretty good day. Again, it's this back and forth that we've seen volatility between the 2 trades where Apple, Microsoft, Amazon, they're doing well. Energy companies also having a good day considering what is happening in the Middle East with the Trump administration, or Trump himself speaking on Fox, saying that they will take control of the Strait of Hormuz. So large disagreement of the status of the strait, whether it is open or closed. So Chevron, Exxon, all of those doing well. We also have some of the big financial names, Visa, MasterCard, having a good day too. To the downside, again, it's the chip makers, Micron, erasing 8.5 points from this S&P 500 itself, which is down 17 points. NVIDIA, that falls 1%. Broadcom, AMD, SanDisk, again, look at all these names. It's just a lot of chip names that are in the decline column. When it comes to this overall market, again, tech under pressure because of what's happening with the chip makers, and that is the worst performing sector today. It is down 1.2%, but there's not a lot of declines. Again, this shows you just how poor breadth is and how just the chip makers falling are able to really upset the entirety of this index. Energy having a good day. Again, the price of Brent crude moving higher. Utilities, consumer staples, real estate follow closely by. Healthcare also having a not so good day with a decline of about 1/3%. Coming up, we're going to gear up for the mega bank earnings day that will be occurring tomorrow. Hold on to your seats. 5 companies go at once. KBW's Chris McGrady. We're going to talk with him about what to expect from those big banks tomorrow. You're watching Bloomberg Open Interest.
my old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
All right, it's time now for our top calls. Some of the analyst action in focus this morning. And we're going to start with Wells Fargo saying Disney is not built to compete with Netflix or YouTube on streaming volume, and argues the stock could have a 40% upside if the company exits the streaming business. The firm says Disney's library could generate more than $15 billion in annual licensing revenue without hurting its box office, experiences, business, or its brand, and that stock up more than 1%. Next up, JP Morgan raising its rating on American Express, saying its affluent customer base and defensive revenue stream make it better positioned as geopolitical risks rise and lower income borrowers face more pressure. And finally, we have HSBC upgrading Capital One to buy, saying the bad news is already priced into the stock. The firm sees earnings picking up as the Discover integration moves forward over the next couple of years. Danny.
Bonnie, that upgrade comes just ahead of a pivotal week for bank earnings. 5 of the 6 largest U.S. banks are set to be reporting tomorrow. Joining us now is KBW Head of U.S. Bank Research, Chris McGrady. Chris, thanks so much for joining. Great to see you in what I'm sure is the last calm day of the week for you.
Exactly. Let it begin.
Let it begin. Look, capital markets activity is booming. The consumer looks largely healthy. We've had record M&A volumes. Is there anything not to like this earnings season?
There isn't, but that makes us nervous, right? Expectations are high, right? The banks, the big banks in particular, have outperformed for good reason. The fundamentals are, excellent. Earnings estimates are up 15% from a year ago, and the stocks are up 30%. So expectations are high, the bar is high, but we think they will deliver.
So how will they guide? Because, sure, this volatility can continue, but it's been particularly spectacular, right? How will they guide in terms of, FICC trading, equity trading, deals, everything?
That'll be, intra-quarter. They generally don't go too far out, but I would say, broadly speaking, we've been on the good side of volatility, right? If you go back in time, we'd ask ourselves when things like Iran and the war happen, who's going to get stuck with some bad trading losses? For the most part, the banks have ended up on the good side of volatility. So trading results, we think, will be up 15% year on year. Investment banking, we're going to hear about pipelines. So that'll be the outlook commentary. We heard last quarter they're at records, and we want to hear that follow through.
We've had a lot of the big deals already come into this market. Is it your assumption that we are still in this era of mega deals and that the banks are going to be capitalizing off of that? Or will we see some smaller things come through the pipeline that can still support the record volumes that we've had thus far year to date?
I mean, absolutely. The big deals are getting the attention. There's plenty in the pipeline. And I think, beyond just the transactional nature of making, $100 million in SpaceX is the trickle-down effect. So managing the wealth and managing the money of these companies and these individuals, that's where you get the permanency. That's where you get companies like Morgan Stanley. Yes, they'll make a ton of money this quarter on these IPOs, but it's the longevity. And as an analyst, we look at the persistence and the repeatability of these revenues.
Who will give us the most color on deposit costs?
I mean, Bank of America and JP Morgan are the numbers 1 and 2. I would be listening the most to them. I think as you get through the week, you'll see the regionals talk more about outlooks for deposit costs. That's the second major theme. The number one theme, we talked about capital markets. The second theme is just the outlook for deposit costs. Because for the traditional bank, net interest income, net interest margins are 70% of your revenue. And if the second derivative or flatlining of deposit costs are happening, you're going to have to really think about the outlook into 27 for margins. Are we at a point of inflection or perhaps rolling over?
Well, how much is that complicated by, I know you and the team's view is that we're not going to get cuts this year nor next year. How much pressure is that adding on?
On the margin, it's more difficult, right? The good thing is the assets are still repricing higher, so the margins are still up, steady to up. I think as you go into 2027 budgeting season and looking at next year, I think if we see stable rates, you're going to see deposit costs creep up, and I think the stocks will trade on that.
So talk to us a little bit about where you're expecting the bar to be a little bit higher and be met as opposed to perhaps disappointing. So I know some of the regionals, for example, you're looking for really nice performance.
The regionals are set up to make a lot of money, right? The mid to high teens ROTCEs. What we haven't talked about is credit quality. Last quarter, it was private credit. That is absent from the conversation right now, which as an analyst makes me a little nervous.
Wait, why is it? Because they still have been really tied to like the booming data center debt that's been taken out. And we've seen stories of banks trying to offset some of the exposure we have. Why won't that be present in this conversation?
I think it will be. I think we'll have to dig a little bit. But I think in general, analysts, investors focus on one or two things. And those two things we talked about, deposits and capital markets. But I think in terms of what could wreck the rally, what could really deter confidence, it's any conversation around credit. And so this higher for longer narrative, that has the potential over time to weigh on credit concerns. So higher rates make it a little bit more difficult on credit.
So at the same time, I know that you also like Morgan Stanley over Goldman Sachs heading into their earnings season. Why is that?
Well, first off, they're both excellent at what they do, right? Goldman is the number one in investment banking and trading. Morgan Stanley's got this powerful $10 trillion wealth management business. Our difference is really what you, in terms of repeatability, we think Morgan Stanley's business model deserves a higher multiple. They're both trading at very high multiples. Goldman at 3 times book, Morgan Stanley at 4 times tangible book. But it was more just a nuance. Like they're both going to have blowout quarters. I think there's probably more likelihood that Morgan Stanley's earnings beats run rate into earnings projections going forward, but they're both going to have outstanding quarters.
For Citi, Bank of America, JP Morgan, Goldman Sachs, we're talking about a 20 to 25% gain year to date, right? You think that's not really pricing them fairly, that perhaps there should be more gains there?
They're expensive by historical standards, right? The largest banks are trading roughly 13 times next year, and the smaller banks are trading at 25% discounts. You go back in time, that was flipped on its head, right? The small banks would get a growth premium, the large banks would get a regulatory discount. We think because of the regulatory momentum that's apparent in the system right now, and the repeatability and the scale that these large banks have, we think they deserve high multiples. And when you think about it broadly, outside of the bubble of financial services, 14, 15 times earnings isn't that expensive compared to other sectors. So it's uncomfortable as a bank analyst to put a 15 or 16 multiple, but they are growth companies in some capacity.
We had heard for Diamond saying in May, late May, he basically said, we are on the lookout for deals. We're on the lookout of adding more capacity for JP Morgan. Do you think that there are a lot of opportunities out there? Do you look around and maybe some of the smaller, the regionals, and see, yeah, they're real M&A targets for some of the big players right now?
There's no holes in JP Morgan's franchise, right? They are at scale in all their businesses, technology, investment banking, depositories. They can't buy another bank because they're above the cap. Sure. Could they fill out the wealth management, asset management, payments? Absolutely. So could some of their peers. But I think broadly, the regionals, they are scale buyers, right? They are looking up in terms of scale. they're doing a great job, but we are at a moment in time where the regulatory world is allowing banks to do deals, and they're allowing them to do them quickly. And I think they'll capitalize on that.
Just want to let everyone know, so you love PNC among the super regionals, Flagstar, Popular, Hancock, Whitney among the SMIDs. You have downgraded First Citizens.
First Citizens is a name we stepped aside from this quarter, and those were all calls into the quarter, the PNCs and the likes. First Citizens is the #1 bank in terms of regionals that has grown tangible book over a 1, 3, 5, 10. So they are working for shareholders every day. Our decision to step aside was really based on the conversation earlier about deposits. They have a nuanced headwind from the SVB acquisition a couple of years where they have to pay back the government. And so they have to raise more deposits more quickly and at a more expensive rate. So that's impacting the margin outlook a little bit. But again, great company, very cheap valuation, continuing to buy back stock.
All right, Chris, you better get home, get some sleep.
Great.
You're going to have a long day tomorrow. That is Christopher McGrady of KBW joining us. Coming up, Delta CEO Ed Bastian says his airline will do just fine with higher fuel prices. More from that interview next. This is Bloomberg Open Interest.
Fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to Bloomberg Open Interest. To check on your equity market about 20 minutes into your trading day. And just keep in mind where we're coming from. 2 consecutive weeks of gains, a lot of enthusiasm over SK Hynix listing in the U.S. on Friday. Even the chairman telling Ed Ludlow, when things calm down, we're going to be issuing more shares. Today, my friends, is not that day. The NASDAQ falling more than 1.5%, being led by chip makers. Look, nothing specific out there. No news that would necessarily derail this trade. But considering we are trading more risk off, it has become a high beta play. The S&P down by 0.4%. The Russell 2000 also down by 0.33%. Stuart Kaiser pointing out that the Russell 2000 has become more of an interest rate play because we had a rebalancing and a lot of the AI names went up into the Russell 1000. So thus you have something that's more interest rate sensitive. And it makes sense why you'd get some interest rate sensitivity today. Yields are moving higher with the price of oil moving higher too. I don't see oil on this board unless I'm going blind, but the price of oil is moving higher today. I can promise you that. Gold, that is falling by 1.7%, as is Nvidia. And again, look at these huge declines in the chip makers. SanDisk down 10.4%, Micron 6.5%, SK Hynix, the US ADR is down 6.4%. 0.9%. Not as bad as the South Korea session. Much more leverage in the system there, although we are getting more of these ETFs coming to America. Carnival, that is surprisingly higher by about 1/3%, but most of the travel names are off today. Given the price of oil continues to climb over uncertainty in the Middle East and the status of the Strait of Hormuz, Delta Airlines among those declining, down 0.6%. And of course, they had their earnings last week. They beat expectations, but the shares had fluctuated on their outlook. And Delta CEO Ed Bastian says that higher fuel prices, though, they're not deterring travel. He spoke with Lisa Abramovitz earlier on Bloomberg Surveillance.
Our consumer has the ability to sustain this level. In fact, we saw it in the quarter. We made at 9% operating margin with fuel prices much higher than where they are in the existing, the existing landscape. So I think oil is going to stay sticky for longer. I'm not sure it's going to be in crude, though. I think the refined costs, the cracked spreads are where you're going to find it's going to take a lot longer for that to come down. Our international, travel season is looking very, very healthy. Businesses, international, as I just said, American Express, our loyalty programs, our cargo business, we have so many different lines of business, including here in the U.S., our domestic travel. It's all doing very, very well, and I don't see fuel prices deterring that.
Delta CEO Ed Bastian on surveillance there, speaking with Lisa Abramovitz. And it's incredible, Danny, how optimistic he sounds. They've really ridden out this quarter really quite well. And if that was the end of it, great. But it looks like we might be kicking off again.
Well, the thing that's good news for Delta is the fact that they've really geared their business to be one that's premium. They've really lent into business, now also having basic business, which I hate, and I could spend an hour on why I think that's horrible. But they are more immune. Their consumer is more immune. Even if oil prices go higher, we have seen people continuing to travel if they're able to afford it.
They have pricing power, and that's what this market is all about, whether it's from the memory chip makers to the airplane to the cruise ships, right? Do you have pricing power?
Yeah, certainly. Coming up in the next hour, we're going to continue the conversation on the economy. RBC economist Francis Donald will join us in a very busy week, along with a lineup of power CEOs.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, yet ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
ABC News, I'm Chuck Severson. As efforts to resolve the Iran situation appear to be going nowhere, what are going somewhere are missiles. The U.S. and Iran shooting them, the U.S. at Iran and Iran at several Mideast countries. Oil prices have jumped, and so could gasoline. On the Strait of Hormuz, ABC News Chief White House correspondent Mary Bruce.
The ceasefire is now unraveling. The Iranians this morning say the agreement has, quote, entered a crisis stage. Now, overnight, the U.S. launching a new round of strikes against Iran, the fourth series of attacks in less than a week. Iran then responding with a barrage of strikes aimed at American military assets in the Middle East.
More Israeli air attacks on Gaza City. At least 6 Palestinians were killed, say Palestinian health officials. The Israeli military says it targeted terrorists. Extreme heat spreading across more of the nation, storms and flooding from the Midwest to the east. ABC News Chief Meteorologist Ginger Z.
In Philadelphia, the National Weather Service confirming at least 4 microbursts tore through the city. 70-mile-per-hour winds downing hundreds of trees and ripping roofs off buildings.
Mandating more motion.
It's part of a nationwide drive to get kids off their devices, at least for a few minutes a day. But Oklahoma school officials are in a dilemma.
Students need to be outside playing as much as possible, but they also need every instructional minute that we can get our hands on.
Holly McKinney is an assistant superintendent in Norman, Oklahoma. Instead of lengthening the school day, her district is incorporating literacy into science and social studies lessons, freeing up the additional 20 minutes of recess time mandated by the state. Jim Ryan, ABC News.
South Carolina Senator Lindsey Graham's sudden death was due to a ruptured aorta from heart disease, says preliminary info from the medical examiner. A statement explaining his absence from the Senate, Kentucky's Mitch McConnell, saying he had a fall last month and was in the hospital for a while, now in rehab. McConnell is 84. You're listening to ABC News. A Russian missile attack in the Ukrainian city of Sumy Saturday was caught on security cameras. This at a coffee shop. At a playground, people dropped to the ground. Adults covered kids with their bodies. Ukrainian officials say at least 5 people were killed, dozens more injured, and some residential buildings damaged. Cleanup going on in Philadelphia and surrounding counties after violent short thunderstorms called microbursts Sunday with straight-line gusts. We get more info on the cost of living this week, according to ABC's Dave Packer.
On Tuesday, we got the government's June Consumer Price Index data. Producer Price Index data comes out on Wednesday. That's a measure of how much products or services cost manufacturers to produce, and a closely watched measure of inflation. Compared to last month, the street expects no increase.
ABC's Dave Packer. A reminder that wildlife can get wild and dangerous. It happened at Yellowstone National Park on Friday, according to ABC's Melissa Dunn.
The man and his grandchild stopped to take photos of the bison. Seconds later, the massive mammal then charges, chasing the family around trees before the man is thrown into the air, seriously injuring him. Bison! Look out, bison! The grandfather is lucky to be alive.
ABC's Melissa Dunn. It is Monday, July 13th. On this day in 1985, the Live Aid benefit rock concerts were held simultaneously in London and Philadelphia, raising millions for famine relief in Ethiopia. Chuck Sievertson, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube. We're streaming live on Bloomberg.com as well. We got red and green on the screen. Scarlett Fu and Paul Sweeney, the Bloomberg Intelligence Program. Coming up, we're going to check in with Tyler Kendall, Bloomberg News Washington correspondent, get the latest news coming out of D.C. as it relates to Iran, certainly first and foremost. James Worden, CIO at the Wealth Consulting Group, will get his thoughts on these markets and what to look forward to in some of these bank earnings coming up. Mandeep Singh, Global Head of Tech Research for Bloomberg Intelligence, we'll get to talk to him about what's happening in the world of tech. I see SK Hynix shares trading down pretty big. First in Hong Kong, first in Korea, now here in the U.S. I got SpaceX trading down. What's happening out there? Tamlin Basson, Bloomberg Tech litigation analyst. Apple likely gets injunction relief in OpenAI trade secret spot. So there you go. Apple stock trading up on that news. And Sam Fazeli, Bloomberg Intelligence, he covers all the healthcare stuff. He's based in London. We'll get the latest on all the healthcare news out there as well. Let's kick it all off right now with Alexis Christopher. She's still here.
Oh, I am still sitting in the studio, Paul. Hello, everyone. And this Bloomberg Business Flash is brought to you by IBKR. For the past 3 years, Interactive Brokers' individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170-plus global markets matter. Visit ibkr.com/performance. An AI-fueled stock rout in South Korea has spilled over into the U.S. markets as SK Hynix American Depository shares fall more than 7.5%. That brings ADRs to trade just a few dollars above the $149 level where they priced last week ahead of their trading debut on the NASDAQ. By the way, shares of SK Hynix tumbled 15% in South Korea, the most on record. Memory and storage peers here in the U.S. dropping across the board. Micron Technology down 5.5%. SanDisk plunging 9%. We've got shares of Western Digital off more than 7%. Here's how this is playing out for the indexes. NASDAQ is now down 257 points or 1%. The S&P 500 is down 23 points, but the Dow is holding on with a gain of about 51. Even Taiwan Semiconductor getting swept up in all this selling despite a 36% jump in quarterly sales. That stock is down 1.33%. Quick check of oil. Brent crude, $78.42 a barrel, up more than 3%. And West Texas Intermediate crude up more than 3%. Now at $73.65 a barrel. That's your Bloomberg Business Flash. Back over to Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Scarlett was just, Alexis was just mentioning kind of red and green on the screen out there, kind of mixed, but let's take a look at some of the stocks that are on the move today, and we can do that today with Bloomberg's Judy LaGrue. Judy, what are you looking at today?
Good morning, Paul. I'm looking at, as everyone is, SK Hynix, ticker SKHY. The stock is dropping for, just a really big loss here, as much as 9.3%. Korean shares, as we know, dropped most on record, and a lot of other companies are dropping in sympathy. So we've got Micron, Western Digital, SanDisk as well. In an interview with Bloomberg, Chan Lee, a managing partner at the Korean hedge fund Petra Capital Management, actually called the SK Hynix listing highly successful and noted that much of the success had already been priced in, but today's weakness is reflective of a typical, quote, sell the news reaction. and profit taking rather than any sort of change in fundamentals here. So one thing I also found interesting too is that a researcher in Hong Kong at Julius Baer anticipated elevated volatility for this stock through late July as foreign investors rebalance their positions. So really interesting story, great space to watch there.
And we had Stuart Kaiser in surveillance from he's from Citibank on the trading desk there, and we were talking about there is a arbitrage between the valuation of SK hynix in the U.S. trades at a premium to what it trades at in Tokyo. I mean, I'm sorry, Korea. In Korea. Apparently, that's not unusual. Taiwan Semiconductor is a similar type thing.
Yeah, and I know a lot of traders that look at that very carefully, and when it starts to narrow, they can jump in. When it starts to widen, they also jump in. So I'm just looking for any kind of change in that relationship. All right, so SK hynix, the ADR is always on our radar. What's next for you, Judy?
Thanks, Scarlett. We've got Blackstone and Williams. So Blackstone, ticker BX, and Williams, ticker WMB. So there's not a ton of movement here with Blackstone. They're wavering sort of flat to positive, flat to negative. But what we're looking at is the natural gas deal that was announced this morning. Blackstone announced that it has entered into an agreement with Williams, the natural gas company, to support the development of 5 power projects. And so Apollo and accounts managed by KKR are also partners to Blackstone on this deal. But here, Blackstone and its partners are providing Williams with over $5 billion in exchange for a 49% non-controlling equity interest in these 5 projects. So, interesting space to watch. We are certainly watching these 2 companies to see how investors respond to this news.
You know what you need for AI? Power, electricity. Yes. So there you go.
Yes. That's what everyone's been betting on.
Yep. Okay, there you go. One more here.
Oh, sure. And it's another twofer. I mean, look, this M&A activity between Trico Bank Shares, ticker TCBK, and First Hawaiian, ticker FHB. So we've got a tale of 2 stocks going on here. So TCBK, Trico Bank Shares, the holding company for Tri-Counties Bank, which operates in Northern and Central California. Those shares are climbing as much as 10%, and it is on track to reach its highest intraday price on record. And what is happening here is that First Hawaiian agreed to acquire Trico in an all-stock transaction. So on a combined basis, the company will have about $34 billion of assets and become the 6th largest bank headquartered in the Western United States. There are no expected branch closings here, but JP Morgan analysts are noting the key question in this transaction is whether it will materially improve the balance sheet growth profile versus First Hawaiian on its own. So First Hawaiian, on the other hand here, is sinking. The share is sinking as much as 9.5%. It is on track, for its biggest drop in over 3 years. So again, this M&A activity, definitely some place that we're watching here with these two stocks.
Yeah, especially with the smaller banks. We've been saying, and analysts have been saying for a long time, that the U.S. is overbanked. There needs to be consolidation in this sector. And you see dribs and drabs of it, but you don't really see as much as maybe we thought we would, given that we have a very pro or hands-off, kind of touch-free administration that would encourage M&A.
Yeah, a buddy of mine, he's an M&A banker at KBW, and he said he's put off his retirement for a couple of years because he's just too busy. They're doing too many deals. They're making a ton of money. He's like, this is like some of the best earnings years of his career. They're just cranking it out. So, Judy, thank you so much. We appreciate that. Judy LeGroux covering all the stock movers here. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Geopolitics, it is front and center yet again. It was a busy weekend from that perspective. You kind of feels like they just kind of do stuff on the weekends when the markets are closed.
It's exactly what someone told us, which is the Strait of Hormuz open?
During the week.
Yes, it is. During the week when the market's open, during the weekend when it's market's closed, and it's not. And there were skirmishes.
Yeah, it's just, let's try to get some of the latest reporting on there. And of course, we're fortunate to have Tyler Kendall, Bloomberg Washington correspondent, joining us remotely from the White House. What is the state of this ceasefire that just day-to-day back and forth between the U.S. and Iran as it relates to military strikes and overall the security of the Strait? Tyler, where are we today?
Well, Paul, as you guys are outlining, we really saw an escalation when it came to the kinetic action over the weekend, with the U.S. military confirming that they conducted at least 3 waves of strikes in Iran over the weekend aimed at specifically degrading Iran's capabilities to attack commercial shipping, because the Strait of Hormuz still remains the #1 point of contention, which at this point is stalling any sort of diplomatic progress when it comes to potential curbs on Iran's nuclear program, which is supposed to be where we are in the negotiating period. At this point, we're getting heightened tensions and rhetoric from both sides just this morning. If over the weekend they traded actual attacks, today they are trading these heightened threats. President Trump saying that the U.S. will guard the Strait of Hormuz, seeming to imply that there will be further and longer-term U.S. involvement in the strait. He said that the U.S. would be looking to be reimbursed for its efforts, though declined to give a framework or a timeline on exactly what he was referring to. But he made it very clear that CENTCOM isn't going anywhere when it comes to actually helping to ensure safe travel through. But meanwhile, pair that with what we're hearing out of Iran, some really tense words from Iran earlier today, threatening that the strait will be closed unless U.S. interference ends. So it is definitely going to be something to watch, because, Paul and Scarlett, we're seeing those ramifications already. It appears that ships that are transiting through with their transponders on, what we call observable traffic, has basically ground to a halt, which means that ships are now part of the so-called dark fleet. They're going through without that radar indicating, which makes it hard to track just how many vessels are actually making it through the waterway.
Yeah, that's a really important distinction there. And because of all that, we're seeing oil prices rise again. Brent is just below $80 a barrel. WTI just below $74 a barrel. Tyler, you are in Washington right now, and we got some news over the weekend that Senator Lindsey Graham has suddenly passed away. Just give us a sense of how important Lindsey Graham is to U.S. foreign policy, and especially when it comes to his ability to advise President Trump on foreign policy.
Scarlett, he was absolutely critical when it comes to foreign policy. Washington was absolutely stunned when the news broke out in 2 ways. One, yes, Lindsey Graham was a very close ally of this White House, but also importantly, he had really strong bipartisan ties across the aisle, having built that up over nearly 3 decades serving in Congress. And that is where we really saw, in some cases, Lindsey Graham be able to make some really substantial moves when it comes to foreign policy and trying to reach across the aisle, including when it comes to Ukraine. Now, Lindsey Graham was perhaps the staunchest supporter of this administration's policies when it comes to the conflict in Iran, but then also a really staunch supporter, again, when it comes to Ukraine. He had just come back from his 10th visit to the country this weekend, and he had announced last week, alongside a bipartisan group of senators, that the White House had given them this very critical green light to move ahead with a sanctions package against Russia, which at this point had been stalled for basically over a year, and that Lindsey Graham was really trying to get through. We're going to have to see where foreign policy develops from here, because he very clearly had the ear of President Trump. The president said so himself in multiple interviews over the weekend. But Paul and Scarlett, I'd also put on your radar how essential he was when it comes to the domestic policy agenda, sitting as the chair of the Senate Budget Committee, which really served as the launching off point for many of the priorities that we saw get through this Congress so far, including the One Big Beautiful Bill.
Tyler, thank you so much. We really appreciate your reporting. Tyler Kendall, Bloomberg Washington correspondent. She is joining us today from the White House down in Washington, D.C. So again, some surprising news regarding Lindsey Graham's death. We also got a little bit of news regarding the health of Mitch McConnell. And apparently he had suffered a fall in hospital, contracted, I guess, some pneumonia, but apparently, I guess, still on the meds, I guess.
We have not seen him, though. This is a statement from his office.
Right.
So there's still a lot of talk everywhere about, just exactly his condition, where things stand. There's a lot of, the Senate is just overwhelmingly old.
Yes.
In terms of age of the members.
Yep. And so we're starting to see some of that just in the last few days. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's coming up on 10:22 on Wall Street. I'm Alexis Christoforous, and we have oil prices at new highs for the morning after President Trump said the Strait of Hormuz is open with or without Iran. He also said the U.S. is reinstating a blockade against Iran. As a result, we've got Brent crude up more than 5%, nearing in $80 a barrel right now. WTI crude up 5.25% at $75.08 a barrel. This has got the airline stocks and the cruise ship companies under pressure. Delta is down more than 1%. American Airlines down about 1/3%, but United is off more than 2.5%. We've got U.S. listed shares of SK Hynix sliding this morning. That is after the company went public on the NASDAQ on Friday. U.S. listed shares, that is. Those ADRs are down nearly 6% after plunging 15% in South Korean trading. That is a record. Meta plans to spend an additional $40 billion on its data center campus in Louisiana, bringing total costs to above $250 billion. And we have got the S&P 500 now down 30 points. Dow Jones Industrial Average has turned negative, down about 6 points, and NASDAQ Composite down 278 points. The Bloomberg Dollar Spot Index up 0.1% at 1220.61, and spot gold down more than 2.5% at 40.13 the ounce. That's a Bloomberg Business Flash. Back over to Paul and Scarlett.
All right, Alexis Christoforous, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, earnings kick off in earnest tomorrow with some of the big banks reporting. We want to get a sense of kind of how that's going to shake out for the banks and for the market in general. Jim Worden joins us. He's the Chief Investment Officer of the Wealth Consulting Group, joining us from Folsom, California, via that Zoom thing. Jim, thanks so much for joining us here. We're going to learn a lot tomorrow about not only the banks, but also the consumer and also corporate America. What are you going to be looking for tomorrow with the banks?
Yeah, thanks for having me, Paul. I think we're really looking just to see, how do they do versus the street, but then more importantly, guidance. Where do they see things ending for the year or going into next year? Obviously, one of the things that we are looking at is how well some of these companies are integrating AI or leveraging AI, how much revenue is coming from AI deal making. So those are some of the things that we're looking at.
What do you think is the data point that investors will really key in on for the banks? I know for the big hyperscalers, we're all going to look at CapEx and how that progresses, especially their forecasts for CapEx. But when it comes to the banks, is there a specific data point that you think really investors will look to determine whether they stay with a certain stock or a sector?
Yeah, it's a good question. So we try to look at things through multiple lenses, multiple factors, momentum, trend, quality, value, volatility, all of those things. But when we lift up the hood, we're really trying to see, I think with the banks, the amount of revenue that they're getting through some of these deals, but almost more importantly, cost savings. What are they doing to trim the expenses, and how are they doing that? And so and also, how are they positioned with leverage? Is the leverage, more positioned with duration? Is it more positioned with AI expansion? How are they integrating it? So those are some of the things that we're looking at.
Stepping back a little bit, Jim, kind of how are you guys and your team, how are you thinking about just the market in general here? We're starting to hear maybe a little bit of talk is, are we in a bubble here? Are certain parts of the market in a bubble, whether it be kind of the AI trade? How do you guys think about that?
Yeah, Paul, so we've had some discussions kind of internally, and we were kind of really looking deep into the data. We own some of the companies that have done extremely well. Our clients have been very, very happy. Some of them haven't been thrilled that we've had this risk management process to trim while they're going up, and so taxes are becoming a thing that they talk about more. But yeah, for sure, we believe that there are pockets of froth, and for some of the memory based companies, it's not normal and natural for companies to be up 5,000% in a short period of time. And so to the extent that we have exposure in areas there or adjacent to those areas, we've been trimming things like Micron. But I don't believe this is a systemic, bubble everywhere. You still have a lot of companies that are just growing their revenues. And by the way, they're not expensive. And so to the degree that you have companies like NVIDIA that are still priced attractive relative to the market, we still like those names. We are a little bit cautious on some of the software names just because of the potential for disruption. And so spending a lot of time there. But overall, this market feels, there's still some volatility. The war is on again, off again. Interest rates are a little bit higher. And so we believe that this is certainly a time that you want to stay diversified. You want to own plenty of boring names in there too, that have attractive valuations and that can grow some. So that's kind of how we're looking at it.
When you say not expensive and boring names, are those individual companies or do you see them proliferating in certain sectors over others?
That's a great question too. Everything I'm doing is bottom up, quantitative driven. And so I'm saying specific companies that, they're not going to talk about on the radio or TV that are boring, we're maybe priced too low and neglected. And so, some of these are turning around. Some of these boring companies are turning around. So one of the things we do look for when we look at just the technicals, we're looking at trend reversal and, is all the bad news priced in for some of these companies? In some cases it is. It's not, there's no additional seller coming to the market on those names. And so you get additional buyers and then a lot of times you have the company turning around. Their margins are getting a little bit better. Their revenue's getting a little bit better, but they're still not talked about. And so we believe a lot of those are really, really great to have in the portfolio when some of the other, sizzling names aren't doing as well.
All right, Jim, thanks so much for joining us. Really appreciate it. Jim Warden, he's the CIO at the Wealth Consulting Group, giving us his thoughts on the markets and maybe a little bit of a preview for tomorrow when we get to hear from a lot of the big banks here. Switch gears to technology. Why not? Mandeep Singh joins us here, Global Head of Tech Research for Bloomberg Intelligence. Lots of ways to go here, Mandeep. Let's just start with SK Hynix. What did you make of their U.S. listing on Friday, and maybe how the stock's trading off today, 5%, but traded off pretty, I think, was it 15% in Korea?
Yeah, and the Kospi being down about 9% on the day.
What do you make of all that?
I mean, I think the day-to-day volatility will be there, and we're kind of going through a phase where everyone is trying to figure out the next leg of this AI infrastructure build-out and how the companies would be reporting, especially the hyperscalers. I mean, at the end of the day, everything comes down to the CapEx numbers for 2027 and 2028, and we'll learn about that when they report earnings, the hyperscalers, and there is some profit taking right now, but overall, I thought the IPO was well received in terms of the first day bump that we saw in terms of a close, and the long-term investors do think this is a multi-year cycle for memory names, and even though they are cyclical and there is a fear around peak earnings, I think on the whole, everyone buys into this multi-year build-out for AI.
It feels increasingly like everyone's taking their cue from the Kospi, from what happens in Korea, and that the tail is wagging the dog here. Is that the case, Mandeep? I mean, when you come in the morning, do you look at what's happening in Korea and say, okay, now I have a better picture of what's going to happen globally, because that sets the tone every day?
No, I mean, for me, it's just another data point where, I look at the futures, I look at how the markets have reacted, but at the end of the day, there are some data points that weigh a lot more for me, and the hyperscale CapEx guide is one of them. And if I know that all these companies are, raising their capex for next year, and we are into a third year of a 70% increase in capex. And if next year is going to be another 50%, then there is not much to worry about, at least for the next 12 to 18 months.
Okay, and it looks like some of those hyperscalers really don't report earnings until the end of this month. Tomorrow we're going to get the big banks reporting. We're also going to hear from TSMC and ASML, two big chip names globally. How do you see that kind of filling the vacuum between now and when the hyperscalers do report and give us a better picture of their CapEx plans for 2027 and beyond? Yeah,
I mean, TSMC reported their monthly number today, and we are easily tracking over a 40% increase year over year, and the seasonality was better than expected. So when you look at TSMC's results, which hasn't really used their pricing power like the memory guys have. So in the case of memory top line, you see a lot of pricing growth. TSMC, on the other hand, has been a lot more balanced in terms of volume versus pricing. And it's just a question like the durability of TSMC's growth, ASML's growth, and all of these memory guys, whether it's SK Hynix or Micron, have talked about raising their own CapEx. So that means ASML is a beneficiary of memory CapEx. And right now, everyone buys into this thesis that you have to keep investing to keep raising their CapEx just to increase the supply by 15–20%. And even that would not be sufficient. That's what the SK Hynix chairman said is, we will double our supply through 2030 at a CAGR of 15%, but we'll still be undersupplied. So the demand growth will outpace 15–20% supply growth that these companies are investing in.
Okay. Again, the numbers just blow me away, dude. But I'm going to take what you're saying face value. If I'm a Meta or Google or Amazon, do I want to put up a big CapEx forecast or not? Where are we in that play there? Does the market want to see these guys keep spending, or we kind of past that?
I think the market wants to see them spending, at the same time show some revenue lift to their top line. So in the case of Meta and Microsoft and Google, they want to see that cloud business get a bump, the core ads business get a bump from AI, and the AI contribution has to be very clear. So like Google Cloud growth, for example, has surpassed 50% now, expectations. Why? They were growing, traditionally cloud was growing 20–25%. That additional 25% plus growth is coming from AI. So similarly, you want to see that reflected in all the hyperscalers that are reporting that this is the AI portion, and hence we are raising our CapEx, and I think the market will cheer for that.
All right.
Show me the evidence, basically.
Show me the evidence. I think you're right. Mandeep Singh, he always shows us the evidence in studio, not some remote island up in the North Atlantic. Mandeep Singh, thank you so much. Global Tech Research Head, Bloomberg Intelligence, joining us here in studio, which is what professionals do. S&P's off 22 points, the Dow's off 8 points, the NASDAQ off 212 points, 0.8%. Bitcoin also lower. Go figure that. This is good.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
10:40 on Wall Street. I'm Alexis Christophorous from the Bloomberg Interactive Brokers Studio. Oil is surging after President Trump said the U.S. would reinstate its blockade of Iranian ships transiting the Strait of Hormuz and demanded a 20% reimbursement on all other cargo shipped through the critical waterway. Brent crude is up 4.5% at $79.45 a barrel, and West Texas Intermediate crude up nearly 4.75% at $74.71 a barrel. Meantime, chip stocks are leading the way south for equities. S&P 500 down about 32 points. We've got the Dow Jones Industrial Average down 73 points at 52,566, and the NASDAQ Composite now down 254 points, a loss there of about 1%. U.S. listed shares of SK Hynix, they are lower, down about 5% after their blockbuster debut on the NASDAQ Friday. That follows a 15% drop in South Korea overnight. That is a record for the South Korean memory chip maker. And the big banks, they're going to kick off earnings season tomorrow with results from JP Morgan, Bank of America, Wells Fargo, Goldman Sachs, and Citigroup. Those reports will give investors an early read on loan demand and credit quality. I've got my eye on shares of MGM Resorts, up about 0.5% now. It's said to be in discussions over People's Acquisition, or that unsolicited takeover offer from People Acquisition. That's the Barry Diller-owned media and internet conglomerate. It's just the latest sign that casino stocks are increasingly becoming M&A targets. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christophorous, and that's a Bloomberg Business Flash. Paul and Scarlett.
All right, thank you so much, Alexis Christophorous. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. It is Monday morning, and Alexis mentioned M&A. We have a group of about a dozen states getting ready to sue to block Paramount Skydance from buying Warner Brothers Discovery. This is according to Bloomberg reporting, which cites a person familiar with the matter. So this antitrust lawsuit will be filed in federal court, according to our reporting. And we know the federal regulators have already given this deal their blessing. It's the states that are opposed to it. And there are a lot of strikes in Hollywood, or I should say protests in Hollywood, Paul, objecting to this deal on the grounds that it will reduce jobs, it will reduce employment, and it's bad for the industry overall. And they're hoping that the states would pick up on it, and that's what we get right now.
Well, just about 10 seconds ago, I got a note from Jen Rhee in my inbox because I asked her, can these states delay or block the deal? Her answer is yes, but they have to win a preliminary injunction in federal court. Once the EU and the UK clear the deal, which is probable, the companies are free to close because the U.S. Department of Justice has already cleared the deal. So all the major entities have cleared the deal. But if they do close, the state's lawsuit is a bit futile because the companies will integrate and the judge would not be inclined to unwind. But the states could get a preliminary injunction stopping closing, pending a suit on whether to block the deal altogether. So they could probably get a preliminary injunction is what Jen is saying, but maybe not a permanent one. So
they got to move quickly if anything's going to happen, right?
Yeah. I mean, so it's a long shot. I think that's kind of how my understanding of it is. But you're right. It's if you're in California, New York, and these states that have where the entertainment business is a big part of the economy, this is bad because you're going to put these two studios together, and there's obviously, just as you can imagine, a ton of overlap. You're sitting on the Paramount lot, looking across the street at the other studio's lot, and you're like, gee, you have my job, my exact same job.
Yeah,
one of us
they don't need two of us.
Yeah.
Paramount Skydance, it's worth noting here, is up about 3% on a day where the broader market is lower. Warner Brothers Discovery is up about 1% at the moment. So we'll continue to keep an eye on these developments. But as Paul mentioned, the DOJ has already given this deal its blessing. Alexis was also telling us earlier about what President Trump has been saying when it comes to the Strait of Hormuz, because there have been some tit-for-tat attacks over the weekend. And now the president is saying that the U.S. is going to be seeking reimbursement for making sure that ships can get through the Strait of Hormuz, which is a decidedly different tone than what markets had anticipated, which is the Strait of Hormuz is open for business. Tyler Kendall is our Bloomberg Washington correspondent, and she joins us now. So Tyler, just give us a little more context about what the president has said about the Strait of Hormuz and the U.S.'s role here.
Well, Scarlett, It's really interesting because President Trump saying here that the process and the formation of this plan will begin immediately. But we didn't really get more context on exactly how the U.S. intends to implement this. I was just catching up with our analysts at Bloomberg Economics that say that as far as they can tell, the president's post is inconsistent with international law. This also would be a very high fee, if you will, higher than what Iran is currently trying to charge when it comes to transiting through the Strait of Hormuz. What is very evident here, though, is that the White House's patience has run incredibly thin, as we saw CENTCOM over the weekend demand that Iran issue a statement saying that the Strait of Hormuz is open, but instead we got the exact opposite. The IRGC came out and said that the strait would be closed, and we actually saw them fire on at least one commercial vessel in the waterway. Now, I will point out, because we may hear some talk about this, there's something known as the UN Convention on the Law of the Sea, UNCLOS. Neither the U.S. nor Iran is actually a party or has signed this specific treaty, though Oman has, and it is important because it does ensure freedom of navigation. But there is a provision inside of that law that says that fees can be rendered for services that are rendered. So maybe there may be something here that we could see the U.S. looking into, though if you look into the actual provision of this treaty, it does seem to apply only to those countries that share a border with the territorial seas. But I put that on your radar because it may be something that we hear more about.
So, Tyler, earlier this morning, Tom Keene on the surveillance program, we were speaking to Ed Morse, a longtime oil and energy analyst, currently at Hardtree Partners. We asked him, or I asked him, can the strait ever be considered as open as it was before the war? And in his opinion, he thought the answer was no, because now even the threat of military action by Iran is enough to slow, if not completely shut down the strait. What's the feeling in Washington, D.C. about ultimately how this plays out?
Yeah, that's a really good point, Paul. At this point, we know that the White House would like to see it get back to those pre-conflict levels, but this really seems to be Iran holding on to its leverage when it comes to the Strait of Hormuz, appearing to opt for that over what could be potential financial relief, since we saw the U.S. move to reverse that sanctions waiver that had allowed Iran to sell its crude to market. The U.S. had really been hoping that the carrot approach would help guide Iran to the negotiating table, give a taste of what financial relief could look like, say that there could be more benefits down the road. But it has become evident that Iran has opted instead to try to maintain and retain this control over the vital waterway. Interesting to see how Iran is also trying to work with regional partners. We saw Iran's foreign minister over the weekend meeting with officials in Oman. That is, of course, something to watch, because we know that the two countries have previously said that they are trying to work on some sort of framework that would give them authority over the Strait of Hormuz. But the U.S.'s position long has been that there can be no fees, no tolls, whatever you want to call it, when it comes to the waterway. But at this point, it seems like the U.S. is really ratcheting up that economic pressure now with this blockade and now with these latest comments from President Trump.
And because of these comments from President Trump, we've seen oil prices move higher, with WTI up about 4% and Brent up about 4% as well, just under $80 a barrel for that global benchmark. Tyler, before we let you go, just a quick question here on the president's latest remarks regarding Lindsey Graham, the senator who passed away over the weekend.
Yeah, President Trump trying to use this to push for his domestic agenda, saying that in his last conversation with Senator Lindsey Graham, he had urged for the passage of the Save America Act. We should note that Lindsey Graham served as the chair of the Senate Budget Committee, where we know there were talks about a third reconciliation package that could see some of these provisions related to the voter ID law rolled into in a bid to get that priority over the line, as President Trump has really made that his top priority as we head into November. We saw him refuse to put his signature on that bipartisan housing bill that became law over the weekend, because this has been so essential to him. Lindsey Graham, of course, a very close ally of President Trump's, and that is also raising questions here about what foreign policy is going to look like under the Trump administration, considering that the two had such a close tie and connection. Lindsey Graham, a huge supporter of the president's when it comes to Iran, but also a major backer of Ukraine.
All right, Tyler, thank you so much. Tyler Kendar, Bloomberg Washington correspondent, joining us from our Washington, D.C. bureau. Coming up next, we're going to speak with Tamlin Basin, our Bloomberg Tech litigation analyst, on Apple likely getting injunctive relief in its OpenAI trade secrets spat. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Right now, we want to talk about Apple. They're in the courts fighting OpenAI regarding intellectual property. I don't know, it's legal stuff, folks, but let's get to an expert because I'm not really sure what's going on here. Tamlin Basin joins us here, tech litigation analyst for Bloomberg Intelligence. He's based in London. Tamlin, summarize what's going on here with OpenAI and our good friends at Apple.
Yeah, sure, Paul. So this is a intellectual property case, and specifically it's on trade secrets. Now, trade secrets are sort of the most cloak and dagger form of intellectual property disputes, and sort of reading the complaint over the weekend, there's no exception here. So Apple is accusing OpenAI of a coordinated, orchestrated attempt to gain some of its proprietary know-how relating to making devices for the next iteration of AI rollouts. So this started about a year and a half ago when OpenAI spent about $6.5 billion to acquire a company called I.O. This had been founded by some former Apple executives. One of those executives is now the head of software development at OpenAI. And what this lawsuit lays out is various stages where even engineers at Apple were recruited, were asked to bring Apple devices to OpenAI interviews and to share proprietary information. So what Apple is doing is they have sued, they want an injunction, they want to put a stop to what they see as an attempt to shortcut, OpenAI's attempt to shortcut its way into devices.
Okay, so lawsuits typically take a long time to get resolved. And of course, technology and technological change happens very, very quickly. What are you thinking about in terms of timeline for any kind of landmark, not even decisions, but landmark events in this lawsuit to affect the technology that both sides are working on?
Yeah, and that's an excellent point. These cases often do have long tails to them. However, I think what we're expecting over the next 2 to 3 weeks is Apple to follow up with a request for a preliminary injunction. Really, what it's going to ask the court to do is put some guardrails around what it says are its trade secrets, preservations of evidence. So it's going to be probably looking for something in 3Q, if not in 4Q, for an early ruling on that preliminary injunction request. And we do think Apple has a pretty strong argument here. Courts are, it's so difficult to pull those trade secrets out of a product if it goes to market. So I think now no products have shipped yet. I think Apple's going to have a fairly strong chance to get that temporary preliminary injunction probably in the next few months. After that, we're going to have to see, that there's potentially going to be settlement talks as they go forward. But I do think Apple's eyes right now are on getting some near-term relief in this.
How do you think about the employees that have left Apple and gone over to OpenAI? What kind of risks do they face now?
Yeah, a few of them have been named in this lawsuit. And for those named defendants, the risks are very high. So we've seen these litigations play out. Some other high-stakes instances are Waymo, which is Google's self-driving car division. About 5 years ago, it sued Uber over sort of self-driving car technology. The executive there ended up going to jail. This was somebody who left Waymo, went to Uber. So the stakes can be pretty high. Right now, there's no criminal component to this case. However, for trade secrets disputes, that can sort of escalate quickly. So I think everybody is going to be a little bit on edge. And it's also interesting because there's such a talent war right now, not just between these companies, for all companies trying to gain as much AI talent as possible. So I think we're going to have to see if this has sort of a dampening impact on how much poaching we're seeing in the industry.
On Wall Street, there's something called garden leave. When you leave one firm for another, you can't go start work at that new firm for at least 6 months, sometimes longer, to try to preserve some of the corporate intellectual property from the firm you're leaving. Is there anything like that in technology?
Technology is generally pushed back on that just because sort of, again, as Scarlett pointed out, a lot of the development in this is so fast-paced that having an executive, having a star engineer sort of sit on the sidelines for 6 months can be really a disadvantage. So sort of we've seen across the entire tech space is resistance to that sort of garden leave type scenario. We'll see if going forward, if firms are more open to implementing that, but so far we've seen a lot of reluctance.
What does this mean for OpenAI's ability to recruit, tech folks from other firms in Silicon Valley?
Yeah, I do think it's a bit of a reputational risk right now. I think until there's more clarity on what's going to happen with this lawsuit, and again, this is not the first time OpenAI has been sued. So I think there's been a lot of litigation that's attached to it. So I think it probably does, over the near term, until there's more clarity, it probably does put a bit of a dampening impact on its ability to go out there and recruit some of the biggest names that it may want.
All right, Tamlin, thanks so much. Appreciate it. Tamlin Basin, he's a tech litigation analyst at Bloomberg Intelligence, joining us from London. I never adhered to those garden leave things and all the job switching I did on Wall Street.
Well, what do you mean? How do you not adhere to it?
I just said, come sue me. And I'm not worth it. So they just said, all right, whatever. So, So you take a little bit of time off, but not the mandated, 3 months or? Solomon Smith Barney left Friday at the close, got my deal signed from Credit Suisse on a Saturday, initiated coverage on Monday.
Okay, so
no the 6 months went right back. I was on the road on Wednesday.
But they did pay you out for the 6 months from the departing firm, or not even? No.
I just
okay.
got all my stuff vested, and I sold it literally 5 minutes before the close on that Friday.
Paul Sweeney and his Wall Street career. That's how you do it.
No loyalty, zero. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Next hour, BI starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Broker Studio in Midtown Manhattan. This is Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and Charlie Pellet. A lot to cover here on this Monday. A very busy week, certainly because earnings season begins with the big banks reporting tomorrow. We're definitely going to be talking about all of that. But first, we have oil prices on the rise yet again, with Brent approaching $80 a barrel. Salih Yilmaz, our senior oil analyst, will be joining us to give us his take on what we're seeing out there. We're also going to have a conversation with the FCC chair, Brendan Carr. He'll be speaking with our B-Tech anchor, Ed Ludlow, in about 10 minutes' time. And we're going to check in with Megan Horniman, CIO of Verdance Capital Advisors, to get her take on the market. Kevin Warsh, the new Fed chair, will begin to testify before Congress, first the House and then the Senate on Tuesday and Wednesday. And of course, we need to check in with Herman Chan, our senior analyst covering U.S. banks, to give us a preview of the 5 banks that will be reporting on Tuesday morning alone. Let's go over now first to Charlie Pellet for a check on our Bloomberg Business Flash.
All right, thank you very much, Scarlett. Happy Monday morning. The Dow, the S&P, NASDAQ, all trading lower. Stocks are falling as the Hormuz standoff spurs a rally in oil. S&P right now, to put everything in context, down 19, 75.56. The S&P is down 0.3%. Dow Industrials right now down 74 on the Dow. That is a drop of 0.1%. Back to work Monday. Tech's tumbling. Right now we have the NASDAQ 100 index down 1%. NASDAQ Composite Index down 0.7%. All of this with the stocks hit hard. The Philadelphia Stock Exchange Semiconductor Index down now by 2.9%. The VIX, though, just above 16. Your 10-year 4.59% with a 2-year currently yielding 4.24%. Spot gold is down $105 the ounce at $4,014 on the precious metal. That is a drop of 2.6%. West Texas Intermediate crude up 4.3% now, 74.47 a barrel. Brent, the global benchmark, still below 80 at 79.21. Barrel of Brent up now by just about 0.4%. As for the overall market backdrop, heading into those big bank earnings tomorrow morning, Stuart Kaiser is head of U.S. equity trading at Citigroup Global Markets, and he was the guest this morning on Surveillance.
Year to date, the story's been earnings. I do think we're seeing people, and I hate to say this, kind of rotating into Mag 7 or using Mag 7 as a catch-up trade, which seems almost comical if you think about how those things have traded over the last 12 to 18 months. But yeah, estimate momentum. It's all about earnings this year.
Stuart Kaiser of Citigroup Global Markets. Now, sources tell Bloomberg a group of about a dozen states is poised to sue to block the Paramount Skydance deal from happening. Paramount, of course, buying Warner Brothers Discovery. Those sources say the antitrust lawsuit set to be filed in federal court. Paramount Skydance shares now, they are trading higher. We got Paramount Skydance up by just about 2.8%. Warner Brothers Discovery up by 0.9%. Recapping, oil is surging, stocks lower, S&P down by 0.3%. I'm Charlie Pellet. Scarlett Fu and Paul, no garden leave Sweeney. Nope. That, my friends, is a Bloomberg business. I can't believe that story, Paul Sweeney.
Keep working, never stop.
And
working.
Nobody ever came after you once.
Come after me.
And he didn't. There you go. And he didn't care.
Exactly. All right, very good, Charlie. Appreciate that. As Charlie was just reporting, we've got some red on the screen here. Let's take a look at some of the stocks that are on the move today. We can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at today?
Yes, definitely a lot of red and green. We can start off with Trico, that's ticker TCBK, currently jumping about 11% to hit a record high. And that's after First Hawaiian agreed to acquire the bank for about $63 per share. The deal will expand First Hawaiian's footprint into the mainland through Trico's Northern and Central California branches. And worth noting that upon closure, the bank is expected to have about $34 billion of assets together and be the 6th largest bank headquartered in the Western U.S.
All right, so some M&A in the banking sector. Let's move on to the tech sector.
Yes, SK Hynix, that's ticker SKHY. Those American depository shares are falling about 6% right now, though earlier dropping as much as 9%. And that's after an AI-fueled stock rout in South Korea, really underscoring investor concerns that the AI boom may be overextended. Traders are also pointing to fears of lower than expected earnings for the company after a report from Korea Investment and Securities predicts that SK Hynix's operating profit for the latest quarter may trail expectations. Others also told Bloomberg that today's weakness reflects a typical sell the news reaction and profit taking. Still worth noting, though, those ARs continue to trade higher than the $149 that it priced at last week.
One more. What do you got for us?
Humana, that's ticker HUM, currently gaining about 3.8%, and that's after Wells Fargo upgraded the health insurer to overweight from equal weight on moderating cost trends in their Medicare Advantage plans. That analyst also saying that these trends significantly decrease earnings risk and could also mean margins will make meaningful progress next year. Worth noting that their peer, United Health, will be reporting earnings on Thursday, so we'll definitely have a slight idea there and a much firmer idea by the end of the month as well.
All right, good stuff, Avalon. Thank you so much. Avalon Purnell is our Bloomberg News equities reporter, and for more conversations like this, be sure to subscribe to our Stock Movers reports. These are 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, in today's trade, we are seeing declines in equities, and energy stocks are the best performers. They're defying the declines in the broader market as oil prices rise once again. WTI now approaching $75 a barrel, Brent approaching $80 a barrel. And this, as it appears the Strait of Hormuz is not open for business, at least the way that it was before the war began. And now both sides are talking about tolls and costs imposed on shippers. Let's bring in Salih Yilmaz. He's our Bloomberg Intelligence senior oil analyst, joining us right now from Dubai. Salih, give us a state of play right now when it comes to the Strait of Hormuz. Is it open? Is it not open? And are shippers paying tolls right now?
Uh-oh, technical difficulties coming out of
Oh, maybe he's on
London,
mute right now.
England. So,
Hold on, we're going to see if we can figure that out. But yeah,
you can make the argument that it may never really be fully open here unless you get something really strongly worded.
Salih, let's go back to you. I think we have your audio working.
Okay, if you can hear me now.
Yes.
Yeah, sorry about that. No, I was saying it's a good question, and we've been trying to figure that out. I think it never really was open during this period in the way that it was before the conflict. But during the ceasefire, there was clearly a trickle of movement. And you can argue that even a trickle of movement when it's just a couple of vessels, but some of these big VLCCs that can carry up to 2 million barrels per day each, that was enough to kind of ease that tightness in the oil market, and that certainly helped. But in the last few days, the data that we can see shows that the movement is slowing down once again. That data that's available to us is useful, but usually doesn't give us the full picture because some of these vessels can be taking a chance, can be turning off their GPS, and can still be moving through the Strait of Hormuz. So my view is that there is some movement, less than last week, but definitely not as much as before the war.
All the other countries that move commodities, principally energy, throughout that strait, I can't imagine they want to sign up to fees or taxes from anybody. What are we hearing from them?
Absolutely. I mean, until today, you know, the conversation was very much around, is Iran going to be charging a toll or a fee? And then I think, namely the US, many other Western countries, and many vessel owners were generally against that idea. But today, President Trump making the suggestion that, the US might start charging fees for these cargoes, I would suspect that many other countries and many other ship owners, vessel owners would be against that idea as well. So, I mean, these were headlines from just 20 minutes ago or so. So we don't know what the reaction will be, but I suspect generally these vessel owners would be against the idea of paying any sort of fees either there or in any other kind of choke point that is responsible for movements of a lot of these important commodities.
So the rise we're seeing in oil prices feels very much like a knee-jerk reaction to all these headlines. What does the oil picture look like when it comes to supply and demand right now?
Yeah, I mean, I think supply is still very much constrained until we get back to the pre-war levels of flows through the Strait of Hormuz. It will continue to be. I think we've had a lot of adjustment mechanisms in the oil market that certainly helped. The bypass pipelines around the strait in the UAE and Saudi Arabia, some demand destruction, especially in China. But also, I mean, you can argue these are not maybe so temporary, but we had some adjustment mechanisms like strategic reserves, using of commercial inventories, which are a lot more of temporary buffers. So, on the supply side, we are on a bit of a clock because we don't have infinite amount of inventories. On the demand side, we've had some demand adjustments, some demand destruction, if you will, especially in China, which has started importing a lot less oil than it used to. But I would say, as things stand, the market is relatively tight, and as flows through the Strait of Hormuz gets constrained, I think that tightness will return, and this is exactly what we're seeing in oil prices with Brent, testing $80 a barrel again today.
Boy, if I were a buyer of Mideast oil coming through that strait, I'd have to just assume going forward that's not going to be available to me, or at least in the size that I've become accustomed to, because I'm not sure how you ever really securitize that strait there. Are you seeing China, other Asian buyers looking for alternatives that might be a longer-term alternative?
I think so. And I mean, anecdotally, we did a roadshow a couple of months ago in Asia, and, we were in China, we were in Japan, we were in Singapore. And a lot of our conversations kind of gave me the sense that a lot of these countries are already thinking about diversification of the source of their oil, their LNG. And, we've just published a report that we called Peak Hormuz last week. It's a long report. And there we're arguing that, this episode may mark the peak dependence on Hormuz. So I think on the consumer side, a lot of these consuming nations that rely on Hormuz, that rely on the fossil fuels from this region, will start to diversify away as much as possible. I mean, I don't think they can fully diversify away. Yep. And on the producer side, I think, our report argues that a lot of the countries in the Gulf will try to build more bypass pipelines, will do whatever they can to reduce their reliance on Hormuz.
All right, good stuff, Salih. Thank you so much. Salih Yilmaz joining us from Dubai. He's our senior oil analyst on location in the Middle East. We want to go now to our colleagues at Bloomberg Technology. Our Ed Ludlow is speaking right now with Brendan Carr. He's the commissioner of the FCC, the chairman, and he joins us now to discuss the latest FCC actions in the wireless market, especially as it relates to FCC approving deal flow, satellite connectivity, and FCC spectrum auctions. Let's listen in.
Good question. So at the FCC and frankly, all across the Trump administration, we're focused on two things. One, we want to make sure that consumers are right away feeling a difference in their life. And right now we're seeing that on the connectivity front with speeds are up, prices are down, competition is intensifying. But the second piece goes to your question, which is what are the fundamental regulatory changes we can do that are going to pay off for consumers in the long run? And a lot of that has to do with the emerging space economy. To your point, we're seeing many, many more things go into orbit, whether it's all of this new generation of low Earth orbit satellites or data centers. And so the FCC has a role to play, one, to make sure that everyone has the spectrum access they need in order to launch those. But even things like orbital debris end up hanging off of a lot of the FCC's authorizations. Right. And of course, that's in conjunction with a broader group of regulators as well.
When SpaceX or another player comes to the FCC seeking approval to deploy data centers in the form factor of a satellite into orbit, what are the considerations by which the FCC decides approval or to block approval?
Well, the first thing for us is we want to go much more quickly. You know, when I took over, we launched what we call a Build America agenda, and a key piece of that is boosting America's space economy. And it used to be when we would get satellite applications that would come in, we would get, you know, 1 or 2 or 3 a year, and we would do individualized, bespoke, custom reviews. And what we're fundamentally changing is to an assembly line mindset. In fact, we're going to vote this month to change how we run our Space Bureau operations. So it'll be objective criteria, and if you hit those, you should expect much faster FCC approvals. In fact, we've cut the backlog of FCC approvals down by about half. We're moving much faster, and so we're giving people objective criteria to hit. That way we can end up improving, you know, thousands or hundreds of thousands of applications, whereas before our processes would take us, you know, months or years to do a small handful of that.
Away from orbital data centers, a big focus right now is the wireless networks in the context of space. Prior iterations of the SEC debated and looked at a 4th national wireless network with EchoStar, right? And I think I'm right in saying, Chairman Carr, you were critical of prior approaches to that future market. What has happened in the interim is that the FCC has handed some of those same licenses to SpaceX for Starlink. What do we interpret through that mechanism?
Well, you're right. There was a mindset several years ago that said we have to have 4 separate, standalone mobile wireless providers, let alone many other competitors that we have in the broader connectivity market. And people said that if you didn't have 4, that prices would rise for consumers or speeds would slow down. And we haven't seen that, obviously, at all. We've completed the process of facilitating Dish EchoStar effectively exiting the market when it comes to mobile wireless, and consumers continue to benefit from a lot of price competition. So it's a great time for consumers, but it's also a really good time for companies because we're taking a lot of the costs, unnecessary costs, out of the system, whether it's permitting reform, whether it's allowing providers to retire these old copper networks that they had to subsidize in addition to their new networks. And so this old view of having to have 4 individual mobile wireless providers or the sky would fall, we didn't buy, and obviously I think the evidence is coming in to show that this new theory is correct.
You told Bloomberg last week that you have not had substantial conversations with SpaceX about their wireless ambitions, substantial conversations. So Chairman Carr just asked if you had any conversations of any degree of substance with SpaceX about it.
No, I don't think I've had any of much. I guess if I hadn't used substantial, maybe I would have avoided the follow-on question. But I don't recall having any conversations with them about that. Look, I do think one of the things we're really excited about is this new emerging trend towards direct-to-cell technology, where you can go straight from one of these low Earth orbit satellites right to a handset. Obviously, Starlink is doing that. We've facilitated them getting some spectrum to do it. But also, Amazon is looking to do it. AST Space Mobile is looking to do it. So we want every single competitor in this sector to do well.
Overall, you know, the FCC's done a quite a large body of work to come up with some kind of regulatory framework, I think, right, for direct-to-device. The accusation is of maybe favoritism towards SpaceX. You've also denied several of their requests. How are you going about building out that framework?
Yeah, a couple things. On direct-to-cell in particular, you know, our view was to have 2 or 3 facilities-based providers in that segment so that the United States could lead the world in that. And that's something I think it's really important to President Trump, is that U.S. lead when it comes to these new emerging technologies, and we are in really good position to do that. There are always lots of stories about FCC taking action to benefit Starlink or SpaceX, and I get it. It probably results in more clicks. But the reality is we are, you know, uplifting every single operator or business that's in the space economy. We're taking actions that benefit Amazon Leo, that benefit many smaller providers as well. So Reflect Orbit, Logos, AST Space Mobile, of course, SpaceX as well. So there's many companies in this sector that are benefiting from our new mindset at the FCC, which is to go faster with these approvals. We don't want to get stuck navel-gazing.
We're live on Bloomberg Television and on Bloomberg Radio. This is Bloomberg Tech, speaking with FCC Chairman Brendan Carr. There's also a technical consideration about spectrum, which is Why is it important, Chairman, for a direct-to-device provider to have exclusive spectrum use in and amongst everything else that's happening up there?
Well, it's a very efficient way to operate, to have your own spectrum. And so we've been very open to spectrum deals. On the one hand, we've had about $130 billion worth of deal flow go through the FCC, this Trump administration, not just mobile wireless, but across the board. And we're moving hard on spectrum as well, and not just direct to cell. We're voting this month to create 160 megahertz of new spectrum for mid-band offerings in what's called the C-band. And it's effectively going to create what we're referring to as a super band of 440 megahertz wide channel for mid-band spectrum for 5G, for 6G. But you're right on the satellite side as well. So SpaceX has access to, I think it's 65 megahertz of spectrum that they can use for direct to cell. Amazon just announced that they are looking to purchase Globalstar, which also has spectrum that could be used for direct-to-cell technology. So you see a lot of the players in this space, AST as well, that are looking to obtain their own spectrum rights so they can stand alone and offer that service in a complement to existing connectivity services.
Chairman Carr, just before the show started, Bloomberg broke some news in a story that a group of about a dozen states is poised to sue to block the Paramount Skydance Warner Brothers deal. I think there had been prior reporting that various attorneys across those states have been preparing for that anyway. I know that the FCC kind of has a nominal role to look at the foreign financing of such a deal, but I hope you appreciate I have to ask you about what the latest is there and your reaction to a statewide antitrust suit.
Well, it's hard to see a real legitimate antitrust action, but of course, I leave it to the antitrust experts to weigh in on this. I did think it was interesting that there was a statement, at least attributed to the California Attorney General, that said that they would not sue if Paramount agreed to spin off CNN. It's hard to conceive of a competition or antitrust theory that takes you all the way up to the point where owning or not owning CNN as part of that broader group is a legitimate line that antitrust or competition law would draw. For our part, we do have a piece of this with respect to some of the foreign investment, and we're running a standard process on that, and we haven't made a final decision there yet.
In recent interviews, you've also been asked, of course, about Disney. And you've said that you've not made a decision on whether to pull Disney's broadcast licenses over various diversity and inclusion practices. Again, remind us of the FCC's remit in that area, but what it would take for you to look at a potential action.
Yeah, with respect to Disney in particular, the FCC has three proceedings that are going on, or sort of three buckets of issues. One, starting all the way back in March of 2025, I wrote a letter to Disney leadership raising concerns about some of their practices, including what we call invidious forms of DEI discrimination, where there's potential evidence indicating that they may have been discriminating with respect to pay or compensation or workplace opportunities based on race, gender, or protected characteristics. There's a role for the FCC there. We have particular rules on EEO policies and discrimination. So we've been looking into that for quite a while. In fact, we've been doing some letters of inquiry, our versions of subpoena, and frankly, the view was that Disney was being disingenuous in the way it was responding to the FCC's inquiries. And so we took the next step in our enforcement abilities, which was we called in all of Disney's broadcast licenses for early renewal. So Disney has now applied, and they have to demonstrate that they've been operating in the public interest. There have been petitions to deny the renewal of those Disney stations. And so the FCC is looking at all of that very carefully right now. To your point, we've not made the final decision. But at this point, Disney is attempting to demonstrate that it should get those licenses renewed, and we'll ultimately see what the record shows. We also have obviously a separate issue going on with Disney right now with respect to The View and their claims of The View being a bona fide news program. But we have the DEI, the license renewal, and The View proceeding going. But more broadly, we're trying to hold all broadcasters accountable to their public interest standard. We have issued similar actions with respect to a number of other broadcasters. I think for years, people took the view that broadcast TV should be treated just like cable or a podcast or a newspaper, but that's not what the Communications Act in Congress said. And so we want to make sure that all broadcasters are, in fact, living up to their public interest obligations.
FCC Chairman Brendan Carr joining us from our DC studio. Thank you very much.
All right, that was FCC Chair Brendan Carr speaking with Bloomberg Tech anchor Ed Ludlow, getting the latest on the purview and the policymaking coming out of the FCC. Let's get a little bit of a check here on these markets, a little bit of a reset, and we'll get a Bloomberg Business Flash with Charlie Pellet.
All right, thank you very much, Paul Sweeney. The chairman mentioned Disney. Disney shares up 1.6% right now, 97.14. The Dow, the S&P, NASDAQ, all in the red. And this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. As I mentioned, stocks lower. The standoff between the U.S. and Iran lifting oil prices. That is dragging down stocks and bonds. Also, questions about a potential disruption in energy that has crude advancing. And let's begin there with West Texas Intermediate, 74.72 a barrel, up 4.6%. Barrel of Brent still below 80 at 79.45. Brent crude up by 4.5%. Right now, we do have a sell-off in chip makers underway. S&P down 26, drop there of 0.3%. The NASDAQ 100 index down 1.1%. NASDAQ Composite Index down 0.8%. Dow Industrials down 0.3%. And the stocks, the Philadelphia Stock Exchange Semiconductor Index down now by 3%. 10-year 4.59% with the 2-year 4.24%. Gold down 2.6%. 4,013 the ounce on gold. West Texas Intermediate crude, as I mentioned, up by 4.5%, 74.64 a barrel. Recapping, S&P down 0.4%. Scarlett and Paul, that is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. We have some breaking news. An appeals court has said that the maker of Tylenol, Kenvue, must face autism lawsuits. We are looking at Kenvue shares down 1% in trading today. They were already lower before this headline crossed, but just another risk point here for shareholders of Kenvue, the maker of Tylenol. We have a busy week in the markets over the next few days. Today feels relatively quiet compared to what we're going to be getting, Paul. We've got the big banks reporting earnings, 5 of them tomorrow morning, so you're going to be busy on surveillance. Well. We've got June CPI, and we've got Kevin Warsh testifying before the House Financial Services Committee, his first time doing so. All Fed chairs are required by law to testify twice a year. And the following day, we get earnings from Morgan Stanley, ASML, the European semiconductor equipment maker. We get June PPI. We get day 2 of Kevin Warsh's testimony. And then retail sales on Thursday. And finally, on Friday, the last day before the FOMC blackout begins in the lead up to their next policy meeting. So Megan Horniman is CIO at Verdance Capital Advisors. She joins us right now from Hunt Valley, Maryland, to give us a sense of what she is going to be looking for and listening for this week. Megan, I just went through a laundry list of items here for investors to focus on in the middle of July. Which do you think has the potential to be the biggest driver of market action?
I think starting this week, it's going to be the CPI report, and then obviously Kevin Warsh's commentary to Congress. But then in the next couple of weeks, it's going to be all about earnings. So I know that you mentioned the banks kick off tomorrow, but the bulk of those earnings, those hyperscalers, some of the energy companies, these that are supposed to be leading the earnings growth, they're in a couple weeks' time. So there is this risk as we get into the earnings season that the expectations are just very optimistic coming into the earnings season.
So what is the bar here for this earnings season, Megan? Because, boy, the first quarter earnings were so strong, really blew estimates away here, and that arguably is what's been propelling the stock market this year. How do you think about the expectations for second quarter?
I don't think that they're pricing in some of those, the inflation sticking around longer than anyone had anticipated, the war going on longer than anyone had anticipated, and now the very hawkish tilt that we have with the Federal Reserve. So there's been a lot of changing dynamics from an economic, from an interest rate perspective, and yet when you see how earnings estimates have progressed through this quarter for the second quarter earnings season, you've seen them being upgraded, and that's just, it's very difficult to us to justify that you can see this consistent upgrade to earnings estimates, not just for the quarter, but for the year, given all of these looming risks that we have out there.
For earnings season, I feel like the reaction to the results will be pretty binary as well as asymmetric. Beats are kind of the baseline, especially for the AI-related tech names that will be reporting, and misses will be punished without mercy. Do you think that'll be the case for sectors outside of technology and tech adjacent plays?
I do think it's going to be that for outside of technology, but within technology, there can be a situation where they actually beat on these heightened expectations, but maybe disappoint investors who continue to reward these companies for all this AI spending. Eventually, we can't really pinpoint when that will be, but investors are going to want to see some true monetization from this, and we're not seeing that yet. I don't know if it is going to be this quarter, but I do think that there's just so much optimism priced into these numbers. You're talking about 20+% for every quarter this year for earnings growth. That's just very, very optimistic. They can beat that, they can meet that, but yet investors can get disappointed, and we've seen sometimes where they sell on that beat.
How about in the software space, particularly the application software names, even software as a service names? Boy, they've been just beaten down pretty dramatically, sold off 30-35% across the board. Even Microsoft is off 20% year to date. What's your view on software broadly defined?
I think there is going to be some winners and losers out of this when we all shake out the AI and what this has going forward. But when it comes to earnings season, investors are going to want to see that they were going to be relevant in the next few years. So what will that mean? Will that mean some investments into their current platforms, their software? Yes, I think that they will be looking for some of that. But I think when you look at this, we just don't know exactly at this point what may be those winners and losers, but there definitely will be some losers in that software space.
This is something Paul had asked one of our previous guests in the last hour, and I'm curious how you see it shaking out. The sentiment right now on CapEx spend from the big hyperscalers. Do investors want to see them increase spending, decrease spending? I mean, once upon a time, it seemed like increasing spending was positive until it wasn't anymore, and then investors would punish these names. I'm just wondering, how fragile is sentiment? How much conviction is there in the confidence that these hyperscalers will get a return on their investment?
I think we're in very iffy situation there when it comes to that. I don't think investors are going to keep rewarding them if they continue to come out with this outsized spending, because they haven't seen that, and really all they've seen is their free cash flow continue to be dwindled down. I don't think investors are going to have that appetite for indefinitely for this just ongoing CapEx spend.
Megan, how about in the bond market here and fixed income market here? Boy, you can sit in a 2-year treasury and get 4.25%. That seems like a nice little living there. Do I need to take credit risk above and beyond that?
No, I don't think so. I understand high yield and even investment grade bonds have done very well this year. And when you look at spreads as tight as they are, it's just not offering you that reward for the extra risk. I think you could stick in a very intermediate to short duration in your fixed income exposure. Avoid those long-term bonds. Yeah, like you mentioned, the 2 years giving you a nice little yield. Even you can go up to the 5-year, give you a nice little yield. But we wouldn't be investing in the long-term part of the Treasury curve, and we wouldn't be reaching for yield.
So once the big tech companies announce results, I mean, what we've seen in the past is when banks announce results, they then go to the bond market and raise money. Do you expect the hyperscalers to tap the debt markets after their earnings, or have they done enough of that already?
I think they've done enough of that for now. I don't think that investors are going to want to see that they're just borrowing more, especially with the risk of higher interest rates. I don't know that they're going to go in and announce that they're going to be tapping much more of the bond markets.
Megan, outside of the AI story, which seems to dominate all conversation these days, what are some of the areas that either screen well for you in terms of a sector, industry sector, or maybe even a factor?
Well, I think you have to look beyond the large cap space. I know that there's so much focus on large cap equities, technology. You have to look beyond large cap, because even if you look just from an investing style, your value and growth are both trading at a premium, and earnings expectations are very high for these names. If you look into some of the small and mid cap space, I think that there is room that from a valuation perspective, they're more attractive than the large cap space. There is some risk there, so selectivity is very important, because if the Fed does have to raise interest rates, that could threaten them. But I do think that there's opportunity when you see weakness in those areas to make sure you have exposure there.
All right, Megan, really appreciate your joining us today. Megan Horniman is Chief Investment Officer at Verdance Capital Advisors, joining us by Zoom from Maryland. And as we look ahead to what else is happening this week, the big banks will be reporting, and Bloomberg reporting indicates that these Wall Street banks will pull in almost $39 billion in trading revenue for the second quarter.
Yeah.
Pretty incredible.
It was such an active quarter from equity new issuance, fixed income new issuance, M&A advisory work. It's every time you turned around, there's something crossing the tape, it seemed like.
Yeah, but will it move the broader market? Probably not, because it's all about hyperscalers and how much they plan to spend over the next coming years.
Right, exactly right. And again, it's time, I guess what the market's telling us is for a lot of these companies to show returns on that investment. So
absolutely.
That's where we are.
So coming up next, we're going to speak with Herman Chan. He's the senior analyst covering U.S. banks for Bloomberg Intelligence as we get ready for 5 big banks to report earnings on Tuesday. JP Morgan, Citigroup, Wells Fargo, Bank of America, Goldman Sachs, all of that coming up tomorrow. This is Bloomberg Intelligence.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. A federal appeals court has revived lawsuits that claim Kenvue hid alleged risks that Tylenol could cause autism in children whose mothers took the over-the-counter pain medication while pregnant. It's a controversy that has roiled the medical community. Right now, we're looking at Kenvue shares, KVUE on the ticker. They are down now by 0.9%. It is a down Monday with the Dow, the S&P, NASDAQ all declining. Oil is surging. Right now, we have the S&P down 28, 75.47 where we stand, down 0.3%. Dow Industrials down 116, drop there of 0.2%. NASDAQ Composite down 0.9%. NASDAQ 100 index down 1.2%. All of this with the SOX, the Philadelphia Stock Exchange's semiconductor index, down now by 3.2%. The VIX holding just above 16. The 10-year 4.59%, with the 2-year 4.24%. Gold down $105 the ounce, holding above 4,000 now. 4,014 on the precious metal, down by 2.5%. Crude, big story today. WTI up 4.5%, 74.59 a barrel. Brent 79.34. That is a gain of 4.4%. Crude, specifically gasoline, certainly affects consumers. Also, though, crude oil affects airlines. Delta CEO Ed Bastian says the airline will do just fine with higher oil prices, and he was interviewed this morning right here on Bloomberg.
Our business model is geared towards a higher-end consumer, so our consumer has the ability to sustain this level. In fact, we saw it in the quarter. We made at 9% operating margin with fuel prices much higher than where they are in the existing landscape.
Delta CEO Ed Bastian, you can watch the full conversation on YouTube on the Bloomberg podcast channel. Airline stocks lower as oil moves higher. Delta down 0.9%. UAL down 2.3%. American Airlines down 2.5%. Recapping, S&P now lower by 0.4%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, Scarlett and Paul. That is a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet. This is Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and Charlie Pellet. And we are on the cusp of the start of earnings season. I mean, there was earnings coming in last week, and of course there are earnings today, but really when the big banks report, yes, it gets serious. So we've got 5 banks reporting earnings tomorrow morning, so Paul is going to have his work cut out for him on surveillance. JP Morgan, Citigroup, Wells Fargo, Bank of America, Goldman Sachs, all coming out before the market opens. So of course we need to get a briefing from Herman Chan. He is senior analyst covering U.S. banks for Bloomberg Intelligence. And Herman, before we even get to the results and what the banks are likely to say, how unusual is it to have 5 big banks reporting on the same day, give or take 3 hours?
Yeah, it's really interesting because usually earnings season for banks is truncated into a 1-week span. This time around in the second quarter, it'll be in a 1-day span. And we'll have dueling earnings calls with JP Morgan and Bank of America scheduling their calls at 8:30 in the morning at the same time. So it'll make things a bit more interesting, much more difficult. It's like playing in like a hard mode in a video game. So we'll be on our toes for this one.
All right, here's the dumb question. Why 5 major mega banks on one day? It seems irresponsible to me.
It seems like something could have been done to maybe spread it around a bit more. I will say that banks like B of A and JP Morgan do put out a press release a year prior, putting a tent pole into the earnings calendar for the subsequent quarters of their earnings calls. That being said, we have dueling calls and we'll just have to work through it.
And you're going to be in the office bright and early. What time?
Yes, I'll be in at 5:30, and then I'm scheduled for radio at 6:10. So I'll be trying to keep my seat warm, getting my head right, get some coffee and caffeine in me before the fun starts and the fireworks are up.
So with 5 big banks reporting earnings, there's a risk that something gets lost in this flood of data that comes through.
That's right.
What's going to be the theme that kind of ties all these big banks together, and where could you see the most diversion between the different banks?
Yeah, that's right. Generally speaking, the investors and the analyst community are expecting really strong results, 20-some-odd% growth in EPS year over year. That's really driven by trading results, investment banking, and on the traditional lending side of things. So what we're looking for is some sustainability or discussions of sustainability on the trading side, particularly in equity trading, and what they think about the backlog on the capital market side in M&A and equity issuance. So those are the things we're looking for. The areas of differentiation probably is on the net interest margin side and deposit pricing and deposit costs, given the fact that we have really robust lending opportunities within the industry. How they fund that loan growth is going to be a question for the banks going forward.
So don't they have to, speaking of funding the loan growth, don't they have to pay more for deposits? How's that playing out these days?
That's right. So there is a pretty intense competition for deposits. I'm sure everybody listening, and you probably get these mailers coming into your mailbox about you have $500 in cash if you move your checking account. Those types of things are happening more frequently today, and I think that just reflects the lending competition, the lending opportunities, and the deposit competition that we see today.
Do you think private credit is going to be a problem for these big banks? I mean, JP Morgan CEO Jamie Dimon waded into the whole private credit debate last year when he said that, when there's one cockroach, there's more to come. And we've seen weakness in private credit. We've seen investors make redemption requests, and some of those redemptions have been capped as they're supposed to be, but it hasn't blown up into the big systemic problem that a lot of people may have worried that it would.
That's right. Private credit is something that the industry continues to monitor. We're looking at it every quarter in terms of their disclosures on private credit exposure. Really, the focus is on sort of like the AI adjacent portfolio companies that private credit owns. What really is going to happen, and there's really no crystal ball in terms of some of these tech firms that could be displaced by AI, but that's something that a lot of the investment community is looking at. Thus far, it seems like things are good, and the bank management teams in the first quarter really stressed that they like their credit underwriting, they like their exposures, they're not seeing some of the issues. The issues that have popped up so far is really related to fraud, like in First Brands and Tricolor that happened last year. So absence of those fraud-related issues, we haven't really seen the credit deterioration within the private credit exposures at the large banks.
How about loan origination? Are these guys, are they making loans? If I want to go start a business, build a building, I mean, is my local bank going to be there for me?
Yeah, so that's one of the positives heading into the second quarter, where you're seeing a lot of really good loan demand from your traditional borrowers, your traditional Main Street borrowers, from small business loans, mid corporates, large corporates, and that really reflects borrower sentiment that's been downtrodden over the past year or so, given the fact that these companies and these managements have dealt with tariffs, geopolitical concerns, economic uncertainty. At this stage, it seems like the borrowers are really getting more aggressive and saying, okay, we know the lay of the land now. We're comfortable with where things stand, and let's just dive into CapEx. Let's build that extra plans. Let's borrow some more, and there's opportunity there for the banks to do that.
Paul's been talking about the business that he's going to open up for a while. Most recently, it was being a wildcatter.
Yeah.
Yeah, in the Permian Basin.
Yep. Go down there. I mean, got oil back higher, man. I'm going to pack up the truck and head down. Let's go.
All right, he's ready for that. Herman Chan, thank you so much. Herman Chan, he's our senior analyst covering U.S. banks for Bloomberg Intelligence. As we get ready for the big banks to report results tomorrow morning, it's going to start bright and early with JP Morgan, Citigroup, Wells Fargo, Bank of America, Goldman Sachs, all reporting. And then afterwards, we're going to get the June CPI as well. So a lot of catalysts for the market tomorrow morning. Not to mention Kevin Warsh testifying.
That's right, which we will carry, I'm assuming.
Yes, tomorrow on Bloomberg Intelligence. He begins speaking at 10 a.m. before the House Financial Services Committee. He will be taking questions as well. And this is really the first chance for lawmakers to, after he had been, of course, approved for confirmation, to really speak with him as he's the active Fed chair.
Yep, absolutely. All right, Herman Chan, thank you so much for that. We appreciate it. We'll be on top of the banks for sure. S&P's down 32 points. The Dow's down about 110. The NASDAQ, 265 to the downside. That's 1%. This is good.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. When you think about the charging, the EV business, I think of it as still an industry that's in its infancy, still growing, trying to add capacity. So when I read this, it kind of surprised me. There has been an increasing number of charging network acquisitions in Europe. Again, I wasn't expecting to see that from this industry at this stage of its life cycle. Ryan Fisher, EV charging team leader for Bloomberg BNEF, joins us from London. So, Ryan, we're seeing some consolidation in Europe of the charging business. What's going on there?
Yeah, so thanks, Paul. What we've started to see is a numerous amount of acquisitions that you've kind of got well-funded players, and then you've got a load of smaller businesses who are trying to stay afloat, and they're starting to be acquired. You've also seen some mergers. There's a merger just happened last week between a couple of the biggest providers, Mer and Evini in largely Scandinavia, but they've got some German assets, I think, that are also going to be transferred in that deal, which makes them the biggest company. So more and more of them thinking about scale as an opportunity. And obviously, you said kind of a surprise, maybe a difference between what you're seeing in Europe and what you're seeing in the US within these markets as well.
So give us a sense of kind of where the charging network in Europe, I don't know if you could call it Europe writ large or if it's country by country, but again, I would say here in the US, I mean, just barely a blip on the screen. Talk to us about in your world over in Europe.
Yeah. So there's hundreds of thousands of these things been installed, and often the question is like, oh, I can't buy an EV, there's no chargers. Well, actually, they've been installed at such a pace that utilization has been a bit of a problem for some of these companies, and then the revenues, because there's just so many chargers for people to choose. So then it becomes like if you're buying a network, like what's actually considered a good network, and some of them have more chargers at the site, some of them have these really fast power chargers, and that makes a big difference to like whether you want to buy it, as well as fundamentally, do they actually own the land? And what's the right to expand, and have you got good grid connections? And all of this is coming into play when somebody's fundamentally assessing, like, do I want to buy this company or not? When you think about the US, it's just so heavily dominated by Tesla. And I think then you've also got all of the policy environment, which has affected people's confidence to roll things out. They've got rid of the NEVI grants. Obviously, they've got rid of the grants for the actual buying of the vehicles as well. But we are seeing pockets of companies raising money and rolling out and having a bit more interest in preparation for what obviously is a growing fleet. Like sales might be consistent, but the actual fleet of electric vehicles is therefore still growing, and it's somewhat monopolistic. I alluded to a point about Tesla, and I'll just remake that one. So on market share, that they own a big portion of the market. If you want to go to a fast charger, you're probably going to turn up at a Tesla in the US. But weirdly, that actually is having some consequences for the market, because a lot of the cars are changing to new 800-volt platforms. And this means that you can get super fast charging rates that can like get you like 5-10 minutes and you're on the move. Whereas the Tesla chargers don't have that higher voltage availability. They've sort of announced it with these V4 kind of boxes, but actually they've only installed like 10 sites with them. So in a weird way, if you're buying one of these fancy EVs in the US, the kind of new platforms, the BMWs and things like that, you can't actually turn up at the Tesla site and get the advertised charging power that they were saying. So Tesla has been the leader, but in some ways, having such market share and not having the latest technology is a bit of a problem.
Yeah, I mean, there's one of many here in the U.S., as you were mentioning here. But how about in Europe? I've heard that, or I've seen that some of the fuel distribution centers, the gas stations, the BPs, the Shells of the world, how are they adapting to EVs and charging?
Yeah, they were both pretty big, as they were in everything energy transition, and I'd say they pulled back. You've seen that across all energy transition things for many of these oil majors. I'd say they still have activities, though. Total is doing a lot in the energy transition at large, but also pretty active. The same as BP and Shell, and they're more focused on forecourts, but these companies have quite a big set of offerings for people in the fleet sector. So they want to keep that so you can I don't know, fill up your company's vehicles with petrol and diesel, but you can fill them up with electricity as well. So they've been involved in the sector pretty heavily, but it can be a little bit difficult. Quite a lot of sites might be franchised across the network, so how do you convert them? And then fundamentally, there's just quite a lot of competition. Before, you could only fill up your vehicle at a fuel station. Now you can fill up your vehicle if you've got an electric one at home, so that cuts the market. Then you've got all of these like supermarkets and stuff coming in. So in the US, I think Walmart has rolled out pretty heavily. A good example in the UK is Sainsbury's, which is a pretty big supermarket over here. And what they've managed to do is say, okay, something like 25% of EVs that turn up are now actually charging on the Sainsbury's sites. And they offer pretty cheap charging. So these oil and gas majors have got a lot of competition. And the competition, like the supermarkets, is offering quite cheap charging as well. It's a big threat, I would say, for some of those, even if they are still involved.
Interesting. All right, so two different worlds, the U.S. and rest of world, it seems like. Ryan Fisher, thanks so much. Appreciate it. Ryan is the EV charging team leader. That's how big the whole charging business is in the rest of the world when we have a team leader for the EV charging team. He works at the Bloomberg BNEF, the New Energy Finance people. They're actually analyzing and collating all the data on this energy transfer as we move from fossil fuels to new energy, and that is big outside of the U.S., including electric vehicles. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. We got the S&P down 37 points. That's a 0.5%. The Nasdaq's off about 280 points. That's about 1% here. 10-year Treasury yields up 3 basis points. We're now at 4.59%. How about that? Higher for longer, for sure. WTI crude oil up 4.8%. That's $3.40, just below $75 a barrel. More Bloomberg News coming up right now.
From ABC News, I'm Michelle Franzen. Escalations between the U.S. and Iran leading to more uncertainty in the Strait of Hormuz. After Iran announced the critical shipping waterway was once again closed off, President Trump is responding.
President Trump said Monday he was reinstating the U.S. Navy blockade near the Strait of Hormuz and also claimed the U.S. would charge a 20% toll on all cargo shipped through that waterway, saying it was a, quote, matter of fairness. He didn't say how that would work or why the U.S. had the right to do that in an international waterway that he himself has said should be free for commercial travel. The president earlier today told Fox News the U.S. would take control of the Strait of Hormuz and get paid for protecting it. Karen Travers, ABC News, the White House.
President Trump says he wants the sister of the late Senator Lindsey Graham, Darlene, to become his temporary replacement. The 71-year-old who died suddenly this past weekend is being remembered. South Carolina's governor expected to announce his pick to finish out Graham's term later today. ABC's Jay O'Brien has more on how he's being remembered on Capitol Hill.
His Capitol Hill colleagues remembering their friend. Even many Democrats, from former President Joe Biden to Delaware Senator Chris Coons, who dined with Graham on his 71st birthday.
The office of the GOP Senator Mitch McConnell released a photo of the former Senate leader and his wife, along with a statement from McConnell saying he fell last month, was briefly unconscious, and then was treated for pneumonia. He's now at a rehab facility. A string of severe summer storms creating states of emergency from the Midwest to Northeast.
At least one person is dead in Missouri after as much as a foot of rain fell in just hours early Friday. Houses surrounded by water. More than 350 people rescued in Missouri alone. In Philadelphia, the National Weather Service confirming at least 4 microbursts tore through the city. 70-mile-per-hour winds downing hundreds of trees and ripping roofs off buildings.
ABC's Ginger Z. You're listening to ABC News. Kids ages 8 to 12 spend over 5 hours on their screens every day, according to the American Academy of Pediatrics. Now lawmakers in several states have struck upon a possible solution: require more playtime at school.
Quite literally, by requiring 40 minutes of recess time compared to the previous 20. Norman, Oklahoma Assistant School Superintendent Holly McKinney has had to get creative.
We've taken parts of those times and integrated literacy into it, which freed up a few minutes for us to be able to do that second recess.
Other Oklahoma districts have added hours to the school day or days to the academic calendar. State lawmakers in Ohio and New York are considering similar mandates. Jim Ryan, ABC News.
What you eat out may be a little different due to a parasite outbreak. ABC's Sophie Flay explains.
Some restaurants are now changing their menus as a parasitic intestinal infection linked to produce spreads across the country. The CDC is tracking cases of cyclosporiasis across at least 31 states, from California to New York. Officials have been unable to link the contamination to one supplier or grower. The CDC says outbreaks have typically been linked to fresh produce, such as lettuce, cilantro, and raspberries.
To reduce your risk, wash all fruits and vegetables and refrigerate any produce that's been cut, peeled, or cooked within 2 hours. The Guggenheim Museum in New York, among the buildings that's tested positive in the city's Legionnaire's disease outbreak, at least 56 people have been diagnosed with the pneumonia-type disease. Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
The blockade is back on. Welcome to the Monday edition as we go back to start in the Strait of Hormuz. The president announcing on social media that the U.S. is restarting its blockade of Iranian ships while adding a 20% toll on everything else. We'll get the latest in just a minute. From Bloomberg's Washington correspondent Tyler Kendall, Speaker Mike Johnson is heading to the White House today as lawmakers return to D.C. with a full plate and no path forward, as we'll discuss with Nathan Dean. He's back in town today as well at Bloomberg Intelligence. And as the political world reels from the sudden passing over the weekend of Senator Lindsey Graham, we'll discuss with our political panel. Rick Davis and Jeannie Shanzano are with us for the hour, and we start, as always, on Wall Street. Charlie Pellet chimes in right now from World Headquarters in New York. Interest rates up, Charlie, oil up. How's stocks doing?
Bottom line, Joe Matthew down. The Dow, the S&P, NASDAQ, all in the red right now. The standoff between the U.S. and Iran certainly lifting oil prices. Do want to begin with West Texas Intermediate crude. Right now, we do have WTI surging today. We also have Brent crude rallying as well. Barrel of Brent up 4.7%, still below 80, 79.62. West Texas Intermediate crude 74.80 on WTI, looking at a gain there of 4.8%. But as I mentioned, equities lower, specifically tech names. We do have a sell-off in chip makers. Today we are looking at the SOX, the Philadelphia Stock Exchange Semiconductor Index down 3.8%, NASDAQ 100 Index down 1.5%, NASDAQ Composite down 1.1%, the S&P 500 Index down 37, drop there of 0.5. Dow Industrials down 0.3%. The 10-year currently yielding 4.59%, with a 2-year 4.24%. Spot gold is down $104 the ounce, right around 4,015 now, a drop of 2.5%. Crude, as I mentioned, higher, just below 75 on WTI, right now looking at a gain of 4.8%. Kevin Warsh will be making his first appearance before Congress tomorrow morning as a Fed chair, with new U.S. inflation data to be released during his 2 days of testimony. CPI first up tomorrow morning, PPI on Wednesday. Andrew Sheets is global head of fixed income research at Morgan Stanley, and he was a guest this morning on Bloomberg Surveillance.
We think we'll get a favorable CPI report this week. But for now, we think it's about trying to position the Fed as open-minded, data-dependent, but trying to hold off on that next hike until they can get some of this better data. And we don't think the Fed will hike at the meeting at the end of this month. Markets are assigning about a 1 in 3 odds that they do.
Andrew Sheets of Morgan Stanley. An AI-fueled stock rout in South Korea has spilled over into the U.S. market, with SK Hynix ADRs plunging now. Right now, they are trading lower by 9.3%, underscoring growing investor concerns that the boom is overextended. Again, SK Hynix right now trading at 152.35. Recapping, stocks lower, S&P down by 0.5%. That, Joe Matthew, is a Bloomberg Business Flash.
Hey, all right, Charlie. Charlie Pellet will be back in just about 15 minutes with more on the markets. It is kind of a funky market here. You know, indexes point you lower. Obviously, we're looking at a lower start here, but look what's catching a bid. It's kind of interesting. I mean, you not only have energy moving higher here, but you've got pharmaceuticals up. Even the Mag 7, for the most part, not all of them, are catching a bid. And watch Micron today. This was fascinating this morning. Like in the first 15 minutes of trading, Micron opens lower. It's following SK and South Korea into the gutter. That was the whole narrative at the start of trading, but it obeyed the 50-day. It bounced off the 50-day with aplomb, and it's now down by only $46 or 5%. Let's just see how that behaves in the next couple of days, because a lot of this market is revolving around the memory trade. SK is still heading lower, as Charlie just mentioned, and we'll keep tabs on how all of this goes here. Welcome to Monday. Boy, that went by pretty quick, the thing called the weekend. And we're right back to where it feels like, God, we're back to start. Take your chips and go back to start when it comes to the Strait of Hormuz. We're going to talk about a lot over the course of the hour. Of course, we lost Lindsey Graham over the weekend. And I'll just remind you that one of our panelists here, Rick Davis, our Republican strategist, the partner at Stone Court Capital, and a longtime Bloomberg Politics contributor, spent many years traveling the world, frankly, with Lindsey Graham as one of the three amigos. Rick, of course, was the right hand of Senator John McCain, helped to run his presidential campaigns, and they worked together in the Senate. Of course, the three amigos, it was McCain, Graham, and Lieberman. And we'll take some time later this hour to reflect on his passing with Rick, as well as Jeannie Shanzano figuring out the way forward here. And I'll just mention quickly, if you haven't been following the ball on a Monday here, we do have some breaking news. The governor of South Carolina, according to Politico, is going to be appointing Darlene Graham, the sister of Lindsey Graham, as a caretaker, essentially, before we go through the primary process and a general election. The president actually was posting on social about this earlier, Truth Social. I recommended to Governor Henry McMaster, Lindsey Graham's wonderful sister Darlene, to serve as interim senator from the great state of South Carolina. This would be, he writes, a fabulous tribute to Lindsey, who loved her dearly. It appears that is going to be the case. We'll have a lot more on the passing of Lindsey Graham and the process that is now going to begin following this in the state of South Carolina coming up. But we may as well just go for the big one here, and that is Iran. The president taking to Truth Social. Whole market, the whole day changed when this happened. We were right in the middle of our editorial call on the show here, a little inside baseball. We get together around that time every day. Some of us are on Zoom, others are in the newsroom. Tyler's usually like halfway down Pennsylvania Avenue, but everybody gets together here to talk about what's important to us, who we want to bring on the program, how we're going to handle the stories. And we're talking about the markets. You know, we were sagging a little bit. Then Trump drops this one, and we gave up a lot of our gains. Oil moved higher. The Hormuz Strait is open, he says, will remain open with or without Iran. We are reinstating the Iranian blockade, in all caps, so named, because it is only stopping Iran ships or customers from entering or leaving. All other countries will have fair and open use of the strait. The USA will be, from this point forward, known as the guardian of the Hormuz Strait. Caps again. But as such, this is important, he writes, and as a matter of fairness, will be reimbursed at the rate of 20% on all cargo shipped for any and all costs necessary to do the job of providing safety and security to this very volatile section of the world. So we're tolling now? I thought there was no toll in the strait. Or are we calling this a fee? Actually, he's calling it a reimbursement. He talked about it on Fox and Friends. Did you hear him on the phone this morning? There's nothing more awkward than three people sitting on a couch with somebody talking to them on the phone, because you're supposed to look at the camera the whole time. Or if you're on YouTube, you'll see that. Listen to the president from earlier.
We'll probably run it. We'll become the guardian of the strait. Maybe we'll call it the guardian angel of the strait. And we should be reimbursed for that. When we do that, we're going to be reimbursed because the other nations are very wealthy. They're on our side. And we can't be expected to do that for nothing, unlike we had for many years. You know, we guarded the strait for 50 years more, and we never got paid for it.
The guardian of the strait. That rings, I guess, that better the guardian angel of the strait. There's less of a ring to it. So presumably the Ayatollah is Thanos in this calculation, right? Who's holding the gauntlet? Poor Tyler Kendall has to sit through this thing every day. I have her on the program. She's sitting right next to me now in our Washington bureau, having left the confines of the White House to see us right here on Balance of Power, and it's good to see you. The guardian of the Strait. Who's gonna bill them the 20%?
Well, first off, this is my favorite part of the day.
Is that true?
Joe.
Thank you for saying
that. Your first statement was not accurate.
That means a lot to me. Thank you.
When it comes to this tolling, we're going to have to see how this actually works in practice. The White House didn't give us any details. We did reach out for how the framework would actually be implemented. The president says it's going to happen immediately.
Yeah.
I will say that experts' first reaction is that this isn't consistent with international law, and it also goes against what has been,
which we've been saying, right?
The White House's longstanding policy, particularly that of Secretary of State Marco Rubio, that in order to have freedom of navigation, that would mean a free Strait of Hormuz. There would be no tolling. I will point out there's something known as the UN Convention on the Law of the Sea. Importantly, neither the U.S. nor Iran are a party to this. Oman actually is, and many other states are, and it's to ensure freedom of navigation in international waterways. But there is a provision in there that does say that there is the ability to charge for services that are rendered in that waterway. But importantly, Joe, it says that can only be done for those countries that have a territorial stake to the water, essentially that they border it. So in this case, Iran or Oman, not the U.S. But that may come up a little bit here as we try to find out exactly what the wording would be if the U.S. puts out some sort of, order or decree related to this. So that's why I bring that up as additional context. But at this point, we haven't really gotten those details on the proposal from the president. Beyond that, it really does mark an escalation in rhetoric from the United States and action when it comes to squeezing Iran economically after we saw the U.S. try to use that as a carrot to get Iran to the negotiating table, such as issuing that waiver for Iranian crude to market, which has now been reversed.
Well, so we were asking at the end of last week, is the MOU off? The president said multiple times, ceasefire's off. It's starting to feel like that's real. I read this morning, it was data from Kepler. All 6 of the commodity carriers that transited Hormuz Sunday did so with their transponders turned off. Should we assume these dark crossings continue even as we say the strait is closed?
It's so hard to track the data. Our analysts at Bloomberg Intelligence looked at this Kepler data, which shows that for the first time since the Memorandum of Understanding was signed, the last 3 days show that so-called dark crossings, what you're explaining here, ships with their transponders off, exceeded that of observable traffic. That's the term that we use for ships. It seems like that is still moving forward, but even those so-called dark crossings are below the initial, burst that we saw once the strait was reopened and the Memorandum of Understanding was signed. The fact that ships are turning off their transponders also underscores the weariness of commercial shippers. When it comes to the strait, since we had the U.S. come out this weekend and say that they wanted Iran to put in writing that the strait was open, and instead we had Iran come out and say the strait is closed and actually target an LNG tanker. That is obviously going to raise the risk calculus for these countries, but also we know that they want to get their oil out. I'm sure you saw this cross earlier. The Financial Times now reporting that a Dubai-based producer is looking into building a port in the UAE. How long that would actually take remains a big question, but it just shows the urgency to try to find something over the long term because this doesn't seem to be getting resolved.
Wow, really a fascinating moment, knowing that there was a third round of strikes last evening and we hit them pretty hard, it seems. So it does appear the ceasefire or the shooting ceasefire, whatever we were calling it, is absolutely off. In our remaining moment, Tyler, President posting very affectionately about Lindsey Graham over the weekend. He's now taking credit for suggesting that his sister, even though she was very much already in the mix, be the caretaker. He's also hanging this on the Clarity Act in honor of Graham, a big supporter. The Senate should pass the Clarity Act. Are we going to keep hearing that as a reason to do stuff?
It's interesting, too, because the Clarity Act is actually one of those bills that's been teed up related to the crypto industry, but that they can't seem to get over the finish line. I think we could also probably expect that to be related to the Save America Act. That's what we heard from President Trump yesterday. So definitely a push. Of course, Lindsey Graham, instrumental for the domestic policy agenda, the head of the Budget Committee.
I wonder if they put his name on a sanctions bill. That's for Russia. That's been talked about a lot, too. Tyler, let us know what you're hearing over there. Tyler Kendall, our Washington correspondent, getting us off the launch pad on a Monday. Yeah, you know who's back in town? America's dad. Nathan Dean is coming in next to talk about what's going on Capitol Hill.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index trading very close to session lows. Right now looking at a 41-point drop. Back to work Monday with the S&P currently at 75.33, lower now by 0.6%. The Dow currently down 190 points. That is a drop of 0.4%. The tech sell-off, perhaps the big story today. We're looking at the NASDAQ 100 index down 1.5%. We've got NASDAQ down 1.2%. Weakness in semiconductors. The SOX, the Philadelphia Stock Exchange Semiconductor Index, it is down now by 4.1%. All of this with the VIX holding just above 16, a 10-year at 4.60%, the 2-year 4.25%. Keeping an eye on gold, it is currently trading at $4,011 the ounce, the precious metal down 2.6%. West Texas Intermediate crude now above 75 a barrel, 75.04. It has jumped to 5.1%. Barrel of Brent just below 80, 79.95. Barrel of Brent up by 5.2%. Investors are assessing a tense situation in the Middle East. President Trump announcing today that the U.S. will reinstate its blockade of Iranian ships transiting the Strait of Hormuz. Keep it locked in to Bloomberg Balance of Power. We'll pass along any and all developments. Sources tell Bloomberg a group of about a dozen states is poised to sue to block Paramount Skydance from buying Warner Brothers Discovery. On a down day for the U.S. stock market, shares of both companies are higher. Paramount Skydance up now by 3.4%. Warner Brothers Discovery up by 2.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And that, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, you never know what's going to go red on the terminal, especially in the 12 o'clock hour. That's why you never miss this program. And today it's bringing us to Hungary, where the parliament has approved legislation to remove the Hungarian president. I mean, just imagine, you think things are crazy in politics around here. The Hungarian parliament approving this constitutional amendment to oust President Tamás Sulják, who the prime minister says is a puppet of former premier Viktor Orban. Remember? Does he still show up at CPAC now that he's a former premier? The legislation is part of Magyar's drive to dismantle Orban's bastions of power. I read in the wire services of the Reuters news agency, Redhead approving the legislation to remove the president. We're all excited, or we're about to be, about the Grand Prix around here in Washington, now that we just survived America's Great State Fair, or whatever that was called, the whole 4th of July bash, the Guinness Book. By the way, did we hear from Guinness? Did we set a record with the fireworks? Or the air show, for that matter? We've had a lot going on around here. That was after the UFC fight. I never did get on the Ferris wheel, but there's more coming. Hang on. The Grand Prix is next. It actually takes place next month, but the President of the United States is embracing it today. Pay no attention to Speaker Johnson. Before that happens, the President has got IndyCar champion Alex Palou and other top drivers at the White House for what they are calling the Grand Prix Showcase, serving to promote the inaugural D.C. Grand Prix, the Freedom 250 scheduled to race through Washington in August. Remember this? We did talk about it. I know there's a lot to remember these days, but it takes place August 22nd, 23. It's free, 2 days, a 1.7-mile, 7-turn temporary circuit. This is the track that will run directly through the National Mall, passing the Capitol and the Monument, where they were flying the jets 2 weekends ago. Is Steve here? He's going to be all over this. Free to the public, and it's going to be live on TV as well. This will include a half-mile straightaway down Pennsylvania Avenue. I got to see this to believe it. And something tells me there will be an artist's rendering or a digital something or other when the president speaks today. So just file that away. That's going to come up about an hour from now. If they're on time, you know I'm going to bring you in there. Tyler mentioned she was over at Union Station. There's a big IndyCar display over there. Are you an IndyCar guy, or are you by default a NASCAR guy as America's dad?
I went to Purdue, so it's all Indiana.
It's all,
I'm sorry, it's all IndyCar.
Okay, got it. Maybe you can tell me how, because I don't really understand what I'm looking at. I see it looks cool, but I don't know how they do any of this stuff.
Yeah, look, I mean, obviously, I'm more F1 than IndyCar, but what I'll say here is that, at the end of the day, I know that the IndyCar is going to have a great show, but it's also going to be 115 degrees outside, so I probably won't be there.
The end of August in D.C.? Wow. Although we just did this. Now, you just came back from your tour of the North, we'll say, where the air was cool and the water was freezing cold. We were sweating to the oldies down here, Nathan, on the mall. It was 105. But just so you know, I got up to the roof to see the Thunderbirds, and it was pretty excellent.
Nice.
We missed you around here. You're back, and so are lawmakers. I know you coincide your schedule, right?
Yep.
You don't leave town when lawmakers are busy. So they're coming back here, and the speaker's making tracks to the White House today, and I guess we'll start there. Nathan is, of course, the senior U.S. policy analyst at Bloomberg Intelligence, and that's partly why you listen on Mondays. His podcast drops when you get this podcast. The floor is closed. Nothing's changed since you left. Anna Paulina Luna is literally holding the House hostage. So what's the ask from Mike Johnson today?
I don't know what the ask is other than to President Trump saying, look, President Trump, time's of the essence here, and if you don't want to be a legislative lame duck as of today, you need to help me move this needle because we need to get something passed other than just kicking the can. Because look, on the Senate side, with Senator Lindsey Graham's death, with Senator McConnell not being in town, you just take 53 votes, you put it down to 51. Senator Collins in Maine, she's not going to be really interested in reconciliation at all that point right now. So if you don't get a Reconciliation 3.0, and if you don't get the Clarity Act, which I know we may talk about, if you don't get agreement on NDAA, if you don't agree, all you're going to get is a kick of the can. And if the Democrats win in November, it's the end of President Trump's legislative legacy.
So what's number one? First of all, when you say move the needle, we're talking about moving a congresswoman, a single lawmaker. Then again, there could be others behind her, I guess, backing this effort. They're not happy about Save America not passing. That's her cause. We've got an NDAA, though, that needs to go somewhere, and Democrats are now MIA on this. They're not happy about what's happening with Iran. Can we even get defense spending out the door?
I don't think so. I mean, look, I mean,
this is the so-called must pass.
The NDAA, I think you'll get some form of it, but you're not. It's going to be one of those NDAAs that if it passes, nobody's going to be happy with it, because like President Trump has said, look, we want the biggest budget in U.S. Department of Defense history that includes $350 billion to come from reconciliation. I don't think you're going to get that. But at the end of the day, there's only so much time left before September 30th because Senate's back today. They're here for a couple of weeks. Then they go in for August. And this is one of those elections where, because affordability is such the key message right now, and that's not the message you're getting through the national news cycle. You're getting Iran, you're getting geopolitics. This is one of those election cycles where every single politician who's running right now wants to be back in their home district, and they want to be there. They don't want to come to Washington. So what do you get when that? You usually get kick of the cans. So, when it comes to the CR in September, and I don't think there's going to be a shutdown, but, when it comes to a lot of this stuff, I think the Congress is just going to say, look, at the end of the day, we've tried, we've run out of time, kick the can, let's move on to the election.
Well, this sounds familiar, but then we got, another 2 years of that? 2.5 years of kicking the can. Assuming Democrats take the House.
Yeah, if the Democrats take the House, the biggest risk to companies out there, if you're a CEO right now, be prepared for a subpoena if you're working with close to the White House.
Okay.
Because the House Oversight Committee will fall under the Democrats.
Yeah.
And the Democrats can say, look, we can investigate the White House. That's fine. They'll do that. But they're also going to investigate companies.
It's like half the S&P 500 you're talking
about. So if you are a company and you're seen working with the White House at any time be prepared for a subpoena. Now, from the company perspective, we're not saying there's nefarious action here, but far from it. But what we're saying here is no company from a lobbying perspective wants to be on the sitting end of a subpoena to the House Oversight Committee.
Right.
And so it's just going to be an uncomfortable situation. It's not really going to, I wouldn't even put this down and saying, you need to trade off of this or have impacts over this. But if you're looking at mergers and acquisitions, if you're looking at just special deals, if you're looking at anything in particular, look for the bully pulpit that President Trump has used within the first 2 years of his presidency. If the Democrats take the House Oversight Committee, look for the bully pulpit to come from the Democrats as well.
That's something. Throw another log in the fire. This is going to be hearing heaven, to your point. The Washington Post this morning has President Trump's two sons, Don Jr. and Eric, amassing a portfolio of defense technology startups benefiting from new Pentagon contracts. Most of the investments have taken place since the president was elected for a second time. Companies have collectively generated at least $3.2 billion in direct government business since the Suns invested, and an additional $3 billion in future contract options. Doesn't matter if it's illegal, you still get a subpoena, is your point.
Yeah, I mean, it doesn't matter if it's illegal. I mean, it's the same thing that happened back in the crypto era under the tail end of the Biden administration. You know, former SEC Chairman Gary Gensler used to say, come in and register, come in and talk to us.
Yeah.
And, you know, the crypto companies, some of them tried, some of them didn't. And there was always going to be a court outcome of this. And the companies would say, look, we did nothing wrong here, but you still had to go to court. And you still had to pay that money, and you still had to pay that legal expense. And so that's where I'm saying is that, you know, the companies can say, look, we've done everything legal and everything by the books.
Sure.
The House Democrats could come back and say, yeah, but you still got to talk about it.
We still need to ask you about it. While you're with us, I want to ask you about what was the big story over the weekend, the passing of Lindsey Graham. And obviously, there's a personal side to this. A lot of people are paying tribute to who the president called a great American, a great patriot. There are big questions about what it means for legislative business, however. The president talked about it, if we have time, on Fox and Friends this morning. Not only his heartfelt thoughts about Lindsey Graham, but what it's going to mean for business in Washington. Listen.
We lost a great man. He was a great man. He was a great politician, and he was a kind man. And you know who really lost? Israel, Ukraine, a lot of countries that he really fought for. And they lost somebody who was very special. But the real loser was the United States of America. We lost a great person, a kind person, a very smart person, and a great, you know, they ask me sometimes, what do you think? He was a great politician. You know, we have mostly bad politicians. We have stupid politicians all over the place. This guy was a great politician.
A former rival, of course. But the president's invoking his name on social media posts around the Clarity Act, around the Save America Act. Will that help to move these bills, or does this departure make it much more difficult to pass them?
It won't help. I mean, I'll just say it right now, it won't help. On the crypto space, it's not up to the Republicans, it's up to the Democrats. And you need those moderate Democrats to come across the line. So President Trump's embracing of Senator Graham on clarity, it's not going to really move the needle on Democrats. And when it comes to the Save America Act, the votes just aren't there. I mean, whether it's via reconciliation, whether it's a talking filibuster, the votes just aren't there, and they won't be there months before the election, especially when a lot of these senators are in races where they want to be reelected. Yeah. So, you know, ultimately, when it comes to legislation in particular, whether it's crypto or Save America or anything, at the end of the day, I think the most you can expect is just kicking of the can of funding into next year.
This is exactly what he's telling our clients, and he brings it to you straight right here on Balance of Power. Nathan Dean from Bloomberg Intelligence. Thank God he's back in town. Did you do any salmon fishing or anything?
No, just lots of hiking.
Yeah, all right. You look good. You look healthy. How's Chicago look? Is the city in good shape?
Oh, I had so much great food.
Yeah?
It was great.
Family's well?
Family's well.
Where'd you get the pizza?
Lou Malnati's.
Malnati's. Yep. All right. We'll be jealous together of Nathan Dean. Until we're back to Chicago, this program will return. We'll also, by the way, return today with our signature panel, Rick Davis and Jeannie Shanzano on the way on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Just about the lows of the day right now on the S&P 500 index. Slight bounce off the bottom, but the Dow, the S&P, NASDAQ all very much in the red. This as investors assess a tense situation in the Mideast, with President Trump announcing that the U.S. will reinstate its blockade of Iranian ships transiting the Strait of Hormuz. Right now, we've got the S&P down 49, again, just bouncing off the bottom, down by 0.7%. Dow Industrials down 199 now, a decline there of 0.4%, while the NASDAQ Composite Index is down 349 points for NASDAQ, a drop of 1.3%. The NASDAQ 100 Index down 1.7%. The Bloomberg Mag 7 Index is down 0.7%. All of this with semiconductors leading the way lower. The SOX now down by 4.7%. The SOX, the Philadelphia Stock Exchange Semiconductor Index. The VIX right now is holding just below 17, with a 10-year at 4.60% and the 2-year 4.26%. Spot gold, meanwhile, has broken below $4,000. Spot gold right now, $39.97, declining as I speak, down now by 3%, but underscoring we've got spot gold below $4,000 at $39.98 on the precious metal. West Texas Intermediate crude 75.07 a barrel, up by 5.1%. Barrel of Brent just below 80 now, up by 5.2%. Kevin Warsh makes his first appearance before Congress tomorrow morning as Fed chair, with new U.S. inflation data to be released during his 2 days of testimony. Lindsay Piegza is chief economist at Stifel Nicolaus. She was the guest this morning on Surveillance and says policymakers will be watching the inflation data closely.
I don't think there is a strong argument right now among Fed officials for cutting rates. But again, there is that very firm position among those more dovish-leaning members to maintain the current pace of policy until we have a better sense of the underlying momentum of the economy.
Lindsay Piegza, chief economist at Stifel Nicolaus. Again, recapping here, spot gold falling below $4,039.99 the ounce. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, appreciate that, sir. I guess McGlone was right again, right? Miami Mike, he told us to look south of 4,000 for an ounce of gold, and here we are all over again. I'll be deeply curious to hear what he thinks about oil, because this is pretty stubborn. We're up more than 5%, 5.2%, as Charlie told us, for WTI and Brent with the news out of Iran. The president says the strait is closed once again. And we're the guardians now. That was the take from we're the guardian of the Strait of Hormuz. We actually wrote it up. It's right there on the terminal. Would become the waterway's guardian in his announcement. I kind of wonder which one we are. Are we Groot? Maybe we're a raccoon? I don't know. If we want to be the guardian of the strait when the United States' line so far has been no tolls in international waters, because now we're, I guess, looking for 20% reimbursement for countries other than Iran. We'll have more on this coming up. Top of the next hour. You'll want to be with us here on Balance of Power. Tyler will join us from the White House, and we'll have insights as well from Eric Wasson on Capitol Hill, Rebecca Heinrichs from the Hudson Institute. Rocket, thank you, Seabass. Rocket Raccoon. I'm Joe Matthew in Washington, and glad you joined us here on the Monday edition. We're live on Bloomberg Radio and on YouTube, where you can always find us by searching Bloomberg Business News Live. So we lost Lindsey Graham, and I've been looking forward to talking with our panel about it. The president weighing in a short time ago to say that the late senator's sister, Darlene, should serve out his term for the South Carolina seat, knowing that two things need to happen. First, someone needs to fill the seat immediately, and the governor has the ability to do that. He's expected to do so today. And Politico is already reporting that it will be, in fact, the late senator's sister. The President of the United States also specifically recommending that move today on Truth Social, having seen that already in the works. If you were reading along, I recommend, he says, to Governor Henry McMaster, Lindsey Graham's wonderful sister Darlene, to serve as interim senator from the great state of South Carolina. But that, of course, is going to need to be followed by an actual primary and an election that will take place, with a full term set to begin following the election in November. McMaster, Republican, of course, the governor of the state, set to announce his pick to fill the seat at 4 p.m. Eastern time is what we understand. Tim Scott, of course, the other Republican senator from the state, endorsed Graham's sister earlier today as well, calling it a fantastic pick. Now, I will say that very few people knew Lindsey Graham the way that Rick Davis did in the time that they worked together. And of course, Rick is part of our panel every day here, but we're going to have a special one right now with Bloomberg Politics contributor, Republican strategist, and partner at Stone Court Capital, Rick Davis. He's, of course, joined daily here by Jeannie Shanzano, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. It's great to see you both. And Rick, I want to just express my condolences to you to the extent that that's appropriate, knowing how many years that you spent working with Lindsey Graham and traveling the world with not only Graham, but of course, by way of your work with John McCain, the three amigos. It was John McCain, Lindsey Graham, Joe Lieberman. And Rick Davis was there for a lot of it, as a political advisor and as a guide. And I'm wondering, Rick, your thoughts today on a politician who went through quite an evolution in the public eye, but someone who, as the president pointed out, was always a patriot.
Yeah, I think that's really, Joe, the common denominator about everything about Lindsey Graham is he loved his country. He was living proof that you could come from really, meager means to accomplish anything you want to in your life. The military was his entry card, got him in the game, and forever he was respectful and supportive of people in uniform all around the world. In fact, most of the travel that we did with Lindsey Graham was going to military bases. Lindsey was a JAG officer even while he served as United States Senator and served his National Guard duty time in Kabul, Afghanistan. Not exactly what you would think would be an easy road to take, for a sitting senator, but he was totally committed to supporting our service personnel all around the world. And I think that's probably where he and President Trump bonded, is their keen interest in the military. There are obviously some other issues that were quite divergent for them, but with John McCain, they were as much brothers as they were colleagues. Traveling the world with Lindsey, John was forever in stitches. Lindsey was probably, I think John McCain called him the second funniest person he ever met. Mo Udall, I think, was the funniest. That's because John stole all of Mo Udall's jokes when he was running for president. But Lindsey could always be counted on. I remember one instance, and if you don't mind walking down memory lane, in 2008, John McCain versus Barack Obama, the last debate, I think it was October 15th. All the marbles are on the table at that point in time. John was nervous as hell, and Lindsey knew it. And we had a dinner before the debate, and Lindsey showed up in a rubber John McCain Halloween mask and basically played out the entire debate pretending to be John McCain. And literally, we were crying. It was so funny. And that cut the ice. John McCain was able to go in, had a great debate. Didn't make a difference in the outcome, but that was the kind of guy Lindsey Graham was, deprecating, always willing to give to other people.
Wow. Thank you for that story, Rick. That's amazing. We were just showing, while you were talking, a picture of the three amigos hanging out, dressed casually. The suits were gone when these guys would hang around after hours. And Lindsey Graham, of course, spoke eloquently and emotionally about his friend John McCain following his passing. This is Senator Graham from the Senate floor, as a matter of fact, in August of 2018. Listen.
He would constantly tell me, Lindsey, I wish you were in my Naval Academy class. I said, well, that's very nice, John. You know why, Lindsey? I said, no, John. If you had been in my class, I'd been 6th from the bottom, not 5th. I said, thank you very much, John. Humiliation and affection were constant companions. The more he humiliated you, the more he liked you.
I think, Rick, you probably knew something about that.
Oh, yes. For his entire life after 2008, I was the one who lost him the presidential election. Sadly, there were probably a lot of people who heard that and thought he was, actually speaking the truth to power. But that was when I wasn't the guy working on work release from the late local prison or just been let out of Betty Ford, for rehabilitation. So, there were a lot of lines that John McCain used to express his affection. And by the way, Lindsey was the same way. He could not have been more entertaining. And I know that he continues that, the three amigos are together again and, good luck heaven. Because dealing with those three guys at one time is a special case. So
good luck.
Good luck.
Heaven.
Good luck.
That's pretty good, Rick. Thank you for sharing those stories. That's what we wanted to do today, and we'll talk next hour a little bit more about Lindsey Graham's political evolution in the age of Donald Trump. Jeannie, why don't you chime in here? Because a lot of folks are asking. Well, number one, could there ever be another three amigos in the Senate? But two, when you look at the type of lawmaker who is either retiring or in the tragic case of Lindsey Graham passing away at 71, we're turning around on a daily basis with fewer and fewer lawmakers who are willing to work across the aisle. Lindsey Graham was frequently the one who would place the call to Democrats.
He absolutely was. And I think if there's one thing I would have said we would not be talking about today, Joe, it would be who is going to replace Lindsey Graham in the Senate. It is just so stunning that we are here, particularly as we were all focused on Mitch McConnell over the last few weeks. With Lindsey Graham, I think all you have to do is look at the tributes and, of course, the wonderful tribute Rick just gave him, but the tributes coming out from both sides of the aisle. We have heard from everybody from Joe Biden and Chris Coons to Donald Trump and Bibi Netanyahu and Rick Scott. You can go down the list of people who worked closely with Lindsey Graham. And as Chris Coons said, many times disagreed, but did so, as Rick was just talking about, with a smile on their face, hearing jokes, and of course, with an eye towards getting things done for their constituents. And so, this was something who worked with John Kerry on climate change. He worked with Joe Biden. You can go down the list where he would cross the aisle. And of course, we don't see that as much today. And so I think from so many perspectives, this is a tremendous loss to not just South Carolina, of course, but the American public, because we are at a time where we desperately need people to cross the aisle like John McCain and Lindsey Graham did.
Remembering he voted for Supreme Court justices nominated by Democratic presidents, which that in itself is a story today. There is a process for this. The filing period for the new primary opens July 21. It lasts a week. Special primary would take place August 11th, a runoff, if needed, August 25th. Rick, for starters, does Lindsey Graham's sister become the caretaker? And are you hearing the names as a second question that you would expect to on a short list to actually make that run officially for election?
Yeah, I think Darlene is likely to get this appointment. I heard all weekend that this was where Henry McMaster, the governor, was headed, and thank goodness that this happened while Henry was governor, because no one knew Lindsey Graham better in the state than Henry. They were longtime allies and friends, and I think that is going to make this transition a little bit smoother for the family and for Lindsey's supporters in South Carolina, who are just right now completely in a state of shock. Look, there are a plethora of people who ran for the governor's primary and just lost, and they're all indicating various degrees of interest in this seat. The governor had endorsed Pamela Vett, the lieutenant governor, who did not win. But would likely be, I suspect, his choice to support if she chooses to run in the Senate primary. And a lot of people are questioning whether or not this is enough time to really mount a campaign. But I would say that the Republicans have plenty of support there to elect anybody who comes out of this primary process.
We're lucky to have Rick Davis and Jeannie Shanzano, and they will be back in our second hour with more on this on Balance of Power. Thank you both, our Bloomberg Politics contributors. Kaylee's back today. Hour 2 is coming up next on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Speaker Johnson makes tracks for the White House. Welcome to the Monday edition of Balance of Power as lawmakers return to Washington with a full plate and a House floor held hostage. And a Strait of Hormuz that is once again closed. I'm Joe Matthew alongside Kaylee Lines in Washington. She's back with us today. Kaylee, I guess the House floor has something in common with the Strait in that they are both shut down.
Well, certainly so. President Trump says the U.S. is reinstating the blockade, blockading specifically Iranian vessels in cargo. But for everybody else, who he says on True Social will have fair and open use of the Strait, maybe it's not so fair and open if you have to pay for it.
Correct.
All of that uproar around Iran potentially charging fees for the Strait. And now President Trump says the U.S. will be charging a 20% reimbursement rate on all cargo shipped, the cost of being the guardian, I suppose.
That's right. That's exactly the language that he used, the guardian of the Strait, the guardian angel. He even floated in an interview earlier today. The 20% reimbursement, as we're calling it by way of the administration, would fly in the face of the White House's argument, though, that international waterways cannot be tolled, because this seems to look a lot like a toll.
Well, that certainly is the case. And of course, it raises the question as to whether or not there can be real progress in negotiations moving forward, which technically are still ongoing, even as we continue to see the exchange of fire between the U.S. and Iran over the weekend after Iran struck a vessel near the Strait and the U.S. retaliated. We've seen many days of this now over the course of the last week.
And then we've got negotiations with the Hill separately, which is why the Speaker is on his way over to the White House to ask for the president's help in unlocking a very sticky situation with Congresswoman Anna Paulina Luna essentially keeping the floor held hostage over the Save America Act. Both of these stories collide in an interesting way. That's a meeting that's supposed to start a couple of hours from now, Kaylee, and could go a long way to giving us a sense of what Congress might be able to get done the rest of this session.
Yeah, of course, the Speaker is liaising on behalf of the House, the frequent liaison of the Senate. Late Senator Lindsey Graham, of course, will no longer be serving in that role after he passed away suddenly over the weekend at the age of 71. We'll also spend some time this hour talking about his legacy and what this means going forward for the White House and for the institution he leaves behind. So all of that is ahead, but we also need to check on the markets as we get the trading week started here on Bloomberg TV and radio. And for that, we turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much. Lots of moving parts to this market. Equities lower, yes, across the board. Stocks are falling as President Trump reinstates that Iran blockade. Got to begin with what is going on with commodities, specifically West Texas Intermediate crude. WTI up now by almost 6%, 75.62 on West Texas Intermediate crude. Barrel of Brent crude above $80 now, higher by 6%. And we are seeing spot gold fall below $4,000. Gold taking out 4K, $39.95 the ounce on the precious metal right now. Gold is lower by 3%. Bottom line here, Middle East concerns sending stocks lower. Right now, the S&P is down 48, drop there of 0.6%. Dow is down 0.3%. Weakness in tech names, specifically semiconductors. The NASDAQ 100 index down 1.6%. The NASDAQ Composite Index down 1.3%. All of this with the VIX. The VIX right now just below 17. The SOX, the Philadelphia Stock Exchange's Semiconductor Index, now tumbling by 4.4% as semis sell off. The 10-year 4.61% with the 2-year 4.27%. Gold 39.95 the ounce, down 3%. And West Texas Intermediate crude again bears repeating, up 6% right now, 75.69 a barrel. Fed Governor Christopher Waller says policymakers may need to raise rates in the near term if underlying inflation continues to signal broad price pressures, and an AI-fueled stock rout in South Korea has spilled over into the U.S. market as SK Hynix ADRs trade lower. Right now, we've got SK Hynix down by 7.4%. The stock, by the way, 155.55. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Joe and Kaylee, lots going on. That is a Bloomberg Business Flash.
Lots going on indeed, Charlie Pellet. It always seems to be the case here in Washington. Thank you so much. Of course, there's a lot going on specifically when it comes to foreign policy considerations today after we saw once again the volleying of fire between the U.S. and Iran near the Strait of Hormuz over the weekend. Conflicting narratives from the U.S. and Iran as to whether or not the Strait of Hormuz is indeed open for transit. But for Iranian vessels, President Trump says it is not, in fact, open, as he posted on True Social today that the U.S. will be reinstating the blockade just for Iranian ships and cargo. For everyone else, though, he suggests the U.S. will be charging a 20% reimbursement fee for effectively keeping the strait open, as he explained in an interview on Fox and Friends earlier.
We'll probably run it. We'll become the guardian of the strait. Maybe we'll call it the guardian angel of the strait. And we should be reimbursed for that. When we do that, we're going to be reimbursed because the other nations are very wealthy. They're on our side. And we can't be expected to do that for nothing, unlike we had for many years. You know, we guarded the strait for 50 years more, and we never got paid for it.
The president writing in that post on Truth Social, the process and formation will begin immediately. And that's where we start our conversation with Bloomberg Washington correspondent Tyler Kendall, who's on the North Lawn of the White House right now. Tyler, are we already charging for this reimbursement? That's what the president seems to be suggesting.
Yeah, Joe, I mean, President Trump saying that this is going to happen immediately, though we haven't gotten confirmation from the White House on the specific details of this proposal and how it's going to work in practice. Because at first glance, experts are saying that it will very likely counteract international law, which for the most part does state that vessels are allowed to have freedom of navigation through international waterways, though as you and I spoke about last hour on this program, there is a provision in one treaty that could allow certain states to charge for fees related to services that are rendered, if that helps to ensure safe passage. But under this law, it stipulates that that would have to be any of the countries that actually have territory that borders the Strait of Hormuz, which wouldn't qualify for the U.S. So a lot of big questions here, but it has become absolutely evident that the White House's patience has worn thin when it comes to getting Iran to the negotiating deal, raising prospects and questions about what the prospects for negotiations look like going forward, because now the U.S. is ramping up that economic pressure that we saw the administration dial back last week, revoking that waiver when it comes to allowing Iran to sell its crude to market. And Joe and Kaylee, that's notable because it's also highlighting how Iran wants to maintain its leverage, is prioritizing control over the Strait of Hormuz over getting what those potential financial benefits could look like. So a really closely watched dynamic here. We're going to have to see how it ultimately pans out, because as you both know, the rhetoric was escalating today as the two sides traded these threats. But over the weekend, we saw them actually trade strikes, and the kinetic action just heat up.
Indeed, we did. Bloomberg's Tyler Kendall live on the North Lawn of the White House. Thank you so much. And as we consider the U.S. and President Trump's decision-making when it comes to Iran, we know that one man had a great deal of influence on this subject, and was one of the most vocal advocates for pursuing a non-nuclear Iran in the United States Senate. One of the most hawkish Republicans, Senator Lindsey Graham of South Carolina, passed away at the age of 71 over the weekend from what his office described as a sudden and brief illness. We now know that there will be someone appointed to replace him, set to be announced by the South Carolina Governor McMaster later this afternoon. President Trump on Truth Social suggested he would like that person. He recommended to the governor that it be Lindsey Graham's sister, which according to Politico, is what the governor has selected, though we have not seen confirmation of that yet. So for more, we turn to Bloomberg's Eric Wasson, who covers Congress for us and is joining us live from Capitol Hill. So, Eric, obviously we don't know who will fill Lindsey Graham's shoes on at least a temporary basis in the Senate, but they are very big shoes to fill, whoever it is.
That's right. It does look like it will be Darlene Graham Nardone, probably as a placeholder. Reached out to try to find out if she plans to run on it. Certainly, if she is the interim senator, she would have a leg up on others. But there's a large cast of characters, from Nancy Mace to Ralph Norman to Republican representatives who ran for governor and failed, to Lieutenant Governor Pam Everett, who could try to run in this special primary by August 11th. But it will be very tough shoes to fill, at least on the foreign policy side, for the Hawk contingent. This was someone who had regular contact with Trump, speaking to the president even hours or perhaps minutes before he died, to advocate for his world vision, which is one in which the United States stands strongly with Ukraine, stands strongly with Israel, and takes a very militaristic approach towards Iran. You know, one of my colleagues said to me over the weekend, I think it's very true, the Iran war wouldn't have happened without Lindsey Graham. I think that's true. He's very much promoting that idea of regime change there. So, you know, this is someone whose death is going to be really impactful in terms of foreign policy. And as well, one of the things Congress is trying to do this month is potentially move a $350 billion military budget. He was the budget chairman, would have helped facilitate that. I think that, in my mind, it's a bit of an uphill battle, a bit of a wish list, but we'll see if they can try to cobble together some kind of budget reconciliation bill in his absence.
I'm glad you mentioned that, Eric, because word is that Ron Johnson, the Republican from Wisconsin, will be taking the gavel. I'd be curious to hear if you can confirm that as chair of the aforementioned Budget Committee and what that might mean for a real a hawk like Ron Johnson, a spending hawk, to take control of that committee. There's also the matter of Mitch McConnell, who actually posted a photograph over the weekend with his wife, Elaine Chao, and explained that he was unconscious after falling, that in fact that was why he was out of Washington. He'd been moved to a rehab facility. Do we know when he might be back?
We don't know when he'll be back exactly, but you know, he suffered polio as a child. He's been diagnosed with post-polio syndrome, so he has weakness related to the long-term effects of that unfortunate infection. You know, so he is battling that. But yeah, his absence is certainly felt by John Thune and other leaders who rely on his wise counsel to run the conference. And certainly Ron Johnson is in line to become the budget chairman. You know, that's not the appropriations. Sometimes a bit confusing to our listeners, but you know, the appropriations chairman controls the nitty-gritty, the spending decisions on projects. But the budget chairman will be part of this larger push to go around those guardrails and do this big military budget. And I think Ron Johnson will insist on offsets. But calling for spending cuts to entitlements to pay for the military, that's not going to fly with a lot of moderate Republicans up for re-election in swing districts. So I think it would tend to stall progress on this, but we'll see.
Great reporting, Eric, and thanks for being there this weekend. When we all woke up to this news on Saturday, it was Eric Wasson who helped us on Bloomberg this weekend understand the significance of this moment. And Rebecca Heinrichs has been awfully busy on social media. I've been watching her news feed since that news broke, and we have a lot to talk about with Rebecca, senior fellow at the Hudson Institute. Welcome back to Bloomberg TV and Radio. It's great to see you. I'm wondering your thoughts on the practicality here, not to sound cold, Rebecca, but everything that Eric just said is important when it comes to getting an NDAA, a supplemental, $1.5 trillion Pentagon budget across the line, not to mention the work that Senator Graham did in supporting Ukraine in its war with Russia. Who will fill those shoes?
Well, those are big shoes to fill. I know Senator Graham was an inspiration to me, even though I didn't always disagree on the specifics of the senator's recommendations. I was always inspired by several things. One, his consistent defense of the United States having a robust military, robust defense, and the importance of the United States having good alliances that were very, very strong, and for the United States to have a realistic foreign policy that was also principled, that the United States would always be on the side of those who wanted freedom and against totalitarian. So those are huge shoes to fill. But there are other senators who have been working alongside Senator Graham, Senator Tom Cotton, Rounds, Wicker, Risch. And so there are other senators. So I would expect that they're going to continue to push President Trump's agenda, especially when it comes to getting the right defense budget necessary for the threats today, which is that $1.5 trillion top line.
Well, and obviously the pursuit of that increased defense budget is something that the Senate is going to be considering. I wonder, too, Rebecca, if you believe that the Senate will, in fact, take up more stringent sanctions on Russia, as Lindsey Graham, of course, was just in Ukraine shortly before his death, talking about how there had been an agreement reached with the White House on that package. How quickly do you believe it could advance?
Well, I hope it'll be immediate. I would love to see this because all of the ingredients are there for increased sanctions against the Russians. The Russian economy is flagging significantly. You even have Russian officials and oligarchs speaking publicly against against the war and talking about the economy flagging. And then you have the Ukrainians advancing on the battlefield, and then Ukrainians contributing to European security. And even Zelensky was the only European leader who publicly went to the Gulf states and provided air defense during epic fury, siding with the United States and Israel, essentially. So Ukraine is in a great position. Russia is failing. And so I think it's a great moment for the United States to impose these sanctions that Senator Graham so valiantly pressed for so long. And so it is my hope, and I think that there's lots of momentum from the Congress, and you even saw some positive signals from President Trump at the NATO summit in Ankara. He was very warm towards President Zelensky, and it does seem to me like there's momentum there to get these sanctions passed, and I would name him after the late Senator Graham.
As someone who studied national security and strategic studies at the Naval War College, Rebecca, I'm curious your thoughts on what's happening right now in the Strait. Some would say it's closed because traffic has come down to a trickle here. Most of the boats that are getting through have their transponders off. But the president posting it's open. There is an Iranian blockade and a 20% reimbursement fee for everyone else who gets through, as the guardians of the strait, as he puts it, will be investing in military protection that will need to be reimbursed. Is this sustainable? What will it require of our Navy?
So I think on this last part about collecting a tax, I think what the president is indicating is he's just frustrated that it's the United States obviously taking the lead role for ensuring safe passage of the strait. But I think that putting a tax on these on the ships going through is actually going to undermine the purpose of trying to get ships through the strait, which is to lower gas prices, energy prices for this global commodity. I think a better way would be what Secretary Bessent suggested weeks ago, which is that perhaps if you want to compensate those Gulf states who have had infrastructure degraded or destroyed because of Iranian missiles and drones, or American bases destroyed because of Iranian missiles and drones, that you can take some of the frozen Iranian assets and use it for those purposes. That makes more sense to me. Or if the president is just frustrated that other countries are not participating and sharing the burden, he can bring in the French and the Brits who have been wanting to participate in clearing the mines out of the Strait of Hormuz. And we saw that out of the NATO summit, that there's still a coalition developing. So perhaps push on that diplomatically. But I do think, we don't know exactly how many ships are getting through the strait because those transponders are off. We'll think that information will come to light in coming days. But it is because of U.S. Navy basically creating a safe corridor along Oman and getting ships through. I saw the U.S. Central Command said there's something like 800 ships that it has shepherded through that corridor over the last 2 months. The problem is the Iranians want to manage the strait entirely, which of course is a no-go for the United States.
Well, so they're a no-go on that, obviously a major point of contention. There's also contention over the fate of Iran's nuclear program, hence what feels like a real lack of any progress on the diplomatic front, if we are to believe that the diplomatic process is continuing. Rebecca, ultimately, is the military option the real way forward here if there aren't prospects of a negotiated breakthrough?
Yeah, so I'm very skeptical that the Iranians are anywhere near a place where they're going to negotiate in good faith. And because the Iranians are focused almost entirely at this point on the Strait of Hormuz, the head of the IRGC, Vahidi, is determined to continue to use aggression in the Strait of Hormuz. So even if there was anybody in the diplomatic channels working with the United States, those are not the people who are in the seat of command. It's the IRGC. And that means that until we get the strait fully wrested out of control of the IRGC, all these other issues are not going to be things that we make progress on.
Yeah.
So I suspect it's going to take increased military activity on the part of the United States to further entomb or degrade Iran's nuclear capabilities if we make progress there.
All right, Rebecca, thank you so much for joining us. Rebecca Heinrichs at Hudson Institute, where she is a senior fellow, with us here on Balance of Power on Bloomberg TV and radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Oil is surging. Stocks are declining. The Dow, the S&P, NASDAQ, all in the red as investors assess a tense situation in the Middle East. President Trump announcing that the U.S. is reinstating its blockade of Iranian ships transiting the Strait of Hormuz. Let's begin with what is happening with oil. West Texas Intermediate crude, $75.88 a barrel, up now by 6.3%. We've got Brent crude at $80.81, higher now by 6.3% as well. Bottom line, stocks lower with the S&P down 46 to 75.29, drop there of 0.6%. Dow Industrials down 103. The Dow is down 0.2%. NASDAQ is down 1.4%. The NASDAQ 100 index down 1.6%. All of this with the SOX, the Philadelphia Stock Exchange Semiconductor Index, lower now by 4.6%. The 10-year at 4.60% with the 2-year 4.26%. Gold has been trading below $4,000 the ounce. Right now, gold at an even $4,000. It is down by 2.9%. And again, WTI crude up by 6.3%. Crude now at $75.93 a barrel on WTI. A group of 12 states is suing Paramount Skydance, seeking to block its $110 billion bid to buy Warner Brothers Discovery, alleging the blockbuster Hollywood deal will leave viewers with higher prices and fewer choices for movies and TV. Paramount Skydance shares, they are advancing on a down day for much of the market. Right now, we got shares of Paramount up by 1.6%. Warner Brothers Discovery shares, they are gaining up now by 2.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellett, Joe and Kaylee. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. As Charlie knows, oil is on the march higher today, back above $80 a barrel on Brent, nearly at $76 a barrel on WTI, as the oil market contends with the headlines we are getting pertaining to and from the Middle East. Of course, President Trump announced today that the U.S. will be reinstating a blockade against Iranian vessels in the Strait of Hormuz and charging a 20% reimbursement fee to any other vessel that would like to transit that crucial waterway. And I would call attention to some headlines that just crossed the Bloomberg terminal as well, coming from Saudi Arabian TV, that Saudi defenses are dealing with a Houthi missile attack that targeted the southern region. The Houthis, of course, an Iranian proxy who have shown an ability to disrupt transit through the Red Sea in particular. And of course, this could, as we await further confirmation, represent an escalation, as we are seeing once again a reheating of the tension between the U.S. and Iran and groups affiliated with the Iranian regime. It's all, of course, something that we have been watching closely here in Washington, that President Trump talks about on almost a daily basis and talked frequently about, with one man in particular in the United States Senate who was a vocal advocate for the U.S. pursuing the operations against Iran originally, and that would be Senator Lindsey Graham, the Republican from South Carolina, who died of what his office described as a brief and sudden illness over the weekend at the age of 71, leaving behind quite a legacy, obviously, Joe, but also a big hole in the United States Senate in terms of his ability to liaise with this White House and liaise specifically the opinion of one of the more hawkish members of the Republican conference in the wing that represented.
Maybe the biggest Iran hawk of them all in Washington, and pretty remarkable to see this market reaction, Kaylee. This does not look like an effort that we are about to wind up anytime soon. And when you consider the looming debates about a supplemental budget request, what was that, $67 billion, $1.5 trillion defense budget, Lindsey Graham was a central figure in pushing that along. Also, as chair of the budget committee, you're going to have, as we just discussed with Eric Wasson, Ron Johnson up there now, who might want to do this a little bit differently when it comes to the dollar signs. We want to get to the policy here in the Strait, but also the politics of the man, Lindsey Graham, with our great panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick is our, of course, Republican strategist, partner at Stone Court Capital, who worked for many years with Lindsey Graham by way of his relationship with John McCain and the Three Amigos. Of course, Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. It's great to have you both with us here. Rick, will the president be able to get what he wants and what he needs to comport this war without Lindsey Graham as a guidepost for himself and also for lawmakers on Capitol Hill?
Yeah, Joe, there's no question Lindsey Graham was his fiercest partner when it comes to trying to prosecute a successful war against Iran. He was a champion of our relationship with Israel for decades. Really, Israel's best friend in the United States Senate since John McCain's passing, and really the key component to making the connection between what needed to get done for Israel's security and bridging it to the final conclusion, which is, going after the Ayatollahs in Iran. And so without him, not only is it going to be more difficult in the United States Senate to speak with really one unified voice, but even in the region. I mean, Lindsey's work with the Saudi Arabia Crown Prince, those in UAE and Qatar. I mean, he was a tireless traveler to those places to try to secure their support for this war in Iran. And without him, I suspect it'll be more difficult to keep all our allies even together. So his passing will have a real profound impact, I think, on this debate. Hopefully we're getting to the point where there's less debate and more sort of, I'd say, conclusion to this storyline, but certainly today it doesn't seem so.
Well, and as you talk, Rick, about the late Senator John McCain as well, both of these men, of course, you worked with very closely over the course of their careers and yours. How many of their ilk are left in this Republican Party as it exists now, and in this Republican Senate in particular?
Yeah, certainly, like Eric Wasson said, there are plenty of Republican hawks still banging around. He mentioned Tom Cotton, chairman of the current chairman of the Armed Services Committee, others who I think have shared the global vision of the United States being the greatest country for good in the world, and our importance to being engaged with our allies and opposing our enemies. But certainly, I don't think anybody really invested the kind of time it takes to build those relationships overseas, in addition to articulating the need for those relationships at home. So that part is probably irreplaceable. It will be interesting to see if some of these Republican senators try to step into that role and play the relationship building card that Lindsey Graham, John McCain, Joe Lieberman, others have played over the last few decades. And it certainly is important. The White House, State Department can't do everything, and countries look for long-term support, and where you get that is the United States Senate, and those senators have an important role to play in doing that.
Really interesting. This is, of course, going to kick off a process that we can discuss here, and it does appear that Lindsey Graham's sister, Darlene, is going to be the caretaker. We'll find out at 4 p.m. Eastern time when the governor of South Carolina makes that announcement. But then, of course, there will be an election to follow here, and this is going to be something that we're covering, much like other primaries on the trail. Jeannie, the evolution, the political evolution of Lindsey Graham is something that must be noted, remembering that he was actually running against Donald Trump ahead of the first term, 2016. I'll never forget the day Donald Trump put his cell phone number, Lindsey Graham's cell phone number, on TV. And of course, he was not a supporter of Donald Trump even after he got out of the race. He then supported Jeb Bush. When he got out of the race, Lindsey Graham supported Ted Cruz, but eventually came around to be one of Donald Trump's most important supporters and advisors, as I think we've established this hour. Listen to the way he spoke about the president back in 2016.
The goal for the Republicans is to say, I'm for the working man, not just the rich man, rich woman, working woman. That's sort of the goal. That's sort of where we're stuck. And I think he's instinctively owned to something, trying to broaden the party's appeal to working folks by putting on the table things that we normally say no to.
It's interesting, Jeannie, a lot of other Republicans who might have considered themselves never Trumpers might have had difficulty arriving at that point. What do you make of the evolution of Lindsey Graham?
Yeah, and it was quite an evolution, Joe. I mean, he was one of the chief Republicans who, when Donald Trump was impeached for 2020 election interference, he pushed them to acquit. He was primarily responsible for getting Donald Trump's 3 Supreme Court justices onto the bench. And of course, Donald Trump mentioned that on Meet the Press yesterday, his work on the Kavanaugh hearing, which was for many Democrats was the beginning and the end of Roe versus Wade. And Lindsey Graham was all over that. You know, it seems that Lindsey Graham was able to do whatever he could. Some people described him as a shapeshifter in order to stay in the room with power and in order to advocate on issues that he believed in. And one of those is the quagmire in Iran that we're talking about now. I mean, Donald Trump is somebody who famously ran against this muscular foreign policy that we have now seen over the last year. And one of the chief architects of that on apparently the golf course was Lindsey Graham. And it was interesting yesterday, Benjamin Netanyahu said after Lindsey Graham passed that it was Lindsey Graham who pushed him to say you should aggressively take military action. And he said, quote, Bibi, you have to do it. Knock out this nuclear weapons program before they knock us out. So he was in that, and Bibi Netanyahu also mentioned how he was trying to coach him on how to deal with Donald Trump. So he was staying in the vicinity of power in friendship with Donald Trump in order to further his own aims. But we also have to be realistic. These are aims that are opposed by many members of the Republican Party today and increasingly, and of course, the vast number of the American public who oppose the war in Iran.
Well, as Jeannie suggests, the president and Senator Graham were frequent golf buddies. We know they spoke frequently. Rick, in fact, President Trump said shortly before Senator Graham's death, they did talk on the phone. He said they talked about a number of things, the Save America Act included, and whether it's that election legislation that's a priority of the president, the defense budget that Joe mentioned, other members that or other matters the Senate's going to have to take up, including confirmations of some key cabinet appointments like the Attorney General. Rick, how much harder is that going to be now with Graham gone, knowing there will be a caretaker named, but you still have questions about when Senator Mitch McConnell will return too?
Yeah, look, the math has never really worked out for some of those issues you talked about. I mean, we couldn't even get a Republican majority, simple majority for the SAFE Act 5 times when it was voted on. So anybody else would say, okay, I don't have the votes for that, which is exactly what the Majority Leader Thune has told the president. But for whatever reason, the president seems dug in on that. I would say it would be Senate malpractice not to immediately put Lindsey Graham's name on the Russia sanctions bill that has 85 co-sponsors and pass it immediately and send it to the president's desk. The reality is this is one of the last things that Lindsey Graham was working on, at the NATO conference this last week. And I think it really would be a great way to start this session.
Really glad we could have you with us, Rick Davis and Jeannie. Thank you so much for your insights. Our great panel, Bloomberg Politics contributors Rick Davis and Jeannie Shanzana, will meet you on the late edition of Balance of Power right here on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Gold, spot gold below $4,000 the ounce. Oil ripping higher, stocks lower. We begin with the U.S. equity market. Stocks are dropping as investors assess a tense situation in the Middle East. President Trump this morning announcing that the U.S. is reinstating its blockade of Iranian ships transiting the Strait of Hormuz. Right now we got the S&P down 54, drop there of 0.7%. Dow Industrials lower by 0.3%. NASDAQ is down 1.5%. The NASDAQ 100 index down 1.8%. Semis selling off. The Philadelphia Stock Exchange's semiconductor index, the SOX, trading lower by 4.9%. All of this now with the VIX below 17, a 10-year at 4.61%, the 2-year 4.26%. Spot gold below 4,000 at $39.97 the ounce, down 3%. West Texas Intermediate crude now higher by 7.3%, $76.65 a barrel. Brent $81.65, up by 7.4%. Stellantis' shipments climbed 10% in the second quarter, fueled by growth in North America, as the maker of Jeep SUVs and Ram pickup trucks pushes on with a turnaround plan. Stellantis shares, they are advancing by 1.7%. And Paramount Skydance, Paramount says that the recent complaint filed by the state attorneys general defies, quote, evidence-based antitrust enforcement and as such must be rejected. Paramount Skydance up 2.6%. Warner Brothers Discovery shares, they are gaining by 3.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you very much. Keeping an eye on the markets for us from New York, and we're watching them all the same here in Washington as we see oil hitting session highs at more than 7% on the day as we contend with headlines being driven by President Trump and from other outlets in the Middle East. As we mentioned earlier this hour, Saudi media is reporting that the Saudis were dealing with an incoming attack from the Houthis that were targeting the south of Saudi Arabia in particular. And as we consider that Iranian proxy, previous action that they have conducted in the Red Sea that was disruptive to commercial shipping, it all could point to not so good things as we consider that the Strait of Hormuz also effectively seems to be closed off at this point. President Trump says at least it's closed off to Iranian vessels and cargo as the U.S. is getting set to reinforce the blockade and charge a 20% reimbursement rate to all other vessels trying to get through. Essentially, Joe, the president saying it's the cost of administration, the cost of the U.S. being the guardian of that critical waterway.
The guardian of the strait is how he's terming it. Price of gas, Kaylee, $3.87. That's the national average today. If we keep seeing moves like this in crude, it's going to start leaning back to $4. This is really something. Back to our highs of the session, or carving out new highs. $81 for Brent is pretty remarkable here. We're looking at almost 77, as you mentioned, for WTI. Just some of the stories that we're covering here in terms of the fallout of the president's actions in Iran. But we'll have a lot more to consider when the Speaker of the House sits down with the president in the Oval Office a little while from now. It's a busy day at the White House, actually. We can give you a quick view, if you're with us on Bloomberg TV or on YouTube, of what's happening right outside the West Wing. We're actually waiting to hear from the president himself at an IndyCar event. This is a view you never see, Kaylee, here. This is the driveway between the White House and what we used to call the old executive office building. You see that portico there. That'll take you right into the West Wing, and they've set up a podium for the president to speak. I guess you've got the Indy cars out there. We've got a big race set up for August. Yeah. I was curious what it would cost with these increases in gas prices to fill up an Indy car. They don't use gas, 100% renewable race fuel. I never knew this. IndyCar.com. It's E85, which I guess this is going to help when they're doing laps around the Capitol come August. Are you going to go to that thing?
The more you know. No, I don't think I'd be able to physically get here. They're going to have to close off a lot of D.C.
They're going to be actually on Pennsylvania Avenue with these Indy cars.
Yes.
I guess we'll see what the president has to say about it in a little bit here. We're actually covering a couple of other things. As soon as the president's done with that meeting, he'll sit down with Mike Johnson to talk about reopening the floor. It has been closed, essentially, held hostage by a single Congresswoman, Anna Paulina Luna, who is upset about the Save America Act, and it's really kept everything else from moving. The president needs to see an NDAA. He wants to move a supplemental budget request on Iran. He wants to get a new defense budget across the board and government spending in total, which is why some of us are asking about the prospect of another government shutdown. It's where we start our conversation with Mark Short, I'm glad to say, is back with us in our studios in Washington, the chair of Advancing American Freedom, former director of legislative affairs in the first Trump term, and former chief of staff, Vice President Mike Pence. Great to see you, Mark.
Thanks.
I hope your summer's going well. I can't imagine what lawmakers are going through as they come back to town here, knowing that they're handcuffed. How do you get the floor back open?
I think that they're going to have a challenge getting the floor back open. I think they're making the right case by going to the president. He probably has as much leverage over Luna as anybody else, but I still think that you have such incredibly narrow margins right now, and any legislation they're passing, I think it's getting more and more difficult as you get closer to November because your margin in the Senate is pretty tight too.
Yeah, sure is.
Well, certainly so, and we'll get to that margin in the Senate in a moment, Mark. When we consider, though, that the president does seem to have a fixation on the very same thing Anna Paulina Luna does, which is the Save America Act, despite repeatedly being told by leadership that the votes are not there as it stands, he's not abandoning the effort. Is he going to be forced to at some point?
Well, I think that some of us who are more cynical think that the president, knowing what the prospects look like in the midterms, can say, look, I told you guys what would happen if you didn't pass the SAVE Act. And so this is a little bit of, I think, setting up for what is likely to be a political downer come November for those of us who are Republicans. But I think that the House strategy is to break the SAVE Up Act and basically move it as part of a Reconciliation 3.0 and to tie funding to states to actually implement the SAVE Act at a state-by-state basis. Again, I think the prospects of a Reconciliation 3.0 getting passed through both chambers at this point is pretty slim.
Does it become more difficult without Lindsey Graham at the helm of the Budget Committee? He seemed to be helping to steer this, at least for the upper chamber. We can talk about a lot of the other implications of his passing, but that seems to be an immediate one.
I think that losing Lindsey Graham is a big loss for Washington, for our national politics. I think he was uniquely talented in ways that he had friendships with John McCain, Joe Lieberman, Donald Trump. That's a unique trifecta, and I think it shows his flexibility and his nimbleness in this town. But honestly, Joe, I don't really know at this point. Again, the SAVE Act and others, it would need 60 votes in the Senate, so it's not like Lindsey Graham's vote was making a difference. And his talent was to basically be an emissary between the Senate and the White House. I don't think it's having that dramatic an impact on actual legislation between now and then. And people forget, between now and Election Day, I think we're down to 21 legislative days. Wow. That's it. Yeah. And so there's really not a lot of time to get NDAA, Reconciliation 3.0, or as you just mentioned, funding for the government that's due September 30th.
Well, what about funding for the Defense Department in particular? Because, of course, Lindsey Graham was a defense hawk.
Sure.
He was a vocal advocate for things like a $1.5 trillion defense.
He was a great advocate for the Defense Department, but also for Ukraine against Russian aggression and for Israel. But again, I think as long as the war is going on, it's going to be hard to earn Democrat votes on supplemental funding for Department of Defense. And so I think that those prospects are pretty bleak as well.
Well, even more extreme, I guess, the analysis from our chief policy analyst at Bloomberg Intelligence, Nathan Dean, says from here on, it's nothing but CRs. In fact, that could be the case for the next 2+ years, Mark.
I think that it is likely to be CRs for quite some time, but I think even the September 30th could be more of a shutdown than a CR, because right now where they are is in very different spots, and I don't think there was a political consequence to Democrats shutting down the government last time. And I think for most American voters, the assumption is, look, you have the White House, the House, and the Senate. Yeah. They don't know that 60 vote threshold in the Senate or whatnot, so they're going to blame one party if it's shut down and say your party's in control. And I think there's a Democrat viewpoint that says we're not at loss here if there's a shutdown come September 30th. Wow.
So that just reinforces the midterm momentum being not on the side of the Republicans in your mind, essentially?
I think that the challenge for Republicans is always going to be a difficult cycle when your party is in power in the White House. It's even more difficult if your party is control the White House, the House, and the Senate. Americans want divided government. It's what they prefer. And so it doesn't mean it's impossible. It just means that the hurdle is really high. I think you add to that the president's trade agenda and the fact that we've not basically really lowered prices significantly. I mean, we talk about inflation going down from 9% to 4%. Yeah, the rate of increase is less, but prices aren't less. It's still a 4% inflation rate. And I think for a lot of farmers in America, they're feeling that. They're feeling the higher fertilizer prices, and they don't have markets to export to because in retaliation to the president's war on trade, other countries have closed those markets. And so I think there's a lot of consternation in the heartland of America about the current trade policy, and that has been a reliably red Republican part of the country. And I think that you could see losses there that Republicans have not seen in many years.
Really something. Now that we're back to what appears to be a shooting war with Iran, not that it ever really stopped, but after a third night of pounding attacks that we saw last evening from the United States, the conversation about war powers is going to come back around. Does that gain more traction the further we get into primary season with lawmakers starting to feel a level of independence?
It probably gains more traction on the campaign trail.
Okay.
It probably gains a bigger campaign issue. I still don't think there's a jeopardy of them getting the necessary votes in both chambers to get that. And I still think it has not been challenged at the Supreme Court as to whether or not this is really what our founders designed was for the legislative branch to have that authority.
Well, when we consider, though, the prospect of the war continuing, the president to this point, or at least until recently, expressed very little appetite for an outright resumption in hostilities. And then at the NATO summit, he suggests there's no point in negotiating with the Russians. He declared the MOU dead. He effectively said the ceasefire is over. And today he says we're reinforcing the blockade. It feels like this is only going one direction, and it's not the direction of resolution, Mark, or you'll correct me if I'm wrong.
No, I don't think you're wrong. I mean, I think that the J.D. Vance wing certainly wanted to try to strike some sort of appeasement toward Iran, but it doesn't appear that's had any progress. And I think for a lot of people, they look at, say, for 47 years, Iran has continued to break deals, and so why are you surprised? But there's also an enormous amount of mixed messaging that's come from the White House throughout this conflagration. And, it was only not just a couple weeks ago the president said it's a great deal and we're going to get it done, but he actually even said, he was allowing them the ability to repurchase weapons to defend themselves. And so there's been a
Didn't
lot of different
ballistic missiles were problematic.
Oof, goodness, there's been a lot of different messaging that's come out from what the White House position is on the MOU, much less the larger wars. But I think you're right. I think that as Iran has continued to poke the bear, the president's probably gotten at this point pretty tired of it.
Love your thoughts, Mark Short, on South Carolina and what comes next. We've had a number of names on a pretty short list at this point. Lieutenant Governor Pamela Yvette seems to be at the top of it, not as a caretaker. That appears to be something that'll be reserved for Lindsey Graham's sister, Darlene. But Nancy Mace on Twitter with the Godfather tweet, they keep pulling me back in. Ralph Norman, both fresh off primary runs and losses. Will this be a familiar name, or maybe one of these three?
I mean, neither of them made the runoff.
Yeah.
So it's hard for me to see that changes that much in the last couple of months. I think the president's going to continue to be invested in what happens in South Carolina, and I think it's pretty well known his opposition to both of those two. One for supporting Nikki Haley, one because it's just because of who Nancy Mace is. Yeah, it's a lot. Well said. And so I don't see that the president's going to get behind either one of them. So I think that it's probably going to be a different candidate.
Well, and we'll see what kind of candidate does come forward and how much they reflect the kind of hawkish nature of Lindsey Graham, as we've already discussed. I just wonder with his exit, with Mitch McConnell, who of course says that he is going to be returning to the Senate, although it's not clear when his hospitalization will end. They represent a kind of wing of the Republican Party that J.D. Vance, who you just mentioned, for example, does not represent. And I wonder with their departures, if you see the party is going to be shifting much more in the direction of the isolationist wing rather than the kind of interventionist hawk.
I think it's a great question, Kaylee, and I think it's something that is yet to be seen. I think there's no doubt that the isolationist wing has been ascendant in the Republican Party, and as you say, the more hawkish wing, losing both McConnell and Lindsey Graham, will have significant losses there as far as what the national debate is. As far as Lindsey's successor, it may not be as articulate as Lindsey, but certainly with all the military presence that South Carolina has, you would imagine that the successor will more or less support the same viewpoint. But as far as the rhetorical debate about where the party goes, I think it's pretty much up for grabs.
We've only got a minute left, even less than that. Can you imagine an IndyCar race downtown Washington, D.C.? The drivers are about to get out there with the president. You going to this?
Look, I think it'd be pretty fun, but at the same time, you guys know what August weather is in D.C.
Yeah, right.
I mean, how hot and muggy that's going to be.
After we survive 4th of July.
After 4th of July, it was pretty hot and muggy on the mall, too.
And the UFC fight, also hot.
Yes.
There's a pattern here.
During this thing. They're going to be on Pennsylvania Avenue? I don't get it.
Yeah, we might just have to be calling in from home, not here in our very nice air-conditioned studio, where we've been joined today by Mark Short, of course, the former Director of Legislative Affairs in the first Trump White House, former Chief of Staff to Vice President Mike Pence, now Chair of Advancing American Freedom. Mark, thank you for joining us. And, of course, Joe Matthew and I will be back for more at 5 p.m. for the late edition of Balance of Power right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, across Bloomberg platforms. He is back.
Are you talking about me?
I am.
Or Charlie Pellet?
Well, Charlie's been here.
Charlie's here.
I mean,
but he's
love you, Charlie.
He's a world traveler.
He is a world traveler, but it's good to have you.
It's good to be back, and I tried to unplug a little bit. I couldn't,
Good.
I couldn't stay away from everything, but I come back, and it seems like we're talking again about the Strait of Hormuz and oil prices.
It's amazing, right? You kind of can't get away from it. Yes, indeed. We do have President Trump saying the U.S. would restart its blockade of Iranian ships through the Strait of Hormuz. There's that going on. And then, again, Tim, and you know that, before you went on vacation, we're questioning this AI-fueled trade. And some days, investors are buying in. Some days, they're not. And you see that play out in particular among the semiconductors.
Yeah, especially in Korea. So like overnight, what happens in Korea and then that bleeding into the U.S. a little bit, certainly happening with SK Hynix shares dropping. The investor concern about this boom being potentially overextended.
It's the big question, right? And I guess only time will tell what actually is going on. So we're just going to all have to be patient. In the meantime, ahead this hour, we are going to take a look at semiconductors, SK Hynix in particular. You've also got some news out of TSMC, the ups and downs of chip stocks. What do the fundamentals show? That's what we like to know. I'm looking at a SOX, though, that's down another 5% in today's session, but we continue to see this group up and down, up and down. We're focusing on those memory names. All 30 names in the SOX down right now.
We're also focusing on earnings as we do start to hear from the big banks this week. It'll be watched by investors. The deal environment, too, in question. Mitch Berlin over at EY Parthenon, EY Americas, also Bloomberg News, U.S. IPO and deals reporter Ryan Gould. They're going to sit down with us in just a few minutes. We'll talk about deal activity ahead of the midterms on day 2 when states are challenging the Paramount and Warner Brothers tie-up.
I was going to say, uh-oh, not completely done. All right, plus Roger Crandall, CEO over at Mass Mutual on health and wealth colliding, and then tying it all together. We've got a great investment guest, Julie Beal at the alt investment firm Kane Anderson Rudnick, coming our way in just a moment.
All that ahead over the next hour right here on Bloomberg Business Week Daily. First up, though, check of the day's trade and top business stories. Here he is, Charlie Pellet.
All right, I thank you very much. Welcome back, Tim. Nice setup because you guys hit all the key elements that's going on. Lots of moving parts of this market right now. Gold below $4,000. Oil is surging. Chips selling off. Stocks are lower. So let me begin with what is happening first of all with spot gold. It is at $3,994 on the precious metal. Gold is down by 3.1%. Crude now surging by 8.5%. WTI back above 77, 77.53 right now. Barrel of Brent crude is at 82.54. Brent up now by 8.6%. All of this as investors, oil investors, keep an eye on developments out of the Middle East. Stocks lower, tech names hit hard, semis particularly hard. The SOX, the Philadelphia Stock Exchange's semiconductor index, down now by 4.6%. The NASDAQ 100 index down 1.8%. The NASDAQ Composite Index down 1.4%. All of this with the S&P 500 index keeping us in context, down 51, a drop there of 0.7%. Dow Industrials down 136 on the Dow, a drop there of just about 0.3%. The 10-year at 4.61% with the 2-year 4.26%. An AI-fueled stock rout in South Korea spilling over into U.S. markets this morning. SK Hynix ADRs now lower by 6.4%, underscoring growing investor concerns that the boom is overextended. It is a topic that we'll have a whole lot more on coming up here on Bloomberg Business Week Daily. Micron, among some of the other memory names, down 4.9%. SanDisk down 12.4%. Western Digital down by 6.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. Tim and Carol, that is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Well, semiconductor cycles are to be expected. That's the industry kind of mind think that we are so often reminded about. We've seen that certainly in the stocks in the space as they rally and sell off. The group overall is certainly up a lot. But take SK Hynix today, just one trading day after the shares started trading in the U.S., and we're seeing that name getting pummeled.
Yeah, down about 6.3%. These are ADRs
Correct.
here in the U.S., and they're down about 6.3%. But I think a lot of people would argue, this is the sort of the epitome of a cycle, right? That's the chip stocks are what represent where we are in a certain cycle. Like, people have seen this movie before.
Listen, one of the questions we kept asking last week and also on Friday is like, is this a sign of the top or possibly a sign of, wow, another just major cycle upcycle that maybe goes on longer rather than shorter when it comes to semiconductors. We've got a great voice with us.
Ian King is with us. He's Bloomberg News U.S. semiconductor reporter. He joins us from the Bloomberg News San Francisco bureau. This moment in time, Ian, for somebody who lived in Korea like you, covered these companies in the U.S. and globally, what does it represent to you?
It's very difficult to know. I mean, I think you have to separate what's going on in terms of the trading and in terms of the general market nerves with the fundamentals. All we can say, as somebody who covers the actual companies, is that there is nothing that has happened between last week when everybody loved SK Hynix and today when, well, oh my God, we're scared and it's the end of the world. For example, there was a report by Mizuho out there saying that data center spending is actually going up. And guess what? The even better news is that it is spreading. It's spreading out to neoclouds, to smaller companies, that there's less of a concentration of risk. So, separating the two, the trading situation and the actual fundamentals is difficult right now.
Less of a concentration, great, but still risk, perhaps. I mean, this is the thing we've got to figure out, right, Ian? I'm looking at a bunch of headline stories. Cameron Kreis writing the AI chip trade is starting to look a little ugly. We've got the Kospi slide overnight, circuit breaker cushioned by TSMC sales because there was some good news there. We also have, questioning whether or not the SK Hynix debut, as Tim mentioned, is a bet that the AI breaks the boom and bust chip cycle. I mean, do we know? How will we know? Will we not know until there is either signs that this is a boom that lasts longer or a sign that there is actually a bust starting to happen? Will we not know until we're there?
Yeah, it tends to happen fairly quickly, particularly in the memory chip industry. So you would definitely, that explains why people are twitchier about SK Hynix, Micron and Samsung, because the commoditized nature of these, but none of the fundamentals that we've got indicate that there's any turn there. In general, you would look at margins starting to slip, utilization of factories starting to slip, of pricing power starting to slip. At the moment, we haven't seen anything that would indicate there's anything going on in those metrics.
Ian, why aren't there upstarts that come in and try to make money quickly off a situation such as this, off a boom such as this?
What would you say if I asked you, can I borrow $30 to $40 billion and the return on that will probably not be very good, so then I'll need another 30 or 40 billion to maybe do okay, and then maybe another 30 or 40 more after that.
I would say
just be okay.
So what you're saying is you got to spend money to make money?
You've got to spend a lot of money to make money, and there is really very little in the way of a guarantee of success. It's really difficult. That's why we don't see people crashing into this market, because the barrier to entry is so high. I mean, in terms of design, it's become more automated, something that can be done faster. But again, you've got to get to volume for this to make sense.
First of all, I love when Ian King does sarcasm. It just kind of warms my heart, especially on a Monday. Having said that, I mean, all of the names in the stocks are down here, and this index still up, I don't know, more than 70% year to date, but it's been up a lot more this year. We have seen certainly, some pullback from some of those highs. Ian, what is it, though, about memory chips? And you remind us, I wrote it down, I have it actually on my desk, where it's like, was it 3 years ago that the memory guys, right, they were just in the dumps. What is it about memory? Is it something more particular within the semiconductor space that's worth noting here?
Yeah, I mean, the word commodity is appropriate because, in theory, if you take a DRAM chip made by Hynix, you pull it out of your computer, throw it away, and grab another one from Samsung, put it into the slot that you took the Hynix chip out of, it's going to work because they're made to industry standards. Therefore, they can be traded. Therefore, supply and demand. In theory, there isn't the technological edge between one company's products and another, and they are replaceable. So they're a commodity, and you can buy and trade and play that supply and demand balance. And that's what's always been the case. So they tend to sort of move and be very responsive to that demand and supply balance, and once that tips, it tips really fast, and these companies can lose money.
What does our audience need to know about Chinese memory chip makers?
So far, they haven't been a factor, and the reason that they haven't been a factor is because of the attempts that the US government has made to restrict the access of advanced technology, whether it is the manufacturing technology, whether it is the actual chip technology itself. These companies that have tried to get into this industry that were potentially going to flood the market with supply and bring it back down haven't been able to do so because they can't get things like ASML's latest machinery. Whether that will change, whether the lobbying efforts of some US companies to bring them into the market to address this supply situation will change that dynamic, but we don't know yet.
Hey, before we go, 30 seconds if we can on TSM. That stock, the ADRs that trade here are down about 2%. They were a little bit higher, though, in the session. Sales soaring 36%. Our story saying that in the latest sign of AI spending momentum. What does that story tell you about semiconductors? Or
yeah,
other names?
I mean, it's an affirmative story in that obviously they still have a lot of demand. Everything that's leading edge, everything that's really expensive is going through their plants. The thing to watch, though, is their revenue going up because of margins, because they're able to charge more versus more volume of orders, and that, I think, is something that people should focus on.
Yeah, you always point that out, which is really key. All right, Ian, thank you. As we said, we always appreciate Ian King, Bloomberg News, U.S. semiconductor reporter out there on the West Coast. Tim, we know we're watching the semi-trade. As we mentioned, the Philly Semiconductor Index, all 30 names are down into today's session, still up more than 70% year to date, but there was a point where it was up more than 100% this year. So we've definitely seen...
July.
I know. Well,
I'm saying that both ways.
A lot can happen.
A lot can happen.
All right, let's get to it. Investors, too, are watching, as Tim mentioned earlier, all the developments in the Middle East. That continues, the churn, what doesn't look like, we're making progress there. Julie Beal is CFA, Chief Market Strategist, and Portfolio Manager at Kane Anderson Rudnick. They're an alt investment management firm. They focus on real estate, credit, infrastructure, and energy. They've got about $38 billion in AUM. She joins us from LA. Julie, thanks so much as we kind of got through some of the day's chip news, because this seems to really move the market. I don't know, what are the market stories? What are the geopolitical stories? What are the stories that really matter to you in your investment world?
I think that there's two separate things, right? In our investment world as bottom-up investors, we're really just focused on the individual names themselves, because the idiosyncratic qualities of them, particularly in small and mid-cap, are much more important necessarily than the broader macro. But for the market, in the here and the now, it's really the two themes of what does the change in the geopolitical tension mean for inflation, oil prices, et cetera, and what is the durability and the sustainability of the AI CapEx cycle. And so I think these two themes are really central, and there's good reasons for that, right? We know that it would be wonderful to have lower interest rates. It's just hard to do it when inflation has been this persistently sticky. And we also know that a large amount of the CapEx spend that's happening is really taking over for consumer spending. It's been the longest time in the world that I've been saying, well, the consumer accounts for 2/3 of the economy, and that's really kind of changed hands recently. And so that means that this theme is what's driving our economy and supporting it, at least in the here and now.
Well, let's start with one of the hard questions that you posed, and that's the one that everybody's trying to figure out, which is the durability of the CapEx spending when it comes to this AI infrastructure. I think it's fair to call it a rally still at this point. What is the durability of that spend?
I think the biggest challenge that we have is that the way it is panning out right now, when companies are integrating a lot of these AI tools, some of them are generating a ton of benefit, and that's primarily the software companies themselves that are using it in their software development. And the question I always have is, what does it mean when the company's selling you the technology? Are they themselves the best use case for it? But does that necessarily translate into better sales for the rest of us? And I think that's the ongoing question, particularly as token prices, continue to be a larger and larger part of IT budgets and are harder and harder to control. So I think that's an ongoing question. And then on top of that, if we have higher prices for memory and circuit boards and all of that, then that changes the investment case. It makes it even harder for them to make money because putting in the data centers themselves just gets more and more expensive. So I think we're kind of in this air pocket, this moment where the economics still aren't really clear and the use cases themselves haven't panned out, I think, the way that people had hoped.
Hey, one of the things I want to ask, and what's interesting about talking with you, Julie, many things, but I also like the world that you play within. Sorry, you know what I mean. But I mean, infrastructure, energy, which is something, real estate, actually, when you think about AI and the build and so on. What are you seeing there that supports what feels like the over demand that we continue to see in this? Or do you feel like things are kind of calming down a little bit? What are you seeing?
I think we still would expect that there would be continued demand for these data centers. What's really difficult, though, is that they have a pretty bad rap, and so there continues to be a lot of community pushback. I think there really hasn't been a very good use case made to many communities that are receiving these data centers for why they might be positive or not. And so I think that that friction creates a certain amount of ceiling that's very hard to break through in terms of continuing to expand the growth. That might not be a bad thing. That might mean that that is the thing that prevents us from having a full-out bubble because we're really capacity constrained, and so we stay a little bit more capacity constrained, and we don't reach, you know, irrational exuberance. It just takes time to really filter through.
Until we send them to space.
Until we send them to space.
I mean, I'm only joking. I'm only half joking here because that is Elon's thesis and many others' theses at this point, that like this is something that could be done in space. Is that realistic to you?
I think the science still has to be figured out. I think we are thinking about it less in terms of, I think people imagine these, large scale deployments. And I think what they're talking about more is racks in space. And I think maybe it's possible that for certain use cases where latency isn't an issue, that's a good opportunity for us. It's just you have to factor in that anything that goes up there has to be radiation hardened to a pretty extensive degree that we haven't yet figured out that kind of technology. And so that may take a little bit longer than people are expecting. But I think it's a possible use case. We can't just completely count it out.
Do you look at the markets right now as a case, Julie, where so many things have to go right for all of this exuberance? I'm going to go ahead and use the word exuberance and excitement about AI has to pan out? Or do you feel like, wow, it's really amazing. Here we are getting ready for another earnings season. We're probably going to once again see the CapEx and the justification, and the fundamental stories are going to be there that support the AI build.
So personally, I think it's a little bit of both, where I think that the CapEx benefits that we have going into the economy, that's really benefiting a lot of people and a lot of companies in the here and now. We're not just seeing it on the chip side, but we're seeing it in HVAC companies that are really benefiting. And your average electrician is probably really enjoying this surge in demand for his or her skills. So I think that there's an immediate impact in the here and now that investors are chasing. And that's not even just on the semiconductor side. I think we see it across a lot of even small cap industrial names where people are really chasing the picks and shovels right here, right now. And that's based off of a pretty rational assumption that that's going to continue and that the earnings growth is really strong. And so while I question the durability of that, I wonder how much we can kind of continue to build out at that level. And then, I think if we think longer term, the technology for sure is going to be impactful.
Good stuff. Come back soon. Julie Beal. She is Chief Market Strategist, Portfolio Manager at Kane Anderson Rudnick out there on the West Coast.
Hey, coming up next, states are suing to block the Paramount Warner Brothers Discovery deal. That and the busy M&A world overall. That's when Bloomberg Business Week Daily continues.
It's 2:21 on Wall Street. We do check markets all day long. Here at Bloomberg, we've got equities very close to session lows right now. The blockade in the Strait of Hormuz, it is now on. Just getting official word. U.S. Central Command says the U.S. will resume the Iran blockade tomorrow, 4 p.m. Eastern Time. The blockade will be against vessels going to and from Iranian ports. Military says it will continue to support traffic through regional waters. But again, just getting word from U.S. Central Command that the U.S. is resuming the Iran blockade July 14th, 4 p.m. Eastern Time. The Dow, the S&P, NASDAQ, all in the red right now. Stocks and bonds are falling. Oil is jumping. Got to begin with crude because it is now higher, up by 9.6%. WTI, $7.29 a barrel. Barrel of Brent, the global benchmark, $83.35. It is up by 9.6%. Oil is surging as the standoff between the U.S. and Iran intensifies. Stocks lower. S&P now at 75.17, down 57, down 0.8%. Dow Industrials down 0.3%, while NASDAQ is down 1.5%. Tech names hit hard today. NASDAQ 100 index down 1.9%. This with the SOX now down by 4.9%. 10-year 4.61%. The 2-year 4.27%. Spot gold $39.90 the ounce, falling below 4,000 an ounce of the precious metal, now down by 3.1%. Again, recapping the Dow, the S&P, NASDAQ, all lower. S&P down 0.8%. Crude, the big story at this hour. Right now, West Texas Intermediate crude up 9.7%, $78.35 a barrel. I'm Charlie Pellet. Carol and Tim, lots going on. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pell. Just to reiterate a headline that we just heard from Charlie, U.S. is to enforce a blockade of Iranian ports from July 14th at 4 p.m. Eastern Time. That's tomorrow, just a little over 24 hours from now. Charlie mentioned the move in oil that we're seeing. Brent up $7.36. It's 9.7%, up to $83.37 a barrel. WTI higher by up to $78 a barrel. That's up by 9.6%.
All right, we'll keep an eye on it. We're also watching M&A in a big time. There's a lot of activity going on. We're going to get to that in just a moment. But what we did see in terms of actions today, a group of 12 states suing Paramount Skydance, seeking to block its $110 billion bid to buy Warner Brothers Discovery, alleging the deal would leave viewers with higher prices and fewer choices for movies and television. Weighing in on it today, FCC Chairman Brendan Carr, earlier on Bloomberg Tech with Ed Ludlow.
Well, it's hard to see a real legitimate antitrust action, but of course, I leave it to the antitrust experts to weigh in on this. I did think it was interesting that there was a statement, at least attributed to the California Attorney General, that said that they would not sue if Paramount agreed to spin off CNN. It's hard to conceive of a competition or antitrust theory that takes you all the way up to the point where owning or not owning CNN as part of that broader group is a legitimate line that antitrust or competition law would draw. For our part, we do have a piece of this with respect to some of the foreign investment, and we're running a standard process on that, and we haven't made a final decision there yet.
That was FCC Chairman Brendan Carr earlier on Bloomberg Tech. Paramount responding in a statement saying, quote, the lawsuit filed by the state attorneys general in the most generous light reflects a fundamentally flawed application of the antitrust laws and is wrong on both the facts and the law. This transaction creates a stronger competitor against dominant streaming and technology platforms who have harmed the market for theatrical exhibition and jobs in the entertainment industry. This merger will create a company capable of investing more aggressively in premium content, theatrical releases, and creative talent at a time when those investments matter more than ever.
All right, we want to know more on this lawsuit, what it's about, the legal merits of it. With us is Bloomberg Intelligence Senior Litigation Analyst for Antitrust. She is Jennifer Rhee, and she joins us here in studio. All right, Jen, good to have you here. What's the legal justification of this antitrust suit, and what are the merits of this case?
So what they're alleging here, the 12 states that sued, is that in three different markets, 2 related to movies and 1 related to the package of basic cable assets that this combined company would have, that the combined shares get to close to 30% or exceed 30%, but also there are concentration numbers that come out of those markets that exceed the thresholds that are in the merger guidelines the Department of Justice uses and would suggest that this deal could cause harm. So it's pretty straightforward. They're They're looking at top-selling movies, they're looking at widely released movies, and they're looking at the licensing of basic cable channels.
Is there precedent where states have come out against federal regulators and states have actually won?
More recently, there is, yes.
Yeah.
I mean, look, the states have always been able to enforce federal antitrust laws as well as their own state laws. And they have, in some cases in the past, gone their own way independent of the FTC or the DOJ. They are doing this more and more during this administration, and they said they would. When Trump was reelected, the state said, look, if the DOJ and FTC get lax on antitrust enforcement, particularly in the merger area, we're going to step up and we're going to exert our independent right to go ahead and try to challenge some of these matters.
So Paramount's response, which Tim read, saying, and it's a lengthier response, it's, you guys can find it, it's out there, but saying the lawsuit reflects a fundamentally flawed application of the antitrust laws and is wrong on both the facts and the law. Is Paramount right?
Well, look,
or is that just a response?
I think it's just a response, and it's a very broad statement. You know, it gets down to the nitty-gritty. These matters are fact-based. They're very detailed, and it's about how the relevant markets are defined. The states have defined the relevant markets one way. I'm sure Paramount would say that's all wrong. Those are not the proper way to look at the way we compete. That's what they mean when they say they're wrong on the facts and the law. And that's going to be a main argument in this case. Are these markets defined properly or not? And if they are these shares correct or not? And do they depict a deal that could cause harm? I have to say that even in the markets the states have defined, which are narrow, which they had to do in order to push the shares up, the shares are very close to being borderline. They barely exceed those thresholds that suggest harm from a deal. So this is a close case.
What are the probable outcomes here, or at least like a timeline for outcomes?
So what the states are going to have to do still is file for a preliminary injunction, because right now the companies can't close their deal. They're waiting for UK and they're waiting for the European Commission to decide. But once those two regulators come through, and I think they probably will clear the deal eventually, they have no legal impediment to closing. And once they've closed and they've integrated, it's highly unlikely that these states can convince a judge to unscramble the eggs and force them to unwind. So as we get closer to a UK decision, which may be later this year, they're going to have to get a preliminary injunction.
Help me with what FCC Chair Brendan Carr said. California Attorney General said that they would not sue if Paramount agreed to spin off CNN. It's hard to conceive a competition antitrust theory that takes you all the way up to the point where owning or not owning CNN as part of that broader group is a legitimate line that antitrust or competition law would draw.
Well, I'll say a couple things. First, the California State Attorney General, Rob Bonta, to my knowledge, just a few days ago, made a statement that he hadn't said anything like that. Now, if he has, and I have missed it, that's fair.
Okay.
But what he had said is that isn't something. I don't know why people are presuming we want CNN to be divested. But on the other hand, one of the markets they've alleged, which is the licensing of basic cable channels to distributors, there are retransmission fees that are paid by Comcast and DirecTV and companies like that are paid for these packages of cable channels, will go up by virtue of owning this giant package of cable channels. CNN is in that package. And if the answer is the remedy there is to divest some cable channels, CNN could be one of them. So it doesn't lack merit.
Last question. Is this a case that you think is going to go back and forth for a while? They're going to be settled? And is this deal going to ultimately get through? Right now, we had showed earlier shares of both Warner Brothers and Paramount were higher today.
Well, I think that this is going to go back and forth for a while. I think the UK is going to hold things up for some months and give the states some cushion here to try to get a preliminary injunction. It puts Paramount in a tough position because they have a ticking fee that kicks in on October 1st, 25 cents per shareholder per quarter for Warner Brothers. And they're not going to like that. So I suspect if a preliminary injunction kicks in, there may be some settlement viable down the road, because I would suspect Paramount's probably playing hardball right now because they think this is a weak case.
God, it's so much fun. I mean, I can't wait until we say the streaming series comes out on just like the.
It's a little too meta.
It's a little too meta. My next life, I want to come back as Jen Reed. I'm just going to put it. Bloomberg Intelligence senior litigation analyst for antitrust. She is Jennifer Reed, joining us here in studio. All right, I'm Carol Master, along with Tim Stanovic. We're going to continue to watch this. As we said, both share prices are higher. But one of the things we want to do, what we have noticed is that M&A, Tim, seems to have come back in a big way. We are seeing deals in the healthcare space. We're talking about this. There's just a lot of activity going on right now when it comes to M&A, and it may have been coming from some low levels perhaps year over year, but it is back in a big way in the U.S., in North America, and globally overall.
Yeah, I'm glad you went through the regional breakdowns, because those are important here, because it's not everywhere where we're seeing the same sort of boom. M&A up globally 39% year over year. Activity in North America, actually, deal activity is up more than 63% from just a year ago. So here in the U.S., really leading the way.
All right, so we want to get to it and get a look at what's going on, why. Joining us right now is Mitch Berlin. He is EY America's Vice Chair at EY Parthenon, right here in studio. Good to have you back. It's been a bit.
It has been.
Nice to have you here. And joining us for the conversation, I'll tell you why in a minute, out there in our Washington, D.C. bureau is Ryan Gould, Bloomberg News U.S. IPO and Deals reporter. And, you know, Ryan, I kind of want to start with you, and maybe we'll get in also to Paramount Warner Brothers, the back and forth. But you and I were stepping off the elevator here on the 6th floor at Bloomberg. I'm like, how's it going? And you're like, I am so busy. And so give us the backdrop of what you've been seeing in terms of the deal activity and what's going on.
You know, Carol, it's great to be back. And what I would say is maybe at the top here, we're just talking about Paramount. Perhaps there has never been a better time to be a friend of the administration. I think if you just look at the various permutations that surround that deal, you think, you know, it's been cleared in the US, it's now coming under challenge from the States, it's under challenge in the UK. I think if you just extrapolate across the picture here and look at how antitrust is being viewed just generally, I think you're looking at a period right now where there's never been a better time to be a friend of the White House. There's never been a better time to sort of be thinking about your dream deal. I think generally right now we are in the midst of a Trump-induced M&A boom, and I think you're seeing this across the piece, right? You look at deals like NextEra or Dominion. I mean, that's a huge transaction that touches on power, it touches on AI. You think about deals in the media space outside of Paramount like Fox Roku, that's a big deal that perhaps you might not have expected to have seen in another world of antitrust enforcement. And I think just generally, I think if you go into a boardroom, you're looking at boards and management teams and their advisors who are saying, guys, you know, it's here for the taking. Let's have a discussion about what you want to do, what you think your business will look like. And, you know, let's talk through that.
Yeah, Mitch, come on in on what Ryan is talking about. How much of this is about the administration right now versus about the environment that is sort of distinct or at least separate from the political tailwinds?
I think it's a combination of the two. Certainly the FTC and DOJ has been very deal friendly. I think they've only gotten in the way of one deal that I think has been renegotiated but not stopped, which is sort of precedent setting. But I also believe that companies need to transform themselves, and the quickest way to transformation is through a transaction, inorganic transformation through M&A, and that's why you're seeing so many deals happening. The fact that these large deals are happening, I mean, just this month alone, in June alone, I think there were probably 7 deals over $10 billion, just shows you how bold companies and boards are being, knowing that they're probably not going to get stopped by the FTC or DOJ.
Is there, though, Mitch, a bit of a march to the midterms and thinking about, okay, the environment could potentially change out of DC, and so if you're looking to get a deal done, let's do it now?
I think that could be part of it as well. Certainly people know that the whole world can change in a couple of months during the midterm, so let's get in now when we know it's a sure thing, more or less, versus take a chance and see what could happen 6 months from now with a new potentially leading House and Senate.
Yeah, same question to you, Ryan. I mean, how much of this is about getting in under the wire, making sure that the Congress, you're in Washington, D.C. today, but making sure that the congressional makeup is one that is conducive to deals moving through?
I really don't think that can be sort of understated, because if you think about some of these large transactions that, you know, look at Paramount. I mean, these are deals that could have a period of antitrust review that could total somewhere in the region of 18 to 24 months. If you think about the fact we're about to head into the midterms where you could see the House or the Senate change hands, you're sort of thinking about now what that timeline looked like if we were to be going out tomorrow and announcing a politically thorny deal. You don't want to be necessarily running up into that period to end up having to pay things like ticking fees in the case of Paramount, Warner Brothers, and I think just generally, if you're a company that's sort of staring down the barrel of an AI threat, right? You're thinking about how do we not want to be left without a dance partner here. This is an epoch-changing time for many of these companies, and I think they're looking to be aggressive, they're looking to be on the front foot. And you go out and talk to any banker or lawyer, and I think they're saying, you know, the antitrust environment is perhaps one piece in a cog of many other factors. The proximity of the midterms is one of those things too. But just generally, we're looking to be on the front foot, and we're ready to act when it's necessary.
Mitch, come on back in here. I mean, you know, you talk about companies, you know, probably facing it's innovation, disruption, whether it's AI and so on and so forth. What is primarily the driver? Is it AI connected, or is it just for drug companies? It's looking down their pipeline, what's typical for that industry? What is it?
It's sector specific. A lot of it is driven by AI, some of the front of the house AI, but a lot of it back of the house AI. So when you look at a lot of the deals that are happening in the tech sector, it's AI infrastructure. So it's the data centers, cloud computing, the energy companies that are providing energy to AI. So all that is AI related. But when you look at life sciences, for example, there's about $400 billion of patents that are going to go off patent in the next year or so. So that puts around, that's a significant, or maybe it's the next 3 years, I'm sorry, but that's a significant amount of revenue that you have to replace when you start having generic drugs. And so that's what's stimulating a lot of the life sciences M&A, in addition to or the orthopedics, or rather the oncology drugs as well.
We see a lot of that. Ryan, come on in. You know this world too. Come on in, maybe with a question for Mitch.
Yeah, I mean, I think one of the things I would just add on top of that is, you think about what we've seen over the past 6 to 12 months. It's been really dominated by the corporates. And one of the quotes, I mean, we were surveying sort of for our sort of half-year look back at the, what the that happened over the past 6 months. And we spoke to one of our friends at Goldman Sachs in Europe who runs the business. He said that, when so much corporate activity because they're not buying for the next 5 years, they're buying for the next 40 to 50 years. And I think that really gets at the heart of some of this, right? Which is that this is really, we've never been in this period before, where companies are going to have to take such big steps, and they're going to have to become very, very familiar quite quickly with what this new normal will look like across M&A.
Right. If you look at the first 6 months of this year, the majority of the deals have been corporate deals. I mean, an incredible year for M&A, $3 trillion globally, 70% of that is in the U.S., but the majority of that is the corporates versus the private equities. A lot of it because the cost of capital is high. We have a deal barometer that we put out. We update every quarter. We're expecting PE to be flat this year because of that, and they're actually negative going into the first 6 months in terms of deal volume.
That's interesting.
Yes, yeah. But overall should be flat this year, which means the second half of the year should be big. But the corporates definitely are on an uptick. We're expecting about an overall 11% increase in volume from corporate activity this year in the U.S.
One of the other things I would just throw in the mix here, just as we think about the makeup of the M&A that we have seen, you also should think about the deals that haven't happened. If you look into Europe, I mean, we followed a deal quite closely earlier on this year where Pernod Ricard, the French beverage giant, put in a bid for Brown-Forman, the maker of Jack Daniel's whiskey here in the U.S. That deal fell apart, a variety of reasons, but, two family shareholders, cross-border M&A is difficult. Another reminder came when Estee Lauder, the great, large beauty company, globally tried to sort of merge with Puig in Spain. Again, another family shareholding issue there that perhaps led to that deal falling apart. But I just think that gives you some of the sense of the scale that we're seeing across the piece here. And I really don't think I think it's important not to underestimate just how big companies are looking when they're thinking about M&A today.
Mitch, just because a deal happens or we're in an environment where a lot of deals are happening doesn't mean it's ultimately a great thing. I mean, we can think back to the year 2000, and AOL Time Warner is sort of the textbook case of a mega merger that went completely wrong. When are we going to know if this era was one that was full of successes or one that was full of missteps?
I think the level of diligence that people are doing right now is so much greater, and the access to data that we have is so much greater than it was in the past, that I wouldn't expect as many failures. From a mathematical perspective, the culture is always an issue. But mathematically, I think the deals and the synergies make more sense now. They're doing much more than they had in the past. You always have to get the culture right. And if you don't get that right, the deal can fail. And that's something that you can't necessarily get through, diligence and crunching the numbers.
I've definitely heard that from top M&A bankers. Like, the CEOs have to get along for this deal to make sense. As a sign, indication of market health, economic health, global business health, what does it tell you in terms of the activity that you're seeing and the types of deals being done, just as we wrap up?
I think the capital markets are really strong, and that's funding a lot of these deals because the corporates have strong balance sheets. So it's easier for them to do deals. I think the CEOs and the boards also know that this calm that we were expecting a year ago is probably not going to happen, and so this new sort of environment that we're in of not knowing what tomorrow holds in store is sort of the new norm, and so people are just getting much more comfortable with doing deals amidst chaos.
Are you allowed to take vacation?
Not yet.
Okay. That's always telling. Mitch, great to have you back. Come back sooner. Not so long. Mitch Berlin, EY America's Vice Chair at EY Parthenon, joining us. And of course, thank you, Ryan Gould, out there in our DC bureau, typically in New York, but in Washington today. He's Ryan Gould, Bloomberg News U.S. IPO and Deals reporter, joining us.
Hey, we got Charlie Pellet standing by in the Bloomberg Business Week studio. He's got an update on these markets and certainly an update on oil. Hey, Charlie.
Hello there. Yeah, Tim, let's begin there because we are seeing a major move in West Texas Intermediate crude right now. WTI up by 8.7%, 77.58 where we stand on WTI. Barrel of Brent crude, 82.68. Brent crude up by 8.7%. Stocks lower, oil higher. Investors are assessing a tense situation in the Middle East. President Trump reinstating the U.S. blockade of Iranian ships transiting the Strait of Hormuz. CENTCOM says this will happen 4 o'clock Wall Street time tomorrow. The Dow, the S&P, NASDAQ very much in the red right now with the S&P down 51. Drop there just about 0.7%. Slight bounce off the bottom, but close to session lows. Dow Industrials down 149 on the Dow. Drop there of 0.3%. NASDAQ down 1.4%. The NASDAQ 100 index down 1.8%. And the Bloomberg Max 7 index up down by 0.6%. The VIX just below 17 now. The SOX selling off the semiconductor index down now by 4.8%. Gold, as I mentioned, $39.99 the ounce. Spot gold down by 2.9% now with a 10-year 4.61%. Crude bears repeating up 8.7% on WTI 77.51 a barrel. Briefly, a federal appeals court has revived lawsuits that claim Kenvue hid alleged risks that Tylenol could cause autism in children whose mothers took the over-the-counter pain medication while pregnant, a controversy that has roiled the medical community. Shares of Kenvue today, they're down 1.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that is a Bloomberg Business Flash.
Hey, Charlie, thank you so much. Watching, of course, as energy prices once again spike higher because of the Middle East and the tensions there. So keeping an eye on that for you as we work our way through this hour. I want to take you back to 1851.
Okay, I'm listening.
Millard Fillmore was president.
I think that was the first Millard Fillmore reference on Bloomberg Business Week Daily, but go ahead.
Hey, I like to do, firsts. Rapid globalization, the height of the Industrial Revolution was the backdrop. The monumental Great Exhibition in London's Crystal Palace drew over 6 million visitors to view international innovations, while the U.S. schooner America won the inaugural America's Cup. I'm a sailor.
I don't remember any of this stuff.
Okay, well.
I wasn't there.
I do not either. But I got to say, 1851, that's when the mutual life insurance company Mass Mutual was founded. What I love about that is these are companies that have seen so much, not only in our own history, but just market cycles, business cycles. So nice to have back with us Roger Crandall. He is the chairman, president, and CEO of Mass Mutual. They provide life insurance, disability, income insurance, long-term care insurance, annuities. They do so much. And he joins us here, as we said, in studio. How are you?
I'm good. Nice to be here. Thank you for having me.
It's nice to have you here. We're getting ready for earnings. C-suite, always important to us in terms of what we're seeing. And I do want to start macro. How do you see it? There's so much coming at investors, citizens, voters, businesses, executives. How do you see the macro?
Look, what we're seeing is the economy's strong.
Yeah.
People are not thrilled about the inflation, and obviously that's news of the day. Waller's speech yesterday. You're seeing the little backup in rates here. So, and then the oil issue isn't going to help any of that. But in general, economy's good. We see our customers are they're nervous, but they're making money. They're saving money. They're putting it aside. They're thinking about the future. So, cautiously optimistic, I guess.
I really like that Carol went with the history of the company, because the point is that your company has been through so many different cycles and thinking about different types of quote unquote industrial revolutions, right? And that's one we're supposedly living through right now when it comes to the AI
I think we are.
Do you think we are?
Oh, yeah.
You do?
This is a big one. I mean, we can argue about electricity and the railroads and the internet and radio and TV, but this is in that genre of things, I think.
Does it change the way that you think about asset allocation and making sure that you have the money for your clients when they need it?
It doesn't really, like the tried and true, be diversified, equities for upside, bonds for defense, that's tried and true, but I think...
But which equities, which bonds? That's the question.
Here's what's interesting. For the things we do, we're mostly bonds, because that's kind of what we do. You want to make sure that you're diversified more than anything. It's really hard to see curveballs, and one of the ways you stay around for 175 years is you just don't blow up. So we're very focused on not blowing up.
Well, and as watchers of the market, we do have blowups, right?
Sure.
From time to time. And certainly as an insurance company, you guys have to think about it, right? Because you have to be there for your policyholders. One of the things I wanted to ask you about, U.S. life insurers held about $807 billion of the most illiquid kind of fixed income instruments last year. So that raised some concerns about overall liquidity and concentration of assets in the sector. Any exposure, and if not, or if so, but what's your view on this?
Yeah, so we have very long-term liabilities, and we monetize the liquidity premiums for our policyholders. You take 0.5% and accumulate it over a lifetime, it's a lot of money. So if you have the right liability structure, we are the right folks to be holding illiquid assets, and we've been doing it since 1851. I'm pretty sure there were not public markets in 1851. So when we started taking in premiums, we were funding, at the time, private assets. And we still have about half of our balance sheet in private assets at any time today, and that's how we add extra value for our policyholders.
So, Roger, what do you make around the conversation around private assets? I mean, go back a few years, and Tim and I know this from being at Milken and stuff, that's all anybody ever talked about. And then it just feels like in the last couple of years, the tone has changed as we've moved from zero interest rates to higher interest rate environments that make some of these investments, just I'm speaking generally, maybe not as lucrative or as interesting. So the narrative has changed. But as you said, you've been doing this for a long time. So what's the lesson? Is it that a market gets so big that there can be some sloppiness in it?
Look, anytime lots of money flows into any market, you're going to see value get squeezed, and you have the potential for things to get quote unquote sloppy. If you buy something private, our view is you need to be prepared to hold it until it matures, right? Hold it through the cycle. So, look, I started so long ago, we used to call them private placements.
Yeah.
That does not sound particularly exciting, so new names were invented.
Yeah.
But we got drilled into our heads. You buy it, you own it, and you keep it. And that means you need to understand your underwriting.
Which is something we've talked about, that maybe people aren't really reading the fine print and understanding that these are not things that are liquid, and you have to hold them for a long time.
I think a lot of the headlines are as much about people maybe not being sure of what they bought and having second thoughts. You've seen a pretty good institutional bid for these assets as the retail bid has moved back here.
I want to talk about some other products and just get the demand sort of side from you. Fixed annuities right now. What's the demand environment that you're seeing right now?
Yeah, demand is strong. I mean, people are hearing the headlines about, boy, the equity markets are fully valued, and look at the potential for kind of volatility. And if you're later in your career and you remember what happened back in 2000, you remember 2008, you're like, I'm not sure I want to have so much equity exposure. So there are different types of annuities. There's lifetime income annuity, which pays you as long as you live every month. Very valuable part of an asset allocation. Think about Social Security and a lifetime income annuity, always going to be there. Then we've got annuities that provide downside protection, so you get some participation in the upside of equity markets, but you trade some of it away for that downside protection. It's effectively an option strategy embedded in an insurance contract. And then you have relatively simple fixed annuities, which I think maybe you were kind of talking about. For customers, these are fabulous products. They de-risk, and they let you adjust your risk exposure. Whether they're a good issue for the insurance company, we'll see, right? I mean, we've been a little concerned about pricing in that market, so we backed off. We remember what happened in the 2000s when people put in big guarantees, and good for customers, not so good for insurers. And as a mutual company, we are the company, right? So if we write an annuity, we need to think we're going to earn reasonable capital for our policyholders, because most of our policyholders who get those earnings are what we call participating policyholders. They have a whole life policy, and we want that policy to perform. We paid the best dividend in our industry for 20 years in a row. We want to make sure we keep doing that. So we love our annuity business, but we're a little cautious on pricing right now.
So let's talk about the dividend. What are the key factors driving strong growth in your dividend to policyholders? I think you guys have a targeted, let me just look at my notes, a record $2.9 billion in 2026.
Yeah, it's kind of unbelievable. So we started paying, we're talking 1851. It's kind of amazing. 31 people pulled $100,000. We had the greatest salesman ever to raise $100,000 back then. The $100,000 is now $34 billion. So we've grown at a 7.6 CAGR for 175 years. right? So whenever in doubt, take out your calculator and run CAGRs. Compounding at 7.5 for a long time is magical.
Yeah.
So it's about twice
I would
as
take
fast.
that every year. Sorry.
And the beauty of the insurance piece is it does create that dependability. So what is this driven by? Well, look, rates coming back up has helped us a little bit. Strong returns of our non-participating businesses has helped us. We've had good realizations on things like private equity. But we run a very diversified book to try to make that consistent over time.
I'm just getting a question from a customer watching right now. How do you get customers that are under 30 years old and go under that after that next demographic?
Yeah. Well, look, it starts with our advisors because